Representative Brendan Lynch has arrived in India and will discuss trade and tariff matters with Indian officials over the next 3 days. Meanwhile, Canadian Prime Minister Mark Carney has emphasized that Canada is ready to have serious discussions with the US on trade. According to Carney, top Canadian officials have been in regular contact with White House representatives as they prepare for President Trump's next round of tariffs. In other news, President Trump downplayed concerns over a security breach involving a group chat which accidentally included a journalist and detailed plans for strikes on Yemen's Houthi rebels. Trump referred to the incident as a glitch in a phone interview with NBC News. He also said he was not upset with National Security Advisor Michael Waltz, who has learned a lesson and is a good man, stating that it was a glitch in 2 months and ultimately not a serious one. The breach occurred when top officials sent sensitive information through a group chat that was mistakenly shared with a journalist.
That's an app that a lot of people use, and somebody got on. I mean, happened to know the guy's a total sleazebag. The Atlantic is a failed magazine. Does very, very poorly. Nobody gives a damn about it. This gives it a little bit of a shot. And I will tell you this, that they've made up more stories, and they're just a failing magazine. The public understands that. He's a very good man. That man is a very good man right there that you criticize so strongly.
It's embarrassing, yes. We're going to get to the bottom of it. I just talked to Elon on the way here. We've got the best technical minds looking at how this happened. But I can tell you for 100%, I don't know this guy. I know him by his horrible reputation, and he really is the bottom scum of journalists. And I know him in the sense that he hates the president, but I don't text him. He wasn't on my phone. Look, I take full responsibility. I built the group. My job is to make sure everything's coordinated.
Lastly, shares of Trump media saw a significant boost, rising by as much as 10% on Tuesday. This surge followed the announcement of a partnership with Singapore-based cryptocurrency platform Crypto.com. The collaboration will see Trump media launch a series of financial products, fueling investor optimism about the company's expanding ventures in the cryptocurrency space. That's all for today. Back to you, Vinny.
Thank you so much for that, Dia. But on that note, we're going to slip into a very short break. And after the break, we'll bring you the latest update in the world of commodities. So don't go anywhere. Welcome back to Power Breakfast on CNBC-TV18. Now let's move on. And the Ministry of Finance has decided to shut down the gold monetization schemes from today, considering the improving market conditions. But the existing deposits under the scheme will continue until redemption. However, the ministry mentioned that the banks may continue offering their short-term gold deposit schemes ranging from 1 to 3 years. So that's the latest update that we have coming in on this front. But we have Manisha, who is here to tell us what is happening in the world of commodities. Manisha, again, we have some commentary coming in from Trump, and this morning it's for copper.
Oh, well, absolutely. And, gold really seems to be taking a pause while it is trading very close to its all-time highs. But the metal that has taken lead this time clearly has been copper. And that also in the U.S. markets, where we are looking at an all-time highs above $5.22 per pound. Prices did gain 2.5% in the overnight markets. And with that, we are nearly 30% up for the COMEX copper prices in this year until now. Well, the U.S. president may impose tariffs on copper. Buyers in U.S. are stockpiling ahead. And then there also are reports on how Glencore readily halted copper Chile due to furnace issues. Also, markets are looking at further stimulus coming in from China. So everywhere that you look, you are looking at supportive commentary coming in for copper. But how long and how much can this run last is a question mark, because if there are actually tariffs coming in, that would mean lower demand from the rest of the world. And the Chinese physical demand also is slightly on the weaker side. So these factors will start to weigh in. In other commodities, you have the Brent crude prices trading at a 3-week highs. You have rubber futures trading at a 2-week highs as well. Silver prices gained up by 2.5% in the overnight markets, with the metal prices also surging. So many of these commodities are trading in the positive right now.
Okay, Manisha, thank you so much for that. Keeping an eye out on copper specifically, as well as other commodities. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV18. Thank you so much for tuning in. Up next, we have Bazaar Morning Call.
Doing it to help our country, and our country was riddled with fat, like no country probably anywhere in the world, and we're getting rid of the fat. And at the same time, we're going to be bringing in millions of very good, high-paying jobs, and we're going to be taking in a lot of money. Our country's going to be very strong. We've been ripped off by every country in the world, friend and foe, and we'll be announcing cars very shortly. And we already announced steel, as you know, and aluminum. We'll be announcing pharmaceuticals at some point in the not too distant, because we have to have pharmaceuticals. We don't make pharmaceuticals anymore in our country. And if we have problems like wars or anything else, we need steel, we need pharmaceuticals, we need aluminum, we need a lot of these things that we sort of don't make anymore, and yet we're equipped to do it all. So we'll be announcing some of these things in the very near future, not the long future, the very near future. And
so exciting is April 2nd is just around the corner, and that's American Liberation Day. That's the day when the rest of the world starts to treat America with respect. And your leadership, understanding how the rest of the world treats us and what balance and what fair trade finally is going to be, is going to take care of America. It's going to launch the External Revenue Service to start to build the power and prestige of America back.
so we're going to take in a lot of money from the outside, and that's going to keep our taxes low, and I think getting a lot lower. It's going to be a lot of money, and the external will take care of the internal to a large extent. So I think it's going to be a beautiful transformation. Today, we're delighted to report that Hyundai is announcing a major $5.8 billion investment in American.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Middle of the week, Wednesday morning, we are coming to you as always from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi, morning, folks.
Morning.
So middle of the week, muddling along. At least that's us. But I think the markets had a fine form. I mean, it's not too bad. I mean, yesterday a bit of a pause for the broader markets, but it's been good going, I guess.
I think par for the course, right? I mean, after the kind of run that we had, par for the course, I guess so. So let's get straight to the action, Prashant.
I mean, Trump is like, I was thinking the right analogy, right? A kid with like, I don't know, a toy gun or something. And you're pointing, I'm going to shoot you. I'm not going to shoot you. I'm going to shoot you. I'm not going to shoot you.
That's a good analogy.
It's, I don't know. I mean, it's...
And on that analogy, CNBC did a CFO survey. And I think over 60% of them are saying that they cannot decide what to do with their businesses because there's just too much uncertainty. Yeah.
Absolutely. And, let's just quickly run you through, what you need to know. And it's Trump, all Trump. And the thing is, we don't know. We just don't know how large, how the extent of the tariffs or anything of that sort. So markets remain on tenterhooks as far as the 2nd of April tariff headlines are concerned. Chasing headlines or chasing price action ahead of this, into this, I mean, I think just doesn't make any sense. We just don't know, as I said. Now, but what we do know, Trump last night, once again, he's obviously on the air very, very frequently. He said that 2nd April tariffs are set. I mean, he set them. So they are in there, but he gave no real details. And then this morning, as we were coming in, there was another sort of line which came through. I just want to quickly put that up as well. He said that I'll likely be more lenient than reciprocal, on reciprocal tariffs. So, for example, I'm assuming what he means is, say, X country charges 10% or 20% on US goods. He won't be reciprocal by charging 20%. Perhaps he'll be a little more lenient to the extent of that tariff rate. But, who knows? As I said, lots of comments come back and forth. And one day it sounds more harsh. The next day it sounds a little more lenient, etc., etc. Anyway, the price action. Nasdaq was up about 0.46%. Was up for the third straight day. 10-year yields, nothing very much in macro markets. 4.3 on the 10-year, was down 2 bases. You had dollar index, which stays above the 104 mark, slightly lower last night. Oil prices above 73, but again, no great change. So, I mean, these markets are steady. Copper, I think, is the talking point this morning, again, because of these tariff-related news bits which are coming in. Prices last night were up 2.5%, and they were on their way to an 8-month high, and I think they've moved up even more this morning. And we'll have Manisha talk to us about commodities, etc. in a bit. In terms of data, and this is, I think, the consequence of the uncertainty that we were talking about earlier, the Conference Board's 6-month expectations have fallen to a 12-year low, while 1 year ahead inflation expectations are at a 2-year high. And this is the, stagflationary kind of situation. Remember, about a year ago, Jerome Powell was asked about stagflation. He said, well, I don't see stag or inflation. But I think now this has entered the mainstream talking point. Now, Philly Fed non-managed, the services index also slumped. That came in the lowest since May of 2020. Just a quick bit on what markets are pricing in. The markets are pricing in a rate cut, fully pricing in a rate cut in July. For the full year, about 62 basis points worth of rate cuts are what is priced in. Reports that Russia and Ukraine have agreed to a ceasefire over Black Sea. And of course, Trump was also on the record saying that, well, he's in deep conversations with both sides to resolve that conflict for good. Just the levels now, and I said this yesterday in the morning as well, maybe a little bit of a pause because of the April 2nd event which is in front of us, and of course the big rally that we've had from the lows. Yesterday the Nifty crossed the February high of 23,807, but we could not close above it. So that becomes the first resistance, 23,807. And then yesterday's high, which was 23,869, are levels to take out. On the downside, the 20 hourly has been pulled higher. That number stands at 23,577, and then the 40 hourly exponential, which is 23,322. For the Nifty Bank, it looks like a little more tricky. The reason I say that is because we crossed the 61.8% retracement, which is 51,883. We did not close above it. But forget closing above it, we actually ended lower on the day. So have we completed something on the Nifty Bank from the lows to the highs? The question, we don't know the answers to it yet because we are above these averages. The 20 hourly, 51,322, and the 40 hourly exponential, which is 50,634. So maybe a little quieter. FIIs have been buying loud, but the market price action was a little more quieter. We'll see. 60 points higher on the GIFT Nifty is the indication this morning once again. Surabhi.
Okay, well, Asian markets right now, they were a lot happier in the morning when they opened up, but now as the session progresses, they've kind of cooled off a little bit. They were happy, obviously, because of, the expectations that Mr. Donald Trump may not be very, very disruptive come the 2nd of April. So that's what you've got. You've still got some green. The mainland Chinese market has dipped into negative, but otherwise most of the regional markets, Japan, Singapore, Hong Kong, all of them are still very much up and about. On currencies, just a word over here. Over the last couple of days, the yen has gone back to its weak ways. In fact, even this morning, the dollar yen, as you can see, is trading above 150. So the recovery on the dollar that we've seen last couple of days, today included, the dollar index is still very much above 104. That's meant some weakness coming back to the yen and to an extent to the euro as well, but more on the yen. Anyway, just to talk about oil, because for India, that's one issue. The fact that quietly Brent has now inched up from 69. Remember, it was sub 70 just a couple of weeks back. It's back up to 73 plus. And that's because of the fact that the oil market is still very worried about Venezuela. Those are the prices on our screen. As you can see, almost 73.30 right now. There was good news on that Russia-Ukraine deal, which the US has successfully managed to broker, at least a partial deal on the Black Sea. So what they've said is that they'll allow a safe passage for navigation for ships around the Black Sea, and they won't attack each other's energy infrastructure. So this has been done, this partial ceasefire. But the market, like I said, is still worried about how many Venezuelan barrels go off the market. Iran has fresh sanctions, so how many additional Iran barrels are not coming to the market? So that's keeping a bit of an upward bid on the price. To talk about our market here, 7 winning days for the Nifty. It's been a fantastic streak, though, of course, yesterday the broader market took a bit of a pause. And that's after 6 days of a rise on the mid-cap index. By the way, the cash market volumes yesterday were up 13% above the 10-day average. So there's some more activity that's picking up as obviously the market recovery is gathering steam and momentum. The flows, no complaints here whatsoever. Once again, third day running a solid 4-digit buy figure coming in. Over 4,300 crores of buying from foreign institutional investors explains why the large cap market was doing so well. Domestic institutions were on the sell side again yesterday, sold off stocks worth about 2,770 crores. Lots of stocks in focus today, and plenty of deal action could be in focus as well. These two companies, now both of them have a board meeting. Whether there's going to be a deal or not, we don't know right now, but these stocks need to be watched. Earlier, M&M's name was in the fray. Now, Ashok Leyland's name is the fray, so let's see if there's a deal brewing over there. NCC's backed a massive order, over 10,000 crores of an order, so that's a stock on the radar. And finally, the Siemens sort of demerger, that's continuing to chug along. It got the NCLT approval yesterday. Energy business will be demerged into Siemens Energy India. So we'll have 2 different listed Siemens entities soon. So plenty of corporate action as well. Global Q is not that bad this morning.
Well, that's right. But what about the FI buying?
Solid.
Seems they are in love again with the Indian markets. 20,000 crores in 4 sessions. And even after these kind of inflows, they're still net sellers in the month of March by close to around 7,000 crores.
Because of the earlier selling that happened. Yeah.
Let's see whether or not in the next few trading sessions, they could possibly deliver a net buy number for the month of March. That's the hope. Let's see how it goes. Well, but the call was for some consolidation yesterday's trading session, and very rightly so, right? Because some of those technical indicators were indicating that. The PCR had moved to around 1.3 or thereabouts, which was at the higher end of the range, 1.2, 1.25 intraday yesterday as well. The RSI as well, that had moved to around 70, which typically suggests in the near term maybe a bit of an overbought zone. And the India VIX as well had perked up. So these indicators, they call for some kind of consolidation. What do the FIs do? They're showing us the big money in the cash market. We like it. What are they doing in the F&O market? Well, they seem to be covering some shots, and that's been the trend. Even in yesterday's trading session, close to around 3,000 contracts were covered out. The net short positions continue at around 67% or thereabouts. And this is the power of short covering. Because in a matter of few trading sessions, they have halved their net short contract. Just take a look at that. From around 1.8 lakh contracts to around 90,000 contracts. But the clients, they're the ones that have been getting it right. They have been, buying into this market. They had their long positions that were at very, very aggressive levels. And as we saw the market bounce, well, they've gradually been scaling down their long positions. So in the last few trading sessions, as the FIs cut their shots, well, they have unwound some of their long positions and booking some profits as well, because it's down by close to around 1 lakh contracts, from around 1.39 lakh contracts to around 38,000 contracts or thereabouts. Well, moving to the options data, it's going to be important because tomorrow we'll have the monthly expiry that will play out as well. 24,000 call, 23,800 call gives you an indication that the bears want to go ahead and defend the 24,000 odd mark. And that's pat in line with where the 200 DMA is at. So that's going to be the important resistance mark. The recent high that we have seen, 23,870, and the 200 DMA. Crucial resistance zone. Only once we get past this, you'll be banking on that we see a further breakout from here on. In terms of support level, going by the options data, going by where you have the DMA as well is at, you'll say that around that 23,450 becomes the important mark. Yesterday's high becomes important on the Nifty Bank. We did a bit of a U-turn, so that becomes the near-term resistance. And you have the 200 DMA, which is a support zone as of now for the Nifty, the first level of support. As we speak, the Nifty Bank yesterday closed somewhere in the middle of this range. But the IT index, was it a flash in the pan, or are we good for more? Because in yesterday's trading session, we had made this point yesterday that the Nifty IT index could possibly try to pull back some of that underperformance. And that's what happened yesterday, because the index was the outperformer, and it's ended closer around the 20 DMA. So I'll be interested to see whether or not it's good for more. Stocks that I'm looking at, well, there's buzz of a deal, because yesterday, towards the end of the trading session, we had Ashok Leyland that had put out this notice they're going to be having a board meet, and they're going to be having an investor call as well. And, various sources from Money Control indicate that maybe there could be a deal in the offing. So we'll have to see how that goes, whether there's a deal, whether there's something with regard to the group that they want to do. Ashok Leyland will be the stock that we'll be tracking in. And since the report indicates, SML Isuzu is the other one that we'll be tracking.
Okay, all right. So lots to track and lots of individual company and stock level action as well. Let's get started then with the equity call of the morning. Rahul Jain of Goldman Sachs says that while their strategy team also believes that the worst is likely behind us in terms of economic growth and earnings trajectory, and prices have corrected meaningfully, they see higher market volatility in the near term, given still elevated domestic positioning in small and mid caps and ongoing global uncertainty from tariffs. Consequently, he adds that they remain market weight on India within an EM context and recommend focusing on quality growth and earnings visibility. He says their top 10 ideas that offer 23% upside on an average include HDFC Bank, AU Small Finance, M&M, Make My Trip, Interglobe Aviation, Adani Ports, Power Grid, Apollo Hospitals, Titan, and GCPL. Lots of interesting names across a range of sectors there.
All right, Taimur Beg is now with us, Managing Director and Chief Economist at DBS Group Research. Taimur, good to have you with us here. Thanks very much. It's been a while. Prashant here. Taimur, hectic and absolutely frenetic pace of news flow and headlines. Much more, I guess, than the first time around. But now we're at close to 2nd of April. What is your own sense, Taimur? From a market perspective, I guess, directionally, is it going to be, as strong as what we've heard? Many in the administration say it's going to be harsh. It's going to be more lenient, as we've heard from the president himself last night in an interview. What's your sense?
I cannot accept the lenient part of the promise. I think that's very unlikely, given that Donald Trump fundamentally believes in the power of tariff as a tool to raise revenues, bring manufacturing back to the U.S., as a negotiating tool. So if he thinks of tariff as the most beautiful word in the dictionary, for him to sort of be lenient on that seems sort of counter to his character. I think the stick of tariff will be on our head for the rest of the term of Trump. It's not an April 2 event. It's not what happens 1 month after that. It'll just be back and forth, back and forth. So if the market is sort of, reacting favorably towards some terms that he is sort of using right now, I think it is bound for disappointment.
Although, Taimur, in the case of Canada and Mexico, we've seen, these tariffs, etc., and the announcements being walked back twice over. Many have been watered down. Many have been completely walked back. So, yeah, absolutely. He believes in tariffs. But if the example of these two countries is anything to go by, I mean, there will be room for negotiation.
There'll be room for negotiation, but I think the biggest casualty of the last 9 weeks is the loss of reliability. I cannot really rely on a U.S. promise that something that they're promising today will stay like that. I mean, if 2 months from now Trump wakes up on the wrong side of the bed and he changes his mind, there is zero check and balance associated with that. That is the biggest problem. So yes, we can look at some data points of the last month or so and say that, it hasn't been that bad for Mexico and Canada so far. The auto lobby in the U.S. seems to be particularly persuasive in making Trump not be that draconian, because that would decimate the U.S. manufacturers more than anybody else. But at the same time, that track record, in my view, is not a marker for reliability, because the back and forth on both directions makes it impossible to say that if something is going to have traction. And by the way, this is not only with respect to tariff. I think it's with respect to foreign policy, national security, global trade and commerce, everything. That how can any partner of the U.S., ally or adversary, rely on the U.S., given that its proclivity toward vacillating is at an all-time high right now?
Okay, I mean, absolutely. And that's exactly what's been captured in the CNBC CFO survey. I was alluding to that earlier as well, Taimur. Just reading off some of the highlights. 90% CFOs say tariffs will cause inflation. And there are a whole host of other worries in terms of how to sort of align your supply chains. So, Taimur, given what you said, now we may get that number on April 2, and then maybe it goes into negotiations. Maybe it's not exactly market disruptive, financial market disruptive, but could it continue to be economy disruptive? So therefore, if we talk about, say, the Fed itself, I mean, the U.S. economy itself, are you in the camp that believes the recession is possible? What about the responses then from the Fed? And then, it just complicates the situation for other global central banks as well, doesn't it?
Absolutely. I think that the underlying momentum in the U.S. economy is on the softer side, but it is not flashing recessionary signals to me. There is exceptionally high level of uncertainty about policy, about the international environment, about the dollar. But I don't think we're talking about an outright stagflationary scenario where growth goes to negative while inflation goes to 3. I think if growth goes to negative, it'll pull down prices independent of what is happening on the tariff end, because it'll be a massive source of demand destruction. Now, there's some technical plays that we need to consider. The first quarter GDP number for the U.S. is likely to be weak, but that is an artifact of the fact that a lot of imports have been, to use an Indian term, preponed. They have been brought forward, and they have been, they're going to contribute toward a large negative contribution of net exports to GDP for the first quarter. But when you look at retail sales, they're weak, but not exceptionally weak. When you look at payrolls, they're not exactly surprising on the upside anymore, but they're still very robust. When you look at wages, they're still growing in real terms. So I don't think we're on the cusp of a recession-like environment, but that huge uncertainty is a marker for likelihood of postponing investments. That's bad for the medium-term growth outlook. It is also a marker for maybe some large-scale consumption that get postponed. Having said that, if you look at home sales numbers of the last 2 months, it's not that bad. Interest rates have come down a bit. There are certain parts of the U.S., Washington, D.C. would be one example, where there is significant amount of paralysis in the market given the Doge-related firing. But for vast swaths of the U.S. economy, the fact that mortgage rates have come down a bit has had a positive impact on refinancing as well as on outright housing purchase decisions. So I'm not in the recession camp. I do think that Trump has added a great deal of uncertainty to the outlook. I do think there are some inflationary implications near and medium term that we have to deal with, as tariffs, in my view, are inevitable. But that does not put me in the recession camp. That puts me in a slight, mild, soft stagflation camp or something like that.
Okay, all right. Hi, Taimur. Good to hear that, in fact, that recession fear has not really come to the fore as of now. So that's good news. Let's keep the US market aside and the US economy. Let's talk about India. I recall the last time we chatted, you were hinting that in the first quarter of this calendar year, we could possibly see the rupee stabilize in that 85.5 to around 86 odd band. Good on you, because there were most of the calls were suggesting 90 odd. And we've seen some kind of consolidation, a pullback. Where do you see the rupee headed? That's point number one. How do you see India's growth pan out from here on? Because there are signs of recovery as per the last sprint. What are you working with for the next year?
Right. So let's take the second question first, and then I'll talk about the rupee. So in terms of the growth outlook for 2025, we're sort of cautiously optimistic. There is some degree of caution, especially with respect to informal and rural sector demand. But we do think that some degree of revival in animal spirits in the equity market, some additional news on capital formation, some good news coming from the fiscal side with respect to revenue collection point toward no further downside to the growth outlook. But we are cognizant of lingering weakness in the informal and rural part of the economy. So 6.5-ish is where we are going to peg our growth forecast for 2025 and beyond. As far as the rupee is concerned, there is an interesting phenomenon going on right now. The countries that are very keen on dealing with the U.S., accepting whatever demand that they can anticipate coming from the U.S., are likely to see an appreciation of this currency vis-a-vis the U.S. dollar, because the U.S. also would demand that U.S. dollar weakens against their currency. If you have read some of the outlines of the rather dense Mar-a-Lago related discussions, that seems to be one of those policy objectives of the U.S. that try to revive competitiveness of the U.S. economy by weakening the dollar, and that means that their partner countries would have to appreciate their currency. So if the market sort of accepts that the Indian authorities are also amenable to allowing the rupee to appreciate, will not tolerate depreciation. So I think the risk reward toward the rupee remains on the appreciation side, especially since India seems so keen on dealing with Trump and already taking preemptive measures to ensure that some of the really bad stuff from the trade war do not come to the shores of India.
Taimur, just 30 second response to this. They've said they want the dollar lower for competitiveness, and the dollar has been falling. Do you think that continues to be the case? You said tariffs will be with us for the full 4 years. But do you think broader dollar will also be a feature for the full 4 years?
I don't think so, because I think that there are some major internal inconsistencies in the Trump model, and that will come to fore. So you cannot have, the tariff and weak dollar simultaneously. Part of the negotiation is to force dollar down, but I don't think strong dollar and strong tariff are the things that should go together. I think that's the way it should go together, not the other way around. So if there is major risk-off in the world around recessionary concerns, among major disruption to global trade and commerce, and we have a lot of policy uncertainty lingering from the U.S., I think the dollar smile remains, independent of the very recent phenomenon. I don't think Trump will get everything he wants because there are some major flaws in his economic model.
All right, stronger dollar, higher tariffs, stronger dollar, and that's the inconsistency that you've been talking about. We'll see. Thank you very much for joining us, Taimur. Good conversation and good to get that perspective from you. Appreciate it. Well, I'll just quickly run you through what's lined up here over the next 2.5 hours. 8:35, you'll hear from Ajay Singhani of EPAC Durables joining us to talk about the approval for disbursement of the second tranche of incentives under the PLI scheme. So that conversation coming up. We'll have Abhishek Kumar of JM Financial Institutional Securities. IT 2 days now. The index is up almost about 3.5%. 9:20. We'll connect with the team at ICICI Prudential AMC. We'll have the three heads in terms of the equity and the debt side. The management of EIL makes an appearance at 9:45. You're seeing them after a while, and we'll talk to them about business, how things are looking. So Vartika Shukla will be with us, and towards the end of the show, it's the economy. Latha in conversation with Niti Aayog agricultural expert Ramesh Chand and Harish Damodaran on the Indian Express article on how Trump's tariffs can hurt Indian farmers.
Well, time to slip into a quick break, but we've got a lot of stock-specific action to track for you on the other side. We'll get to that in just a bit in our special Top 10 segment, but I'm running you through the list for now. Ashok Leyland, SML Isuzu, NCC, Siemens, Federal Bank, lenders of Jaiprakash Associates, Zaggle Prepaid, Stylum Industries, SIS, and Exide Industries. All of them will be reacting to positive news flow. Slip into the break, come back, get into further detail on all of these names.
In particular, Hyundai will be building a brand new steel plant in Louisiana, which will produce more than 2.7 million metric tons of steel a year, creating more than 1,400 jobs.
My understanding is that India imports close to about 0.2 to 0.25 million barrels a day of oil from Venezuela. When you consider that India's total imports are in the range of around 4.5 million barrels of oil per day, obviously it is a relatively small percentage compared to the percentage from, let's say, Middle East or even Russia, for that matter. But the fact is that if the condition for avoiding this additional 25% tariff is that this oil will have to be replaced, then that's an additional sourcing that you will have to find from somewhere. From a supply security perspective, I guess because it's less than 5% or less than 4% of our overall crude slate, it's something that I think India can figure out how to basically manage this hit, from what we can tell.
If you're booking an Ola, Uber or Rapido in Hyderabad, it could be a sweltering ride. Cab drivers have launched a no AC campaign, refusing to turn on air conditioning to highlight their financial struggles. For many drivers at ride-hailing platforms, driving a cab is no longer financially viable. After operational costs and platform commissions, they're often left with earnings that barely cover their daily expenses, forcing them to make tough choices like turning off the AC. And so the Telangana Gig and Platform Workers Union has launched this no AC campaign. What are their concerns? Fuel prices are high and running AC means burning more fuel, making trips less profitable. Second is low earnings. Drivers say Ola and Uber take 30 to 40% of the fare, leaving them with just 10 to 12 rupees per kilometer. But operating costs with the AC turned on rise to 16 to 18 rupees per kilometer. Essentially, the driver is left with very little in hand. And so drivers are demanding higher base fares to cover rising costs, lower platform commissions and government regulations to ensure fair pay. The union is also pushing for a Telangana gig workers' rights bill, and if their concerns aren't addressed, they plan to escalate the protests nationwide. While Hyderabad's way.
Welcome back. Like we've been saying, most of the Asian markets are in green, slightly off the highs, but largely the color is still positive, so no problems there. Let's pull up the GIFT Nifty and the implied open. The indication is that we'll also start higher, maybe about 50 odd points on the Nifty. I will just get that up for you in a bit. There are, of course, lots of stocks, individual stocks to track as well. So let's straight away get to it with our CNBC-TV18 list of top stocks to watch. And we have our entire team standing by to run us through the names. Sudarshan is opening up the order with a focus on Ashok Leyland and SML Isuzu. Everyone's talking about this potential deal, Sudarshan.
Good morning, Surbhi. So first up, why these two companies will be in focus? Because Ashok Leyland yesterday late night has announced, has called the board meeting, and that is scheduled for today. And companies saying that it's called at a very short notice to inform about corporate updates. Also, post the board meeting, company will be holding conference call and the analyst meet at 5:15 p.m. Now, this is what Ashok Leyland has informed. But what we understand from the sources, and that Money Control has reported that Ashok Leyland is one of the contenders to acquire SML Isuzu. Last week, we had also reported of M&M was one of the contenders. Now, through Money Control, we are understanding that Ashok Leyland is also in that list to acquire SML Isuzu. And if that acquisition happens, so currently promoter shareholding, if you look at SML Isuzu, majority of the share, one is the major promoter, that is the Sumitomo Group, which holds around 44% stake as of December 2024. And if you talk about Isuzu, it's part of the public shareholders. It's one of the largest public shareholders with holding of 15% stake. And one of the other largest public shareholders is Sachin Bansal, who holds more than 19% stake. So what we know from Money Control, that Ashok Leyland might acquire the stake of Sumitomo and Isuzu, and if that is, look at the valuation, that is valued at around 1,400 crore.
Okay, all right. We'll wait and watch to see what comes out of that meeting. Thanks a lot, sir, for that. Well, let's hop across to Vivek. He's here to tell us about NCC. They're raking in the big order wins. Hey, Vivek, good morning.
That's right. Good morning. Close to March end, and a whole host of slew of order wins are being seen across a lot of capital goods as well as infrastructure names. So NCC yesterday announced that it had secured 2 work orders from BSNL. This for design, supply, installation as well as operational and maintenance services for middle mile network as far as BharatNet is concerned. They have received orders, and these orders are spread across 2 separate states. The first order is from Uttarakhand. The value of the order is 2,640 crore. The other order is from Madhya Pradesh. The value is over 8,450 crore. The order size as well as the order booking will be split into 2 separate components, capex as well as opex. Capex portion EPC amounts to a little over 5,700 crore, while the opex portion is valued at a little over 5,000 crore. The network construction is expected to be completed within 3 years, and this particular contract also allows for 10 years of operational as well as maintenance services. With this, NCC has now achieved the order inflow guidance that it had given at the start of the year of 20 to 22,000 crore. Watch out for NCC today. Expect some green in the stock.
All right. Thanks very much for that. That's a big one for Nagarjuna Construction. A big thank you very much for that. Now, Siemens is the next one we want to focus on. Hormuz is here to tell us why. Hormuz, morning.
Morning, Prashant. And there's a big approval coming in for Siemens, the NCLT approval for the demerger of the company and its energy business as well. Now, the demerger has been effective from last night, and the shareholders of Siemens will get 1 share of the demerged entity, which is Siemens Energy India, for every 1 share that they held as of the record date, which has been fixed as the 7th of April. Siemens Energy India will also be a separate listed entity now on the bourses, and according to the company, that will lead to unlocking of shareholder value as well. And Guilherme Vieira de Mendonca has been appointed as the MD and CEO of the demerged entity, while Harish Shekhar has been appointed as the Executive Director and the CFO. So finally, the approval coming in for NCLT, a positive development coming in for Siemens.
Okay, all right. That's Siemens. Hormuz, morning. You're also watching out for Federal Bank. What's happening there?
Morning, Surabhi. Some developments from Federal Bank on the M&A front as well. They've increased their stake in the insurance JV, which is Aegis Federal Life, by 4%. Now they currently hold 30% in this JV, where the other 70% is held by Aegis. And the total consideration for this is around 97.5 crore rupees, and they are valuing Aegis Federal Life at around 2,500 crores based on this transaction. And of course, is subject to approval from the RBI and the insurance regulator as well, likely to be completed by the end of October. Another positive development for Federal Bank as well.
Okay, all right. Thanks a lot for that, Hormuz. So, well, let's hop across to Ritu. She is here to give us an update on the Jaiprakash Associates insolvency case. Ritu?
The deadline to submit expressions of interest for Jaiprakash Associates ended last night, and we've been given to understand that as per the last count, as many as 26 suitors have come forward, and that includes prominent names like Adani Group, JSPL, Vedanta, Wellspun, as well as Oak Tree Capital and Arcil. The COC is now expected to meet to take these on record before the due diligence starts and final bids are invited. Now, keep in mind, JP is facing claims of more than 57,000 crores under IBC, but banks have already transferred their loan exposure to NARCL for about 12,000 crores under the 1585 structure and already received 15%, that is 1,800 crores in cash, while the rest of the recovery is going to remain contingent on the outcome of this IBC process.
All right, Jaiprakash, an asset which has been up in the air in terms of what will happen to it for the last, at least, almost 10 years now. Thanks very much, Ritu, for that. Zaggle is the other one which is in focus. Rima is here. They've completed an acquisition. Rima, tell us more.
Indeed. So Zaggle has completed an acquisition of about 38% stake in Mobile Wear Tech. For a total amount of about 22 crore rupees. But this was announced earlier. We had chatted with the management. They'd spoken about how they're acquiring the first tranche 26% stake for about 15 crore in September of 2024. Now it appears the company has completed it, and this acquisition will help the company strengthen its payment offerings. By the way, Zaggle has been under a lot of pressure. Even yesterday, the stock closed with a cut of close to about 5%. And what we understand is that the 1.5-year lock-in, which freed up 20% of the equity, outstanding equity of the company, ended yesterday. So that's been putting pressure on, Zaggle. And the stock on a year-to-date basis is already down about 33%, and its 52-week high was 591. So the stock is still very far away from those levels. Back to you.
Okay, all right. Thanks a lot for that, Rima. Well, let's hop across to Manglam. He's here to tell us about Stylium, some protection coming in for them. Manglam, morning.
Well, it's the season of duties, anti-dumping duties and tariffs, etc. because now there has been an anti-dumping duty imposed by the government on acrylic solid surface imports from China for the next 5 years. Remember, Stylem Industries was the one that had filed for this anti-dumping duty on acrylic solid surfaces. And of all the acrylic solid surfaces supplied in India, 70 to 80% comes in from Stylem Industries itself. So this imposition of anti-dumping duty, especially for the next 5 years from China, should be a positive for them. See some green on Stylem today.
Got it. So we've added that to our list as well. Mangalam, thank you for that. Back to Sudarshan then to round up a bunch of other stocks that are also in the news today. Sud?
So I have two stocks. First one is SIS. Board has approved share buyback of ₹150 crore at a price of 404 per share, which is at a premium of 18% if you take yesterday's closing price, and the buyback would be done via tender route. Second up is Exide Industries. Government has made certain amendments to the rules, and because of that, lithium-ion battery will be now part of core auto components. That can be positive for battery players like Exide Industries and Amar Raja.
Okay, all right, got that. Sudarshan, thanks very much for that. Let's quickly recap our list of stocks to watch. The ones that have positive news flow around them include Ashok Leyland, SML Isuzu, NCC Siemens, Federal Bank, the lenders of JP Associates, Zaggle Prepaid, Stylem, SIS and Exide Industries. There are actually no stocks that have negative news flow around them, so it's an all-green list once again. With that, let's now head across to the commodity world. We have Manisha joining in with a roundup of all the action. Manisha, good morning. It's not gold, it's copper that's hitting bigger headlines overnight, isn't it?
Oh, it absolutely is. Even as gold is at sightlines, copper clearly taking a lead in the metal as a sector. So we've seen all-time highs in the U.S. markets, not the LME, which the markets really follow. But the COMEX copper is at an all-time high, above $5.22 a pound. Prices have gained almost 3% overnight. Well, there's been this news that U.S. President may impose tariffs on copper imports as well. So buyers in U.S. are stockpiling ahead of these potential tariffs, and that has led to a very huge premium in the U.S. markets vis-a-vis the rest of the world. So copper prices in U.S. are expensive by 13 to 15% right now versus the rest of the world. Also, there was another news suggesting that Glencore is temporarily halted copper shipments from Chile due to some furnace issues. So this new supply disruption news also added to the markets, and we've seen prices run up. But it's not just about copper. Silver gained 2.5% overnight. Gold was up 1%. Brent crude is trading at a 3-week high, and that has led to gains in rubber, which is trading at a 2-week high as well. So, well, it's a very strong start to Asian markets when it comes to commodities, but definitely copper taking all the lead.
All right, Manisha, thank you very much for that. So that's commodities and copper, more specifically, very much front and center there. We'll take a quick commercial break here. Gurmeet Chadda, managing partner and CIO at Complete Circle, will be with us for some fundamental stock conversation. Stay tuned.
Headlines. This isn't new. It has been happening in Hyderabad and even Bengaluru. Drivers in Bengaluru have unofficially stopped using ACs for more than a year. In 2024, drivers even demanded 5 rupees per kilometer extra for AC rides, but this wasn't officially implemented by ride-hailing apps. Most drivers just simply refuse to switch on the AC unless riders insist, and even then, some decline. Now, as the mercury rises, so have passenger complaints. This begs the bigger debate, which is who pays for the AC. Passengers expect an AC cab, especially in the scorching summer heat. Drivers say they can't afford it unless fares increase. Ola, Uber, Rapido haven't provided a clear solution. No pricing model for AC usage, no opt-in feature either. So should drivers absorb the cost or should riders pay extra? Let us know what you think in the comments below. There doesn't seem to be an easy resolution to this tug of war. Perhaps us riders should consider investing in one of those handheld fans for now.
Welcome back. Well, we have Gurmeet Chadha joining in this morning to take a couple of questions. He's, of course, from Complete Circle. Gurmeet, great to have you on. Good morning to you. So much happening with this market, right? But we're talking to you now in happier times. I mean, a week and a half in sentiment is so different today, right? I want to start with the auto space first because there's a lot of chatter about a potential deal. SML Isuzu seems to be the target, and we don't know if it's Ashok Leyland or M&M. But your thoughts on any of these stocks? You know, one, two, or all three of them. Just very quick takes.
So we have M&M as one of our top 10 holdings in the portfolio. So to give you the disclaimer, I think it's done very well for last 3 years or so. Great capital allocation strategy, cutting down on loss-making JVs, and I think even in this quarter till Feb, while March numbers are yet to be out, they are beating the industry both on SUVs as well as tractors and farm equipments. Valuations have become more reasonable post the 20-odd% correction, some price and some time correction for a quarter. Isuzu, not sure whether who gets it, but seems to be an incremental addition to both of them since they are very dominant in the bus portfolio and the commercial side. It could probably be a better fitment for Ashok Leyland. Their SUV portfolio of Isuzu is something which hasn't really taken off. And if you see their PAT figure also, it's about 2,000 crore market cap. They're doing around 100 crore PAT. So valuation-wise, assuming that it happens at current market cap, 5% here and there, valuation seems reasonable. But as I said, the fitment could probably be more for Ashok Leyland. But we need to see how it plays out. We are very constructive on M&M. It's firing on all three cylinders. One thing you have to watch out for is 2nd April in terms of the tractors and their export units to US, but that's also relatively compared to other OEMs, it's quite marginal at the front. So we are pretty optimistic as far as M&M.
The market cap is about 2,300 crores, and the buzz was, at least what some of our colleagues were picking up, is that M&M wanted to do the deal at about 1,800 crores market cap. So maybe we don't know how it goes. Quick take on Ashok Leyland. Stock has been in the dumps for now years. Could this be the jumpstart it needs?
We need to see the proper revival in commercial sales. So that those numbers have been pretty soft. It was available at 60 bucks if I remember in COVID. So from that period, probably almost 3.5, 4x. It hasn't done bad, but incrementally it's doing better than Tata Motors on the CV portfolio. Their EV platform also has been a little soft, including some of the launches in that segment. So you need proper triggers in terms of numbers coming through, big revival coming through. I think government capex has picked up December onward. So my sense is this quarter might be a little better. But we don't own this particular stock in our portfolio.
Just to close, Gurmeet, hi, morning. Just to close the loop on autos, I remember, I think you had a few ideas a couple of weeks ago. Names like Precision Camshaft was one. Mukund was another. Any thoughts? These are the two I remember. Any thoughts? I mean, have you been buying these? Still constructive?
So, Prashant, Precision Camshaft, we actually trimmed a lot of our exposure in December, considering the slowdown we saw in Europe and overall commentary coming in from major OEMs. We've been adding to Uno Minda in the portfolio. That's a more content per play for us. And they've been really expanding their bouquet in terms of the offerings. It has recovered a little bit. Almost came in 4 digits, then again has seen a bit of a correction. But auto in general has seen that. We have Sandhar Technologies in the portfolio. The casting business continues to do well. Locks, they already have almost 40-50% market share. Valuations have become reasonable. They have been reducing debt, in the portfolio. And we have a bit of a quasi-auto play, KPIT, which we've been holding for now almost a little over 4 years. But that again, probably in the near quarter could be a little subdued, considering that it's only dependent on case, and auto overall has seen some bit of softening, but KPIT has been massively investing in R&D and technology. So for us, it is a more long-term play.
Okay, all right, Gurmeet, the request you to stay with us. Going to come back to you and ask you about, the other parts of business, like what do you like from the EMS space? For the time being, let's hop across to EPAC Durable. They are on our radar. The company has received approval for disbursement of the second incentive of 30 crores under the PLI scheme for white goods. To discuss about this development and how is the business momentum shaping up, we're joined by Mr. Jay Singhania, the MD and CEO at the company. Hi, Mr. Singhania. Good morning, and thanks a lot for joining in here on CNBC TV18. Give us a few details about this incentive that you've received. For which unit was it? Which component was it? And what's the outlook from here on?
So good morning. The PLI incentive we received was actually for the last year, the financial year 2024. We received it just yesterday. So the disbursement has also come. And it's a 5-year window during which every year we're going to get the PLI incentive subject to our achievement of the target set by the government. So again, this year we are on track to achieve another 37.5 crores, which for this current financial year ending March. So in terms of the market outlook, I mean, the air conditioner, our main product, definitely the summer is hitting up every month on month, and the inventories in the trade are still at bare minimum. So I mean, we are in for a bumper season, definitely.
Okay, all right. Just to ask you a little bit more on that, what is the total PLI you've received for FY25 and for FY26? What is the total quantum?
Yeah, so FY24 we received 30 crores. So this was accrued last year, has been received yesterday, and then again this year we are going to accrue 37.5 crores, which should be received. Yeah.
Got it. All right. Let's get to a couple of numbers then. Since
just if I could come in over there on the PLI, which specific component or segment is it for, and do you have hopes of more receivables even in FY26? This year FY25 you said 37. FY26 are you expecting anything, and which are the components or segments for which you're receiving this PLI?
So this is for the AC and LED TV PLI. So in AC we are manufacturing all components except the raw materials. So we're doing all the components like cross flow fans, motors, heat exchangers, sheet metal and everything. So for which 30 crores has been received. This is the 5-year window. So this was the second tranche of the receivable. Now current year FY24-25 will be the third, and then there's another 2 years, so 26 and 27.
Okay, all right. And as you mentioned in your first answer itself, that demand seems to be strong as summer's picking up. Not too good news for us because it's getting so hot too early, but maybe good for your business. What does it mean in terms of business? I think earlier you were guiding for margins of around 7.5%. What's the broad outlook for FY26? Since you're in a bit of a silent period, we'll let you go on FY25. But on the base of what you deliver in FY25, what kind of growth can you give, as well as what kind of margin outlook?
Last year the market grew at almost 40%. This year again, the AC industry is looking at a growth of 25% plus. So definitely at EPEC we are looking at surpassing the market growth for AC. And then the other diversified products which we have started creating, like the washing machines, the air fryers and the component business all put together, we are definitely looking at 35% plus kind of growth for EPEC Durable for FY26. And we will maintain the metal margin at 7.5% plus minus.
Are you being conservative with that 35% number?
It's just the beginning of the year. So, I mean, we first let's go through Q1, and then there's always time to upside the numbers.
And since we're talking about the sweltering summer, Mr. Singhania, we were in conversation with Blue Star and some other industry players earlier, and there was this lot of chatter about possible compressor shortage. I don't know if you're already making all your compressors or if you're also importing, and there's been obviously a request with the government as well to reduce certain non-tariff barriers. I think it was BIS certification, I'm not sure, which could have led to this shortage. Can you tell us what's the situation and how do you meet your compressor requirements?
See, compressors specifically more than 50%, almost currently 60% of the compressors are imported from China. And as a country, we only have capability to meet 35-40% of the domestic demand. So we are heavily dependent on China, and for which the BIS for a lot of factories are going to get expired in June, whereas for 2 factories, it already got expired in November. So the industry as is facing a problem of compressor shortage. And then further down, when more factories the certification expires in June, and the situation is going to get worse. So this is why the industry has been pleading that the BIS certification for this industry, compression manufacturer is good tech.
Is it going to hamper your production? I mean, has it affected production at all in Q4? Could it affect production in Q1?
Q4 definitely as an industry, and besides us also have been slightly impacted, but industry has been impacted more. We were comparatively better covered, I believe. And then for Q1 also we are definitely covered. So we have enough inventory in place. I mean, our orders are in place and we're definitely covered with the secured orders. But yes, as an industry, we are facing this problem.
All right. Thank you very much, Mr. Singhania. We'll talk more, but good to get that update from you this morning. Appreciate it. So that's EPEC Durables with some update. 343 is where that stock is at. Gurmeet is still with us. Gurmeet, any thoughts? You heard the EPAC management, but also, of course, consumer durables is a pack. EMS, etc., which kind of ties in with this consumer durable theme. By the way, yesterday we had two players. We had the Retailers Association of India for a chat, and we had the Electronics Mart, which is concentrated in Hyderabad, Telangana, Andhra, and of course NCR, etc. as well now. And both kind of said demand in January to March, which is the quarter we are in, which is the quarter we are finishing, has been extremely subdued. I asked specifically about consumer durables as well. They said, well, it's kind of very muted. Apparels, etc., zero growth, according to them. Any thoughts?
Yeah, in fact, some of our channel checks also suggested that it's not as great as the commentary coming in terms of early summers. So Prashant, we have Dixon in our portfolio. We have been one of the lucky beneficiaries. So it's not really related to AC per se. But I think a lot of good news is probably in the price at current prices at around 13,000-14,000. And these guys trade at 3-digit multiples. So any disappointment in any quarter can very brutal in this kind of market. So may not incrementally add to it, but if you get some more meaningful corrections, because we think this electronic component is a very structural story, and you will keep seeing more and more top line growth of high 30-40%, and the minor increase in OPM with the kind of value addition they are doing, especially in mobile segment, can add to the numbers. We are tracking Amber now. So if you see of top 10 RACs, they supply to almost 8. So whether it is Daikin, Voltas, Panasonic, Blue Star, Whirlpool included, they are now working on the mobility segment. So in terms of Indian Railways, etc. And then they are obviously diversifying into other segments. But as I said, there is very little price comfort. And in this market, you want to be anchored at places where there is at least some visibility of earnings and some growth. So I think we are looking at Voltas. We've recently taken some position at around at current price levels and adding Voltas to the portfolio is more reasonably valued. And it is a more mass brand vis-a-vis some of the others. And we probably expect the EMPS division led by Middle East and others now to start contributing. It's been a bit of a drag. Although the Voltas Beko JV, I don't think so will add anything meaningful. It will probably continue to be the drag. So that's one idea we are looking at in this space in terms of incremental addition.
All right. Well, Gurmeet, we'll take a quick commercial break here. Stay with us. A lot more questions coming your way with some technical trades as well. Mitesh and Sudarshan join in on the other side. Stay tuned.
Welcome back. You're tuned in to Bazaar Morning Call. Well, let's get you a technical check then. Mitesh Thakkar as well as Sudarshan Sukhani join us on the show. Good morning, gentlemen. Welcome to the show. Sudarshan, you go first. You've got the color, I think, right? Most of us are in pink and purple in the in the studio. But tell us, what's the call on the index? The Nifty is the GIFT Nifty suggesting we gap up 50, 60 points or thereabouts. What would you do? Would you buy into this jump, or are you looking to add on dips, or do you believe you want to stay away for now?
Yeah, good morning. Yesterday, my suggestion was to take profits and step aside because there was a lot of volatility expected. This is not rocket science. When markets have gone up for 2-3 days, then they will pause and probably become volatile and choppy. So yesterday worked out like that. But, this is a very strong up move. In a strong up move, a one-day correction could be exactly what we will get. Maybe this one-day correction came to an end yesterday. Again, I suggest looking to buy. Now you can buy at this gap up. It doesn't matter. At 50 points, it can go up and come down. So you can't time it so perfectly. Or you can buy at a gap up and add on a minor dip. Primarily use call options for April series because we will have a 3-day weekend. So it's much better to look into the next week rather than today and tomorrow. But be long in the Nifty and keep an approximate stop at 23,300. And remember that the stop can jump after the protracted weekend, but we can't do that. So I'm repeating, buy call options, go long.
All right, buy calls, go long. It's, as Sudarshan said, a better way to kind of get over the hump in terms of that news flow early next week with those tariff announcements, etc. as well. And it's a longer weekend as well. Monday is a market holiday. Gentlemen, good morning. Mitesh, to you, what's the call? And especially a word on Nifty Bank as well, which crossed that important retracement yesterday, the 61.8 of the entire fall, but then actually ended lower on the day. Have we completed something there, Mitesh, or do you think not yet?
No, Shansi, I think, good morning. One, we've had a good reversal, and once you have a strong reversal, you will see, supply levels of pivots being taken out. It did that, but what it did not do was to get a closing about the gap down level, which happened on the 18th of December. We had a closing of 52,139 on the 18th December, and next day morning, the open was 51,428. So there was this gap. I think it filled the gap. But then some supply comes in, people who are stuck at a gap level typically will tend to sell when their levels come back. So very normal reaction also is the fact that you are overbought on the hourly and 2-hourly chart. So even if there is more decline, as Sudarshan also mentioned, I think every decline now should be a buying opportunity. Even a small gap up is okay to go along with. I think the Bank Nifty, once it clears this 52,000 level, can easily head towards 52,500 and then possibly even 53,100. So quite positive, and the structure is looking biased on the upside. So stay long. There's nothing to worry about. Only thing is that tactically you might want to see if there's a dip playing out to enter at a better level and get a good risk reward equation. But otherwise, trading on the long side is the way to go forward for the next few days and weeks.
Okay. All right, gentlemen, stay on. We'll come back to you for your stock picks in just a bit. Take a quick break. Back with also the market opening rates. Also, we'll get a conversation going on the IT services side of the market. JM Financial Institutional Equities Abhishek Kumar will weigh in on their IT outlook. Welcome back. We'll start getting the pre-open rates now any second. Let's quickly, in the meantime, go to our experts again and get an idea of the stocks you can work with today. Morning to both of you, Mitesh and Sudarshan. Mitesh, what are the stock ideas for the morning?
Yeah. Good morning, Subi. I have all buy calls last many few days. Today is a buy on Bajaj Finserv with a stop at 1924. Look for targets around and excess of 2000. Britannia is a buy with a stop at 4800 for targets of 4950. A buy on Max Health with a stop at 1155 for targets of 1205. And Reliance is also on the buy list. Keep a stop below 1270. Look for targets of 1310 to about 1315.
Okay, Reliance is doing well in the pre-open, up almost 1%. Got it. Sudarshan, what about your stock ideas?
Well, Bandhan Bank is a buy, and consider buying the stock under 144. IT stocks seem to be coming back. Coforge had a very deep correction, but it's been an outperformer. So Coforge could be considered for buying with a stop under 77.80. Similarly, Tech Mahindra Techem is a buy with a stop under 14.20. And finally, Voltas can be considered for buying again, stop 14.50. This is an all-buy list. This is not a good time to go short anywhere.
It's an all-buy list, not a time to go short. Got it, gentlemen. Thank you very much for the quick updates over there. The pre-open is a little volatile, you'd have to say. The Sensex is dipping into negative territory. The Nifty is managing about a 25-30 point sort of a gain. Mid-cap index is absolutely flat. So it's a quiet opening that I think we're approaching. Some of the heavyweights are still doing well. Like I said, Reliance is pretty decent. And a couple of banks, ICICI, Kotak, they are still flashing. Some green for the time being. Ultratech is cooling off quite a bit after yesterday's move, down almost 2%. Okay, I think we have Gurmeet still with us, so let's take some more questions with him. Gurmeet, so the FIIs are finally here. They found India on the map again, it seems, right? So let me ask you this broad question. Anyway, everybody was saying that large cap valuations are better and you should have more large caps in your portfolio. So within the big boy space, give us one pick, a stock that you're really convinced about. And I hope it's beyond a bank. Like, banks has become a very obvious trade now, right?
Yeah, so I think we like Interglobe. I think they're almost adding one aircraft every week starting second half of this year and maybe early next year. I think you will see early double-digit growth in passenger traffic also. They've given a guidance of almost 120 million passengers, a lot of routes getting added, international destinations getting added, and I think the newly launched business class also, I think they'll probably gain some bit of traction there. And some amazing cost efficiency models would be, 10 minutes saved on 900 kilometers in every flight in turnaround time is additional 700 flights a year. So I think it's probably one of the case studies there. And I'll give you one more. We're adding L&T more. I think you will see a pickup in government spending. And I think what we are seeing now is they're not just an EPC player. They're into energy solutions. There are already news of Qatar energy contract coming their way. They are building OSOCs, which is semiconductor assembly and testing units, and they're obviously getting into defense and other solutions. And order book is almost touching 6 lakh crores in first 9-10 months. It's a gigantic order book. So I think that's another one space which looks good from a near-term visibility as well.
Got it. So Interglobe and L&T, two stock ideas coming in from Gurmeet this morning. Thanks very much, Gurmeet. You have a great day, and we look forward to connecting again soon. Thanks for joining in. All right, so this is what we have in the market. Pre-open seems to be sort of settling down. Like I said, fairly quiet, about 30-35 points up on the Nifty. That's what we have at this point in time. We're putting the spotlight now on the IT space. Of course, IT stocks saw decent gains yesterday. UBS has come out with a very bullish note on the sector. Earlier this week, CLSA said that uncertainty is perhaps priced in for most of the Indian IT players. So what is the outlook ahead? Let's get one more view this morning. We have Abhishek Kumar, IT analyst at JM Financial Institutional Securities, joining in. And I think they have a slightly more cautious approach given the uncertainty around US spends. Great to have you, Abhishek. Thanks for joining in. So some of your foreign broker peers, they suddenly sounded optimistic. What's your view?
Yeah, hi. Good morning and thanks for having me here. You're right. I think we are a little cautious. See, the environment is little uncertain, especially around decision-making when it comes to IT budget. This is the time when clients finalize their calendar year budget, and it has coincided with, a lot of uncertainty coming out of the administration there. So it is very natural for the clients to take a pause. Now, to some extent, I agree that the correction that we saw in the sector priced in some of the maybe earning cuts that can happen because of the delay in budgeting or any potential cut in budgeting. We heard Accenture also not giving a very rosy picture of the environment as we speak. So yeah, keeping those things in mind, I think it is, we wouldn't advise, investors to really go long at this stage. Maybe there is a tactical pullback. We will see how Infosys guides next month. All eyes will be on that. That will set the tone or expectations for growth for 2026.
Abhishek, some numbers here. Some of the brokers, they've actually lowered their overall FY26 growth estimates as well because of the uncertainty in the US. I mean, I think high single-digit expectations came down to mid-single-digit expectations. Overall, if we talk about FY26 earnings, what are your numbers saying?
Yeah, so we haven't lowered our numbers yet. We will do it, when we come out with our preview note. And we have been, interacting with some of the companies and experts. And I think the thing that we are picking up is there are pockets where there are pauses in ramp ups, etc. Even there are some instances of ramp downs. So things are not very clear. And my sense is the initial guidance that Infosys might give could be a little conservative. They would also not like to build in too much discretionary spend coming back, etc. So initial guidance could actually be, mid-single digit or even lower.
All right. Hi, Abhishek. Good to speak to you after a while. FIs, they've returned to the buy basket after a while, right? You would be interacting with a lot of your clients. What's the interest levels for tech particularly? Because everyone wants to see what has not really performed. And top of the list in this year has been tech. The Nifty is flat. The tech index itself is down 13%. What are the interest levels you're getting? What kind of feedback you're getting from institutional investors?
Yeah, so, a lot of people want to understand, if there is a US recession, which companies will be more resilient. Right, because they don't want to underwrite strong growth, and as we just discussed, the growth rates are coming down. And in that scenario, what is the right valuation levels where they can start taking more positions? So it is the resilience, especially among the large caps, where people are more interested. And in that context, we believe TCS earnings will be far more resilient. The growth expectations are low. The margin improvement story, I think, can pan out. Their, margin operating performance, etc., is always very strong in the current environment. So I think we would advise people to stick with TCS. Earning resilience is there, and it is the only stock now which is trading at its 10-year average multiple, right? Every other stock is still at a premium to their 10-year average.
Okay. So that would be a top bet as well?
Yes,
TCS
at this
top
stage,
bet?
among large cap, TCS is a top pick.
And if you could give us the preference, TCS top of the pack, what follows?
Yeah, so, we think Tech Mahindra, they're also the earning. So my thesis is that for next year, companies where the earnings is going to come from margin expansion will see more resilience in their earnings, and TCS and Tech Mahindra fall in that bucket. So these two will be, my preferred pick, followed by Infosys.
Okay. All right. Well, let's give us your closing comments then. What are you going to be watching out for with regard to quarter four's numbers? No big shakes expected, but commentary will be eyed. Tell us the top couple of points that we should be tracking from the majors, because in the next 20 days or so, we'll have almost all of them reporting.
Yeah, clearly. So apart from guidance, obviously that's the quantitative number. In terms of commentary, how the deal wins are shaping up. Has there been any delay in, decision cycles or elongation of decision cycles, especially when it comes to larger deals, or, delay in ramp up of deals already won? and a little bit on margin pressure or pricing pressure. These are some of the things that I'll watch out for to build our numbers for the next fiscal year.
Good speaking to you as always, Abhishek. Thanks a lot for stopping by. Looking forward to having a chat with you as the earnings start trickling in as well. Wishing you a good day for now. Well, let's get our technical guest back on the show. Sudarshan joins us for the 9:10 call. Sudarshan, what's it?
Well, it's Voltas. Consider buying Voltas with a stop under 1450.
Voltas is getting very, very hot. And on the technicals as well, Sudarshan believes it's good for more. Mitesh, what about you?
Yeah. I'll go with a buy on Bajaj Finserv.
Bajaj Finserv as well as Voltas. Thanks, gentlemen. We'll touch base with you in the next hour or so. For the time being, let's hop across to Hormuz. He's here to tell us about Morgan Stanley as well as Goldman Sachs top bets. Hormuz, take it away.
Morgan Stanley has made some changes to its Asia ex-Japan and the emerging markets list, focus lists as well, where they have included both Bajaj Finance and Hindustan Aeronautics. For Bajaj Finance, it recently raised its price target to around 10,500 after Rajiv Jain's elevation. And they say that they see a clear investment outlook and it is now among the preferred picks among the large NBFCs in the country. For HAL as well, they say that the India's aircraft fleet upgrades and expansion plans are likely to create a $60 billion order pipeline over the next decade for the company. Here too, they see an upside of anywhere over 30% for Hindustan Aeronautics. Goldman Sachs has come out with some top buy ideas for its India list as well, where they highlight stocks like HDFC Bank with a price target that is near to 2,100 rupees. AU Small Finance Bank, which has been in the news recently, an 800 rupee target there. Among the consumer names, they have Titan and Godrej Consumer as part of their buy recommendations. Within the industrial names, they have stocks like Interglobe Aviation and Adani Ports, and they also have buy recommendations on stocks like Mahindra & Mahindra, Apollo Hospitals, Power Grid, and on the foreign listed companies, they have a buy recommendation on Ease My Trip, $124 price target there as well. So interesting recommendations coming in from Goldman Sachs as well.
Okay, all right. Thanks a lot, Hormuz, for joining in and giving us that list. But Mangalam is joining in to tell us what BofA has to say on Zomato as well as Swiggy. Mangalam.
Good morning. So yesterday, we were talking about how if food delivery for all these online aggregators starts to slow down, then there might be a risk of downgrades, largely because there is still uncertainty on the quick commerce part of the pie as well. And that's exactly what has happened. BofA has gone ahead and downgraded Zomato to neutral from a buy. They've cut their target price from 300 to 250 odd rupees as well. And they've downgraded Swiggy as well to underperform from buy. They've cut the target price out there as well from 420 rupees to 325. They said that this downgrade is led largely by expectations of rising losses in quick commerce and slowing food growth. So as a result of which, in their revised estimates, their EBITDA for the companies over the next couple of years is 20 to 50% lower versus consensus itself. They're saying in food delivery, while it's not a material slowdown, there might be cash burn or cash flows will shrink out there. Remember, the food delivery business is the cash cow for all these companies itself. And in quick commerce, estimated prolonged competition and the model itself would be amenable to higher losses, as a result of which they believe it's better to wait for some certainty and look for signs of revival in the online food delivery ordering business for them to go ahead and become constructive on this space again, and as a result of which maybe risks are more on the downside than the upside, hence the downgrade.
Okay, all right, Mangalam, thanks a lot for that. Well, Mitesh is still with us. Mitesh, I wanted to ask you about the tech pack. Yesterday, the index itself went to around the 20 DAB. It's been a relative underperformer. The view on the index, any stocks you like from there?
I think the Nifty IT does look like rebounding from oversold levels, but that bigger change which has happened on the Bank Nifty is missing. So I think it could just at best give you a trading rally. The one which I like the most is Naukri Info Edge. That was one of the strongest in the pack. And I think that's heading towards 7,500 kind of levels. And that about, I think, from a trading point of view, HCL Tech and TCS also could possibly give you about 4-5% trading gains.
Okay, all right. Thanks a lot for that, Mitesh. We'll come back to you with more queries with regard to stock moves. The tech index, as we said, yesterday did well, but maybe, in fact, it needs to give a bigger sign to break out from here on. Well, we're almost there with regard to the pre-open rates. It's likely to be a flattish to a mildly positive start. So we get a few rates up for you on the screen. On the Nifty, we open up mildly in the green. We're up close to around 30 points or thereabouts. Par for the course, one would say. No single stock is up more than 1% from the Nifty pack or down by more than 1% on the Nifty pack. So pretty much even Stevens. Hero MotoCorp is up 0.5%. JSW Steel, well, that's the one that yesterday became the most valuable steel company by market capitalization across the globe. That one, in fact, is more or less flattish to kickstart trade. Maruti Suzuki, that's down close to around 0.5% or thereabouts. Let's tell you about the broader markets because we have some big movers out there. Some of them come up for you on the screen. NCC, they are back 2 orders worth around 10,800 crore rupees from BSNL. So that's the stock that's up close to around, I think, 4.5% to kickstart trade. So good going on that one. Welspun Enterprises, that's the one that's back close to around a 330 crore order from the BMC. So that one as well, I think it was up close to around 3%. Now it's up close to around 2%. Ashok Leyland, that's going to be the stock in focus all through the day because the Ashok Leyland board meet is scheduled for later today. And post that, they do have an analyst meet as well. So we'll keep an eye out on that one. Siemens, I saw the initial tick was in the green. That's because the NCLT has approved the energy business demerger into Siemens Energy India. Stock holding high with a gain of close to around 2.5%. SIS, a small buyback is what they have announced. They're going to be looking to buy back close to 2.6% stake. Worth around 150 crores or thereabouts at around 404 rupees per share. So that's the stock we're looking at. Stylem, let's get that one up for you on the screen. That's the one that is in focus with the government has imposed anti-dumping duty on acrylic solid surfaces imports from China for a period of close to around 5 years. So that one as well should come up for you on the screen. And Arvind Smart, I think the stock initially was up in the green. They have sold close to around 200 plots. The total value on that one is close to around 180 crores in Bengaluru. The stock yesterday went home with a cut of close to around 4%. Arvind Smart Spaces should be the stock that's up close to around 2%. So a flattish to a higher start is what we're seeing on the Nifty. From the Nifty pack itself, actually a few stocks are doing well. Power Grid, that's up close to around 2%. Bajaj Finserv, that's the call that we had coming in from Mitesh as well. He's quite positive on that one. That's opened up at the green with a gain of close to 100%. And we have IndusInd Bank that's opened up in the green. Remember, on a valuation front, there is a lot of support out there. The question is, what else are we expecting in terms of a negative surprise? Otherwise, valuation-wise, even taking into account that write-off, well, the stock trades at around 0.7 times or thereabouts. But Vivek joins us now to help us out with the JP Morgan note on the power companies. Vivek.
Well, that's right. Good morning. The utility space has been in focus. This is on account of, the rising demand that is expected due to the impending summer season. Today, it is the turn of JP Morgan. They've written a note where they've initiated coverage on utility space and within the utility sector. They have coverage on 5 stocks. Within those 5 stocks, NTPC and Power Grid, the regulated utilities, is where they have an overweight rating. NTPC, they have a target price of 417. Power Grid, a target price of 316. Tata Power, they have a neutral stance. JSW Energy, underweight. And Torrent Power is where they have a neutral stance. What is the key point as far as that they're making as far as the utility space is concerned? They're saying Indian electric utilities as well as independent power producers actually face structural power demand growth. However, they say that there are sectors in which it makes sense to go ahead and chase expensive stocks. However, they believe that the power or the utility space is not one space where you can go ahead and chase expensive stocks. However, when it comes to individual stocks, NTPC, they have an overweight rating. Remember, they believe at 1.6 times price to book, it's quite reasonable for a regulated utility which is capable of generating approximately 12% return on equity on the book value. Now, coming to Power Grid, they are quite positive on this particular name. They call it their preferred play on structural growth in India's transmission capex story. On Tata Power, they believe that while there are significant positives, the stock, which is currently trading at 2.9 times FY26 price to book value, for average ROEs of 12% at this point of time, risk reward is not very favorable. On JSW Energy, they believe that the valuations are actually at this point of time capped the upside, which is why they have an underweight rating over there. And lastly, Torrent Power, once again, valuations at 13 times FY27 EB to EBITDA is what is limiting the upside. Overall, a positive note as far as the power demand is concerned. However, valuations is where they, at this point of time, they have a few underweight and neutral rating on stocks.
Okay, all right. Thanks a lot for that, Vivek. Well, let's cut across to Prashant as well as Surbi for our very special Market Master segment. Guys, take it away.
Hello and welcome to a special edition of Market Masters. Is the worst over for markets? That remains the big question. Trump tariffs are the clear and present danger for global markets, while India middle-class tax cuts and potential RBI rate cuts are the two tailwinds which we can see right in front of us.
Absolutely. Today we have the top team at ICICI Prudential Mutual Fund joining us to discuss a whole range of issues, and they have assets under management of around 9 lakh crore rupees. ICICI Pru MF is the second largest mutual fund in India. Equity assets at close to 6 lakh crore rupees and debt AUM at around 2.5 lakh crore rupees. The AMC's equity PMS and AIF assets stand at around 33,000 crore rupees. So, Prashant, we're talking about some very large numbers and big money managers here.
And a big view then as well, right?
Yes.
I mean, and a rounded view, because we've got the equity managers, we've got the debt sort of top leader as well. Let's welcome in Anish Tawakle, CIO, co-CIO equity. Anand Shah is CIO PMS and AIF, and Manish Banthia is CIO fixed income at ICICI Prudential Asset Management Company. Gentlemen, thank you very much, all of you, for being here on this special edition of Market Masters. And I think it's an important and interesting time to get that view from you, because so many people who write into us, who reach out, and the feedback from social media and otherwise seems to all point to this one question. Is the max pain over for markets? The maximum pain over? Is it behind? And while we may not be in a sort of, extremely bullish phase, are we to take that maybe, the worst is behind? Anish, let's start with you.
So if we look at the equity space, right, our view is that the large cap space is fairly valued. But one still needs to be cautious in the small and mid cap space. So that's the overall view. What is that based on? We expect the economy to regain momentum, right? Our view is that there is no fundamental problem in the economy. There is no structural imbalance that needs to be addressed. Inflation is fine, current account deficit is fine, inflation expectations are reasonable, bank balance sheets are healthy, corporate balance sheets are healthy. So the only thing that's ailing the economy is weak demand. And weak demand is a relatively easily solvable problem if you get fiscal and monetary support. We do expect monetary support to be forthcoming. And if that were to happen, then we do expect the economy to regain momentum. So in that context, the multiples in the large cap space are reasonable. And if one invests for a sort of a 3-year horizon, returns should be reasonable. At the same time, we would say, look, some of the very exorbitant return expectations need to be moderated, right? So people were, over the last 3 years, had got used to very high returns, and that phase might also not be coming, as you were saying.
That's good to hear that you seem quite confident, Anish, on the underlying trajectory of the economy, and you say there's no problem. Let me quickly get in Anand's view on this as well. Anand, so that's the house call. Now, what is the approach that you're taking? And tell us a bit about what you've been doing through the phase of the correction as well. Have you been churning the portfolio a lot, or have you chosen to use this dip to add to some of your bets in infra and related areas that you've liked in the past?
Sure. Hi. Good morning. So yes, as Anish said, look, the challenge with the market was there was unprecedented, if that's the word I would use. There was an exuberance in the market. You had a very solid 4-year runs in the market, but more importantly, for almost record 27 months, which is around from June 22 to September 24, we didn't have a 10% correction in the market. So I think the challenge with the market was not as much. I mean, yes, there was a challenge in terms of growth, relative to what we have seen in the previous 4 years. The earnings growth rate was also very strong, 35% plus for 4 years. That's also sort of tapered down, but fundamentals in that sense were not like really challenged. The challenge was in the marketplace, which is the valuations and all that. So if I see the data, as on end of February, almost 80, while the markets are down 18.5, 18.8 odd percent, 80% of small caps, as I see, were down by more than 30% from their 52-week high. 60% of mid caps were down more than 30% from their 52-week high, and almost 50% of large caps were more than 30% down from their 52-week high. To that extent, that sort of over-exuberance, we believe, has sort of softened, or we've seen a quick reversal in the market. And to that extent, valuations in individual stocks, individual segments of the market have now corrected to make us a little more comfortable going into the markets, investing into the markets at this point of time. And that's what we've been doing. I think from here on, the key would be stock picking, and which was not even the case, say 12 months back, that if you were in a certain segments of the market, you have seen a lot more pain than otherwise. And that would remain the case even from here on. Even within the sectors, you will find winners and losers. And to that extent, going bottom up, doing stock picking would be much more important from here in the markets than just going in and out of the markets.
I have to ask you this, Anish and Anand. I mean, I think on the equity side, right? Those comments in early February, which got so much attention, it came from Naren, lock, stock and barrel out of mid caps and small caps. And it generated such a heat and debate all across. And Anish, you run the small cap fund, right? I mean, you guys have been cautious way before, and I think Naren was making this point for a while as well, that small caps and mid caps are very expensive. I mean, your small cap fund has been closed for subscription for almost a year now, Anish?
Yeah, almost exactly a year. You're right.
So, is the views still very strong, or are on mid and small caps? You said one needs to be cautious here. The preference is clearly large caps. But as Anand also pointed out, stocks have in the small cap space come off very sharply across the board. So, extremely cautious now. I mean, a little cautious, but maybe a little more attractive. What's the sense on small and mid caps?
See, I think the best way to put it is the risk-return trade-off is far more favorable in the large caps than in the small caps. In the small caps, you still have stocks that, if you look at price-to-book values, they're excess of 5, 8, and then you look at the moats of these business, the competitive position of these companies, it's not that great. If you look at the balance sheets, there's a lot of, stuff that you typically don't want, very high inventory levels, very high receivable levels. So there's enough minefields in the small and mid-cap space in our view. I mean, that's not to say that you can't find anything to invest in, but even in our small cap portfolio, if you look at the published portfolio, we have, a fair amount of large caps because we feel that overall they offer a better risk-return trade-off. So to the extent that's regulatory allowed, we have skewed even the small cap portfolio towards large caps and largish mid-caps.
Right. Okay. So, I mean, point taken. Manish, as Anish started by saying that there is no structural problem in the economy. Demand, though, is weak, and that needs to be fixed. And I think your view, Manish, also is that it needs help. I mean, the economy doesn't need saving, but it does need help, both on the fiscal side and monetary side as well. So, your thoughts there, Manish?
Right. So, we had a very good run in the economy in the last 2-3 years. Last 6 months has been a period of time where we've seen softening of demand. And, as Anish rightly pointed out, there are no major concerns. There was a period before 2020 when we were going through a balance sheet problem in India. Corporate balance sheet and the financial balance sheet both were under issue, and which is where the economy had a very slow growth for a particularly long period of time. At this juncture, we think that India is still in a mid-cycle. And what we are seeing is a mid-cycle slowdown or mid-cycle correction. And these mid-cycle corrections can typically be addressed if you have the right policy measure. So effectively, RBI has to cut interest rates. And rightly so, we've seen one rate cut, and we'll see more rate cuts till the point that demand in the economy starts to improve. I think additionally, fiscal policy is also important. While, fiscal was very high in 2021-22, the government rightly reduced fiscal deficits, over the next 2 years. But at this juncture, if we concentrate on fiscal consolidation, the problem is the government revenue any which ways will start coming down because of the slow economic growth. And that will put additional pressure on the fiscal. To maintain the fiscal deficit, the government will have to cut expenditure at a point when where the economy is at the margin slow. So I think government should not focus too much on consolidation at this point of time, allow the fiscal to slip up a little bit, and then allow consolidation when the growth is back. So you will have both fiscal policy and the monetary policy working at the same time. And, the RBI has also kind of, given liquidity back to the market. That should help the banks to allow flow of credit in the economy. So the combination of all of these should allow the economy to gain momentum back again, and that is, the broad view.
Absolutely. We've seen the signs of that easing, both in terms of the regulatory stance as well as rates themselves, Manish, in the last just couple of weeks, right? I mean, latest moves on the priority sector lending definitions and, of course, the rate cut itself. By the way, what is the house view? How many rate cuts this year?
So we expect, 2 more rate cuts from here, and then it will depend on how the economy behaves. The problem with monetary policy is it, works with a lag. So at some point of time, RBI will have to make an estimation in terms of how the forward-looking numbers are, and therefore maneuver policy accordingly. At this juncture, given where, everything is, our expectation is that RBI will cut 2 more rates.
More rate cuts this year. Got that. Anish, so now, given what Manish has just said, I mean, let's apply that to the problem that you had identified. You said that the correction was because of market valuations, not because of any underlying economic issues. So on valuations and the earnings recovery, what are you anticipating? We're ending this year with very sluggish single-digit, Nifty EPS growth. FY26, what's the recovery? And then do the valuations start looking far more palatable in that sense?
See, basically, but just to clarify one thing, Surbi, I said that there was a demand weakness in the economy. I didn't say that there was no economic issue, but I said the only issue was weak demand, and that then reflected in slower earnings growth.
Yes.
Right? So, and we do expect demand revival. So, look, I mean, we do think the Indian economy can grow in real terms at 7-ish%, and add inflation to that. So, it was somewhere in the 11-12% range for nominal GDP growth is not unrealistic. And given that corporate earnings typically, follow that kind of growth, that would be the level we would expect nominal GDP to, corporate earnings also to grow at. See, the point on multiples is, I always say that, look, there's no, science to saying what is the right multiple, right? One can make a case for 21, one can make a case for 19, right? But the reality is, if you stay invested for 3 years, even if you entered at 21 and 3 years later the multiple is 19, it's only a 10% spread out over 3 years. So it hurts your returns by 3%. But if you've got good nominal GDP growth, if you've got good earnings growth, you'll still make reasonable returns, right? So the point is, there's no point endlessly debating whether the multiple should be 21 or 19. Reality is, it's not outrageously high now, right? That phase is clearly not there. And it could sustain at this level, it could weaken a little bit, but either way, it won't change your returns that much over a 3-year period.
Anish, you said earnings growth should be in line with broad GDP growth, but that still means that maybe
it could be a little bit higher. It should be, yeah.
Yeah. So in terms of a rough range number, do you think we're getting back to 15% earnings growth in FY26?
Let's see how quickly the economy regains momentum. As Manish said, right, there are lags between policy being eased and the recovery taking place. So, I think we should be picking up momentum, but whether for that year it ends up at exactly 15 or a little bit lower needs to be seen.
And just to add, even there is global commodities which will play a certain role. So, you really can't independently decide because there will be global commodity prices and movements which will also have an impact on the on a margin, not great, but on a margin on the Nifty earnings growth rate. So
Anish and Manish, we want to get to sectors and themes you like and you would want to bet on as well, although I think you kind of laid out how you think about markets in a broad way. But just one other big variable, Anand, you threw in the word global. Anish, so I want to ask you, Trump tariffs next week, it's the big talking point. But do you believe that it's going to be a disruptor, it's going to be a sideshow? Will it matter in a durable way, or it's going to sort of, pass in a day or two?
No, my view is that tariffs, as far as the overall economy are concerned, are really a sideshow. The economy is broad-based enough that it can withstand some tariffs. So I would make 3 points, right? Firstly, India lowering tariffs is not a bad thing for the economy, right? So even if we chose to lower tariffs, that would be fine. We've lowered tariffs from the 1990s and the economy has done well. So nothing bad happens if you lower tariffs. Second, see the tariff debate. I think trade is one of the most misunderstood economic issues. it's always seen as one country gaining and one country losing. That is not the case. There are winners and losers within the country. And so if the US, for example, decided to impose steel tariffs, all downstream industries which use steel therefore suffer. So you might as well say that the US has made its own manufacturing uncompetitive by putting tariffs. If the US puts tariffs on pharmaceuticals, for example, more than 1/3 of the medicines they consume are supplied by India. There's no other place that can supply at the rates that India does. So what will happen if they put tariffs? The Indian manufacturers are not making supernormal profits. Demand is inelastic. So prices will have to go up. Right? So I think this tariff issue is just being discussed too much. At the overall economy level, I don't think it matters. And the third point, even if there is some reduction in US demand, right, for Indian products, if this domestic demand is strong enough, you can have greater policy support to make sure that the strength of domestic demand offsets the weakness of export demand. So from an overall economic perspective, I don't think tariffs will be the key factor affecting how the economy delivers or the returns that are generated.
Okay. And a point taken, policy support for domestic demand can offset any weakness to demand for Indian goods, right? That's broadly the view. Of course, sectorally, etc., we'll have to see, but more of a sideshow in a broader context, as far as the Indian economy is concerned. Okay, let's just drill it down to sectors and what you like as themes. Anish, one of the big bets for you has been real estate and housing, right? Have you seen, and we've asked company after company on the program, the channel over the last many weeks, has demand taken a bit of a knock, as wealth effect has taken a hit because of markets falling? What is your own sense? Because, that really has connections with so many other areas and it's so important for the economy as such. Has real estate and housing demand taken a bit of a hit, or does that remain in good state?
So it has softened a little bit, that there's no doubt. So what needs to be seen, right, is that if demand has weakened, the prices in the real estate market should be corrected, or there should be price flexibility downwards so that demand recovers. Actually, if we are sitting here 1 year later, right, or 2 years later, and the economy has not delivered, then the most likely cause of that would be that real estate prices remained stuck at a level where there were no volume of activity, or the volume of activity was subpar. Right? I can't see the economy doing well without good housing activity. At the same time, I can't see the economy doing poorly if housing activity is strong. Even this cycle, right, 3 years back, when you see it picked up only when housing activity started recovering, right? So if there is price flexibility downwards, developers, cut prices to ensure that sales continue happening, and they keep constructing, that would be good enough. The only point I'd make is, I'm not placing a bet. That doesn't mean you should invest in the housing sector or in real estate companies. The point is that is a driver for economic activity across the board. And you can play the cycle in other sectors also, because if housing recovers, other sectors will also do well as a result of the sort of spillover effect. So overall, I'm positive on domestic cyclicals, which includes automobiles, cement, financials selectively, and industrial and capital goods. What we are cautious on is FMCG, and we have been for a while, and IT.
Anish, you mentioned industrial and capital goods. There, the question is that, is one better off in the bigger private sector names, or do PSUs still have a big role in the portfolio? I mean, they've gone through a huge amount of price correction. The orders are still coming in because it's the end of the year. What's your call, PSUs?
So, PSUs across the board, we generally take, at least I take in my funds, a risk management approach. I don't increase the weight beyond a point, and I'm always comfortable with a certain sort of weight managed position in PSUs. And that continues to be the case. I mean, I don't think I've ever skewed the portfolio ever too much towards PSUs. But at the same time, I've never taken the approach that, oh, these are uninvestable and we should not have PSUs. Play it sensibly. When the valuation becomes too much, reduce the position. When the valuation is attractive, very attractive, increase the position. That's always my stance in PSUs.
And on financials, Anish, you said select financials. Can you elaborate on that point? Because it's a very wide basket from capital marketplace to insurance, where there's so many deals happening, to obviously the big banks. What is your order of preference there?
So within the lending space, right, I'm going only for deposit-rich financials. I'm still worried about unsecured consumer credit. So I'm avoiding names where there is a lot of exposure to unsecured consumer credit, particularly if the exposure has grown very fast recently, right? So I would like strong deposit franchises, and other financials, I mean, we like basically, particularly insurance, we have an overweight on. See, basically what I'm saying is if the economic activity recovers, right, both savings and investment pool increases, and there is a greater role for financial intermediation. So financials will do well, provided you avoid areas where there are clear credit risks, or if they are too reliant on, exuberance of capital markets, right? So overall financials should do well. You should avoid areas where there is too much reliance on capital market activity or credit risks.
Fair enough. Anand, what is your view? Domestic cyclicals largely is what Anish has been pointing to. I think you also are bullish on capex and industrials and capital goods and that kind of manufacturing as a theme, etc. as well. Although one difference I can spot, you like IT services. It's a bit of a non-consensus view. Anand?
No, actually that's not correct. We don't have IT services in the portfolio. I think within the manufacturing...
So what do you like, specifically pockets?
Yeah, so again, as I said, this is a nice time to be going bottom up. As I said before, that economy is not broken and it's sort of recovering from a slow growth. And with both RBI and government, some bit of support, the economy should improve. But also there will be enough divergence. So while we will talk about 12-13% sort of earnings growth rate, we will have segments being much better than that, and then there will be segments which will do far inferior. So again, within the manufacturing space, one area where we've been sort of overweight and constructive has been metals. I think that's a little bit of a non-consensus view that we have maintained, given that we believe that China, with its more, higher per capita income, more focus towards, lowering pollution, in that part of the world, their competitiveness in general in manufacturing metal should reduce over time. And to that extent, we believe at some point of time the metal prices have to go up, notwithstanding tariff, which is also doing its own role. But that's one area where evaluations we believe were attractive, and as China recovers or otherwise, we believe the metal prices have to be going up as the costs of producing the same is going up globally, but more precisely in China. So that's one another area that we like.
Okay, all right. That's a great perspective to have on equities. But Manish, we're also rounding up the financial year, and it's been one of those curious years where the Nifty return is about 7.5%. I mean, it almost is looking like fixed income type of returns. Gold has returned 40%. So the question is asset allocation, and looking forward to the next year, FY26, which asset class do you think could steal the thunder? And, also a brief outlook on fixed income itself. And what's the right mix that you would recommend?
Right. So at ICICI Prudential, we always believed in asset allocation. And the reason is that every asset class has a phase where it does very well. And why I say a phase is because there's a lot of behavioral element which get into an asset class. So for example, gold, I mean, we gave a positive call on gold in 22 and 23. And the reason for that was that, one, it has underperformed against a lot of asset classes at that point of time. And secondly, given that uncertainty globally had increased, we thought that gold was a good hedge against, the financial assets. Now, gold has performed, as you said rightly, it has given, outsized returns against other asset classes. Do we see gold as the same hedge as it was 2 years back? I think the answer is no. You need to see the valuation when you look at each of the asset classes. And we believe in mean reversion. So while gold has done exceedingly well in the last 2 years, its ability to give a hedge on the portfolio has reduced meaningfully. I think fixed income looks pretty attractive at this point of time. And the reason we are saying that is, one, we are at a point where, we're seeing a mid-cycle correction. And, we also in the last 3-4 months had a problem of outflows. Now, those outflows also led to tightness of liquidity in, generally the banking system. That led to increase in spreads in the short end of the curve. When I look at, the 1 to 3 year part of the corporate bond market, I see a lot of value over there where, once, some of the liquidity which RBI has provided comes back into the banking system. As we go into the next financial year, the government spends that money. We'll again see that liquidity is easy. RBI is cutting interest rates, and people will then again go back to, protect their reinvestment. And therefore, I think in the very near term, fixed income returns look pretty attractive. Even globally, I think, when I look at US as well, when I look at the prices of equities and bonds, I think bonds have seen volatility over the last 2-3 years. Not that volatility in bonds will not remain, but pricing-wise, US treasuries look much more attractive than US equities. So I'm generally having a feeling that bond pricing globally, which were at 0% before 2020 in a lot of countries, they are now correcting. And as an asset class, bond generally looks much more attractive than a lot of places where, equity was more attractive 4 years, 5 years back.
And that's 1 to 3 year paper, right? That's where you're saying you're seeing the maximum amount of, possible excitement within the fixed income market.
Yes. So we generally track an indicator where we look at the spread between corporate bonds and the underlying, interest rate swaps. Now, interest rate swaps are plain vanilla instruments which expect, the amount of interest rate cuts and therefore the overnight rates over that period of time. And we're seeing that the spread is almost the highest in the last, 10 years. So we find that the 1 to 3 year AAA corporate bond space or the AA corporate bond space looks very attractive in the market at this point of time.
Okay, well, clear view and, bonds clearly more attractive, not just here, globally in the US as well. Appreciate your time, gentlemen, here on this special edition of Market Masters. Anish, Manish and Anand, thank you for being with us here. We'll, of course, get an update on these views as we go along and, of course, figure out where the market is headed as well. So interesting next many weeks and months coming up with lots of events lined up. Thank you very much once again. We'll take a quick commercial break here. Programming continues on the other side.
Welcome back. Well, the markets have taken a bit of a leg down. We're down close to around 30-40 points thereabouts. The Nifty Bank, though, that's the one that's showing some traction. That's up 150 points. The breadth of the market, for starters, is mildly negative. Nothing really to worry about. Towards the end of the year, you expect some of these edgy moves. I think the trend is pretty much intact till we hold this near-term support of around 23,450 odd. Well, let's focus on our next corporate, Engineers India. That's the stock in focus. The company backed 2 orders worth around 750 crore rupees from the Middle East clients. To discuss this and more, how are the order trends and what's the execution outlook? We're joined by Ms. Vartika Shukla, the Chairman and Managing Director of the company. Good morning, Ms. Shukla, and always good to have you on the show. Thanks a lot for joining in. Well, give us a few details. You won this order from the Middle East. What is the total order inflow in this fiscal year so far? What does it take your total order book to? And if you could split it up for us, what's the international ordering as a percentage of your order book?
Sure. Thank you. And it's an absolute delight to be here. I think the orders we received on Monday are the testimony of the fact that we repositioned our business strategy a couple of years ago as to how to create value for ourselves as an organization, not only in the domestic market, but also internationally. So today we have, kind of not overachieve, but I always say that whatever we have as an inflow, we can do better. So we have crossed the 8,000 crore mark as an order inflow in this financial year, and we still have a few days left for this FY. And if we look at the blend of the order inflow that we have this year, we have surpassed 1,000 crore of consultancy services from international market. And this current order which we received on Monday is a blend of the PMC services, the project management services for all the, basically the onshore and offshore work in the Middle East, as well as some of the engineering services, which is again an outcome of the inflow and the services that we rendered over the last 2 years. This year looks good in terms of completion of some of the mega projects which we undertook a few years ago, and also the acceleration of the projects that we have today in the domestic sector in terms of project management services. Yeah.
All right. So you're sounding pretty confident and you're sounding pretty satisfied as well. So 8,000 crores of order inflow, that's the number that we got in there, and around 1,000 crores of consultancy from international business. We got a couple of numbers from you on that front. What's the total order book right now? The last number that we have is in that vicinity of around 11,000 crores. There would be some execution as well. So give us an updated number. What is the order book? Split it up for us between turnkey as well as consultancy. Please go ahead, Ms. Shukla.
So it's close to 12,000 is our order book today. And it's a very healthy blend of about 48 to 49% of consultancy business, and about, the rest of it, about 50% from the LSTK cost plus OB business. So it's a very healthy blend, and we have positioned ourselves accordingly in terms of the business strategy to get orders in the consultancy segment, in engineering, in the overseas market, which has a turnaround period of about 12 to 14 months, realizing our turnover accordingly, and the mega projects which take 36 to 42 months for implementation in the domestic sector.
Got it. And out of this total 12,000 crores, we've got the split consultancy as well as turnkey, but international business as a percentage is how much?
So international business in terms of the inflow that we have had this year is about 12% of the total inflow. And within the order book, something like about 20% would be international business for execution.
Okay. Since you mentioned execution, what about execution? Towards the end of this year, this fiscal, I think the target was in that vicinity of around 3,200 to around 3,300 crores or thereabouts of revenues. And the street has been looking forward to the execution. So do you end the year in that vicinity? And on that sort of a base, what is the growth you're looking at?
So we are hopeful of ending this year, and the visibility that we have is we will meet the last year's turnover targets with a better margin on the bottom. And you saw the last quarter results, we did about 11% on the bottom line, which is also showcasing the model that we have adopted in terms of execution, and also the excellence that we've brought into internal operations by various means. And going forward, the blend that we have today of the oil and gas sector, the infrastructure sector, and the other sectors, also the new age sectors that we have entered, is likely to raise the top line close to about 20% in the next financial year, very comfortably go to about 20 to 25% upward.
All right, so 20 to 25% growth for FY26. That's going to be heartening. And as you said, you've been focusing on improving margins as well. In terms of execution, what is it likely to look like? Because we know consultancy, or their margins are much better than turnkey. So what is likely to be the execution mix? The order mix we have, the order book mix, but execution mix will be what? And what does it mean in terms of EBITDA margins? You gave us the PAT margins, but EBITDA margins, what is it likely to look at? I think the last quarter you did in that vicinity of around 13%. Scope to improve?
Sure, scope to improve. Essentially, it's a blend of both. Today, we work in a more competitive environment, whether we talk of domestic market or international market. And for us to ensure that our value, we create value for our stakeholders, our clients, it is necessary to actually be there to execute those services. So in that, we do strategically position ourselves with respect to our margins, such that we have a healthy order book with a healthy margin. Over the years, we have had huge competition, both domestic and internationally, but our margins will remain as healthy as they were before for the consultancy segment. And on the EBITDA, we expect about 13-14% in the coming quarters because of the nature and blend of the businesses that we have. So I'm very hopeful. Even our margins, which we have won orders for in the LSTK segment, are healthy, and we position ourselves for the value-added kind of projects, wherein we also give to our clients the technical excellence and the competency that we have in our organization.
Okay, all right. What about oil and gas and the diversification away from it? How much will non-oil segment contribute as a percentage of your mix? And there has been a lot of focus out there, right? So how do you see that panning out?
So today, if we see in terms of our order inflow, we have about 52% of order inflow from pure refinery petrochemical, the oil and gas sector, which speaks volumes of the realization of our potential in other areas, not just in terms of the inflow of orders, but the outreach that we have had to position ourselves as a very responsible consultancy firm taking up these orders for execution. So let me put it this way, the other sectors that we have primarily focused are the top layer of the infrastructure, which is about, and of the 8,000 crore plus order inflow that we've had, about 38% is from the infrastructure sector. About the rest of it ranges from the new age technologies, new age areas like hydrogen, gasification, renewables, as well as from the chemical sector. So this is a very good, very sound strategy so far as we go, very well embedded, not just in the functions that we do, but also what the market actually wants from an organization like us.
Final question, ma'am, before we let you go. There's plenty of commentary on whether or not there's a slowdown. Are you observing any kind of slowdown in activity? Is tendering activity as much as you were expected?
Absolutely not. There is no slowdown whatsoever. The testimony lies in the fact that the orders we have secured, and it is almost all the investments that are happening in the country, we are positioning ourselves for execution in all the refinery expansions, petrochemicals, working very hard to get the competitive advantage in pipelines, positioning ourselves well in upstream sector as well. And going forward, there are many projects which are on the anvil in terms of brownfield and greenfield projects, as well as other sectors which are looking at investments in various models. And we are going to be there as a serious player to continue our growth journey in terms of inflow as well as execution.
Okay, all right, Ms. Shukla, heartening to hear that commentary. Thanks a lot for joining in. Wishing you all the best, and we look forward to chatting with you on the show in the coming months as well. For the time being, the two big headlines we have is FY26 guidance, 20-25% revenue growth with margins in the vicinity of around 13 to around 14%. Surabhi joins me back in the studio as well, Surabhi. Markets more or less flattish as we speak?
Quiet, I think. It's a quiet Wednesday morning. Let's see how it picks up. Midcap's doing a little better. But I think we've got Mitesh back. So let's get some ideas in on what to do through this day. Mitesh, if you can hear me, what's the call now? Any index trades? Otherwise, what about individual stocks?
So we have positions both in the Nifty and the Bank Nifty. And what we've done is, get into some call spreads, book the futures, given the fact that we have had a rally and possibly are looking at a pullback. But the bias is on the upside very clearly. As I said, we have bull spreads on the Bank Nifty as well as the Nifty, and intend to add more if I get Nifty, closer to about 23,600 levels, which is where we had a low of 23,614 today. Similarly, on the Bank Nifty, the entry point is still at about 51,550 to about 51,600. So in case we get those levels, we'll add more. So the stance is on the positive side. On the stock side, Nykaa is something, you know, which after a long time has come on the radar. Buy here with a stop just below levels of 169, which is today's low. And look for a target of 180, 182 to begin with. I suspect once we cross those levels, we might even look at higher levels. And SBI Life is the other one, which I would recommend buying with a stop below 1550 for targets of 1620.
Okay. All right, Mitesh, thanks very much. We will connect later in the day for some more tips and ideas. Right now, I have to take a very quick break. On the other side, Manisha Gupta joins in with the latest in the commodity space. Welcome back. We have Manisha in the studios for the latest from the commodity space. And I can see Manisha in a very bright shade of copper color. Yeah, I think it's for the season, right? Copper hitting these all-time highs, right?
It is.
All-time highs.
Yes. You know, it's an amazing market right now because...
Beautiful. Manisha is beautiful in copper color.
All right. While I gloat in what the jacket color is, but let me tell you, the prices of copper also have been surging very strongly. I mean, it's become a very different market, you know. So for the longest time, you would see copper as a barometer for international growth or economic growth therein. But that really seems to be breaking in 2025 right now. So when you look at the US copper prices, we are trading at an all-time high. We've seen prices above $5.22 per pound as well. And with that, we've seen prices gain up by 2.5% in the overnight markets. Copper is up by 14% in last 1 month. And if you look at this year until now, well, the US copper prices have gained up by nearly 31% as well. And the last count I saw, it was still on the higher side there. Well, if you look at the US copper prices, they have actually disconnected from what's happening in the rest of the world. So US copper is trading at a premium of $1,400 a ton to LME right now. And that is happening because the US president has been saying for some time now that after aluminum and cobalt and a few other metals, copper perhaps is the next in the list, where you could be looking at 25% import tariff coming in for copper. Now, ahead of that happens, you have seen a lot of copper being flown into US, and the buyers are stockpiling it. You are actually looking at a record number of monthly imports coming into the US markets. Usually it was around something around 70,000 tons, but we understand 150 tons and 200,000 tons of copper is being flown into US at this point. The second point that led the copper prices higher was Glencore saying that they are temporarily halting shipments from Chile, and this is due to some furnace issues. And then the markets also are looking at expectations of more Chinese stimulus going forward. It also is about dollar index trading at a 5-month lows that has been supportive for many of these commodities. And then the demand that copper really seems to be commanding right now, not just in sense of construction and wires and cables, but also from electrification, from AI and renewable sector, is what is telling you that there is a deficit in sense of copper in this year, and expectation of the same continuing in 2026 as well, where various banks and brokerages have talked about large deficits in this year. So while we are trading at an all-time highs, and while there is a huge disparity, but the street also is throwing a word of caution here. One, the Chinese demand is not so strong at this point in time. The second point is we already have seen an all-time high, and you could be looking at some profit taking coming in. And the tariffs, as and when they do come in, that could weigh onto the demand for the rest of the world, barring US there. The weak physical demand is China will continue to weigh onto the markets. And then it also is about markets looking at higher inventories piling up in US. The street will, of course, watch out for the PCE data from US tomorrow, and the further direction would come in from that.
Okay, all right. Got it, Manisha. Thank you very much for the latest. Copper hitting all kinds of records overnight. We'll take a break on that note, come back on the other side. It's our special segment, Indianomics. Lata today speaks with Niti Aayog agri-expert Ramesh Chand and Harish Damodaran of the Indian Express on how Trump's tariffs can hurt Indian farmers.
Just trying to do the right thing for the American taxpayer, for the American people. Just a thank you to the Doge team who are literally getting death threats and being accosted. And here.
You know, these are a lot of them are just kids. You know, they're just trying to help out, and they're very talented. They could get jobs for millions of dollars a year. Instead, they come here, earn peanuts, and get death threats. So thanks to the Doge team.
Welcome to Indianomics. The much feared April 2nd deadline is upon us when US President Donald Trump has threatened he will impose reciprocal tariffs on all countries, especially on India. He names us several times. India's exports to the US is only $85 billion or 2% of India's GDP, and our imports from the US are only $45 billion, which is around a little over 1% of India's GDP. But if tariffs on imports from the US and indeed other countries is reduced to zero, can there be a flood of imports which can endanger many industries and crops? Today, we first take a look at the agricultural sector and check out how many lives and livelihoods may be endangered and how India should or can tackle it. Joining me is the accepted expert on the field, Ramesh Chand, Member Agriculture of the Niti Aayog, and Harish Damodaran, Rural Affairs Editor at the Indian Express. I think the best brains on agriculture. Dr. Chand, Harish, thank you very much indeed for sparing time for us. Well, Dr. Chand, let me start with you. What is the area, the vulnerability within India itself? How many crops and how many lives are we talking about in terms of impact?
Lataji, I feel before jumping to specifics, we should talk a little bit about wider implication of what President Trump is seeking in trade from other countries.
Okay.
You see, now reciprocal tariff means that if every country has to have same tariff, then you lose the opportunity to take advantage of trade. Second is that these things are agreed under WTO, under multilateral trading agreements. So if Mr. Trump goes his way, I think that will unsettle this multilateral trade agreement, and every country will be forced to have two kind of situation. One in response to what US demands, and second is in general what we have committed under WTO.
What you're saying is, let us assume that the US says the average difference between average Indian tariffs and average US tariffs is, say, 10%. So he imposes 10% on all Indian goods, and we also have to only bring it down to 10. You're saying that we will have a separate tariff for the US and separate tariff for non-US countries. Will that be the situation that we can live with, or will we be pulled up by the WTO?
You see, it is not only India. He's asking for this thing to every country.
Okay.
I think in this kind of situation, I would have expected WTO to call a session and discuss that how we deal with this situation. Right now, Mr. Trump is looking at interest only of US, and he is asking other country that you align your tariff and your trade to my situation. So it's a very complicated kind of situation. But in the short run, I think in order to avoid disruption in the trade flows, in order to avoid sudden change in situation, countries will adjust to reach some agreement with the US, leaving aside whatever is the most favored nation agreement with other country. Okay. I foresee that kind of situation.
Okay, so just to for purposes of economy of time, let us assume we have different tariffs for US goods and for the same thing. Say, for instance, milk. The tariff, milk powder, tariff on US is less, but it is more for New Zealand and Netherlands. Let's assume that. Still, if you can tell me, what will be the vulnerable families? Are we looking at, 40 million families endangered? How serious is the impact?
You see, we are exporting a couple of products to USA. In many areas, the US is not likely to push export of those products which we are exporting to US.
Okay.
So in order to accommodate tariff, you see in trade negotiation, it is not straightway 2+2. There are so many ways in which the interest of US can be taken care. Like you know that we export rice to US and many other countries. Still, we are having duty of 30%, 40%, depending upon type of rice. As an example, we have that duty.
Yes.
So those commodity where we have strong advantage in export, where we are exportable, I call such tariff as redundant.
Okay.
So we can reduce those kind of tariff even to zero to see to it that that this gap between the tariff which US impose on our export and but we are having on their items. This kind of possibilities are there in couple of sections.
Okay, so then that will be the key question to you. How will India tackle it, or how should India tackle it? But before that, let me get Harish into the conversation. Harish, what is your sense? Will there be any flood of imports from the US that you fear?
I don't think immediately, Immediately, I don't think, like, for example, I don't think dairy products from the US are going to come, I think we have more to fear when it comes to dairy products, more from New Zealand or Australia or European Union than the US. And I think that the US basically wants to export, corn, cotton, and soybean to India. I think these are the main things, And plus, I think the US is losing a major buyer, which is China, so because that is a real trade war. So it wants some kind of a replacement market for China. And I think these are the three commodities which they are really interested in, in corn, in soybean, and in cotton. Whereas I think India, will stand to lose, a market, say, for example, shrimps, I think we do something like $2.5 billion, If tomorrow, if they were to impose, 30% import duty on shrimps, which is what the duty which we impose, so going purely by the logic of reciprocal tariffs, then definitely that's going to be endangered. And same with, I think, Professor Ramesh Chand talked about rice, So tomorrow, if they were to impose, 30% duty on basmati rice. So I think we have definitely our export interests to defend.
Okay.
And regarding those other commodities, as I said, we need to take a call on those. And other things like, almonds and walnuts and all, I don't think we need to, because we hardly produce those things.
Oh, right. Okay, so according to you, exports are the ones that you would concentrate on, and there you think vulnerability of rice and shrimp. Dr. Chand, now for the real meat question. How should India go about tackling this reciprocal tariff threat?
One is, as I already mentioned, that we have scope to reduce import tariff on many commodities without any threat of large import coming into country. Like, for instance, we are putting duty of 100% on tea. Now, US doesn't export tea to India. That is for, say, other country like Sri Lanka or Vietnam, those sort of countries. So if you look at case by case, commodity by commodity, there are many areas where India can accommodate what US want from India. And in this kind of situation, I feel we have to go for give and take, and already negotiations are happening, and ultimately we should move in the direction of bilateral trade agreement where the interest of both parties can be addressed. Even if we are having high bound tariff in some commodities, that is not that we are always applying. That is in case of special situation when international prices crash. It is that kind of situation that in order to maintain some sort of price stability for our producer, we are keeping that as a cushion. We are keeping that as a safeguard in those kind of situation. We hardly go to that kind of situation. So in bilateral talk, this kind of possibilities, flexibility can be built.
Okay.
So I think we should talk. We should just look at where we can accommodate U.S. interest.
What is your best guess? What happens on April 2nd? Will we just promise this bilateral and get away with the status quo?
You see, it's very difficult to predict Mr. Donald Trump, but we should be trying is that we should seek more time. You can't do these things just under kind of hammer. So we should seek more time, and we should engage more frequently. And as I said, that in this situation, we should try to have a bilateral trade agreement with the USA, which is mutually acceptable to both the parties.
Okay, I guess that's why Mr. Piyush Goyal was in the US, and that's what they're trying to hammer out. Harish, what is your suggestion? What is our best way out, and what are you expecting on April 2nd?
No, April 2nd, let's forget it for the moment. Okay. But I think definitely there is a possibility for a bilateral trade agreement. You know, and I think maybe we should retain our WTO bound tariffs for the present. But when it comes to the US, maybe we can have some kind of a special duty dispensation, maybe some kind of a tariff rate quota. You know, we can say, hey, we'll buy so much of soybean oil from you at a concessional rate of duty. You know, I think we can do something like this. You know, so see, they want market access. You know, and which we can give them, and we can give them maybe some kind of a preferential market access. So probably tariff rate quotas can be one way of doing it. You know,
okay.
But my feeling is I don't think Trump is going to be very aggressive with India beyond a point, because I don't think he would want to take on both India and China, you know, and I think that is some kind of a leverage which we have, you know, and because China clearly is going to reduce its purchases from the US, you know, they are sourcing more and more from Brazil, from Argentina, from Russia, from Paraguay, you know, all these countries, you know, they are very clear, and so I don't think I think definitely there is some room for maneuver from our side.
Okay. See, going by the tone of President Trump, it does look like he's calling the shots and not we. Last thoughts from you, Dr. Chand. What is your sense that, what is the 1, 2, 3 things that you are expecting that we will do, provided we get time?
I think one, that Mr. Trump, his primary interest is to reduce trade deficit.
Yes.
And there are possibilities of reducing trade deficit in case of agriculture products. You know, Lataji, we are the biggest exporter of edible oil in the world. I think the latest figure is $18 billion US.
Import.
So that is what we are importing, and US produces a lot of soybean and even canola oil, those kind of things. So I think we can bring this in, that the best way to reduce the trade deficit in agriculture between US and India is to have more import of edible oil, vegetable oil from US.
Okay.
Also, the major import from there is the nuts, tree nuts, dry fruit, particularly almond. That 40% of our import are from US. Already duty rate on them is 7%, 9%. Okay. Even if we reduce it to what US is applying on us, it will not affect our domestic consumers.
Okay.
We can also accommodate to some extent in terms of duty on temperate fruit. particularly Apple.
Okay.
You look at the price difference between Washington Apple selling in India and Indian Apple is huge.
Okay.
So even if we halve duty from 50% to 25%, the price difference remains. The consumer buy US Apple because of quality, freshness, juicy, and many other kind of things. So like this, there are many areas, I think, where we can offer give.
Right. That is good to hear, sir. You both of you are not sounding too alarmist. I was more worried about the agricultural sector. The industrial sector perhaps will have more elbow room. We will discuss that subsequently. Thank you very much, Dr. Chand and Harish, for joining me. Key takeaways, we should buy time first, enter into bilateral agreements, and perhaps give up a bit of duties in terms of rice, where we are anyway competitive, offer quotas, for instance, in edible oil, where we are anyway huge importers, and give US access to those markets. Markets like milk are not endangered. That's what our experts are telling us. That's it on this edition of Indianomics. Thanks much for watching.
Hello and welcome to the Global Dialogue. I'm Shireen Bhan. Two trends captured public imagination through 2024. Artificial intelligence and the big breakthrough as far as weight management is concerned. Mounjaro, that's the drug from Lilly, has just officially been launched here in India to talk to us about the potential, about the road ahead, and what we could expect in terms of more breakthroughs. Is the global CEO, Dave Briggs. Many thanks for joining us here on CNBC-TV18. It's a pleasure having you on the program. Let's start by talking to you about Mounjaro. You've got the first mover advantage. You've launched here in India. What do you believe the headroom for potential growth is?
Yeah, well, such an exciting day for our company in India, for Mounjaro, and especially for patients who are looking for a way to control their diabetes better or their obesity. And India now joining a list of countries launching this product, making an impact in so many ways in society. So, what could be the impact? Obviously, it's a very large opportunity. There are, the prevalence of diabetes is very high in this country, and that's a serious condition where we need good medicine for. Mounjaro is proven to be very effective in controlling diabetes and helping people lose a little weight with diabetes. And then for obesity, which is almost like a precondition to other very serious health problems, we're seeing really strong uptake in many markets where we've launched, and I would expect that here as well. Unfortunately, overweight and obesity is a reality in India.
But it's not seen as a disease.
Yeah, but it actually is, by WHO standards, classified as a disease. And even if you want to argue with that, it's totally clear that being obese leads to more diseases later, over 200 adult conditions. And some studies have shown almost 40% of adult disease is triggered by obesity. So it's important people manage their weight, hopefully with diet and exercise, but if they can't, now there's a medicine, Mounjaro, which can really have a profound effect on their body weight.
Before I talk about the future of Mounjaro and what you intend to do with it here in India, I just want to go back to the backstory, because this is not new. We've had GLP-1 and, it's 2006. In fact, you had it on your annual report in 2007 on the cover. Why do you believe we've seen this kind of a breakthrough, and what does it mean now in terms of future adoption?
Yeah, as you mentioned, this class has been out a long time, and there are people with questions about, is it new, is it safe? We actually know a lot about the GLP-1 mechanism and its safety. No drug has no problems, but we know what they are. So I think patients and their doctors can talk about those risks. It's not like there's unknowns there after 20 years of experience. But what we've been doing is improving that original idea. And sometimes in medicine we think of a breakthrough, maybe like the COVID vaccine that came all of a sudden and helped. But most medicines are more of a step-by-step improvement. We launched exenatide in 2006. It was a twice-a-day injection, so that was inconvenient. So we made a weekly injection called Trulicity, which is available in India today. And we noticed that by making it weekly, there were actually fewer side effects at higher doses. Why? Because the drug is sort of tolerizing once it's in your body. Then we added another incretin, so GLP is one, something called GIP, for a dual-acting medicine That's what tirzepatide is, or the ingredient in Mounjaro. So each step improving to the next, and we're seeing more weight loss, more profound health benefits, better diabetes control with each improvement.
But, you know, and I think this is a number that you gave us in a previous interview that I saw, where you said between Novo and you, it's still about 20 million people globally using some form of weight management drugs at this point in time.
And diabetes, GLP-1s for
and diabetes, and diabetes. So what do you believe is going to lead to higher adoption? And do you have the capacity at this point in time to cater to more demand?
Well, capacity is key. Consumer awareness, physician awareness, also important. Payment and support from health systems where that's appropriate. But as you mentioned, we need to make enough. And right now we've had shortages in the last year in major markets. Lilly's invested very aggressively, though, in our own supply chain. We're in the middle of a $50 billion expansion plan. And those are showing good returns. We're already opening up new factory lines and improving our capacity. This is actually enabling us to launch this week in India because we're confident we can supply the market over the coming years. We wouldn't introduce it if we weren't confident in that.
Well, you know, let's talk about India and the plans as far as Mounjaro is concerned. Do you believe that we could see Lilly manufacture Mounjaro in India anytime soon?
It's, of course, possible. We're expanding our global footprint. There's a lot of discussion in the air about localizing or regionalizing supply chains. And as India could become an important market for us, it's a smaller market for us now, but Mounjaro may well change that. Open-minded about possibilities here.
What could tip you in favor of actually doing local manufacturing here?
We do have local manufacturing for our insulin line, actually, which is very successful. So we need to talk to those partners. We need to understand what the demand in the market is. And we need to, probably get comfortable with the regulatory environment and some other technical specifics, but certainly not ruling that out and open-minded.
And are you open-minded about partnerships in India as well when it comes to Mounjaro?
We are. I think obesity is an enormous public health crisis, so is diabetes, and no one company can do that alone. So actually part of my visit here is meeting with some of the scaled tech players about consumer communication, physician communication, even pharmacy fulfillment, as well as with some of the bricks and mortar hospital chains. And we want to talk to the government about their public health agenda as well. We noticed even the Prime Minister has been on TV talking about obesity and fitness. That's great. And I think that shows as India is developing and unfortunately getting developed country issues like obesity and chronic disease, the government's engaged in that. So we want to work with them and align our messaging.
But what do you believe is likely to be the inflection point post the drug going off patent, which is 2026, and what will that change in terms of pricing? Because it's still fairly steep. I mean, not comparable to the prices in the US, but in India it works out to what, about between 17 and 18,000 rupees a month per person if they choose to go this route.
It is not cheap right now, and that's self-pay today. As more products come into the market, usually competitive forces take hold. Our patent doesn't expire for another decade, but you're mentioning semaglutide. Which we're expecting, and we'll adjust our commercial plans to the realities that may present themselves. Our goal is to reach all Indians who need the medication. How to get there with capacity constraint globally and really educating the healthcare workforce on how to use these drugs safely, that will take some time. But we'll start now with the launch we have today at the price points we have. We expect good adoption and good experience, and from there we can build.
You know, it's kind of being held up as this silver bullet, this magic wand that's going to be able to address a whole host of issues outside of just diabetes and weight loss. The impact on alcohol consumption, the impact on smoking. You do have studies that give you some indications that it is working on both those, don't you?
Well, we have developed. Last year was an important year because prior to last year, I think the question was, does tirzepatide or Mounjaro not just lower your weight, but affect these conditions triggered by obesity? And we had 4 important data readouts. One in a form of congestive heart failure, sleep apnea, which is the people who wake up and snore aggressively, but it's a serious health condition. Diabetes prevention study in that area, and then an earlier study in fatty liver disease. So we're building the clinical evidence. These are not indicated in India. It's important to mention that. But there's scientific studies that have been published and we'll pursue the regulatory pathway for. You're talking about something else, which is what's beyond that. And there are indicators with this class of medications and drugs like it that it's not just affecting appetite, it's affecting other desire centers.
Hedonistic,
exactly. And so the way we know about this is participants in clinical trials from us and our competitors have noted that they have less desire for alcohol, cigarettes, other things. And so certain individual doctors have studied that. It looks promising. Some of those are published. Lilly is undertaking the scaled legitimate studies we need to do as a global pharma player to prove that. And when we prove that, we'll talk about it some more. But it's an interesting effect, and I think draws a lot of interest to this category.
Well, it certainly does. But, speaking of interest, in terms of adoption, there still is a fair degree of stigmatization. I mean, people might be using it, but they don't want to talk about it.
Yes.
And are you seeing that change? I mean, we were talking about how things have changed with Prozac use,
Yes.
because depression wasn't seen as a real disease. It wasn't seen as real. Are you seeing that starting to change now with the adoption rates picking up?
And I love that analogy. Lilly invented Prozac many years ago. When we launched it, the standard of care, doctors would say if you were presenting with depressed symptoms was, you seem a little sad, go home and talk to your family. That was what we did for depression. And now we think of that as that would be malpractice, right? So a medicine can sometimes change society's view of a condition and, of course, the healthcare system's view of a condition. I believe that will happen with obesity. Already the WHO classified it as a serious health condition, a disease, but many of us don't think of it that way. We often maybe see someone who has obesity and think there's something wrong with them. It's like their problem. But actually science now shows if people have gained weight but unable to prevent weight gain, it's very difficult for them to lose that weight without medical intervention. We've had surgery, we've had other medical interventions. Here now Mounjaro is super effective, averaging about 20% weight loss in shorter studies, more than that in longer studies.
Versus people who were put on diet control
only 2 or 3%, yeah.
2 or 3%.
So really a big difference. That's the studies we've published in our label here in India.
But going back to the stigmatization issue, are you seeing more people specifically, at least as far as the developed markets are concerned, coming out and saying that, look, we're using it, I mean, celebrities and so on and so forth?
I think probably it's early in India. We're day one here.
Exactly.
But in other markets where there's been more use of whether it be semaglutide or our drug Mounjaro or Zepbound, we are now starting to see people talk about it more openly. I noticed that in social circles, actually. People say, oh, I've used your product to change my life. I get letters from patients, by the way, every day with those stories. But even on TV and in radio shows and more famous sports stars or Hollywood actors, this kind of thing. Elon Musk has tweeted about using Mounjaro. So these aren't endorsements they're making, but they're just saying, this helped me. And I think that does help society in a way, normalize something that should be normal. Why should we be unhealthy when we have a choice? We can use a product like ours to treat obesity and change people's long-term health outcomes. That's a good thing. Now, if they can do it with daily discipline and diet, exercise, great. That's the foundation of common health. But when people have gained a lot of weight, that's too difficult. And science shows that for most people, not successful. So here's another way to really restore long-term health, to affect conditions like diabetes that are already manifest from obesity. And there'll be more medicines coming, too. So I think we'll look back and say this was a moment of change in terms of the stigma of obesity.
The journey began, as I said, in 2006. What do you anticipate as being the next wave of breakthroughs with regards to this?
Yeah, well, we have 10 other projects in our pipeline. So it's early days. I think we're just getting started. Mounjaro is an amazing drug, but there's even better drugs being developed and thought about. One is in our phase 3, which is a triple acting. So I talked about Mounjaro being 2 hormones, 3 acting, and there's a lot of excitement about this. We're probably a couple years away from having all that data and submitting to regulators. But for people where Mounjaro is not enough, that could be a great solution. And then actually for common use, and here in a country like India, very important, is an oral GLP-1. And we have that in our pipeline. We'll get data this year on this. And that could be really compelling, not just because it's more convenient, but because we can make it at scale. And so to the billion people on the planet who have obesity or overweight, that kind of solution is needed. Although we're scaling aggressively our injectables, and we talked about our capital plans, it will not get to 1 billion anytime soon, but the oral could.
And by when could we expect a breakthrough on the oral front?
We'll get data in the coming weeks on the first study, and really, we've said by the end of this year, we should have most of the data in hand and can begin the regulatory process.
Okay. Well, you know, that's as far as Mounjaro is concerned. But outside of that, the strategic importance of India for you, you've got 3 capability centers here. It's your largest employee base outside of the US. So run me through your One India strategic framework and how India is going to be relevant to you globally.
Well, India is already highly relevant to us globally, but actually for more the process of our work, less of the output of our work. Mounjaro may change that as the market grows with that launch. But India is a core part of our global R&D operations. We have a large center in Bangalore, which has been set up since 2016 and is integral to nearly every step of our global development. We've been very successful at speeding up these processes and really beating the competition with the fastest clock speed from invention to patient. And one of the ways we do that is the follow the sun model, where we have highly skilled Indian talent. And you know, the natural resources of this country is people and their incredible education and work drive. And so we've recruited an amazing team in Bangalore. And when our colleagues in the US go to sleep, they pick up the files and the work continues 24/7. And we don't wait 1 minute to rush our medicines to patients through that process. So that's been very successful. We also have a tech hub in Bangalore, but we're expanding that in Hyderabad with a new tech center. We're out hiring now, so if people are interested, great jobs at Lilly in Hyderabad. And then here in the Delhi area, we have our commercial hub. So One India unites those under one umbrella, sort of more of a corporate presence in your country and a bigger presence in your country. And we're excited to have that launch.
I'll come back to India in just a second, but I do want to talk about what's happening globally.
Yes.
With the tariff announcements coming in from the White House and what President Trump intends to do, we're counting down to the 2nd of April. We don't quite know how this is going to play out. But specifically from a Lilly point of view, but more importantly from a pharmaceutical sector point of view, how do you see the tariff impact?
Yeah, well, it's really unknown, isn't it? I mean, we don't know what the April 2nd documents will bring or what actions may follow. Of course, as a multinational company, you know, global industry, we're not really for tariffs. We think actually both non-tariff and tariff trade barriers should fall everywhere so that everybody can enjoy the benefits of products and we have global competition that's balanced and fair. We would like to get to that end state. If the president's idea is to use this tool to get there, okay, we want to get there. And so hopefully the countries are talking and we can work out a way to get to fair and balanced trade, which I think everyone's for, in a way that creates understanding and so forth. If there are tariffs on pharmaceuticals, I understand what's being discussed is more of a general tariff situation. Yes. For us, that has limited impact because we have very regionalized supply chains already. We can move things around. And our cost of goods is not so sensitive to the end price. Cost of goods for Lilly is about 20-25%. So the basis by which we'd be tariffed is lower than other industries, but it's not a great sign. I think the big thing in healthcare people are watching is the generic industry, where the cost of producing the medicine is much higher compared to innovative. Our biggest cost is R&D. Yes. They don't have R&D. So that might affect medicine costs in the U.S. or in other countries, and that would be that would not be good, I think.
You know, you've decided to set up 4 new manufacturing facilities in the U.S. at a cost of at least $27 billion. What are we talking about in terms of operationalizing those facilities? And do you believe that with this threat of tariffs, we are going to see more possible repatriation to the U.S. of manufacturing?
I think you will see repatriation to the U.S., not because of the tariffs, but because of tax and also the global risk management. So both because of geopolitical overlay and our lessons from COVID, where some of these critical medicine supply chains broke down. We had optimized for efficiency on a global scale, but not resilience. So there's a rebalance in that needed, which means more capital. It'll be less efficient, but more resilient. I think that makes sense for us to do that anyway, and we have been doing that before the talk of tariffs. We're building 6 sites now, we're adding 4 more. So that's a big agenda for us. It will take several years to complete. But in the end, we will have in each region of the world capabilities to produce and manufacture our products. Again, less efficiency, more resiliency. That's probably a good thing for society. When people
at a cost?
There will be a cost, yeah. Whether that's borne by our customers or our shareholders, to be determined. Fortunately, right now for Lilly, we need the capacity to grow. And so we're growing into that those new sites. We need them anyway somewhere, so we're putting them close to home where we had less of these API sites. We have a lot of API sites in Europe, so they're well suited. We have some capacity in Asia, which is expanding as well.
One of the other things that I said captured public imagination in 24 was artificial intelligence, generative AI, and its impact across different sectors. Now, pharmaceuticals is held up to be one example where everyone's talking about transformation, disruption. Hype versus reality. When we talk about drug discovery, I mean, you've managed to actually halve time to market in your tenure as CEO. But what do you think this is realistically going to mean in terms of bringing down the timelines to drug discovery?
Yeah, it's interesting. 24 was the year of GPT and GLP.
Yes,
right. So,
that's right. GPT and GLP is right.
Exactly, yeah. So, but that doesn't end in 24. I think it's accelerating both trends. We're seeing new innovation in incretins and obesity, but also new innovation in AI. Lilly has embraced AI at scale at every phase of our business. So we can think of this in terms of the research layer, and here we get into proprietary use of the technology, the core of our company, inventing new medicines, and we have dozens of experiments. Some are public and being done with others, like with ChatGPT's OpenAI, with Microsoft, with Amazon, with other scaled tech players, the Google team at Isomorphic. That's exciting. Those are partnerships that can form new ways to use the technology to skip wet lab steps, to accelerate early phase drug discovery, find new targets, find new medicines. We have many of those things going on inside the company as well, particularly in the area of chemistry and protein design, where we can use some of the generative capabilities, diffusion models to help our scientists get new starting points.
Yeah.
And that could be amazing for human health. We're also using AI to speed up clinical trials and other development steps, both by predicting what won't work, so we don't spend energy on things that aren't worth pursuing, but also speeding up the core processes. In manufacturing, to increase yield, we have several amazing projects that had a big difference for us in scaling our Mounjaro growth. And then in commercial, speaking to customers, working with tech platforms to present our information that's customized to what they're interested in and serve up solutions to their needs. So across the enterprise, we're all in on AI, and I think it will make a big difference. I think most of the progress we've made on drug development cycle time has not included much AI. So I think there's more progress to be made.
So you've been able to halve it without AI?
Pretty much. So I think we could do even more. Yeah.
So one is timelines, but what about cost? I mean, how much does it cost to put out a drug in the market today?
A little over $4 billion per drug.
$4 billion per drug?
Just before you make one sale. Yeah. So it's hugely expensive and complicated and slow. So on average, the industry takes about 14, 15 years. We're about half of that, but we spend about the same as others. And that is a function of both, I think, two big trends. One is hard to change, which is that science builds on itself. And so each new drug has to demonstrate benefit over everything that came before it. So we actually have to make those comparisons. And it's kind of a constantly escalating comparison.
I can't remember who it was, but one of the pharma CEOs did say that you can't speed up science beyond a certain point, right?
Well, that is true for another reason, because of biology. We have to observe human biology. And some diseases, like Alzheimer's disease, is probably a 20-year process. We can do studies that maybe take 2 years to take a small cut of that, but we can't go much shorter because it's a long, slow process. Cardiovascular disease, obesity, and diabetes are like this too. Some diseases, like a virus we catch, are very short, and that's easier to cut time. So anyway, we have to build on yesterday's success, and the easy ideas are gone. So it's expensive because we have to create better ideas on top of what's already there. The other is regulatory burden, and this is an important point, because around the world we have different regulations we have to conform to, basically trying to do the same thing. So we advocate for common rules across human drug development. US and EMA, Europe agency, are very close. Japan is getting closer, China getting closer. We'd love to see India also adopt those similar principles. Again, the goal is the same, effective medicines, safe for human use, but how we have to do the development is different. That adds cost.
So 2024, a good year for Lilly. 2025, strong guidance that you've held out. You talked us through some of the tailwinds. What could be potential headwinds, not just for Lilly, but for the sector on whole?
Well, we mentioned one of them, which is global sort of
uncertainty,
economic disruption. People are worried about that. Fortunately, healthcare is usually down the list of what gets cut at the household level or the government level. But we attend to that. That's important to notice. I think another is the ability to move our products to market in a seamless way. We don't know if these geopolitical disturbances will change that, but for a while the industry's benefited from, in the major developed markets, relatively harmonious processes. If that changed, that'd be a problem. But the biggest risk every pharma company has is, can you develop something new and better? And that's in our hands. Fortunately, our scientists have been super productive with the help of our Bangalore site and others around the world, other collaborators, and we have a very promising pipeline, including the oral GLP-1 I mentioned and other medicines in oncology, immunology, cardiovascular disease that are on our doorstep.
So let me end by asking you the hope for adoption of Mounjaro in India. What are you working towards, as well as globally? What's the expectation?
Well, we see a world in the future with that solution and the others coming that we can make obesity eradicated. I think that the tools are in our hands to do that. And if we can do that, we can prolong health span, at least, for a huge part of society. So that's a mission we're on. And it may take many years to develop. We need more drugs that we can make at scale. We need better drugs that can even go beyond Mounjaro. But Mounjaro is a great start. This is a core therapy in the treatment of diabetes and obesity that's being established around the world. We have to scale our manufacturing. That's the task of the day, and introduce it in markets like we are today. But we're optimistic that that vision could be achievable. And we hope that Lilly is a core part of that human victory to make obesity, which is a condition that affects so many people, over 1 billion people globally, and so many downstream health conditions, could become a memory.
So addressing 1 billion people, what's the timeline?
I think we could think in maybe 5 to 10 years that could be feasible.
5 to 10 years?
Yes.
A realistic target?
Yeah.
Well, Dave, we wish you the very best of luck. Thank you so much for joining us here on CNBC-TV18 in India with your plans for Mounjaro as well as for Lilly. Appreciate your time.
Great to be with you. Thank you.
Well, with that, it is time for us to wrap up this edition of the Global Dialogue. From all of us here on the team, for now, goodbye and many thanks for watching.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And as we speak, the markets are trading with a bit of a positive bias. The Sensex more or less flattish, the Nifty up close to around 30 points. We have the breadth of the market that's pretty much even Stevens as we speak. Par for the course, Mangalam. We had a big run of around 1,600 points or thereabouts, and some consolidation. I think par for the course.
Par for the course, absolutely. You know, what's interesting is that the mid-cap index at an index level is outperforming, so maybe the lower levels on the frontline indices are protected. Let's get in Chandan Taparia of Motilal Oswal for his view on the market and individual stocks. Chandan, quickly.
Good morning. Thanks for having me, Nigel and Mangalam. So looking at the Nifty first, we witnessed some consolidative move for last two trading sessions, but overall, the index has rallied well by 1,900 points and still has been making higher highs, higher lows on the daily scale. I believe till it holds about 23,500, the short-term bias could remain positive with buy on decline stance, and index has potential to again reclaim 23,850 and 24,000 marks. So we will continue to be with bullish bias with buy on decline. Looking at the data setup, FI's long short ratio has improved. Put writing is visible. We are heading towards its monthly expiry, and index is trading higher than its weekly and series volume weighted average. So with all this view, I believe 23,500 could act as an immediate support to buy on decline stance in the market. Talking about Bank Nifty index, this index has rallied well by more than 4,000 points, making higher tops, higher bottom. However, it has been consolidating from last 2 hours, but supports are intact at 51,250. Until it holds above 51,250, go for buy on decline stance for an upside target towards 52,000. So in both the indices, looking for buy on decline stance with the view that immediate bounce could extend for a couple of more 100 points in both the indices.
What about individual stocks?
Yeah, so looking at the stocks, first there is buy on SBI card, one of the strongest name, which has given a consolidation breakout on the daily and the weekly chart. And this breakout is happening after the long consolidative move of 26 days. And apart from that, longs are intact with positive rollover, holding well above its rising support trend line. So one can buy with support of 855, and SBI card can head towards 900 to 905. Second trading idea, that is buy on Bharti Airtel, one of the strongest name, a low beta with margin of safety. Every small decline is being bought, and immediate support is being placed at 700, 705. Looking at the weekly chart, all set for a major breakout of last 7-8 months. So expecting further rally towards 1810, one can buy with support of 1705. Last trading area, there is buy on Grasim. Selective cement counters have really done well, and Grasim has rallied well from 2300 to 2590 marks in last almost 12-15 trading session. On daily and the weekly, we are witnessing fresh consolidation breakout, and a small follow can lead it to the next higher zone. So one can buy with support of 2520, and Grasim can head towards 2680 to 2700 zone.
Right, take that point, Chandan. Thank you so much for joining in. We'll take your leave on that note with the news that the mid-caps continue to do better. A lot of individual stray stocks, groups, the Reliance, Anil Ambani group stocks actually surging as well, up around 10% for Reliance Infra and the likes. Take your leave. Stay tuned to CNBC TV18 as Trading Hour comes up next.
Doing it to help our country, and our country was riddled with fat, like no country probably anywhere in the world, and we're getting rid of the fat. And at the same time, we're bringing in, we're going to be bringing in millions of very good, high-paying jobs, and we're going to be taking in a lot of money. Our country's going to be very strong. We've been ripped off by every country in the world, friend and foe, and we'll be announcing cars very shortly, and we already announced steel, as you know, and aluminum. We'll be announcing pharmaceuticals at some point in the not too distant, because we have to have pharmaceuticals. We don't make pharmaceuticals anymore in our country. And if we have problems like wars or anything else, we need steel, we need pharmaceuticals, we need aluminum, we need a lot of these things that we sort of don't make anymore, and yet we're equipped to do it all. So we'll be announcing some of these things in the very near future, not the long future, the very near future. And
so exciting is April 2nd is just around the corner, and that's American Liberation Day. That's the day when the rest of the world starts to treat America with respect. And your leadership, understanding how the rest of the world treats us and what balance and what fair trade finally is going to be, is going to take care of America. It's going to launch the External Revenue Service to start to build the power and prestige of America back.
so we're going to take in a lot of money from the outside, and that's going to keep our taxes low, and I think getting a lot lower. It's going to be a lot of money, and that will, the external will take care of the internal to a large extent. So I think it's going to be a beautiful transformation.
Good morning. Welcome to Trading Hour. It's a Wednesday morning. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Vivek Iyer. And there is a bit of a pause in the upward momentum for our markets. We saw that yesterday where frontline indices were consolidating. Right. And today seems to be another session where benchmark indices appear to be consolidating. But bulls are still trying to retain their control in the markets. Look at the mid-cap index. It's come off a tad bit from the high point of the day, but the mid-cap index is still up in the green with a gain of close to about 0.25%. The small-cap index will also come up for you on your screen. The level to watch will be yesterday's intraday high, and that is about 23,869. We're still, more than 200 points away from that level, but I think that would be a place where resistance may kick in. But just in the last few minutes, we've seen the markets turn, because at about 10:45, when I was just walking into the show, it was, the ticker was showing 23,700. So just in a span of few minutes, as that screen will tell you, we've lost close to about 60, 70 points.
Absolutely right. The small cap index has dipped into the red, and mid caps cooled off quite significantly from the day's highest points. Advanced decline ratio, which was very strong at the start of the session, has now cooled off significantly. But quite a lot of individual stocks is what we're looking at. A whole host of banking stocks, especially the ones that were laggards in recent times. So names like IndusInd Bank, names like AU Small Finance Bank, RBL Bank, all of these stocks today have bounced back. IndusInd Bank continues to remain in the F&O band, but despite that has seen a bounce of over 3%. The entire utility space of power stocks are in focus. JP Morgan today has come out with a very interesting note. They've initiated coverage on the entire sector. So both Power Grid and NTPC are the key outperform ratings that they have. They are neutral as far as Tata Power is concerned, as far as Torrent Power is concerned, JSW Energy, they feel is a little overvalued, which is why they have a bit of an underperformed rating there. And Ashok Leyland, this particular stock, the company has been in the midst of a lot of news flow, but later on today is when the board meet is scheduled. We will come to know the outcome of the board meeting, post market hours most likely today. But ahead of the board meeting, the stock has surged almost 3.5%. So both the Hinduja Group stocks, both Indices as well as Ashok Leyland, today bouncing over 3% in the session.
I think the conference call is scheduled at 5 o'clock.
That's right.
Yeah, so 5 o'clock is the conference call. So we'll watch for that. And IndusInd Bank has also gone into the F&O ban today, but it's rebounded from yesterday's levels. But let's talk about power. What's the latest on power? I think JP Morgan's written a note. JP Morgan's written a note, it's a very detailed note. So what's actually transpired is that, number one, they've initiated coverage on the entire power sector. They have two stocks on which they have an overweight rating, both the regulated power utilities or the PSU utilities. That is the one where they have an overweight stance on. NTPC Power Grid, 417 target price for NTPC Power Grid. They have a target price of close to 316. Tata Power, they have a neutral rating. Torrent Power, neutral rating. But JSW Energy, they have an underweight rating. Let's have a quick look at, what JP Morgan has to say as far as the utility space is concerned. First thing they say, India electric utilities as well as independent power producers actually face structural power demand growth stories. So they are positive on the sector overall. As far as utilities are concerned, they face a much tighter demand-supply balance, especially when it comes to the peak power season. Remember, we are now entering the peak power season of summer. However, what they say is that there are specific sectors where it makes sense to go ahead and chase expensive stocks. They believe that power is not one of those sectors where you should chase expensive stocks. Individual stocks are, well, the first stock on the radar is NTPC. It's a regulated utility. They say that 1.6 times price to book is actually quite cheap and quite reasonable for a regulated utility capable of generating close to 12% ROE on the book value. And the stock's corrected from the September highs, so they believe this particular stock can do well from here on. The other stock that they really like is Power Grid. They believe it's one of the key players as far as the transmission capex in India is concerned. They see it as the preferred play on structural growth in India's transmission capex. Now coming to Tata Power, while they like Tata Power, the company has made significant progress as far as renewable energy is concerned. What they're saying is that the stock currently, which is trading at 2.9 times FY26 price to book value, has an average ROE expectation of close to 12%. So they believe slightly overvalued, which is why they have a neutral rating there. JSW Energy, they feel, is expensive, trading at 14 times FY27 EV to EBITDA. So that leaves limited room for upside. And lastly, Torrent Power, again, valuations is what keeps them from turning constructive there. 13 times FY27 EV to EBITDA. So again, as far as Torrent Power is concerned, they like the story. It has significant distribution capabilities, but valuations is what is keeping them from turning constructive. Okay, valuations are limiting. Let's talk about Zomato and Swiggy. There is a downgrade today from BofA. Manglam is here to tell us more. Manglam, what's the rationale?
Well, yesterday there was an upgrade coming in for quick service restaurants from Macquarie, and they said that the next leg of consumption growth, at least in the food space, would come in more from quick service restaurants and not as much for the online ordering space, which is seeing a bit of a slowdown in that space itself. And that's something that we've seen in the way gross merchandise value growth or GOV growth for these food delivery players has been over the last few quarters as well. And using that rationale forward itself, BofA has gone ahead and downgraded both Zomato as well as Swiggy. So they've cut the target price on Zomato from 300 to 250 as well. And if you look at Swiggy as well, from buy, they've cut it to underperform. And the target price out there too has been cut from 420 rupees to about 325 rupees. Why is it that they say that? It's because one, there is the uncertainty on quick commerce profitability, and secondly, the mainstay of these companies, the cash cows, which is food growth, is also slowing down. Though it is not slowing down to an alarming extent, but it is slowed down enough for them to revise their EBITDA estimates for FY26 and FY27 lower by almost 20 to 50% below consensus. And as a result of which, they are seeing further downside risks opening up. On food itself, they believe that while the slowdown is not as alarming, it could shrink cash flows in the food delivery business, and add to that the uncertainty of quick commerce, the prolonged competition out there, and the delayed hopes of profitability there as well kept them a little circumspect, and that explains why Zomato and Swiggy are both under pressure in today's trading session. Thank you so much, Manglam, for joining in and telling us about what exactly is
keeping the QC players under pressure today. But one particular stock, Rima, if you recall, that we had flagged off on Monday, we had told you about how L&T was on the verge and in fact had the winning bid as far as one of the largest ever order wins for its hydrocarbon business is concerned. We told you about how the company was in line to get or become the winning bidder for an order or a project of value close to $4 to $4.5 billion. And this particular project was to be won from Qatar Energy. Remember, Qatar Energy is in the process of expanding its LNG capacity from 70 metric tons per year to 126 metric tons per year. Now, L&T today, just a while ago, went ahead and informed the exchanges that indeed they had won this particular order, and they call it the largest ever order win that they have received as far as the hydrocarbon side of the business is concerned. Now, what we need to watch out for, L&T has not disclosed the exact quantum of the order. L&T actually has slabs where they mention that if the order size is more than 15,000 crore, they call it as an ultra mega project. So L&T, very positive development. It's a large order win, something that we had flagged off to our viewers just a couple of days ago.
It's what about the order inflow guidance? What did it stand for FY25? And now with this large win, do we have any indication of what the numbers, how they stack up?
That's right. So, when you're talking about L&T, what we have to look at is the core order book. So the core order book, order inflow at the end of FY24, leaving aside the IT subsidiaries, they had an order inflow of close to 3.3 lakh crore. On that base, the company had given an order inflow growth guidance of 10% for FY25. And in fact, there was some risk to the upside at the end of Q3. But with this particular order win, comfortably, L&T will outpace its own stated guidance and they should reach they should end FY25 with an order inflow growth of close to 18%. Now, this is taking into account close to $4 to $4.5 billion. The company has not given the exact number of this particular order win, but it's a significant development, a material positive as far as L&T is concerned, and be interesting to see what is the exact order value that the company will give probably post Q4.
Got that. Thank you very much for that. We will slip into a very short break. On the other side, we'll discuss what's buzzing in the commodity space. Manisha Gupta joins in on the other side.
Today, we're delighted to report that Hyundai is announcing a major $5.8 billion investment in American manufacturing. In particular, Hyundai will be building a brand new steel plant in Louisiana, which will produce more than 2.7 million metric tons of steel a year, creating more than 1,400 jobs.
If you're booking an Ola, Uber or Rapido in Hyderabad, it could be a sweltering ride. Cab drivers have launched a no AC campaign, refusing to turn on air conditioning to highlight their financial struggles. For many drivers at ride-hailing platforms, driving a cab is no longer financially viable. After operational costs and platform commissions, they're often left with earnings that barely cover their daily expenses, forcing them to make tough choices like turning off the AC. And so the Telangana Gig and Platform Workers Union has launched this no AC campaign. What are their concerns? Fuel prices are high and running AC means burning more fuel, making trips less profitable. Second is low earnings. Drivers say Ola and Uber take 30 to 40% of the fare, leaving them with just 10 to 12 rupees per kilometer. But operating costs with the AC turned on rise to 16 to 18 rupees per kilometer. Essentially, the driver is left with very little in hand. And so drivers are demanding higher base fares to cover rising costs, lower platform commissions and government regulations to ensure fair pay. The union is also pushing for a Telangana gig workers' rights bill, and if their concerns aren't addressed, they plan to escalate the protests nationwide. While Hyderabad's campaign is making headlines, this isn't new. It has been happening in Hyderabad and even Bengaluru. Drivers in Bengaluru have unofficially stopped using ACs for more than a year. In 2024, drivers even demanded 5 rupees per kilometer extra for AC rides, but this wasn't officially implemented by ride-hailing apps. Most drivers just simply refuse to switch on the AC unless riders insist, and even then, some decline. Now, as the mercury rises, so have passenger complaints. This begs the bigger debate, which is who pays for the AC. Passengers expect
Welcome back to Trading Hour. Well, let's now shift focus to the commodity space. Manisha joins in, and today you're focusing on crude oil, right?
Yes, I am, Vivek. That is because after 3 weeks, this is the 4th straight week that you have seen the crude oil prices continue to trade in the positive. Well, after nearly a percentage point of gain in the overnight market and holding above $73 a barrel, we are holding at a 3-week highs when it comes to the crude oil prices. Well, the constant decline in the US dollar index has been supportive, and then the markets also are looking at 25% tariff on all countries that take Venezuelan crude oil. And major countries that import Venezuelan crude oil are China, Spain and India. And there are impacts that we are seeing herein as well in sense of numbers. Apart from that, it also is about Chevron now exiting from Venezuela. That is what is adding premium to the markets as well. US also is talking about sanctions on Iran, and that's an added premium in for prices. And then the street also is looking at the kind of demand that China seems to be coming back with, and that is added to the prices. The street will watch out for the OPEC and allies meeting on 5th of April, where they decide on whether or not and how much increase in output would we be seeing from the month of May. So all of those factors together supporting crude prices on your screens.
Thank you very much for that. We will slip into a very short break. On the other side, we'll invite the first corporate on the show, Santosh Kumar Yadav, CMD at KRN, Heat Exchanger and Refrigeration.
Especially in the scorching summer heat. Drivers say they can't afford it unless fares increase. Ola, Uber, Rapido haven't provided a clear solution. No pricing model for AC usage, no opt-in feature either. So should drivers absorb the cost or should riders pay extra? Let us know what you think in the comments below. There doesn't seem to be an easy resolution to this tug of war. Perhaps us riders should consider investing in one of those handheld fans for now.
Welcome back. The mid-cap index is managing to hold on to its gains, so it's in the green right now. HEG and Graphite India continue to power on. Yesterday as well, there were double-digit up moves, and today HEG is up close to about 4%. Graphite India too has a gain of about 2.5% thereabouts. So the momentum in these stocks continues. Tourism finance comes up on the price and volume charts. It's up 15% today and on pretty large volumes. So keep your eye on that particular counter. Other than that, some of the banks are higher. So even as the Nifty Bank is flat, Dhanalakshmi Bank 5% up, RBL Bank, Bandhan Bank, AU Small Finance Bank. So some of these financial names continue to power ahead. But as promised, let's invite the management of KRN Heat Exchanger on our show today. Recently, the company announced they've secured the Indian Railways vendor approval. This is to supply oil cooler radiators for converter transformers. And with this approval, the company is now better positioned to strengthen its presence in the railway sector. To discuss the opportunity, we have Santosh Kumar Yadav, the Chairman and Managing Director of the company. Mr. Yadav, thank you very much for joining in. So just purely, now that you've been recognized by the Indian Railways, you are an approved vendor. What is the opportunity that you're targeting? And currently, what percentage of your revenues comes from railways?
As of now, we are not supplying directly to railways. So there is a nodal agency called BLW, Banaras Locomotive Works. So this new facility, actually, we added this oil cooler and we have to supply it to for electric loco. So there is the procedure. So we applied for our new facility. So they come for see our facility. And this is called CCS, Capacity Cum Capability Assessment. So they visited last month and then they checked our whole facility, our machines, our documents, and based on that, they approved our facility. Now we can supply proto for field trial to them. And after trial, it will take around 6 months. And then we can enter in the mass production. And then we can maybe enter in a bulk order, and based on tender business, because it's a tender business. So based on that, we can receive the order and then we can supply continue. So,
but generally, what is the total addressable market for you for oil cooler radiators catering to Indian Railways?
So it's roughly around 3,000 numbers for this electric loco as of now government making. So like one electric loco have one piece. So you can say total is the 3,000, but based on tender, what number we can receive and then we can supply.
Mr. Yadav, so you said you supply close to 3,000 exchangers to the Indian Railways. Is that number accurate? And with this, with this certification on board, what will now be the number that you will be able to provide?
No. Like Indian government, because this product used in electric loco. So as of now, production is around 3,000 numbers. So at tender business, what tender we can get, and based on that we can supply. So as of now, we received like only 10 numbers as a prototype. So once we submit the proto and then they based on field trial, then we can enter in bulk ordering like in tender, and then based on like receipt of the tender, we can supply.
So what would be, sir, the value of one unit? You're saying you've got an order for, a pilot order for 10 units.
Yes.
So one unit, what would be the value?
So roughly 3.5 lakh.
Okay, 3.5 lakh.
Yes.
Right. And how many such vendors are on the approved list for the Indian Railways?
So there are multiple vendors. I think in bulk ordering, maybe more than eight vendors is there.
Okay, sir. Understood that, sir. Now, you've given us a sense of the opportunity size. You've given us a sense of the value of each order. Also, help us in terms of what is the margins that you enjoy in these particular segment itself, and typically how does it percolate, and what is the timeline post receiving the order till going ahead and booking the revenue?
So this is the procedure like that. Now we receive the 10 numbers, so we have to supply to them maybe in next couple of weeks we can supply, and then there will be the field trial around 6 to 7 months. So successful of the field trial, then we can enter in bulk ordering, or we can have like if government have new tender, then we can participate and then we can receive and then we can continue supply. About margins, I think is the tender-based business, so it can be changed, but it's now roughly gross margin, maybe you can say around 30% of as of current price.
Gross margins 30%. So while it's a positive, no doubt, would you say it's not material? Because even assuming the total market opportunity of 3,000 electric locomotive units, and for each, what you're supplying is about 3.5 lakh, which means if I just multiply, we're looking at, 105 crore in terms of an overall opportunity size in rupee crores, 105. That also divided amongst multiple vendors, at least 8. So is that the way to look at it? The total TAM is 105 crores?
Yeah, for particular that segment, yeah, you are correct. But for as a bar and plate detection, there is the other opportunity as well, like off-road vehicles, and then heavy earth movers, then compressors, and then forklift trucks, and compressors. So other vendor is also under approval, under approval process. So we have to supply to them as well. As well, we can export into our export market also for this oil cooler.
Okay, so once you...
One of the only customer.
Okay, so you're just testing the capability. You've got an approval from the Indian Railways, but now you're also trying to get approved by other segments like heavy motor vehicle, etc., off-road trucks. Is that correct? And exports.
Yes.
Mr. Yadav, just moving on from this particular point, a lot of companies, within this particular segment have actually alluded to a shortage as far as specific raw materials are concerned, input materials are concerned, especially the shortage of compressors. Are you facing any challenges on ground? What is the current order book? Will you be able to execute the current order book completely without relying on further compressors?
As we are not making full machine, we are making only heat exchangers. So because we are not using compressor, of course, OEMs, they are using compressor, and mainly the shortage in the room air conditioning only. But we are not doing room air conditioning, very less. We are doing commercial side like metro, train, bus air conditioning, and then heat, and then fan coil heat, and then comfort cooling, data center cooling. So I think that market I have no issue of compressor. Only room air conditioning, you can say there is a shortage of the compressor. So for us, I think there is no impact. We are comfortably on same way.
Okay. Also, give us a sense of the demand as far as the export market are concerned. I think 9 months FY25, it was close to 14% of the total revenue. Where will you end FY25 at, and FY26, what kind of growth can you see?
So if you did a study on us, so we are investing almost 350 crore in our new ventures. So we are expanding our capacity almost 6x compared to our existing facility. And this new facility will start from next month onwards. So as of now, we are doing whatever doing almost full capacity. But once we have from next month new capacity, then we can have almost 6 times we can do more. About export, we are doing with our existing customer around 20% of our top line to export. But from new facility, we will targeting for our existing product around 50% we will do export side. So we have customer in pipeline. We submit the proto and we submit the samples. But so we are waiting for new facility to start, and then we can enter in the mass production.
Thank you so much, sir, for joining us and giving us a sense both of the opportunity from the railways as well as the path going forward. Thank you. Well, a small programming note for our viewers. CNBC-TV18 and HSBC India are back with Season 2 of SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact and shaping the future. Nominations are now open. Scan the QR code now and submit your entry for the SME Champions Award Season 2. Welcome back to Trading Hour. Well, technical analyst Mitesh Chakkar now joins us for a quick technical check on the market. Mitesh, thank you so much for joining in. First up, even as we speak, it's been a very choppy trading session, opening higher, cooling off a little bit. Now, Nifty absolutely at the flat line as we speak. Where do you see markets headed from here on?
Good morning. My sense is that this is just a normal consolidation post that big rally for the last 7-8 sessions, and I think this will possibly provide you with fresh entry points on lower levels. Also, the directional bias remains on the upside, so you just have to identify where this sideways activity or maybe a mild pullback will end, and that's the point to possibly buy into the stocks and even on buy onto the index, and even on stock side we are trading with some kind of a long bias.
What about stocks, Mitesh?
So I have buy calls on HCL Tech. I think that's one stock which is doing well. So keep a stop at 1625. Look for a target of around 1680 to begin with. We might even eventually look at higher levels. And the other stock which I like and which hasn't really participated on the upside is Trend, which is showing strength today. So buy here with the stop below levels of 5200 for targets of 5550.
Got that. Thank you very much. Most of large cap IT has retreated a bit after the recent run up, but HCL Tech is holding on, and that's a buy call by Mitesh today. HCL Tech is up close to about 1%. Wipro's down half, Infy is down half, Tech Mahindra is down nearly 2%. So HCL Tech is holding on to its gains. Get into a break. On the other side, we'll get chatting with Atul Singh, CEO and Director at LGT Wealth. Stay tuned.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics the key news makers of the day. Discover the big themes as we decode the business of markets, macros and
Welcome back. Now, Morgan Stanley today has added 2 new stocks to its focus list, while Goldman Sachs too has released a list of its top buy ideas. Harmis is now joining in with the details.
Significant changes have been made by Morgan Stanley to both its Asia ex-Japan and global EMs focus list. Now, the stocks that have been added to this list have both been on the radar over the last few days, and those are Bajaj Finance and Hindustan Aeronautics. Now, Morgan Stanley has recently raised its target on Bajaj Finance to 10,500 after Rajiv Jain's elevation as vice chairman. For HAL2, Morgan Stanley sees an upside of almost 30% or more with that 5292 price target. Now, Morgan Stanley believes that HAL is poised to see an order pipeline of over $60 billion over the next decade, and that engine upgrades and exports is going to support its growth going forward. Now, Bajaj Finance is also its top large cap NBFC pick as the dust has settled on its leadership transition, and it also sees credit costs declining going forward. Now, moving to Goldman Sachs, they've highlighted 10 stocks that are part of its buy list from India. HDFC Bank features on top of that with a target of close to 2,100 rupees. And it is also best placed to benefit from RBI's liquidity measures and a likely 15% earnings CAGR going forward. The other financial name on this list is AU Small Finance Bank, where it sees a 31% earnings CAGR, and valuations are attractive and the cost of funds are also improving. Now, from the consumption space, Titan makes an entry here, and Goldman Sachs is banking on a 20% jewelry EBIT growth in FY26 compared to just a 6.2% CAGR that it had seen over the last 3 years. For Godrej Consumer, Goldman Sachs is expecting a price recovery in the soap segment business to aid the margins, and that new formulations of the company are aiding a turnaround. Now, India's largest port operator, Adani Ports, is also a part of this list, and Goldman Sachs believes that volumes here are likely to accelerate, valuations are reasonable. And the other one that part of the list is Indigo, which is India's largest airline, where Goldman Sachs here is expecting market share gains to be sustainable. The industry is consolidating, and its international business also has a long growth runway going forward. Now, another stock that has been the news recently is M&M, and Goldman Sachs here is anticipating a ramp up of its recently launched battery EV, a pickup in its farm equipment business, and potential value unlocking in its unlisted arms that is leading it to a 3,800 rupee price target here. Now, for Apollo Hospitals here, Goldman Sachs is expecting to see better hospital occupancy in FY26, and its digital business, which is Apollo 24/7, to break even soon, and it has a price target of over 8,000 rupees on that stock as well. Now, the last 2 names on the list are Power Grid and Make My Trip, where for Power Grid, Goldman Sachs is seeing a significant opportunity in the transition-linked grid infra and a structural need to overbuild the grid going forward. While for Make My Trip, which is listed in the US, of course, it has strong underlying travel trends, the industry structure, a favorable one that is likely to aid its margins, and it is likely to expect a $300 million free cash flow going forward as well. So markets fell, valuations corrected, and now it does look like brokerages are getting their shopping bags out for the Indian markets for sure.
Thank you so much, Hormaz, for joining in and explaining to us the very interesting report that's come in as far as Morgan Stanley is concerned. But moving on, Atul Singh, CEO and Director of LGT Wealth, joins us now to discuss market fundamentals as well as its top sectoral picks. Thank you so much, Mr. Singh, for joining us. First up, post this very sharp correction we saw, Indian markets have actually rebounded quite significantly. Do you feel that this particular rally can sustain, or do you feel markets once again could revert to fundamentals where earnings has been quite muted?
Thanks, Vivek. Thanks for having me on the show. No, I feel that the rally has more steam, and it's sustainable because it's driven by, of course, locally RBI started the rate cut cycle. The inflation came in within the 4% plus minus 2% range. So opening up room for 2 more rate cuts, possibly later in the year. Tax cuts from the budget will help consumers as well in terms of their discretionary spending. Valuations have come down also to reasonable levels. So, the market is trading at, on a 1-year forward basis, 1 standard deviation lower than the long-term average. So reasonable valuations. And above all, globally also, the yields have cooled off in the US, as well as the dollar has gone down a little bit and cooled down. So I think combining the global situation as well as the fundamental factors in India, we feel that the rally is sustainable and has legs to go.
You believe it's a great time to build an investment portfolio, Atul. Morning, Rima here. So how does one go about building a great investment portfolio now for the next 3 to 5 years?
Well, I mean, you're right. I think because of the valuations now being reasonable, if you enter at this levels, you are going to get earnings growth and a slightly more than earnings growth because the market is slightly lower than the long-term average. So an earnings growth expected to be healthy. So what I would advise investors is to start building the portfolio, pick the right sectors. You will always see that the next leg of growth comes from sectors or leaders that were not there before, and there is a bit of rotation. So keep an eye, think about what the fundamentals are, and start building the positions in the right sectors and the right companies.
So, Mr. Singh, which are the right sectors that at this point of time you are looking at entering or further increasing your positions, and which are the sectors that you're looking to avoid?
Well, I think banks, both. So financials, both on the bank and the NBFC side, look quite attractive. Consumer discretionary, because of the tax cuts, are sectors well poised. I think to some part defense, because of this whole pressure in Europe to really build defense capabilities, a lot of suppliers that will get benefited from India. So some of those sectors are attractive. I think IT looks attractive as well. A lot of IT companies, their subsidiaries will get benefited with the rate cuts that will happen in the US. And generally, the IT spending is at its high in the US. So IT companies are beneficiaries of that. In terms of the sectors to avoid, I would say consumer staples is probably one sector I would avoid. But great opportunities now emerging.
What about these quick commerce kind of plays? Zomato, Swiggy, they were the favored sectors, the best play on premium discretionary consumption, but they seem to have fallen out of flavor a tad bit. Where do you all stand on it?
Well, I think, the sector is evolving, the competition is increasing. So, obviously it's a great use case to digitize and there is massive scale that can be generated. But in the end, it's a game of execution. Whoever can execute, it's not about technology, it's about really operational excellence. And with the increased competition, the jury is yet out who will actually win the game. Because of scale being paramount here, it is sort of winner take all market. So that's why there is risk because it's not going to be 4 or 5 companies that will get a lot of capital and build a lot of scale. So it will be 1 or 2 companies, but with the increased competition, it's yet to be seen who could be the player. And that's why there is uncertainty in the market, because just the competition has gone up quite dramatically.
What is your view as far as the entire pharma pack is concerned? Stocks, especially in this particular space, have been very, very volatile. Worries about impending tariffs. Do you have a view on what exactly could be the final rate of tariffs and whether Indian companies from here on can outperform?
We feel that I think across the board tariff in the US on healthcare pharma companies is difficult to be applied because US needs to reduce its healthcare cost. So, but even if that gets applied, the Indian companies are relatively better positioned because in generic, the profit margins are very thin. So we feel that they will be able to pass on a lot of the increase in tariff or increased cost to the users. And also there is very limited generic drug manufacturing in the US. For USA to really sort of compete against. So we feel that the impact of tariff, if at all there is, will still be limited on the pharma. And that's what we feel. Sorry, just
Mr. Singh,
sort of
yeah. No, we got that. So we got your views on pharma out of the way. So what we are looking at is capital goods as well as defense. Capital goods, again, stocks have corrected here. There have been worries about capex not picking up as expected. And defense stocks, a few of them have corrected quite significantly from the recent highs. Any views, any positions over here?
Well, like I mentioned, I think there is definitely this play, of long Europe and Europe spending more on defense. So any company that is a direct beneficiary or a supplier, and there are in the defense pack, there are a few, So some of those will be a direct beneficiary and could be a good play to take.
Understood that. And lastly, BFSI, you did say at this point of time you do like this particular space. Within the BFSI segment, where does your preference lie? Do you like the banks? Do you like the NBFCs or any of the beaten down MFIs?
Not MFIs, but banks and high quality NBFCs. I think the credit growth in India is going to be higher than in the past, and RBI is also supportive of that. So banks and they are also trading at reasonable valuations, and also high quality NBFCs. I would still stay away from the beaten down MFIs because there the balance sheets of the users are fairly stressed. But banks and NBFCs both look quite attractive.
Okay. Thank you so much for joining us, giving us a view on various sectors and which are the sectors that could do well or some of the sectors to avoid from here on. But moving on, it's now time for a short break. We'll get you more on the markets on the other side.
Or does it feel like, where did the last 10 years go?
When you're on a treadmill, you're running so fast, you forget how long has it been. So it's been that kind of a journey.
Between then and now, of course, 24 to 34, suits, I can see both of you are dressed in suits now.
When we started, we used to wear t-shirts and used to go to bank branches and ask for payment gateway. At some point, we started keeping beards as well, right?
We used to stay together till at least 3 years back. 2 years back? 2 years.
3 years back.
And then what? You decided some separation
We
is
got married. So I still spend a lot more time with Shashank outside work than I spend inside work.
He's responsible for all things tech, you're responsible for all things business. So that's how the separation has worked.
That's the broad boundaries. And we have a principle internally in the company called disagree and commit. That once you have decided and you fought, you have put your best effort, and we decided that this is the call that we are going with, then you disagree and commit to it.
Who's the more aggressive of the two of you?
We have a joke in the business team that if you come to Shashank and say, hey, we have done this, he says, congrats, how do we do 2x next time?
First to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back to Trading Hour. Well, one particular stock that's doing very well is actually NCC. Post-market hours yesterday, the company gave an update to the exchanges where they said they had received 2 separate work orders from BSNL. Now, this is for the design, supply, installation, as well as performing operation as well as maintenance services of the middle mile network as far as the BharatNet projects were concerned. Total scope or total value of the orders, of both of the orders combined, was in excess of 10,800 crore. What is the first order? The first order is for, in the state of Uttarakhand, over 2,640 crore. The second order is for a work project in Madhya Pradesh for a size of close to 8,450 crore. This particular order will be split into 2 separate components, both the CAPEX as well as the OPEX portion. CAPEX portion, which is the EPC, which is the engineering, procurement, as well as construction portion, amounts to close to 5,730 crore. OPEX segment is valued at over 5,000 crore. So with this, again, NCC's total order inflow for the year reaches 21,100 crore, which is bang in line, if you recall, for the guidance that he had given us just a couple of days ago of being in the range of 20 to 22,000 crore. So again, another company, first we had L&T beating the order inflow guidance, and another infra company, NCC, which is right in the mid-end, coming to the close of the financial year, but they too have gone ahead and managed to meet as well as beat the order inflow guidance. The 21,100 crore mark that we are saying is taking into account only the EPC portion for both of these orders given by BSNL.
Okay, got that. Some order wins in store for the markets. It's been a quiet last 1 hour. From 11 to 12, we've hardly moved. The Nifty still at 23,630 thereabout. It slipped a tad bit, in the last 15 minutes. Trend is moving up. ITC, HUL are trying to break back into the green. So these are some stocks where you are seeing some upward move. And on the way down, it's Tech Mahindra, Bajaj Finserv, ONGC, L&T. Some of these stocks have just kind of cooled off in the last few minutes. With that, it's a wrap on Trading Hour. Thank you for watching. Stay tuned. Halftime Report is up next.
Just trying to do the right thing for the American taxpayer, for the American people. Just a thank you to the Doge team who are literally getting death threats and being accosted. And here. You know, these are a lot of them are just kids. You know, they're just trying to help out, and they're very talented. They could get jobs for millions of dollars a year. Instead, they come here, earn peanuts, and get death threats. So thanks to the Doge team.
Quiet day on D Street with the Nifty closing nearly near the flat line. Mid-caps fare better with the index gaining about 1/3%. Select metal, energy and PSU stocks see buying. Pharma and financial stocks see profit taking.
Siemens is among the top gainers within the broader markets as the NCLT has approved the demerger of the company's energy business, paving the way for its listing. NCC has also surged after winning orders worth nearly 11,000 crores. HEG and Graphite continue to gain ahead of the expected price hikes in April.
Invest in large caps with a 3-year view. That's the word coming in from the top fund managers at ICICI Pru AMC. Co-CIO Equity Anish Tawakle tells CNBC-TV18 that earnings are likely to recover to double-digit growth in FY26. However, also adds that the valuations of small and mid caps are still elevated.
US copper prices have hit all-time highs ahead of Donald Trump's April 2nd tariff deadline. Copper has rallied 30% so far in 2025 on supply tightness and pre-buying by US importers. Meanwhile, Donald Trump says he will quote-unquote probably be more lenient than reciprocal with regards to tariffs. Consolidation continuing on Dalal Street, as was the case yesterday and today too. Some bit of pressure coming in on the screen. You're watching Halftime Report live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Patakia. With me as always is Manglam Malu. Manglam, good afternoon. Well, you can say that it is par for the course. Yesterday too, the dip got bought into and the bulls might be anticipating something similar in the second half as well.
Well, you know, no news is good news. After a very heavy meal, what is it that you like? You like a bit of a snooze, right? And that's exactly what's taking place in the market right now. Nearly 1,600 points on the Nifty is what we've seen already from the lows. So maybe just a day ahead of expiry. Not much volatility is expected by the street and some support at lower levels as well. So buying on dips working better than chasing all the rallies. The broader markets at the index level is holding up, though just keep an eye on the advance decline ratio. For the second day running now, it's favoring declines more than advances. So where it goes from here is something that we'll most definitely keep an eye out on as well. But let's focus on individual stocks. One of them is Zaggle Prepaid. The company has gone ahead and completed the acquisition of nearly 38% stake in mobileware tech for about 22.8 crore rupees. The investment is set to help, as for the company, strengthen their payment offerings. Avinash Godkhindi, who's the co-promoter, MD and CEO of the company, joins in now. Good afternoon, Avinash. Always a pleasure speaking with you. And that really is the first question. How does this strengthen your business capabilities, and what is the kind of incremental revenue that you foresee from this business where you've increased your acquisition or made the acquisition of about 38%?
This is a very exciting, investment for us. We get about 38.5% in mobileware for this investment, and UPI is a platform or a capability that everybody is looking to leverage on. And Zaggle is no exception. Mobileware brings tremendous capability around a variety of NPCI technologies, including UPI. And just to give you a sense, the Brome solution that we've spoken of extensively in a lot of our conversations, which is our petty cash, utility bills, rent payments platform, is powered by Mobileware's UPI technology. So that is the level of usage that we see of this capability that we have brought on board. And also the team is a very strong team. Satyajit and Amitabh are great entrepreneurs, and that always helps when you're working with like-minded entrepreneurs who are building for the future.
Avinash, good afternoon. Thank you for joining in. You know, what I wanted to ask you is how much does this Brome currently contribute, as it is highlighted as the key product with strong demand, right? Now, in the next 2 to 3 years, how big a deal do you think this could become?
This could be very large, right? I mean, it's part of our Zoyer offering, which is our accounts payable platform. And this is a module which we hit upon through our conversations with our customers. Some of the biggest customers in the country and some of the global players. So anybody with a retail chain, anybody with a branch network like an NBFC, an AMC, a brokerage house, insurance companies, banks, literally anybody who has more than 20, 30 outlets or stores or branches has a problem with their petty cash management, with their utility bills payments. And this solution just completely takes away the complexity around it. So in 2-3 years, we think it will be a very substantial piece of our overall revenues and profits.
All right, a substantial piece. You refrain from giving us numbers here, but let's talk about Zoyer, because this is a part of Zoyer itself. That itself has seen a contribution increasing. Where does that stand, and what's the aspirational number there?
So Zoyer today is about 30% of our overall revenues, which includes both our procure-to-pay solution as well as our Brome solution. And as we go along, we expect that to grow and it'd probably be about 45-50% in the coming years, is what we see.
And what does that do to your margins, Avinash? Because you do have a longer term strategy of around 15 to 16% margin targets over the next 4 years. What's the glide path here?
It's going to be probably, it's not going to be front-ended because this is a business where operating leverage kicks in, and operating leverage drives a lot of the EBITDA growth as well. We see that growth which is coming into Zoyer allows us to command a pricing premium in the market, allows us to be able to create a unique positioning for us, and that should help us scale this without additional investments, because once the software and the platform is ready, it's just about taking it to newer customers, and as the product becomes more established, we are already seeing tremendous pull. Right, so the need to be able to market it in the market doesn't really exist to that extent because people get to know about it from word of mouth.
So at what point do you think, Avinash, that this operating margin is going to kick in? Because by when do you expect to get to that 15 to 16% margin, if you could share some color there?
So 15-16% adjusted EBITDA margin, we have already guided is about 4 years is what it would take. And operating leverage is something which doesn't kick in at a moment of time, right? It starts to show its impact over time, and we believe in the next 12 months or so, you'll start seeing the impact of that kicking in a significant way.
Right, over the next 12 months is when we'll see the impact of operating leverage, margins of 15-16% over the next 4 years. But what about revenue? Because for this year itself, you had increased the top end of your revenue guidance to about 63%. So 58 to 63% was your band. And because you had increased the top end, it appears that you will look to top that as well. So realistically, do you think you can grow more than 63% in this financial year? Is there a possibility? And do you have any early indications of what you're targeting for FY26?
There's every possibility that we will exceed the top end. That's how it's looking like right now. I don't want to say too much and spoil my own party, as they say. But it's looking very, very, very strong. And the next year is looking extremely good as well. So that's how I put it.
Could you quantify that extremely good for the next year in terms of your growth, Avinash? If you could give us a sense on some of the acquisitions that are in the pipeline as well. You said that you're looking for some of them. You are at advanced stages in a few of them as well. So what's the update there?
Those are coming through very well, and we are very focused on making sure that those acquisitions happen in a timely manner. And we are seeing those progress extremely well. And hopefully we should be able to announce something in the next 3 to 6 months, which is fairly substantial. And on the growth guidance, it's a little too early for me to quantify a number for next year, but I can safely say that it's looking very, very good.
All right, you will announce a substantial acquisition in the next 3 to 6 months. What about shareholding? I mean, the last time we spoke, the stock, which has corrected about 40% from the highs, seen some recovery from the lows as well. You guys as promoters have purchased about 3 lakh shares as well. Have you punched in some more orders for your own shares? And what about the sellers? None of the institutions are selling, but it may be some of the individuals, the HNIs, they're selling. What's your sense on all of that?
Yeah, so actually the amount that the promoter group has acquired is a lot more than the 3 lakh shares. Overall, the promoter group today holds a little over 44%, right? And the intent is over time to, keep adding a little to that. Of course, institutions have been backing us. They see the opportunity, they see the growth, they see the momentum in the business. Individuals, take their own decisions, and of course, institutions as well. But I think overall, we've seen great support from the institutional side.
Okay, individuals have been making their own decisions. We've seen some of that as well. But since your stake has increased to 44%, where do you want that number to be from an aspirational standpoint? Do you target 51%?
Aspirational, yes. Wouldn't want to bind myself by putting it with a time frame, etc. But aspirational, yes. Both Dr. Raj and I are, very bullish about the company's prospects. We are, we bleed red. This is something that we are fully believing in it till the last breath, as they say. So our conviction is extremely high, and we'll always be buyers of the Zaggle stock, as they say.
All right, Avinash, thank you so much for sparing time and joining us today. Wish you good luck for the road ahead and for FY26 as well. The management there of Zaggle very confident of exceeding the higher end of its 58 to 60% growth guidance, and also looks to announce a substantial acquisition in the next 6 months. The stock, though, at the or near the lowest point of the day, 3.5% lower at 332. Take a short break here, but just before we do that, here's some good news for our viewers, and that is, of course, India's business news leader, which is now just a click away, and that is the CNBC-TV18's all-new app. You can get instant access to breaking news, in-depth articles and financial world updates right at your fingertips. You can download the app from the Apple Store or the Google Play Store, or scan the QR code that has just come up on your screen. Take a short break. We'll be back on the other side. Welcome back. 60 points lower on the index currently. The Sensex is down around about 350. But a couple of movers in the broader markets that have sprung up over the last few minutes. One of them is Capri Global. It's 10.5% higher now, a top gainer on the Nifty 500. And some very sharp moves seen there on the stock. There is Capri Global is the stock that I'm talking about. 10.5% higher now on 185 there as well. The Siemens is the other one, of course, that is on news flow. 7% higher on that stock as well. But sticking to CNBC-TV18 exclusive, Eli Lilly has launched its diabetes and weight loss drug Mounjaro in India. And earlier today, Shreen Bhan spoke to David Ricks, who is the global CEO of the company, and he spoke about the new drug and how it could aid weight loss. He also discussed the company's plans for launching new drugs going forward. Listen into a slice of that conversation.
I just want to go back to the backstory because this is not new. We've had GLP-1 and, you know, it's 2006. In fact, you had it on your annual report in 2007 on the cover. Why do you believe we've seen this kind of a breakthrough, and what does it mean now in terms of future adoption?
Yeah, as you mentioned, this class has been out a long time, and there are people with questions about is it new, is it safe? We actually know a lot about the GLP-1 mechanism and its safety. No drug has no problems, but we know what they are. So I think patients and their doctors can talk about those risks. It's not like there's unknowns there after 20 years of experience.
But, you know, and I think this is a number that you gave us in a previous interview that I saw, where you said between Novo and you, it's still about 20 million people globally using some form of weight management drugs at this point in time.
And diabetes.
And diabetes. So what do you believe is going to lead to higher adoption? And do you have the capacity at this point in time to cater to more demand?
Well, capacity is key. Consumer awareness, physician awareness, also important. Payment and support from health systems where that's appropriate. But as you mentioned, we need to make enough. And right now we've had shortages in the last year in major markets. Lilly's invested very aggressively, though, in our own supply chain. We're in the middle of a $50 billion expansion plan. And those are showing good returns. We're already opening up new factory lines and improving our capacity. This is actually enabling us to launch this week in India because we're confident we can supply the market over the coming years. We wouldn't introduce it if we weren't confident in that.
Well, you know, let's talk about India and the plans as far as Mounjaro are concerned. Do you believe that we could see Lilly manufacture Mounjaro in India anytime soon?
It's, of course, possible. We're expanding our global footprint. There's a lot of discussion in the air about localizing or regionalizing supply chains. And as India could become an important market for us, it's a smaller market for us now, but Mounjaro may well change that. Open-minded about possibilities here.
In terms of adoption, there still is a fair degree of stigmatization. I mean, people might be using it, but they don't want to talk about it.
Yes.
And are you seeing that change? I mean, we were talking about how things have changed with Prozac use because depression wasn't seen as a real disease. It wasn't seen as real. Are you seeing that starting to change now with the adoption rates picking up?
And I love that analogy. Lilly invented Prozac many years ago. When we launched it, the standard of care, doctors would say if you were presenting with depressed symptoms was you seem a little sad, go home and talk to your family. That was what we did for depression. And now we think of that as that would be malpractice, right? So a medicine can sometimes change society's view of a condition and, of course, the healthcare system's view of a condition. I believe that will happen with obesity. But actually science now shows if people have gained weight, been unable to prevent weight gain, it's very difficult for them to lose that weight without medical intervention. We've had surgery, we've had other medical interventions. Here now, Mounjaro is super effective, averaging about 20% weight loss in shorter studies, more than that in longer studies.
Versus people who were put on diet control
only 2 or 3%, yeah.
2 or 3%.
So really a big difference. That's the studies we've published in our label here in India.
The journey began, as I said, in 2006. What do you anticipate as being the next wave of breakthroughs with regards to this?
Yeah, well, we have 10 other projects in our pipeline. So it's early days. I think we're just getting started. Mounjaro is an amazing drug, but there's even better drugs being developed and thought about. One is in our phase 3, which is a triple acting. So I talked about Mounjaro being 2 hormones, 3 acting, and there's a lot of excitement about this. We're probably a couple years away from having all that data and submitting to regulators. But for people where Mounjaro is not enough, that could be a great solution. And then actually for common use, and here in a country like India, very important, is an oral GLP-1. And we have that in our pipeline. We'll get data this year on this. And that could be really compelling, not just because it's more convenient, but because we can make it at scale. And so to the billion people on the planet who have obesity or overweight, that kind of solution is needed. Although we're scaling aggressively our injectables, and we talked about our capital plans, it will not get to 1 billion anytime soon, but the oral could.
Right, with that, let's take a short break. But as we do that, let's get you a programming note. It's that time of the year, the News 18 Rising Bharat Summit 2025. It's here. We bring together the biggest and the best names shaping India's future. Don't miss your chance to be a part of it on April 8th and 9th at the Bharat Mandapam in New Delhi. You can scan the code and get your passes now.
Doing it to help our country, and our country was riddled with fat, like no country probably anywhere in the world, and we're getting rid of the fat. And at the same time, we're bringing in, we're going to be bringing in millions of very good, high-paying jobs, and we're going to be taking in a lot of money. Our country's going to be very strong. We've been ripped off by every country in the world, friend and foe, and we'll be announcing cars very shortly. And we already announced steel, as you know, and aluminum. We'll be announcing pharmaceuticals at some point in the not too distant, because we have to have pharmaceuticals. We don't make pharmaceuticals anymore in our country. And if we have problems like wars or anything else, we need steel, we need pharmaceuticals, we need aluminum, we need a lot of these things that we sort of don't make anymore, and yet we're equipped to do it all. So we'll be announcing some of these things in the very near future, not the long future, the very near future. And
so exciting is April 2nd is just around the corner, and that's American Liberation Day. That's the day when the rest of the world starts to treat America with respect. And your leadership, understanding how the rest of the world treats us and what balance and what fair trade finally is going to be, is going to take care of America. It's going to launch the External Revenue Service to start to build the power and prestige of America back.
So we're going to take in a lot of money from the outside, and that's going to keep our taxes low, and I think getting a lot lower. It's going to be a lot of money, and that will, the external will take care of the internal to a large extent. So I think it's going to be a beautiful transformation.
Welcome back. Let's take a look at the way the market's poised at midday when it comes to the FNO setup. It's consolidating. It's, yes, at the lower end of today's trading range, but nothing really to worry. The Nifty is still holding 23,600 by, the skin of its teeth. It's hovering around that 23,600, 23,700 in the middle of the range. Option writers are positioned for around 23,450 to 23,850. To that extent, not a real worry. The Nifty Bank also well above all its moving averages. The only concern, if at all one has, is that with the advanced decline ratio. For the second day running, we have more than 1,500 stocks declining as against the number of stocks which are advancing, and that line is only broadening out. So to that extent, we'll keep an eye out on this as the day progresses and as we move towards expiry tomorrow as well. For the Nifty though, ahead of expiry, we are seeing some writing at the 23,700 call, telling you on the way up, maybe around the 23,800 mark, closer to yesterday's high of 23,850 at 23,870. There could be supply that opens up, but at lower levels, there is firm support as well. Why do I say that? Because 23,700 put writers, they're still active. 1 crore shares outstanding, and these are puts which are currently in the money. So 23,610 is an important support to track. And even if that's not holding on, you have 23,600 put writers. Again, the demand zone is 23,550 to 23,610. That's where the market is right now. The two stocks that I'm watching out for today, and these are interesting ones. I'm looking at IndusInd Bank. It's up 4% today after the big dropping that it's seen earlier. It may exit F&O ban. And the second one is Hind Copper. We thought that it may enter F&O ban yesterday, but today as well, the open interest has built up. So chances are that it may enter F&O ban. So Hindustan Copper is something that we'll keep an eye out on. It may not exit F&O ban, but it may enter F&O ban. IndusInd is the one which will exit F&O ban.
We'll keep an eye out on IndusInd Bank, of course, as we have been doing so over the last couple of weeks. We may exit the F&O ban now. But Pritesh Mehta, the Executive Vice President at Yes Securities, is joining in now. Pritesh, good afternoon. Thank you for joining in. Taking a bit of a pause after this breakneck move that we've seen from the lows of the 4th of March. Do you expect this pause to continue until the 2nd of April, or do you see a bit of a dip? And if so, what do you advise in case a dip comes in? And couple that up with your stock recommendations as well.
Yeah, good afternoon. Now, see, we have had a solid rally in the last 2 weeks. And I believe as we wind down towards the end of the financial year, bulls deserve a bit of break, and rightfully so. So I would say a small retracement could take place, a move towards 23,300, but nothing beyond that. So I would not say that, the trend is going to change. It is sort of buy on dips kind of market we are entering right now. In fact, we've done a historical study of, how the leadership indices, Bank Nifty and financials, how they shape up in Q2, Q3, Q4 of the calendar year. And believe me that over the last 10 years, they have a history of providing an average return of 6% in Q2 and Q3 of calendar year. So I think the momentum that we have seen from both financials and Bank Nifty is going to continue, in next couple of weeks also. So rather than, getting worried or concerned by this small retracement in index, I think we should be focusing more on the larger picture. So trend is on the upside only.
And what about specific stocks, Pritesh?
So first one is trend. Now, see, the stock during the phase of correction is holding on to the low of the month of June 2024. And then thereafter, it built a small base. Now we can see a double top buy taking place. So buy for a target of 6,000 and the stop loss would be around 4,950. The second recommendation is BEL. Now, see, we have seen a solid ABC breakout coming in on pointer figure chart. Thereafter, we have seen a series of bullish anchor columns. Now, we have witnessed follow-through moves coming in. So, a buy for a target of 340 and stop loss would be around 292.
All right, Pritesh, thank you so much for sparing time and joining us today with your views on the index and specific stocks as well. Take a short break, more on the markets and specific stocks. On the other side, we put the spotlight on the power sector. Stay tuned.
important was it for you to move domicile back to India? What was the motivation there?
When we think about where do we go public, it's a very clear answer that we will go public in India because this is our home ground.
It's a heavy cost, but it's a small price to pay.
When are we looking at a possible listing?
That's minimum 2 years away.
You've spent the last 1 year trying to recoup market share on account of the embargo that the Reserve Bank, for instance, had put.
When this industry started, when we started 10 years back, we were not regulated. This space was not regulated. In the last 10 years, digital payments have grown massively. So I think it's kind of coming of age.
When do you take a call that, okay, we bet on this, it didn't work out, let's shutter this and move on to the next?
Happens very frequently when you're an experimental org, when you're trying these moonshots. A lot of times those moonshots will not reach the pace that you want them to reach. It's okay to take a pause, move it to something else.
Origins of Razorpay, 99 rejections before the 100th one finally succeeded.
It's not about me, right? It's not about me, and also it
sounds like relationship advice.
it's very important to not take things personally. As simple as that.
Today, we're delighted to report that Hyundai is announcing a major $5.8 billion investment in American manufacturing. In particular, Hyundai will be building a brand new steel plant in Louisiana, which will produce more than 2.7 million metric tons of steel a year, creating more than 1,400 jobs.
If you're booking an Ola, Uber or Rapido in Hyderabad, it could be a sweltering ride. Cab drivers have launched a no AC campaign, refusing to turn on air conditioning to highlight their financial struggles. For many drivers at ride-hailing platforms, driving a cab is no longer financially viable. After operational costs and platform commissions, they're often left with earnings that barely cover their daily expenses, forcing them to make tough choices like turning off the AC. And so the Telangana Gig and Platform Workers Union has launched this no AC campaign. What are their concerns? Fuel prices are high and running AC means burning more fuel, making trips less profitable. Second is low earnings. Drivers say Ola and Uber take 30 to 40% of the fare.
Welcome back. Still holding on to 23,600 is the index, but a couple of stocks that are on the downside in today's session. Carraro India is one of them. That's down to the lowest point of the day, 8% lower on that stock. And that is also seeing some bit of selling pressure today. Tollins Tires is the other one. That is also under pressure in today's session, as is Ventive Hospitality. Now, the common factor in all three of them is that their respective shareholder lock-ins have come to an end in today's trading session. So, significant amount of supply that is expected to come into the market. The common factor between Carraro India and Tollins Tires is that both of these shares within the first 3 months of their listing have already halved from their IPO price. Carraro India had an IPO price of close to 750 rupees. Tollins Tires had an IPO price of 226. So it's exactly 50% down from those levels. So keep an eye out on all of these names. But moving on, then power stocks are the ones that are in focus on the back of some positive commentary that has come in from JP Morgan on a couple of them. Vivek is joining in with more details on that. Vivek.
Well, that's right. So the utility space is in focus over the last few trading sessions, last few weeks. We've actually seen increased and renewed interest coming in from a lot of sell-side brokerages on the entire space. This on the back of the fact that power stocks had corrected significantly in the recent past, and along with that, it is now the impending peak demand season that comes generally in the month of summer. Today, JP Morgan has initiated coverage on 5 power utility stocks. Now, out of the 5 stocks, NTPC and Power Grid, the 2 PSU regulated utilities are the one where they have an overweight rating and they are most positive on. Tata Power and Torrent Power, they have a neutral rating. When it comes to JSW Energy, they have an underweight stance. Now, what is it that they feel as far as the utility space is concerned? They see there is a structural positive in terms of a power demand supply mismatch. They also say that utilities face a much higher demand supply mismatch. One particular caveat that JP Morgan indicates for the power space is that they believe that there are certain sectors where it makes sense to go ahead and chase expensive stocks. But according to JP Morgan, the power sector is not one of them. What is their view when it comes to NTPC? They say that the stock currently is trading at 1.6 times FY26 book value, which is also adjusted for the value of NTPC Green Energy. At these valuations, with an ROE of almost 12%, they believe valuations are attractive, which is why they are most overweight when it comes to NTPC. Now, coming to Power Grid, they see it as the preferred play on the structural growth in India's transmission capex. However, the stock is trading at 2.5 times FY27 price to book value, and it has a 6.6% EPS growth estimated over the next 4 years. So again, this is one particular place that they especially like. Now, coming to Tata Power, they believe that there has been significant re-rating in the stock on the account of renewable energy capacity addition. However, valuations at 2.9 times FY26 for average ROEs of close to 12% is something that makes them or keeps them from turning constructive. JSW Energy, they have an underperform rating. They see that aggressive growth plans that the company has, as well as recent acquisitions, is something that could lead to an increase in the debt profile. On the back of that, they find valuations expensive. Lastly, Torrent Power, very similar story. Valuation at 13 times FY27 EV to EBITDA implies limited upside for JSW Energy.
All right, Vivek, thank you so much for that. So those are a couple of power stocks on our radar. With that, we'll take a short break. On the other side, we'll get a special focus on mid-cap microscope. Stay tuned.
It's 10 to 12 rupees per kilometer. But operating costs with the AC turned on rise to 16 to 18 rupees per kilometer. Essentially, the driver is left with very little in hand. And so drivers are demanding higher base fares to cover rising costs, lower platform commissions and government regulations to ensure fair pay. The union is also pushing for a Telangana gig workers' rights bill, and if their concerns aren't addressed, they plan to escalate the protests nationwide. While Hyderabad's campaign is making headlines, this isn't new. It has been happening in Hyderabad and even Bengaluru. Drivers in Bengaluru have unofficially stopped using ACs for more than a year. In 2024, drivers even demanded 5 rupees per kilometer extra for AC rides, but this wasn't officially implemented by ride-hailing apps. Most drivers just simply refuse to switch on the AC unless riders insist, and even then, some decline. Now, as the mercury rises, so have passenger complaints. This begs the bigger debate, which is who pays for the AC. Passengers expect an AC cab, especially in the scorching summer heat. Drivers say they can't afford it unless fares increase. Ola, Uber, Rapido haven't provided a clear solution. No pricing model for AC usage, no opt-in feature either. So should drivers absorb the cost or should riders pay extra? Let us know what you think in the comments below. There doesn't seem to be an easy resolution to this tug of war. Perhaps us riders should consider investing in one of those handheld fans for now.
Welcome back. You're watching us here on Halftime Report. Let's talk about a special segment, Mid-Cap Microscope, where we focus on a stock that is half from the top, but has valuations become more palatable? Is it a value or value trap? Nigel joins in with that. Nigel.
Welcome to Mid-Cap Microscope. Well, today the stock on our radar is Whirlpool of India, a stock that's been on a roller coaster ride. It's dropped nearly 50% from its peak, but after this steep correction, the big question is, how much of the bad news is in the price? Well, what was the key reason first for the sharp fall we saw in the stock price? The promoter entity, Whirlpool Corporation, announced its plans to reduce its stake in the Indian entity from around 51% to around 20% by the middle to the end of 2025. Now, that's a significant sell down. And this is not their first move. Last year, they offloaded close to around 24% stake for around $470 million. They cited high valuations. But globally, Whirlpool has been exiting various businesses while holding minority stakes in Whirlpool China and its EMEA joint venture. So in that sort of a backdrop, maybe this move isn't entirely surprising. But time will tell, what does it mean for the company's future here in India? Well, beyond the promoter stake overhang, there's another key risk. The royalty and the brand licensing fee, which is currently at around 1.4%. Any modifications here could impact the earnings, and the market is waiting for clarity on this front. But let's talk about the business itself. Whirlpool India's revenue comes in mainly from the refrigerators and the washing machines business. And they've also been expanding in the kitchen appliances space as they've increased their stake in Elica, which now contributes close to around 7% of the total revenue mix. And under the leadership of Mr. Narasimhan Ishwar, well, the company has made quite a turnaround. Their market share in refrigerators as well as washing machines has improved. They've undertaken various cost-cutting measures which have boosted their gross margins. And the working capital management as well has got strengthened. Remember, Whirlpool India's cash in books is roughly around 25% of its market cap. And that's something that investors, they always like to see. Well, moving to the valuations front. The stock now trades at under 30 times its earnings. That's at a sharp discount in comparison to its long-term averages when it's traded at around 45 times. So is this an opportunity or is it a value trap? Well, from here on, there are a few critical factors you need to watch. Will LG India's upcoming IPO have a bit of a positive rub-off on the entire sector? At what valuation does the promoter sell its remaining stake? And most importantly, will the buyer be strategic in nature? Well, it's been a whirly path for Whirlpool India. Plenty of twists and turns. But valuations are now lower. Is the worst priced in? Let's see how this one plays out.
That's the big question. Is the worst priced in for Whirlpool of India? That's the peak of around 2,000 rupees, currently now trading sub 1,000. Nigel, thanks a lot for that detailed breakdown of that stock on Mid-Cap Microscope. Take a short break. On the other side, Manisha Gupta joins in with Kang Wu, who's the Global Head of Oil Demand Research at S&P Global Commodity Insights. Stay tuned. We'll be right back.
A bunch of stocks doing extremely well this afternoon. We have Varun Beverages, which has spiked, and we have ABB India as well, which has moved to the high point of trade. But amidst all of this, all the commodities are in focus. Manisha Gupta, as always, joins in, and with her is a guest as well. Manisha.
Well, thank you so much for that. I have Kang Wu from S&P Global Platts. Kang, hi, thank you so much for joining in. Well, starting with the crude oil prices, where we are looking at a 3-week highs right now. $73 per barrel seems to be holding. What's your sense, especially from Venezuela, 25% tariff on all countries who are buying oil from that country? I mean, that is something that most of the markets did not see coming.
Yes, there's the market there's supporting factors, and there's other factors, right? Other factors. The supporting factors are the fate of Iran and the latest development in regarding the Venezuelan oil supply, exports, and fundamentally the global oil stock inventory is relatively low. So that's all supporting some part of the market, sort of jacking up the oil prices. But in the meantime, of course, we also have the bigger factor of the state of the global economy and U.S. trade policies, and how the other parts of the world economy may be affecting the oil market. So it's a twists and turns, and with the supply concerns here and there in the short term, it does help to support the price. But of course, going forward, fundamentally there is an adequate oil supply that it will come to the market, and that will impact the direction of the oil market for the rest of the year.
Kang, so in light of all of that, what's your sense on what range can the crude oil prices be trading within for 2025?
Right, indeed. You mentioned $73 earlier. That's a daily thing. If we average out the whole year of last year, it's $81. So for this year, directionally, we have plenty supply despite all the concerns. The supply comes from, even from OPEC Plus. They are not going to reduce oil production as they did last year. They actually will increase production a little bit. On top of that, you have the strong growth from non-OPEC oil suppliers still. So we may see the addition of up to 2 million barrels per day additional oil supply in the market. In the meantime, oil demand is affected, but not is still there. So it's about 1.2 million barrels per day oil demand growth this year. So you can see the mismatch. So which means the market will become long under the base case scenario. So compared with $81, the average price of last year, we are looking at a little over $70, maybe $72 per barrel for dated Brent for the whole year. And then currently a little bit the pressure on the downside in the summer, maybe a little pressure on the push up. The price will be higher due to the seasonal factors, and towards the end of the year will be coming down again. So average about $72 in our view under the base case scenario.
Kang, for some time, Indian demand growth has been on the stronger side. And when you look at the IEA data, the report that they put out, the 2024 as well has seen the best of the demand growth actually come in from India. For this year now, given various factors, how are you looking at, one, Indian demand growth, and two, where do you see now India increasing its imports from?
Right. India plays two roles, right? One is in terms of the growth. You're right. Particularly in percentage terms, India is really the leader of the among the major countries. Even in absolute volume, India rivals China. So this year, for various reasons, China may add more naphtha and other demand. The total liquids may be a little bit higher, but going forward, including last year and 2026, India is a solid leader. We're looking at a range from 200, around 200, sometimes more. But that's a solid demand every year. It's not like up and down. huge sort of swing like China. So it is as a 6 million barrels per day market, this solid addition will continue to be adding to India. And another role India plays as a big importer, right? So for the oil market, it's like China, even though China volume is bigger. So India imports quite a bit of oil. So that's so this is a valid question where India will get oil from. India is a market buyer, right? So it buys oil from everywhere in the world. Geographically, India is in a better position in most of the Asian countries in the Far East, closer to Middle East and closer to many areas. So it is better positioned to buy oil from anywhere that is available. So I would say that that is probably one of the advantage of India being an importer, in the meantime exporter of products, because of the advantage of getting oil and advantage of producing sort of economical oil products based on the efficiency of Reliance and others, so exporting to the rest of the world.
All right. Thanks a lot, Manisha and sir, for taking us through with that conversation as well. And while you were talking, another stock that really spiked in trade was Hindustan Aeronautics. Just look at the intraday chart of Hindustan Aeronautics. Opened lower until a news flash, this was displayed on our screen. And from there on itself, it's been all the way up. Lift off, if you must, 4% higher. Why is that so? We do have Upasna joining in with the details. Upasna.
Well, a very important update, HAL in focus, as GE Aerospace has delivered first of 99 F404 IN-20 engines to HAL. Now, this is for manufacturing of Tejas LCA Mk1A fighter jet, which was long pending since last 2 years. At Aero India, mind you that the company had indicated that GE 404 engine delivery will begin by either end of May or start of April 2025. Now, what has exactly happened? The key concern was the supply chain disruption seen at GE Aerospace was the main reason for the delay in delivery of F404 engine. Now, GE initially planned to deliver 16 engines annually starting in FY23, but none of them were supplied until now. Now, this delay has postponed HAL's delivery of LCA Mk1A fighter jets. Now, summing up, the delay in the arrival of GE F404 engines, which had become a major bottleneck in the delivery of the LCA Tejas Mk1A fighter aircraft for the past 2 years. Now, Elara expects 2 engines to be delivered in April 2025, which were initially scheduled to be delivered in FY25, and additional 12 in FY26 and 20 thereafter, FY27 onwards. Now, it expects 10 to 11 Tejas Mk1A to be delivered in FY26 versus the earlier estimates of 12. Now, this may translate into a revenue of somewhere around 3,000 to 3,500 crore is what the brokerage is estimating. So, overall basis, 83 Tejas Mk1A are expected to be delivered within the stipulated time, that is till FY29, with a ramp-up likely starting from FY27. Hence, this stock remains in focus as it's a very important update.
That point, Upasna, thanks a lot for that. So what was earlier feared as a delay in supply of critical parts for the Tejas engines have now been assuaged by the delivery of those engine itself, and as a result of which the stock is higher. And also higher is Trent. Trent from lows has actually seen a fair amount of recovery from closer to around 5,000, 5,100. We've seen the stock move all the way up to 53.50 in this week itself. Take a short break, come back. On the other side, we have Business Lunch taking all the market action ahead. Thank you for watching Halftime Report.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV.
Quiet trade on D Street with Nifty close to the flat line. Mid-caps fare better than the index gaining. In today's trading session, select metal, energy and PSU stocks seeing buying, pharma and financial stocks see profit taking. Siemens gains over 5% as NCLT gives approval for the demerger of company's energy business, paving the way for its listing. NCC gains after winning orders worth 10,800 crore rupees. HEG and Graphite continue to gain ahead of the expected price hikes in April. Invest in large caps with a 3-year view. That's the advice from top fund managers at ICICI Pru AMC. As well as the CIO Equity Anish tells CNBC-TV18 that earnings are likely to recover to double digit in FY26. However, adds that valuations of small and mid-cap stocks are still elevated. U.S. copper prices hit all-time highs ahead of Trump's April 2nd tariff deadline. Copper has rallied 30% so far in 2025 on supply tightness and pre-buying by U.S. importers. Meanwhile, Donald Trump says he will probably be more lenient than reciprocal with respect to tariffs. Eli Lilly is launching its blockbuster diabetes weight loss drug Mounjaro in India. David Ricks, global CEO of Eli Lilly, in an exclusive conversation with CNBC-TV18 says that the local manufacturing of Mounjaro in India is a possibility, as that the new oral GLP drug is in pipelines, and Rick warns that Trump tariffs on pharmaceutical generics could raise the price for consumers in the West. Hello, good afternoon. Welcome to Business Lunch, coming live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. Today, a bit of a muted day of trade coming in for the Nifty, right? We're seeing a bit of a red on the screen for the Nifty 50 when you're looking at it, down 0.2% in today's trading session, managing to hold on to 23,600 levels as of now, but at one point of time it went below that mark as well. Bank Nifty also is seeing some bit of a pressure. Let's pull out the Nifty mid cap, because that's the one that's managing to hold on to green, and that's the one that's trading in the green today. That is Nifty mid cap holding on to gains of 0.1% right now. Small cap also isn't performing in tandem with the benchmark indices, so Nifty small cap is also down almost 2/10 to 3/10% in the trading session. So we are seeing this fall coming in after 7 consecutive days of gain for the Nifty 50. We're seeing a bit of a fall coming in the markets, so that is something we're watching out for. Today the advance decline ratio is in the favor of declines versus advances, so surely to keep an eye out on that. And banks is not doing well, so Axis Bank, HDFC Bank, Kotak Bank among the top drags coming in. On the flip side, we have IndusInd Bank on the private bank side that's managing to hold on to some gain. M&M, Power Grid as well as Bharti Airtel. So some of these auto names are doing well. So Nifty Auto is the top sectoral gainer. Other than that, metals is seeing some bit of a green as well. Apart from that, most of the sectors are trading in the red. Pharma, financials clearly under pressure, and even IT is seeing a bit of a pressure there. But let's get started with the show and get you a CNBC-TV18 exclusive. Eli Lilly has launched that Ozempic-like drug, Mounjaro, in India. Now, earlier today, my colleague Shireen spoke with David Ricks, who is the global CEO of the company. What he spoke about is that the new drug and how this could actually aid weight loss. He also discussed the company's plan for launching a new drug as well. Listen to what he had to say.
We actually know a lot about the GLP-1 mechanism and its safety. No drug has no problems, but we know what they are. So I think patients and their doctors can talk about those risks. It's not like there's unknowns there. Consumer awareness, physician awareness, also important. Payment and support from health systems where that's appropriate. But as you mentioned, we need to make enough. And right now we've had shortages in the last year in major markets. Lilly's invested very aggressively, though, in our own supply chain. We're in the middle of a $50 billion expansion plan, and those are showing good returns. It's of course possible. We're expanding our global footprint. There's a lot of discussion in the air about localizing or regionalizing supply chains, and as India could become an important market for us, it's a smaller market for us now, but Mounjaro may well change that. Open-minded about possibilities here. Already the WHO classified it as a serious health condition, a disease, but many of us don't think of it that way. We often maybe see someone who has obesity and think there's something wrong with them. It's like their problem. But actually science now shows if people have gained weight but unable to prevent weight gain, it's very difficult for them to lose that weight without medical intervention. We've had surgery, we've had other medical interventions. Here now, Mounjaro is super effective, averaging about 20% weight loss in shorter studies, more than that in longer studies. I think we're just getting started. Mounjaro is an amazing drug, but there's even better drugs being developed and thought about. And then actually for common use, and here in a country like India, very important, is an oral GLP-1. And we have that in our pipeline. We'll get data this year on this.
24 was the year of GPT and GLP.
Yes.
Right. So
that's right. GPT and GLP is
exactly,
right.
Yeah. So, but that doesn't end in 24. I think it's accelerating both trends. We're seeing new innovation in incretins and obesity, but also new innovation in AI. Lilly has embraced AI at scale at every phase of our business. We're all in on AI, and I think it will make a big difference. I think most of the progress we've made on drug development cycle time has not included much AI. So I think there's more progress to be made.
So you've been able to halve it without AI?
Pretty much. So I think we could do even more.
You can catch this full conversation later this evening at 7:30 p.m. and 9:30 p.m. Okay, on that note, we're going to slip into a break. But as we slip into the break, here's a programming note for y'all. The stage is set. The leaders are ready. News 18 Rising Bharat Summit 2025 brings to you thought-provoking conversations, groundbreaking ideas, and the voice is shaping tomorrow at Bharat Mandapam, New Delhi. Be there. Scan the code to get your passes now, April 8th and April 9th. Save the date for this event.
Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour, live on YouTube at CNBC-TV18, weeknights at 7 p.m.
Welcome back to Business Lunch on CNBC-TV18. Let's move on. And India is well placed economically. That's the word coming in from Sanjeev Puri, chairman of ITC, speaking at the CII event. He told my colleague Shilpa that rural demand is improving and sticky food inflation remains a concern. Listen in.
Despite all these difficulties across the world,
Right.
India is doing well. I think looking at 6.5 for the year is a good number.
Right.
And we must give credit to a lot of good policy interventions that have happened over several years.
Mhm.
That's given resilience to the economy. And I think there are lots of opportunities that we should focus on.
Sure.
And India is well placed geoeconomically today. And the world is clearly looking for resilient supply chains. The world is looking for energy transitions. The world is looking for, services economy is another great opportunity given the demographic challenges in the world and the
Right.
advantage that India has. Huge number of GCCs are in India, and then also food and nutrition security is a concern. India has got the largest arable land in the world.
Right.
We can be an important player.
Right.
So there are many opportunities. I think what we need to focus on is continue to focus on competitiveness, human capital development. I think the pursuit of FTAs, which has received a lot of impetus from the government. I think all these are positive areas that will kind of help us enhance competitiveness and take advantage of all these opportunities that exist. Industry believes that FTAs are good and will open up a lot more opportunity. And we are hopeful that, we've had a lot of visits from like the EU, UK, and now, of course, the US.
Yeah.
So these are positive signals that the possibilities of a timely completion, and also shows the importance of the role that India can play in the new world order.
Finally, in terms of consumer demand, if you could just give us a sense that, are we seeing a sign of pickup, whether it is urban demand or whether it's rural demand? Are we seeing significant signs of pickup? Would you say that this fiscal we can expect, a turnaround when it comes to volumes also?
Well, we do expect, because rural is already on a improving trend, and so far the wheat crop is also good, though heat is posing some concerns.
Yeah.
So with better crops, rural should improve, and I think the cumulative impact of all the reforms that have happened, the investments that are happening, the job creation that is happening, that should provide some should provide some improved trajectory going forward in a couple of quarters.
Right.
And
Volume.
you see, I think also the income tax relief, that's a positive. The big risk remains food inflation, which has been sticky in the past.
Correct.
And the other important headwind in the Indian economy is that in many sectors, places that have excess capacity are dumping products into India and global markets, and therefore reducing the opportunity for the Indian market.
Okay, now let's move on and get you some national news update this afternoon. The Supreme Court has slammed Allahabad Court and stayed a controversial order that was passed by Allahabad High Court. Ashmit is joining in with us to give us more details on this one. Ashmit, what is this latest you're picking up in terms of this order that is passed? What is it indicating?
Well, an interesting choice of action as far as the Supreme Court is concerned. It doesn't usually do this, but it's taken suo motu cognizance of the judgment that came from the Allahabad High Court and then subsequently has gone on to stay that Allahabad High Court. So what is so problematic about that Allahabad High Court? Well, we'll try to answer that. The Allahabad High Court in a recent judgment where there were two accused who had sought to sexually assault, had sought to rape a minor. The Allahabad High Court had held that merely grabbing the breasts of a minor or breaking the strings of a pajama does not qualify as a case of rape, does not qualify as a case of attempt to rape. Rather, the Allahabad High Court had relegated to a case of merely sexual assault. This is something that had a national outcry. This action by the Allahabad High Court is what invited the Supreme Court to take suo motu cognizance, and from there on, the judge made some very stern observations. The Supreme Court expressed shock. The Supreme Court said that this was completely lacking in sensitivity. This was completely inhumane. The Supreme Court also expressed shock that this order was not one that was passed on the spur of the moment, but there was sufficient application of mind by the judge, and despite that, they've come out with such an order, not allowing for such actions to be deemed as rape or an attempt to rape. Nonetheless, the Supreme Court has stayed the Allahabad High Court judgment and has issued notice to the centre as well as to the UP government. Back to you.
Ashmit, thank you so much for the latest update coming in there. But on that note, we are going to slip into a very short break, viewers. Don't go anywhere. We'll be back with more news and updates after this break.
Or does it feel like, where did the last 10 years go?
When you're on a treadmill, you're running so fast, you forget how long has it been. So it's been that kind of a journey.
Between then and now, of course, 24 to 34, suits, I can see both of you are dressed in suits now.
When we started, we used to wear t-shirts and used to go to bank branches and ask for payment gateway. At some point, we started keeping beards as well, right?
We used to stay together till at least 3 years back. 2 years back? 2 years.
3 years back.
And then what? You decided some separation
We
is
got married. So I still spend a lot more time with Shashank outside work than I spend inside work. We got married.
He's responsible for all things tech, you're responsible for all things business. So that's how the separation has worked.
That's the broad boundaries. And we have a principle internally in the company called disagree and commit. That once you have decided and you fought, you have put your best effort, and we decided this is the call that we are going with, then you disagree and commit to it.
Who's the more aggressive of the two of you?
We have a joke in the business team that if you come to Shashank and say, hey, we have done this, he says, congrats, how do we do 2x next time?
Nasty.
Welcome back to Business Lunch on CNBC-TV18. Now, ahead of the planned April 2nd announcement of reciprocal duties on global trading partners, U.S. President Donald Trump says that he will make no more exemptions on tariffs. Listen into what he had to say.
I don't want to have too many exceptions. Look, we've been ripped off for 45 years by other countries, 50 years more. We always were soft and weak. It's almost like we had people that didn't know what they were doing. And all we're going to do, it's reciprocal. We're just going to be reciprocal. In fact, I'll probably be more lenient than reciprocal, because if I was reciprocal, that would be very tough for people. But we've been ripped off as a country like no country has ever been ripped off before.
And a CNBC survey reveals that U.S. CFOs believe recession will hit U.S. before the end of 2025. And uncertainty and pessimism was the key theme in the first quarter. CNBC's Frank Holland is bringing us more on this one.
And our CNBC exclusive Q1 CFO survey, it is out today. Uncertainty was a key theme this quarter. We asked CFOs what sector they see having the biggest growth over the next 6 months. The top answer, it was, I don't know, 40% of respondents saying that. Energy came in second with 20%. Tech and healthcare were tied for third place with 10%. Very interesting to note here, there were 0 CFOs that believed communication services, consumer discretionary, real estate, or utilities would be the best performing sector. That outlook on the sectors reflects the views that CFOs have of the broader economy. 75% say they are somewhat pessimistic about the economy. That pessimism is reflected in their recession concerns. 60% of CFOs say they expect a recession in the second half of 2025. 15% say a recession is coming in 2026. And if that recession comes, the majority of CFOs expect it to be mild to moderate. 40% saying mild, 90% saying moderate. The other 10%, they say they don't believe that we're actually going to experience a recession. The pessimism also extending to the markets. 90% of CFOs said they expect the Dow to fall below 40,000 before it hits the next milestone of 50,000. To put that in context, that would erase just about all the gains since August of last year.
Let's move on. And in a major development, Russia and Ukraine have decided to not target energy infrastructure as part of the partial ceasefire. Take a look at this report.
The United States reached deals on Tuesday with Ukraine and Russia to pause attacks in the Black Sea and against energy facilities. The U.S. agreement with Russia goes further than the deal with Ukraine, as the Trump administration agreed to help seek the lifting of international sanctions on Russia, something Vladimir Putin has long sought. The separate agreements are the first formal commitments by the warring side since the inauguration of Donald Trump.
We are making a lot of progress.
Trump is pushing for an end to the war and also a reconciliation with Moscow that has alarmed Kyiv and European countries.
We're in deep discussions with Russia and Ukraine, and I would say it's going well, but it's a situation we should have never had to even think about. Should have never happened.
The Kremlin said the Black Sea agreements would not come into effect unless links between some Russian banks and the international financial system were restored. Ukrainian President Volodymyr Zelensky said this was untrue and that there was no requirement of sanctions relief for the deals to come into force. But Trump told reporters his team was considering the conditions Moscow laid out.
They will be looking at them, and we're thinking about all of them right now. There are about 5 or 6 conditions. We're looking at all of them.
Kyiv and Moscow both said they would rely on Washington to enforce the deals, while expressing skepticism that the other side would abide by them. Here's Zelensky.
I believe that there are a million questions. I honestly believe so myself. There will be millions of questions and details. But as of today, it sounds like this. Every side, Ukraine and Russia, doesn't use weapons against the energy system of the other side.
And here's what Russian Foreign Minister Sergei Lavrov had to say.
We will need clear guarantees. And there may be guarantees taking into account the sad experience of agreements with Kyiv. Guarantees may be only the result of a direct order from Washington to Zelensky and his team to do this and not any other way.
Zelensky said the truce agreements would take effect immediately, and that if Russia violated them, he would ask Trump to impose additional sanctions on Moscow and provide more weapons for Ukraine. The Kremlin said the pause in attacks on energy would last for 30 days from March 18th, when Putin first discussed it with Trump. Ukraine had said last week that it would accept such a pause only after a formal agreement.
With that, we are absolutely out of time on this edition of Business Lunch on CNBC-TV18. Nifty trading almost near the day's lowest point, down 0.5%. But don't go anywhere. Midcap Radar is up next to take you through all this market action.
Trying to do the right thing for the American taxpayer, for the American people. Just a thank you to the Doge team who are literally getting death threats and being accosted. And here.
You know, these are a lot of them are just kids. You know, they're just trying to help out, and they're very talented. They could get jobs for millions of dollars a year. Instead, they come here, earn peanuts, and get death threats. So, thanks to the Doge team.
As we are counting down to the end of the month, to the end of the financial year and the end of the March series as well, news flow has just started to intensify. You're watching Midcap Radar live from the CNBC-TV18 Motilal Oswal studios. I am Hormas Fatakia. With me as always is Vivek Iyer. And just as I mentioned, the news of Bharat Dynamics flashing on your screen, a 4,500 crore order that the company has won from the Defense Ministry. But the markets, though, taking a bit of a breather today, particularly the benchmark indices, 100 points lower on the Nifty. But after a 7-day move, you would kind of expect that as well.
Good afternoon, Hormaz. Absolutely right. The benchmark indices, the broader end of the markets, all of them taking a bit of a breather after the very sharp run-up that we saw in the week gone by. Like you mentioned, it's Bharat Dynamics. Given the fact that we are nearing the end of the financial year, what's actually transpiring is a whole host of companies. Number one are bagging orders. Awards are getting, the LOIs are getting converted into orders. So NCC, L&T, Bharat Dynamics, an important update on HAL. So a whole host of order inflow, especially in the last week of the financial year of FY25, is what we are witnessing.
Oh, indeed, and there's a lot lined up as well. Now take a look at the headlines that we are tracking other than the order inflows, and these are what we are on the radar at 1:30 this afternoon. The markets have slipped to the lowest point of the day after a quiet start. The Nifty is below 23,600 now, nearing 23,550. The Nifty Bank is also seeing cuts of around 350 points. Pharma and financial stocks are seeing some bit of profit taking, while auto and select metal stocks are holding on to gains.
Big boost to Hindustan Aeronautics as GE Aerospace delivers the first F404 Iron 20 engine to HAL for Tejas light combat aircraft.
NCC has climbed in today's session, as Vivek was mentioning, after the company bagged two orders worth nearly 11,000 crore rupees from the BSNL.
REC falls in trade after the board approves a 1.7 trillion rupees borrowing plan for the financial year FY25-26. This is a slight dip to last year's borrowing limits.
And Ashok Leyland shares have surged over 3% ahead of its board meeting and an analyst call which is scheduled for later in the day.
Well, welcome to Midcap Radar. As we can see, in the last half hour of the session, what has actually transpired is that a whole host of stocks and both the broader end of the markets have seen significant selling pressure that have come about. The Nifty now near the lowest point of the day, the mid-cap and small-cap index over there, if you see, the market breadth or the advanced to decline ratio is now firmly in favor of the declines. Which are a few stocks that have seen some selling pressure emerge? Well, REC, one stock that we just mentioned, that stock is now near the day's lowest point, almost 3% lower. An important update coming in as far as FY26 is concerned in terms of the borrowing limit, which is a slight, slight discount to what the street was anticipating. On the back of that stock almost 3.5% lower. But Hormaz, has stepped across to the wall. This is our special segment, Midcap Movers. He's looking at all of the stocks that are buzzing in the broader end of the markets.
There's a bit of a yawning gap now in favor of the declines, but we'll start off with the top losers then from the broader markets, barring the ones that Vivek just highlighted. And Chola Finance is one of them, 5.5% lower in today's session. KFin Tech as well, Credit Access, Grameen, Sterling and Winsor, all of them down to the day's lowest point, losses of anywhere between 3.5% to 5.5% in today's session. A lot of the companies have seen their shareholder lock-ins come to an end. We just mentioned that a few minutes earlier. And Carraro India now is down 8.5%. Ventive Hospitality is down 5%. Tollins Tires is down 2.5%. Most of these shares, Carraro and Tollins, are down 50% from their IPO price as well. A lot of the newsmakers are in focus back on the back of the order wins. We just spoke of Bharat Dynamics and NCC, but Siemens is possibly the stock of the morning and the day as well. 7.5% higher now at the highest point of the day. HAL2 at the day's high at 4%. And Ashok Leyland, of course, the stock in focus ahead of the big announcement that the company is likely to make. Stocks that are doing well on the back of strong volumes in today's session include the likes of Capri Global, the top gainer on the Nifty 500, 9% higher there. HEG continuing to build on to yesterday's gains. AU Small Finance Bank and Affle India too seeing gains on the back of strong volumes. And lastly, some names that are at a 52-week high in today's trading session include the likes of Aavas Financiers. SBI Cards is at the 52-week high as well, as is Chambal Fertilizer. So good going for all of these names in an otherwise weak market, Vivek.
Thank you so much, Hormaz. While we wait for you to step back to the seat, it's a good time to welcome Jay Thakkar from ICICI Securities for a technical check on the market. Jay, thank you so much for joining us. First up, do you see that this particular brief pause as far as the rally is concerned, do you think this can, does this have further downside legs, or do you feel it's just a brief profit booking that we're seeing? And also your top picks for the day.
Very good afternoon to you, Vivek, and good afternoon to you, whole market. Vivek, as far as the markets are concerned, as you rightly said that after such a sharp run up on the upside by almost 6 to 7 positive trading sessions, obviously when markets were falling, we were discussing that there is a straight 8 to 9 days of fall, so there is a high probability that something fast does not happen, so that the index has not closed more than 9 to 10 trading sessions on the negative side, so there is a chance of a bounce back. Likewise, after such a sharp run-up, a pause can't be ruled out, and the pause has come from the levels wherein the Nifty had started its last leg of the fall, from 23,800. So I would say that this range of 23,800, 900, or probably even 24,000 will act as a short-term resistance until those levels are taken off convincingly. We might see some profit booking, we can say, from the lower levels, or probably some consolidation within this range of 23,800 to downside 23,200, right? So that's 5 to 600 points range, which is nearly around 2% on the index. And I believe that once this consolidation, whether it is a consolidation or it's a sharp correction within this uptrend, once that's over, we'll again see Nifty resuming its uptrend, because I think that eventually in April the probability of witnessing 24,500 is quite high, because overall the market has improved. The FI participation since past 4 trading sessions have really improved. So I think that trend has changed. And due to that change in trend, because of a lot of short covering also happening and is the expiry, probably most of the rolls short doesn't even get rolled in the April series. So looking at all of these data, wherein the IEs are also at a very comfortable level, we are not seeing any bounce in the IEs despite market correcting. I think that clearly indicates that further release rally of 24,500 is likely. Going forward, hence buy on dip should be the strategy. As of now, I have 2 buy recommendations here. The first one is on Motherson Sumi. Technically, it has some reverse head and shoulders pattern, but I think that on the upside, 145, 150 looks quite likely due to short covering. And second would be a long or a buy recommendation on coal palm, that is Colgate Palmolive. It's trading around the levels of 23.95 on spot. I think it can go and test the levels of 25 to 25.70 in the near term. I think till 23.40 levels are healthy.
Jay, thank you so much for sparing time and joining us today with your views on the index and on specific stocks as well. We take a short break. On the other side, we're joined by the management of Ashiana Housing to talk about their Ashiana Nitara project. Stay tuned. We'll be right back.
We could see Lilly manufacture Mounjaro in India anytime soon?
It's of course possible. We're expanding our global footprint. There's a lot of discussion in the air about localizing or regionalizing supply chains. And as India could become an important market for us, it's a smaller market for us now, but Mounjaro may well change that. Open-minded about possibilities here.
24 was artificial intelligence, generative AI, and its impact across different sectors. What do you think this is realistically going to mean in terms of bringing down the timelines to drug discovery?
Yeah, it's interesting. 24 was the year of GPT and GLP.
Yes,
right. So
that's right. GPT and GLP is
exactly,
right.
Yeah. So, but that doesn't end in 24. I think it's accelerating both trends. We're seeing new innovation in incretins and obesity, but also new innovation in AI. Lilly has embraced AI at scale at every phase of our business.
doing it to help our country, and our country was riddled with fat, like no country probably anywhere in the world, and we're getting rid of the fat. And at the same time, we're going to be bringing in millions of very good, high-paying jobs, and we're going to be taking in a lot of money. Our country's going to be very strong. We've been ripped off by every country in the world, friend and foe, and we'll be announcing cars very shortly, and we already announced steel, as you know, and aluminum. We'll be announcing pharmaceuticals at some point in the not too distant, because we have to have pharmaceuticals. We don't make pharmaceuticals anymore in our country. And if we have problems like wars or anything else, we need steel, we need pharmaceuticals, we need aluminum, we need a lot of these things that we sort of don't make anymore, and yet we're equipped to do it all. So we'll be announcing some of these things in the very near future, not the long future, the very near future. And
so exciting is April 2nd is just around the corner, and that's American Liberation Day. That's the day when the rest of the world starts to treat America with respect. And your leadership, understanding how the rest of the world treats us and what balance and what fair trade finally is going to be, is going to take care of America. It's going to launch the External Revenue Service to start to build the power and prestige of America back.
So we're going to take in a lot of money from the outside, and that's going to keep our taxes low, and I think getting a lot lower. It's going to be a lot of money, and the external will take care of the internal to a large extent. So I think it's going to be a beautiful transfer.
Welcome back. On to corporate conversations. Then Ashiana Housing has converted 293 units into bookings of their project Ashiana Nitara. Now, to discuss the sales opportunity and the outlook going forward, we are now being joined by Varun Gupta, who is the director at Ashiana Housing. Varun, good afternoon. Thank you for joining in. So, out of the 336 units, you have now converted LOIs for 293 into bookings. What about the rest? If you could share a timeline for that, and how has the overall response been on ground for the quarter as well? If you could shed some light on that too.
The rest will follow into the new year probably. In Nitara, we will have to do some sustainable sales. We'll add another 56 units to the project as well. We are awaiting some approvals to have that, so the total number of units will go up by 56 more. But the overall response in Nitara was way beyond expectations. We had only launched phase 2, but when we got the kind of response, we actually launched phase 3 of Nitara as well. And overall market conditions remain buoyant and good in most markets that we participate in, except for Gurgaon, where we see now some bookings tapering off and the buoyancy that we had before not being there. That said, I would still say Gurgaon is also doing good as a market. It's just not doing in an incredibly exceptional situation that it was doing 9 months ago, but the market is in good stead, and we think it's doing well.
Okay, Mr. Gupta, so we take your point. You say that there has been significant reduction as far as inventory is concerned. So out of the total inventory as far as Nitara was concerned, how much of it has been booked? How much of it are you awaiting approvals to go ahead and say that by the end of FY25 has been booked? Now, when it comes to realization, a brokerage firm has written that this particular realization for this project is much lower compared to what is the current prevailing market rate as far as that micro market is concerned at 4,400 rupees per square feet. So what is the reason for the reduced rate at which sales were done? Is it mainly a function of demand?
So a couple of things. I don't personally agree with the brokerage firm that this is lower compared to the micro market overall. But it is on the lower end of the spectrum that we were thinking of our launch on. We haven't gone below the spectrum, but it was on the lower end. We wanted to leave returns on the table for some of our customers to book, and that they enjoy an upside in the future. So there is that happening. But overall, given the location of the project, given the economics of the project, we have done well from what we had underwritten the project when we took up the project. So the price is more than what we had expected then. That said, it is on the lower end of the calibrated price that we had done 3-4 months ago. We have another 56 units and apartments coming. So that will be 392 units of apartments total in this. So we'll have about 100 odd unsold units. And I would expect most of them will go into the next financial year. In the next 4-5 days, there'll be minuscule numbers that would be coming in. And we have a few villas still left here. I think a little bit more than 30 villas remain to be unsold, which we had launched earlier in the Tara project in totality. We would expect to wrap up the entire project in terms of sales in the next financial year.
So by that, what are you sticking to your 2,000 crore rupee pre-sales guidance for this year, Varun? And if you have set a number for FY26 as well?
So we haven't yet set the FY26 number. I think in the next 6-7 days, that will be recalibrated and finalized within the first week of April. We will unfortunately miss the 2,000 crore number this year, as I had guided it, dependent on how the Gurgaon market was doing. And the Gurgaon market is not doing as well as it was doing a year ago. So our Amara Phase 5 launch will not be as buoyant as it was planned at the beginning of the financial year.
So by...
I would expect we should be around 1,900 crores, give or take, some here or there as per the final numbers that come out in the Gurgaon project. That we'll get to know by end of the weekend. Because we're still running the EOI process there, and conversions are slated for the weekend.
Varun, what would you attribute the slowdown in Gurgaon to? You mentioned it is not doing as well as you anticipated it to. Are there any underlying factors on the ground that's leading to the slowdown, or is it a demand-specific issue?
No, it's not a demand-specific issue. I think there is a lot more choice to customers today with supply coming in as compared to what was a year ago. And I think there are enough customers, but with choices, they are taking their time in making decisions. So it's not that we don't have enough customers coming in the door. We don't think the market is mispriced right now. I think it is priced properly in terms of ticket size, at least what we have to offer.
Right.
But the customers are taking longer in making decisions because they're exploring more projects than earlier.
Varun, one very quick question. Average realization, FY25, where do you expect it to end at? FY26, will we see a degrowth on account of the factors that you mentioned in terms of competitive intensity as well as supply build-up?
I don't know the exact FY25.
A ballpark figure.
I wouldn't like to quote. I don't even have a ballpark number in terms of per square foot realization across the board. No, FY26, I would think that we should not see degrowth. We will see improvement in total sales as compared to the previous year. As I said, except for Gurgaon, markets are doing well. And as an organization, we are structurally shifting towards senior living. It has been a smaller part of the business, but it's becoming bigger in absolute terms. And in the senior living side of the business, we see a structural upturn and not a cyclical issue. So I think with India's aging population, demographics and wealth, we see a structural opportunity in senior living going forward.
Thank you so much for joining us. You've given us a clear idea. A slight miss as far as FY25 pre-sales is concerned, but we wish you all the best for FY26. Let's now slip into a short break. We'll get him on the markets and focus on a special mid-cap Microsoft segment. Stay tuned.
Today, we're delighted to report that Hyundai is announcing a major $5.8 billion investment in American manufacturing. In particular, Hyundai will be building a brand new steel plant in Louisiana, which will produce more than 2.7 million metric tons of steel a year, creating more than 1,400 jobs.
If you're booking an Ola, Uber or Rapido in Hyderabad, it could be a sweltering ride. Cab drivers have launched a no AC campaign, refusing to turn on air conditioning to highlight their financial struggles. For many drivers at ride-hailing platforms, driving a cab is no longer financially viable. After operational costs and platform commissions, they're often left with earnings that barely cover their daily expenses, forcing them to make tough choices like turning off the AC. And so the Telangana Gig and Platform Workers Union has launched this no AC campaign. What are their concerns? Fuel prices are high and running AC means burning more fuel, making trips less profitable. Second is low earnings. Drivers say Ola and Uber take 30 to 40% of the fare.
Welcome back and on to our special segment, Midcap Microscope. Then you're putting the spotlight on a stock that has halved from the top but has made valuations relatively reasonable. Or is this a value trap? Nigel is here with more on that. Nigel.
Welcome to Midcap Microscope. Well, today the stock on our radar is Whirlpool of India, a stock that's been on a roller coaster ride. It's dropped nearly 50% from its peak, but after this steep correction, the big question is, how much of the bad news is in the price? Well, what was the key reason first for the sharp fall we saw in the stock price? The promoter entity, Whirlpool Corporation, announced its plans to reduce its stake in the Indian entity from around 51% to around 20% by the middle to the end of 2025. Now, that's a significant sell down. And this is not their first move. Last year, they offloaded close to around 24% stake for around $470 million. They cited high valuations. But globally, Whirlpool has been exiting various businesses while holding minority stakes in Whirlpool China and its EMEA joint venture. So in that sort of a backdrop, maybe this move isn't entirely surprising. But time will tell, what does it mean for the company's future here in India? Well, beyond the promoter stake overhang, there's another key risk. The royalty and the brand licensing fee, which is currently at around 1.4%. Any modifications here could impact the earnings, and the market is waiting for clarity on this front. But let's talk about the business itself. Whirlpool India's revenue comes in mainly from the refrigerators and the washing machines business. And they've also been expanding in the kitchen appliances space as they've increased their stake in Elica, which now contributes close to around 7% of the total revenue mix. And under the leadership of Mr. Narasimhan Ishwar, well, the company has made quite a turnaround. Their market share in refrigerators as well as washing machines has improved. They've undertaken various cost-cutting measures which have boosted their gross margins. And the working capital management as well has got strengthened. Remember, Whirlpool India's cash in books is roughly around 25% of its market cap. And that's something that investors, they always like to see. Well, moving to the valuations front, the stock now trades at under 30 times its earnings. That's at a sharp discount in comparison to its long-term averages when it's traded at around 45 times. So is this an opportunity or is it a value trap? Well, from here on, there are a few critical factors you need to watch. Will LG India's upcoming IPO have a bit of a positive rub-off on the entire sector? At what valuation does the promoter sell its remaining stake? And most importantly, will the buyer be strategic in nature? Well, it's been a whirly path for Whirlpool India. Plenty of twists and turns. But valuations are now lower. Is the worst priced in? Let's see how this one plays out.
And that was Mid-Cap Microscope. All the details on Whirlpool of India, the overhang of the promoter stake sale. With that, we call time on this edition of Mid-Cap Radar. We leave you with the markets at the lowest point of the day. From Vivek, me and the team that put this show together, thank you so much for watching. Your stocks on the other side.
To 12 rupees per kilometer, but operating costs with the AC turned on rise to 16 to 18 rupees per kilometer. Essentially, the driver is left with very little in hand, and so drivers are demanding higher base fares to cover rising costs, lower platform commissions and government regulations to ensure fair pay. The union is also pushing for a Telangana gig workers' rights bill, and if their concerns aren't addressed, they plan to escalate the protests nationwide. While Hyderabad's campaign is making headlines, this isn't new. It has been happening in Hyderabad and even Bengaluru. Drivers in Bengaluru have unofficially stopped using ACs for more than a year. In 2024, drivers even demanded 5 rupees per kilometer extra for AC rides, but this wasn't officially implemented by ride-hailing apps. Most drivers just simply refuse to switch on the AC unless riders insist, and even then, some decline. Now, as the mercury rises, so have passenger complaints. This begs the bigger debate, which is who pays for the AC. Passengers expect an AC cab, especially in the scorching summer heat. Drivers say they can't afford it unless fares increase. Ola, Uber, Rapido haven't provided a clear solution. No pricing model for AC usage, no opt-in feature either. So should drivers absorb the cost or should riders pay extra? Let us know what you think in the comments below. There doesn't seem to be an easy resolution to this tug of war. Perhaps us riders should consider investing in one of those handheld fans for now.
Hello, good afternoon. Welcome to Your Stocks on CNBC-TV18, coming live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala. Thank you so much for tuning in. And looking at the Nifty, we are seeing a bit of a red coming in on the screen today. As of now, Nifty is almost near the day's lowest point, down 0.6% in today's trading session. 23,535 is what it is holding on to as of now. So that 23,500 is what it's managing to hold on to. But let's see if that's going to be sustaining in the trading session. Let's pull up the Nifty mid-cap also, because that was the one which was managing to hold on to some bit of a green an hour ago. Is that still the case? Seems like Nifty mid-cap now, that has also given up the positive side and is down almost 0.2% in today's trading session. Similarly, for the small cap, which was already in the red, and the Nifty Bank also has slipped a bit further in this trading session. So as of now, the markets are almost near the day's lowest point is what we're looking at. Not much of an excitement there. Nifty Bank is down almost 0.8% in today's trading session. But yes, that's how the market setup is looking like. But let's get started with all those stock-related queries that you all have sent us. And to solve all those doubts, today we have our expert Somal Mehta, Head of Alternate Research Capital Market Strategy at Mirae Asset Sharekhan, as well as Parthiv Shah, Director at Tracom Stockbrokers, to answer all those stock-related queries. Thank you so much, Somal, as well as Parthiv, and good afternoon to both of you all. let's get started with the stock-related queries for the day today. This first query we have is coming in from Nimit Sharma, who's writing to us from Mumbai. 60 shares of ITC at a price of 200 rupees per share. The prospects of this investment for the short term. Somil, let's start with you. What is your view coming in for ITC on the short term, on the charts? What is the indication?
I think I'm positive on ITC. I'm expecting a very good rally on the upside. High tops, high bottom formation. A good consolidation has been happening in the last couple of weeks, and now I'm expecting this consolidation to break on the upside. Then the short-term targets would be 426, and the next target would be around 444. That's the previous swing highs, and the stop loss would be around 402 for the stock. Yeah.
Okay, and Parthiv, coming to you, ITC, what's the view coming in today? My colleague actually managed to speak to Sanjeev Puri as well, and seems like, we're not expecting a bit of a bounce back in terms of the demand trends. Subduedness is still there. So for ITC overall, what is the expectation? Should the viewer continue to hold this?
See, yes, absolutely. I would suggest a hold because the viewer has gotten at a very, very attractive valuations of 200 levels, and the stock has almost doubled. And I also assume that the viewer would have also got shares of ITC hotels, which got demerged from ITC. Talking the core business, I think in terms of the cigarette business, ITC holds the massive market share of almost 80%. And in terms of the operational income, almost 80% of its group income comes from the cigarette business. No doubt, there has been some lumpiness in terms of the cigarette volume revival, but I think that could be a part of a cycle. But our sense is that thanks to the fact that nothing major was tinkered in the budget in terms of any changes for ITC, I believe that that should help ITC, because always there's a fear whenever there are higher taxations, the illicit cigarette trade increases, which should not be the case going ahead. So I think ITC will bounce back is what our sense is. And in terms of valuations, quoting at around 25 times forward multiple, it is one of the cheapest FMCG plays generating massive cash flows. So certainly hold on to this term.
Okay, hold on to that. That's the view coming in from Parthiv as well on ITC. Let's move on to the next query for today. This one is coming in from Vikram Singh, writing to us from Chandigarh, holding 65 shares of Happiest Mind. This is at a price of 728 rupees per share, making some bit of a loss on this one. Your view on the charts and technicals for this, Somil, should the viewer continue to hold or maybe exit at the current levels and maybe look at something else right now?
Trend is definitely low. The stock has been struggling to go above 20 weekly moving averages for a very long time now, and I'm not expecting any bounce in the stock. Definitely exit from this stock and probably look at some large cap stocks in the IT space like Tech Mahindra. Tech Mahindra looks definitely good at these levels, and probably a good bounce in the very short term for 5 to 7%.
Okay, Parthiv, coming to you on the IT pack as well, what is your view in terms of the IT side? Would you also say maybe look at some of these large cap IT names instead of Happiest Mind and get out of Happiest Mind right now? Would that be your suggestion?
Yes, I also absolutely agree with the suggestion, because I think if you look at the valuation delta between the large cap IT space vis-a-vis the mid cap, I think currently the mid cap IT pack is very richly valued. There was a point in time when they were consistently growing at upwards of 18% constant currency. But going ahead, looking at the past few con-call commentaries, it seems that to maintain that sort of a growth run rate would be a little difficult. Plus, I think there could be some changes in the onshoring policy coming from the US government and US Commerce Secretary. That is a concern which is plaguing a lot of mid-cap IT companies, especially because of their current cost structure. So just because it's richly valued as compared to the frontline IT name, I would suggest an avoid on the mid-cap IT pack. And I think currently, if you look at names like TCS, Infosys, HCL Tech, or for that matter, Tech Mahindra, I think they are not reasonably valued. And whenever the growth bounces back, I think these will be the ones who will get first review.
Okay. But, since we're talking so much about those large cap IT names, the next query is also coming in for a large cap name. That's Infosys. Now, Dipali Shah is writing to us from Noida. 20 shares of Infosys is what they're holding. Price is 1,686. Wants to know whether to outlook of the stock going forward and what level should they be watching out for. Your view on this one, Somil?
In the very short term, if I say it is a little negative, and I'm expecting the last leg on the downside for Infosys, and the targets would be around 1520, 1530 levels. That would be my target in the short term. But as I said, this is the last leg which I'm expecting, and after that, a good bounce back. There is a upward sloping trend line on the long term, and that trend line is around 1520, 1530. So that is a very crucial level to watch out for. Once that is being breached, I think there'll be more levels on the downside, but I'm positive in the medium term outlook, and I'll be expecting this stock to bounce back from those levels to 1700 levels, 1680, 1700 levels.
Okay. Parthiv, your view coming in for the viewer as well right now, right? Because she's bought it at around 1686. For the view for the long term, continues to be positive, right? And what should the near-term outlook also be, especially for Infosys now?
Yes, a lot will depend upon how the Q4 numbers pan out, and more importantly, the commentary for next financial year. What we saw in the last quarter was, in terms of the total contract value, they did decent large deals totaling of $2.5 billion. And probably the management did guide that they're expecting operational margins of anywhere about 21% in those deals. Also, in the generative AI space, a lot of work is taking place. But I think there are certain fears in terms of what could pan out in the US economy, especially in terms of soft landing, which could kind of taper the growth. And as said, the growth guidance that these companies have given for next year is ranging between 6 to 8%. Valuations are at comfort, no two ways about it. It's a massively free cash flow generating machine. So at the best, the stock could time correct till the growth signs emerges. So it's a good safe stock to stay put in your portfolio.
Okay. Keep an eye out on the stock over there. That is Infosys for you all. Let's move on to the next query for today. We have this coming in on the insurance side. Praveen is writing to us from Hyderabad, holding 30 shares of LIC. This is at a price of 896.5 rupees per share. Making a bit of a loss on this one. Wants to know whether he should wait for some time or sell at the current levels. Your view on this one, Somil, levels that one should be keeping an eye out for LIC now. Merits holding the stock for some bit of a time, and do you think that we could see a recovery in the near term, or better to just book out that loss?
I think I will be expecting a good bounce from here, and it has already started bouncing back a little bit, trading above a 20 and 40 daily moving average. It is way below 200 daily exponential moving average, but as I said, about 20 and 40 daily moving averages in the short term, it's a good sign, and I'll be expecting the levels of 880 levels in the medium term outlook. So keep an outlook of a medium term, and then keep a stop loss of 755. Not in the short term, definitely. Short term definitely looks a little consolidation, a small correction, but overall 870 would be my target.
Okay, short term maybe some consolidation, but overall 870 is your target. Parthiv, your view coming in on LIC, right? So much has been happening in the insurance space. So LIC as a bet does merit to hold on to, or do you like some other insurance names on the fundamental side?
Frankly, we prefer the private sector plays in the insurance space, because LIC, despite being the mammoth giant in its space, they have been losing little market share. And also, I think some of the markets are always on the edge in terms of future stake sale by the government, which could create a massive flow of supply. And I think ever since the IPO, this company has totally failed to create any sort of shareholder value, despite the fact that a lot of return ratios in terms of value of new business margins have slightly improved. But we are not very upbeat here. I believe that in the private sector space, something like a HDFC Life seems a lot better placed. The valuations have massively time corrected, and in terms of EV by embedded value, I think it looks a lot more comforting to have an entry there vis-a-vis stay put with LIC.
Okay, that's a view coming in from Parthiv. Better names coming in on the private side is his bet rather than LIC. But okay, on that note, we're going to step into a very short break, viewers. And here's some good news coming in for you all. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or you can just scan the QR code on your screens.
that we could see Lilly manufacture Mounjaro in India anytime soon?
It's of course possible. We're expanding our global footprint. There's a lot of discussion in the air about localizing or regionalizing supply chains. And as India could become an important market for us, it's a smaller market for us now, but Mounjaro may well change that. Open-minded about possibilities here.
24 was artificial intelligence, generative AI, and its impact across different sectors. What do you think this is realistically going to mean in terms of bringing down the timelines to drug discovery?
Yeah, it's interesting. 24 was the year of GPT and GLP.
Yes.
Right, so.
That's right, GPT and GLP is
exactly,
right.
Yeah. So, but that doesn't end in 24. I think it's accelerating both trends. We're seeing new innovation in incretins and obesity, but also new innovation in AI. Lilly has embraced AI at scale at every phase of our business.
पढ़ें। Welcome back to Your Stocks on CNBC-TV18. We still have with us our experts for today, Saumya Mehta as well as Parthiv Shah. Let's keep it going with those queries then. And Parthiv, I'll take this one to you first. Mohammed is writing to us and from Mumbai. He's holding 895 shares of Jio Finance. This is at a price of 344 rupees per share. Currently, Jio Financial Services is trading at 224. Wants to know, and if he's planning to hold this for the long term of 3 years time period is what he's highlighting. Is it worth holding Jio Financial Services right now?
One thing we'll have to understand that a lot of value of Jio Financial Services currently is ascribed to its stake in Reliance Industries. And Reliance Industries from its peak valuations have had a massive correction of almost 22%. And that is also one of the key reasons why, in link with that, Jio Financial Services also corrected massively. We have to understand that it's kind of a new company where the group is trying to build it as a very big, large financial services conglomerate, and it will take time. I believe that the type of partners they've chosen, especially likes of BlackRock, I think will definitely help this company to scale to the next level. So certainly it's a very good long-term hold for at least next 3 to 5 years. And I would suggest the investor, because his initial cost is very high, one can even think of cost averaging out here where there's a lot of support zone line.
Okay. That's a view coming in there from Jio Financials. Cost averaging maybe is also something that Parthiv is suggesting. On the technical, Somil, what's your view coming in on this one, right? Would you also suggest maybe, I know you don't like averaging, again giving a clarification, but this becomes attractive, right, as a pet. So does this make sense?
Not really. Actually, in the short term, in the medium term outlook, this stock has not been able to go past above 40 daily exponential moving average for a very long time. I would suggest to exit this stock because it has been making a low top, low bottom formation. In the last couple of weeks, we've seen markets rallying up so sharply, but this stock has not moved much. And it has already started making low top, low bottom formation, taking resistance at 40 daily exponential moving average. And now the momentum indicators are already going to give a sell signal. So I'll be expecting the new lows for this stock. So my suggestion would be to exit.
Okay, suggestion is to exit coming in from Somil. Let's move on to the next query for today. This one is on Polycab. Ravi Shankar was writing to us from Chennai. 20 shares of Polycab, price is 5,090 rupees per share. Wants to know the outlook of the stock. Should he continue to hold this one or look to sell? Parthiv, let me take your view on this. Given that, we've heard so many new entrants also coming in. Since February, we had Ultratech Cement that spoke about cables and wires foray. Then Adani Enterprises spoke about the JV in terms of cables and wires as well. And these stocks have seen that correction coming in since Feb at least. What is your view for Polycab? Does it merit holding the stock?
Well, certainly after the recent correction, we believe that it's one of the finest plays in the cable and wire segment. And I think just to attribute the fact that how well this company has done, they had a 5-year guidance of achieving 20,000 crore worth of revenue by FY26, and they've 5% overachieved that in close of FY24. Goes to show the type of execution this company has had, and more importantly, the demand in the power cable segment has been stupendous. And I think, yes, the entry, the foray of Ultratech and also the Adani Group in the similar segment will take time, because I think if you look at the type of capex that even Polycab has planned out, I think that will be almost higher than what Ultratech is initially talked of shelling out. So this could be a differentiated industry where the incoming incumbents could still have an advantage, and the newcomers will take more time to kind of establish their presence. So I would suggest a buy on Polycab at this juncture.
Okay. Suggest a buy on Polycab. So definitely should hold, not look to sell at all. That's a view coming in from Parthiv. Your view, Somil, on the charts and technicals. Last 6 months, that correction surely has creeped in there, 23% decline. What should the viewer do? What is the level also that one should keep an eye out on?
I think that it's the same case like Jio Finance. It's not been able to go above 40 daily exponential moving average for a very long time now. Not even 20 weekly moving average. So it's a weak stock. A medium-term outlook is negative. And in the short term, maybe 5,400 is possible, a spike on the upside, but that will be a very, very crucial resistance. And I'll be expecting a new leg on the downside. The lows which we've made a couple of weeks back, which was 4,500 levels, I think that will be retested again in the next couple of months.
Okay, keep an eye out on those levels over there. 5,400 on the upside, that's where the resistance is. The low is also 4,500, which was there a few months back, or in the last couple of weeks, is something important to watch out for as a level on the technical front for Polycab. But let's move on to the next query. This is coming in from Nimesh Jain, who's writing to us from Jaipur. For 30 shares of Tata Technology, price is 1,030 rupees per share. This was on Murat trading day. Now he wants to know what should he do, continue to hold or sell this one. Parthiv, your view coming in for Tata Tech. What is it that the viewer should do now? Making considerable loss right now.
Not at all beat out here, because I think despite being a Tata Group company, it is focusing predominantly into one major vertical, which is automotives. And I think it had its shares of problems in terms of a couple of its customers. And no doubt the company has achieved newer contracts. But I think looking at the current trade multiples of almost 45 times, I think it's a very, very expensive stock, which is lacking a lot of growth triggers. Unless and until this company can deliver growth triggers of upwards of 15% constant currency, such valuations probably cannot be justified. And since last 2 quarters, we've been monitoring this company in terms of the numbers that is been rolling out. I think that has not been very encouraging. So totally avoid counter at this juncture.
Okay, avoiding the counter at this juncture, but that was the last query for today. So thank you so much, Saumil, as well as Parthiv, for joining in with us on the show. And thank you so much for viewers for always sending us all your stock-related queries. And keep sending them to us on the email address that is there on the screen as well. So we will be addressing them every week and every alternate days, Monday, Wednesdays, as well as Fridays. But with that, we're absolutely out of time. Thank you so much for tuning in. Up next, Closing Bell.
Beyond market headlines to understand the reasons for the day's movers and shakers and get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
And Asian markets also are indicating a positive start.
The Atlantic is a failed magazine.
The price action, Nasdaq was up about 0.46%, was up for the third straight day.
I think that's very unlikely, given that Donald Trump fundamentally believes in the power of tariff as a tool.
On the Nifty, we opened up mildly in the green. We're up close to around 30 points thereabouts. Par for the course, one would say.
No fundamental problem in the economy. There is no structural imbalance that needs to be addressed.
We have about 52% of order inflow from pure refinery petrochemical, the oil and gas sector.
Unfortunately, overweight and obesity is a reality in India.
Today seems to be another session where benchmark indices appear to be consolidating.
Fundamentally, the global oil stock inventory is relatively low.
Probably be more lenient than reciprocal, because if I was reciprocal, that would be very tough for people.
Cap and small cap index over there, if you see, the market breadth or the advance to decline ratio is now firmly in favor of the decline. So
welcome back. So there's a bit of red once again back on the screen after several days of a winning run. 7 consecutive days of gains for the Nifty. Finally, that streak has been broken today. Some profit taking coming through, and markets consolidating a little bit after what's been a stupendous rise. By the way, there was important news coming in from Ashok Leyland. The board meeting has just ended, and for starters, the company has said that the reports talking about their interest in SML Isuzu are factually incorrect, so they're denying that. And it seems that Ashok Leyland is going to be subscribing to a preferential issue from the promoter entity Hinduja Leyland. More about this as we go ahead. Stock's still holding up. But otherwise, it's an afternoon of consolidation. Hi, Reema, and of course, Nigel with us joining in as well.
Hi, afternoon. So we opened around the 23,700 mark, but the sentiment in the market is turned. And as we speak, it's sub 23,550. So we're just extending the losses as the day is progressing. More than 0.5% gone in the benchmark indices. The mid caps, which were holding up in the green in the morning, have dipped into the red. And the advanced decline ratio will also tell you a picture. About 2 stocks advancing for 1 in the red. Banks are under pressure, so banks underperforming to some extent, and there is no support coming through from the IT names. Nigel?
Well, that's right. The Nifty actually is around that 100 DMA or thereabouts, and one would have to say that till this 23,400 odd mark is holding out, this uptrend is still, intact. And on the Nifty Bank as well, yes, it's seen a sharp pullback from yesterday's high if you look at it, and coupled with today as well, but it's still holding above the 200 DMA. So you'll take comfort from that fact. You wanted to see some kind of consolidation, maybe some kind of pullback. We've had a very, very super run. So ahead of the contract expiry, which is tomorrow, some kind of a pullback, I would still say it's par for the course, nothing too worrying as per what I can see on the screen. Let's get in Mitesh Thakkar though. Mitesh, what's your view? We're holding around this 23,500. From the day's low, actually, we've come off closer around 30 points or thereabouts. What would we do? Buy into this dip or wait for low levels?
Nigel, I would want to buy one. I think, very clearly the overall bias is on the positive side. And while if you look at the retracement, the Nifty hasn't even done 38% retracement. I think the overall position is very strong. Now, the first minor intraday pivot of 23,600 was taken out, which means that the pullback could be slightly deeper. And I'm now penciling in that the support should come in around 23,400, 380 mark. So that's the buying zone for me. It's about 100 points lower from here. Similarly, on the Bank Nifty, the bigger support is around 50,700 odd levels. Though we have some bullish bias call spreads, I think overall futures buying should be done when these levels are close to the current index level. So in that sense, the direction is on the buy side, but you would want to slowly wait it out for this decline to play. Otherwise, till then you can have some call option spreads or call spreads on the bullish side on the indices. That's my view.
What about stocks, Mitesh?
Yeah. On the stock side, I have a buy on Asian Paints, and of late the stock after a deep correction has started to bounce back nicely. So buy here with a stop below 2300, look for a target of around 2380 or 2390 on the upside, thereabouts. And the other stock which I like, that's Ultratech Cement, which I would want to buy with a stop just below levels of 11,240 and a target of around 11,900 currently.
Okay, all right, got it. Mitesh, thanks for that. We'll come back to you with some more questions in just a bit. Let's focus on something that's really been the stock of the day of sorts, and I'm talking about Siemens in even a market that's gotten a little wobbly today. Siemens has been seeing steady gains, still up over 5%, 5.5% right now. Now, the news flow is, of course, very, very clear. The NCLT has approved the demerger of the company's energy business, and this is happening globally, including in India. And very soon we'll have two separate listed entities, including the energy business itself. Hormaz is here with more details. Hormaz investors definitely getting excited at the prospects of getting those energy business shares.
Powering along, as they would like to call it. But yeah, it's a good day for the shareholders of Siemens India, especially after the battering that the stock has taken. It's down almost 40% from its highs. But of course, the news flow, as you mentioned, the NCLT demerger coming, the approval for the demerger coming in last night. It has taken effect from the 25th of March, which is yesterday. And the equity allotment ratio has been fixed as 1-for-1. So the demerged entity, the shareholders of Siemens India, for every one share, will get one share of the demerged entity as of the record date, which has been fixed as the 7th of April. So that is another thing that needs to be kept in mind. Now, after the demerger, Siemens Energy, of course, will have the energy business that has been demerged, but the original entity, Siemens India, will have the digital industry, smart infra, and the mobilities business. And going forward, the energy business will, of course, become a separate listed entity as well. And this will, the company believes, will lead to some value unlocking. Guillermo Vieira de Mendonca has been appointed as the MD and CEO of the demerged entity, and Harish Shekhar has been appointed as the executive director and the CFO, who was the head of finance of the energy business, of course. Now, if you take a look at the numbers, now for SY24, Siemens, of course, has a financial year that ends in the month of September, so they follow an October to September format. The energy business grew at 5%, but the overall business grew 19%. And of course, the margins too for the energy business were higher compared to the entire entity on a consolidated basis. For the first quarter of for SY25, if you can see, the growth for the energy business was a lot higher, when the overall business actually saw a decline when it comes to growth, and the margins too were higher for the energy business going forward. So positive development coming in for Siemens. It'll be interesting to see now, once the listed entity goes in, some value unlocking emerging for shareholders.
Indeed, the street will now watch for perhaps Siemens Energy India's listing on the stock exchanges. So that will be the value unlocking the street will watch closely. But Prakash Diwan is now with us on the show. Prakash, big news for Siemens. Stock is up 5.5%. How would you approach it?
I think it's definitely something that's been awaited for some time. Gives the ability to investors to allocate money to the kind of business they would like to, rather than things getting bundled. And and to be honest, the combined entity hasn't had any great visibility in terms of earnings growth that could be very convincing. Now, this gives you that flexibility to be seeing two different businesses and evaluating them judiciously, rightly, differently. So definitely a very good thing. And remember, the recent series of events in the global markets, particularly the Heathrow debacle, which was led by lack of power backup and outages that resulted from there, has got everybody wondering whether the power equipment globally is adequately kind of placed, and if that order flow has to start increasing or accelerating, Prima, it has to be from players like Siemens and the likes of Hitachi and all of that. So my sense is there will be a spurt in demand for their products, and they've been doing very well. So foreign parentage, Indian presence, global markets, that's a combination that will work very much in favor. But people could argue about valuation, and yes, Siemens has never been available cheap. So if you're okay with the valuation being tending towards a higher band, and live with it for a longer period of time, it normalizes. But otherwise, it's a great buy on dips, especially after this development.
Okay, all right, Prakash, stay with us. Let's focus on the defense space. HAL, they have got delivery of their first F4x4 IN-20 engine. And that, in fact, is something that was a big trigger for the stock. Upasana joins in. Upasana, you could tell us the name of the engine as well. And why is this important for HAL? The stock is up close to around 4%.
That's correct, Nigel. As rightly pointed out by you, HAL is in focus today, and this is a very important update, as GE Aerospace has said that it has delivered its first of 99 F404 IN-20 engines to HAL for Tejas LCA Mk1A fighter jet, which was long pending since the past 2 years. Now, mind you that at Aero India, HAL had indicated that GE 404 engine delivery will begin either by end of March or April 2025. Now, what was the key concern? It is important to note that there were supply chain disruptions at GE Aerospace, mainly because of delay in the delivery of F404 engines. Now, GE initially planned to deliver 16 engines annually starting in FY23, but none were supplied until now. Now, this delay has postponed HAL's delivery of LCA Mk1A fighter jet, and to sum up this delay was what the street was feared upon. Now, Elara says that it expects 2 engines to be delivered in April 2025, which were initially scheduled to be delivered in FY25, and 12 additional in FY26 and 20 thereafter, year after year from FY27. It expects 10 to 11 Tejas Mk1A to be delivered in FY26 versus the earlier estimates of nearly about 12 jet engines. Now, this may translate into a revenue of nearly about 3,000 to 3,500 crore is what the brokerage is estimating. Now, it is also said that 83 Tejas Mk1A fighter jets are expected to be delivered within the stipulated time, that is until FY29, and with a likely ramp up starting from FY27 by the company. So this stock certainly remains in focus on the back of this important update.
Thanks a lot for explaining that to us, Upasana. Prakash, what do you make of this one? It's bucking the trend today. The market's a little bit weakish, but this one holds with a gain of around 3.5%. What do you do with it?
Well, Nigel, I think look at the past 27, 28 days, and it's done the same amount of upside, 28, 30% in the last 1 month. That's primarily because of this anticipated move. And remember, defense stocks are the first which have triggered FOMO within most people when things look bad. Globally, there's likely to be defense expenditure that will go up. India is getting more and more sustainably self-reliant. And some of these companies like BDL, BEL, HL have actually been in the forefront of actioning out a lot of the programs that they've seen investments come into. So order book to realization is probably one of the best now. And I think from here on, it will also kind of see a little bit of PE expansion. PE should be about 35 times trailing, but it could probably again move, on a forward basis. It probably has enough headroom to do another 25-30% from here. So whether all-time highs is something which you want to look at or benchmark yourself against, I don't know, but it definitely makes sense to buy and keep accumulating it at lower levels. You had it at about 3,000 odd just about a month back. So, that's the kind of reality check that at times could come in, but definitely great story in the making. Will definitely not let people down.
Okay, all right. So that's a view on HAL. Market's still very, very range bound. There's some profit taking in the large cap space. NTPC is down about 3%. Yeah, Nifty is still struggling close to the lows of the session. There's Bajaj Finance, Tech Mahindra. These are some of the other stocks that have weakened. Prakash, hi, good afternoon. Now, just want to talk about this whole deal, which we now know Ashok Leyland is not getting into. I'm talking about SML Isuzu. There was M&M's name doing the rounds, but again, no confirmation on that yet either. How do you find the asset SML in terms of their bus business? And if at all, let's say an M&M goes for it, would it be would it be a step in the right direction? Otherwise, M&M's been doing great. It's one of your favorite stocks. What about SML?
So, okay, the situation is complex. The bride is quite eligible. We're not sure of the groom. That's the confusion. SML by itself, if you look at, has been fairly okay in terms of performance. The only challenge there all these years has been they've not been able to scale up. Remember the bus business is dependent a lot on certain very small, very, very narrow micro sectors within the economy. And it's not something that has been growing very rapidly or very distinctly in the last couple of years. So they've kind of managed to be steady state, but they've also lost ground in terms of market share and things like that. So it's a narrowing segment, and in that it's extremely difficult to get economies of scale and operating leverage. If somebody were to acquire this business, this asset, and see, Mahindras have done that in the tractor business. They got Punjab tractors, Swaraj tractors. They got Gujarat tractors some years back, and they've been able to kind of digest a lot of these acquisitions very well. Now, whether they can do this with the bus business, which is not a part of the portfolio yet. We don't know. So let's not speculate who's going to buy and when. But on a standalone basis, M&M continues to be something that is very robust. And if farm equipment sales are any indication in terms of the potential, monsoon and post-monsoon opportunity, and of course this whole thing of the Tesla models coming into invading their market share and all, I think is a bit overdone. So it will bounce back. It will bounce back to its 3,400 zones very soon. It's just a matter of time and numbers kind of adding up. But I'm still quite positive on M&M. But SML, I really would hazard a guess in terms of what happens if who buys and when it happens.
What about Zomato and Swiggy? They've had a good run. But over the last 2 days, some concern is emanating. The sell side is not as convinced as they were. Yesterday, it was Macquarie saying that they prefer QSR companies like your Devyani. Today, BofA has downgraded both Zomato and Swiggy to an underperform. Where do you stand? Zomato is at 200 rupees now.
So Rima, I can tell you one thing. Quick commerce also attracts the same kind of attention from and interest from investors. The interest comes in quick, goes away quick. The reason is it's a very rapidly evolving segment. Nobody thought quick commerce would start contributing so much in certain subsegments of the FMCG play or the consumption basket. And I meet a lot of players in the consumption side, the underlying product side. And it's phenomenal the way their dependence on Swiggy and Zomato, Blinkit is on. What's going to happen is eventually there's going to be a lot of interest, a lot of new players. There will be an expansion of the market. And whoever ends up becoming efficient in this process, and I think from that perspective, answering your question, specifically, Blinkit has far more history to bank on, data richness to rely on. They've done some mistakes and learned from it, which a lot of the other players like Zepto, Swiggy will still have to kind of pay the price for. So I'm very positive on that. At these levels, it definitely makes a lot of sense because it's a long-term secular trend which you can't reverse. So more players will come in, a lot of them will die, a few will survive, and we've seen Zomato do that in its other businesses as well, right? And Zomato brings you a lot of the optionalities of the district and the ticketing business and so many more vectors that could work towards it. But just on the weightage of Blinkit, I think it makes sense to get into Zomato at all levels.
Okay, all right, Prakash, I wanted your view on Whirlpool. That's a brand that has a decent market share here in the refrigerator as well as the washing machine business here in India. And over the last few years, growth has been fairly okay. Their gross margins have expanded as well. And cash in the books as a percentage of the total mix is close to around 25%. I put out a piece earlier today. I'm not sure whether you had a chance to look at it. And now the stock trades at around 26, 27 times. Historically, it's traded around 45 times. There's that overhang with regard to what the promoter does next. But what would you do with the stock at around 950, keeping in mind that 6 months ago, it was 2,400 odd?
Oh, absolutely. No, I did go through the piece that you put up on Twitter as well. And I can tell you what you've captured, the salience that you've captured. If you read between the lines, it's very simple. The promoter is doing it for whatever reason, personal, compulsion and reason that they would have. But as an investor, to buy into a franchise like this, which is very superior to a lot of the other players in the market, and which can very quickly scale up. In the last few years, Whirlpool has done nothing in terms of new launches very aggressively, new markets, new products. There's nothing much that's been done to kind of, to trigger growth for obvious reasons that, if the promoter interest is the way it is. But if some other players were to come in, leverage on this, build this up, we've seen how Voltas is done with a brand like Beko. You've seen what Haier is doing in India, even though they don't have a localized presence in that sense. So it's a great segment. Consumption overall, especially this particular part, is something which you can't ignore. I would be very positive on Whirlpool at these levels. In fact, this is the opportunity you get when valuations soften because of an event that's got nothing to do with fundamentals.
Interesting. So that's a positive call on Whirlpool. By the way, just pointing out that Siemens seems to have had a bit of a rub-off effect on some of its other peers as well in the MNC capital goods space. Check out stocks like Honeywell, which is up 3%. And even ABB has managed a 3% up move today, despite the fact that the market overall is cooling off a little bit. Prakash, very quickly before we let you go, in this whole pack, MNC capital goods stocks, which have now corrected, Would you buy anything?
No, I think to be very honest, I told you why the Siemens move could be not just because of the demerger approvals. It's related to a lot of demand coming back from Europe. And the first port of call for European consumers is going to be companies which have MNC parentage. And you named a few of them. I would, if I had to look at the electric value chain, I would certainly go and buy Siemens itself because it has a very robust product pipeline, which can kind of start changing, scaling up so dramatically. So what happens to Cummins 2 years back, Shubhi, when the parents started looking at the Indian business to supply its global needs, I think Siemens could also do that once this demerger is out of the way. So I give you that Heathrow example, which is just a trigger, but there's lots that's happening in Europe which will draw interest or center interest towards the Indian players. So absolutely promising value chain. The domestic guys will also benefit, but they'll probably be secondary in terms of advantages. The primary advantages to these MNC plays.
Thank you, Prakash, for joining in. We will get into a break, but before that, Bharat's growth story is being driven by leaders transforming policy into real progress. And you can hear directly from them at the News 18 Rising Bharat Summit 2025 on the 8th of April and the 9th of April at the Bharat Mandapam, New Delhi. This is an exclusive opportunity to hear straight from Nitin Gadkari, Union Minister for Road Transport and Highways, on infrastructure-led economic transformation, Hardeep Singh Puri, Union Minister for Petroleum and Natural Gas, on shaping Bharat's energy resilience and global position, from Ashwini Vaishnav, Union Minister for Railways, Information and Broadcasting and Electronics IT, on advancing India's digital infrastructure, mobility and communication. Get your tickets today for the summit that defines what's next for Bharat. Book your passes now.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to
Welcome back. Now pushing towards the 23,500 mark. So extending losses 150 points down on the Nifty, with the Sensex lower by close to about 350 points. We've had a 7-day run winning streak. Snapped that today. Yesterday was also not really a winning streak. The benchmark indices were flat, consolidating, but with the positive buys. Mid-caps had corrected a bit. Today, you're seeing correction across all the key indices, so some profit booking after the vertical run over the last few days.
By the way, that's good news in case you're planning to buy a fancy EV, Rima.
30 lakh plus.
Now you don't have to pay that tax. This was announced a couple of, I think just less than a couple of weeks back. And now it seems the Chief Minister is saying that it's going to be withdrawn, that 6% additional levy on electric vehicles above 30 lakh rupees. So good news coming in. M&M anyways up about 1% for the time being. Okay, let's carry on with the market conversations. And we have Sanjay Parekh, founder and CIO at Soham Asset Advisors, joining in. Sanjay, great to have you with us. Pleasure to have you this afternoon on the show. Hi. So, two-part question. First of all, is the correction over? And if yes, then what do we expect from here? This market has always had V-shaped recovery since COVID. But is it going to be a little more boring and difficult this time?
No. So, you know that we, our fund has a mandate wherein it's a large cap oriented fund. So we take a very active view on Nifty and do communicate. And it's always humbling because at 23,000, we really felt that the risk return is very favorable. And then we saw 22,000, almost 22,200. But, we really at that point, and we sent you the note as well, that we really felt that, the risk return was extremely favorable. If you take earnings yield versus debt yield at that point, earnings yield was 5.3%, which is the reverse of price earning on FY26. The 10-year yield was 6.7. So at 1.2% gap, typically you tend to outperform, and there is a meaningful upside over last 10, 15 years, barring COVID or 2008. The another thing is, of course, clear price earning, historical price earning, if you see, we were lower than the averages of the last 5 years. And then if you also take ROE and growth of Nifty, because globally people look at India as a stock for allocation. A lot of global funds look at the simple ROE growth model. So if Nifty has an ROE on 26 at 15.6%, and even at 10% growth, it was implying 3.35 times price to book, which was coming at 25,300, 20,500 on FY26. So at 22,500 was really, really comfortable, and the risk was extremely favorable. And we've gone on record saying that next year earnings of 1,200, and then in 26-27 around 1,350. And obviously when growth is less, there is a debate whether India should trade at 18 or 20 times. But we genuinely believe that if growth recovers, we can go back to 20 times. And that would mean from here as well, 15-16% return in the next 15 to 18 months. So I think, you can never say you can't react another 2, 3, 4%. And you have global risk as well of Trump-related policies. But I think every fall, one can slowly start accumulating. Having said that, this year will be a low of slow recovery of earnings growth. I don't expect Q4 also to be great. It will be a little better maybe. But bottom up, I don't see a big earnings surprise in Q4.
Okay. By the way, I just want to point out, guys, that the market fall has simply continued on. Now, it's a near 200-point fall in the Nifty. We've had, in the last about 15-20 minutes, it's accentuated a little bit. A lot of the large-cap economy-facing stocks have come in for additional selling pressure. There you go. That's the heat map. So it's a big red move across the board. And if you look at individual names, Adani Enterprises, Power Grid, L&T, BEL, NTPC, so a lot of these economy-facing stocks coming under pressure. So that's a red screen for now.
Sanjay, your whole M&M in your portfolio, you're like autos on the whole, and one of the stocks that, that's a part of your portfolio is M&M. Now there is chatter about how M&M is going out there to, and possibly consider acquiring SML Isuzu. If that happens, what are your thoughts on this M&A?
Yeah, actually, for the market cap of M&M, it's a small acquisition. So we actually feel it's almost like a non-event. it's a small acquisition which will be an add-on to their portfolio. I mean, we're not negative, or we're not saying that they have moved away from the capital allocation policy. I think such acquisitions, even if it's a bit smaller, could be strategic. So we are not negative. I don't think anyway, it's a very small acquisition. So sometimes that materiality matters as well. So it's not digressing that they're getting into areas which are not related. So we are not perturbed by this.
Hi Sanjay, good afternoon. Good to see you again. First of all, good on that call on Vedanta. The last time we chatted, the markets were in disarray, and you said no. We believe that in fact, that you and your entire team believes that you'll make money out here, and you'll stuck to that call, and the stock has done quite well from there. So good on you all. It appears that demerger date as well is in the offering. Now, if you look at your portfolio,
you all covered it so well. I mean, the last interview really helped to get confidence from us as well. Right. So it was a very, very well covered interview, and really compliment to you and team.
Okay, all right. Well, Shireen did that one, with some support. So that was good. And, actually we had presented that piece, a special situation, I think around 420, 430 rupees odd. So from there as well, it seems Vedanta has got some support. That said, if I look at your portfolio construct, it appears the NBFCs, that's something that you like, because even in comparison with the benchmark, you all seem to be overweight. You'll have a lot of stocks in there. Bajaj Finance is the notable one out there. India Shelter Finance Corporation. Give us the rationale. The rate cuts could be one. You believe the worst of asset quality is behind, and you think growth will be good. Tell us more.
Yeah, so, the thesis was this, and I mean, Bajaj Finance we've been holding for 3 years. So the first 1.5 years, it did not perform. And then we further topped up after the recent meet. And there's very, very clear longevity of growth was there. For the growth, the valuations were reasonable. The leadership is top class, and now the continuity of the leadership. So it was absolutely, we topped up at that point of time. The two housing finance companies, India Shelter, one is in the lower end of affordable housing, The other one is around mid-size at 25-30 lakhs, which is Canfin, which is a recent entrant that we have. Shriram Finance now been holding for 1 year plus. We again felt then, it was really well placed, and we've been holding. It's done quite well for us. It was before it got included in Nifty. So, and now I think it could pause or consolidate for a while, but structurally for the ROE, and they've maintained their asset quality. They have now not only a vehicle finance book, but also, the lower end strata where they cater to the erstwhile SCUF book. So ROEs are good. Price to book is not that cheap now. So we like them from a structural piece. So these are the, and then of course we have small weight in Angel, which I think in the next 2 quarters could be weak quarters. But overall, our point was not because of the rate cuts and they benefited. I think some of these are structural positive where they can grow irrelevant of the interest rate cycles. And they've done quite well on asset quality. The housing finance is pretty insulated on the asset quality side. And both of them were trees. I mean, Canfin had some recent issues, but it was available really cheap at 1.2, 1.3 times. The India Shelter was clearly bought for the longevity of growth, and they've grown very, very well. Very good pedigree of promoters, and hence we own them.
Sanjay, out of time, but thank you very much for joining in. Great conversation as always. We'll slip into a break on that note. We'll come back and get you a check on what Dealing Rooms is saying in our segment G Street Chatter. We'll also get you a few BTST calls.
We could see Lilly manufacture Manjaro in India anytime soon?
It's of course possible. We're expanding our global footprint. There's a lot of discussion in the air about localizing or regionalizing supply chains. And as India could become an important market for us, it's a smaller market for us now, but Mounjaro may well change that. Open-minded about possibilities here.
24 was artificial intelligence, generative AI, and its impact across different sectors. What do you think this is realistically going to mean in terms of bringing down the timelines to drug discovery?
Yeah, it's interesting. 24 was the year of GPT and GLP.
Yes,
right. So
that's right. GPT and GLP is
exactly,
right.
Yeah. So, but that doesn't end in 24. I think it's accelerating both trends. We're seeing new innovation in incretins and obesity, but also new innovation in AI. Lilly has embraced AI at scale at every phase of our business.
All the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
पड़े।
Welcome back. Well, the markets are sitting with a cut-off close around 200 points odd. Eicher Motors is a stock that slipped in the last few minutes. I think we should pull up the intraday chart on that one. And ITC is the other one. You know, that one, in fact, has now moved to the low point of the day, a larger weight on the index. When that slips, it puts some pressure on the Nifty as well. But as promised, it's time for D-Street Chatter. Nimesh joins me to tell us what's going on out there. Well, Nimesh, a bit of a down day, but I think par for the course yet again after the kind of run that we had. And it's that year-end phenomena as well that could be playing out.
Absolutely, Nigel. You know, so for second day running, a bit of under pressure, but I guess, you know, it's more to do with the expiry and not much from
a sell perspective. So even today, the sense is there is good buying interest from the larger FIs. In fact, there is a small MOC as well. What happened yesterday? I think for the second day running, there is an MOC basket buying at a leading FI. So it looks like even today the FI number could be slightly positive. But again, that also has to be read in the context of the expiry as well. So in the expiry week, the last 2-3 days of flows seems to be a bit colored as well because of the F1 expiry.
Yes.
So people tend to cover their F&O positions and sell and buy cash and sell future, those kind of stuff. So don't read too much, but at least there is not big selling is what I understand from an FI perspective. I guess a sector which clearly stands out and where there is buying interest is the financials. So a bit of rotation happening with the financials as well. Private banks are well bid, and within that, the smaller private banks are now seeing a bit of uptake after a big rally what we saw in the large private banks. So a bit of churn there. I guess after the expiry, I guess April will be news heavy in the first 10 days because of the reciprocal tariff on second, and then we have the RBI policy as well in the first 10 days of April. So going to be quite noisy in the first 10 days of April series. But again, technically 23.98 is a level to watch on the upside. That's a bit of a supply zone or a resistance zone, so to speak. But clearly, I guess from a flow perspective, at least there is not large selling. In fact, there is buying for the last couple of days as far as FIs are concerned.
All right, so the FIs, no worries on that front. I'm just wondering whether some feedback is suggesting that the big domestic buyer seems to be churning its portfolio towards the end as well, which normally we do see towards the end of a fiscal. What about individual stocks? What are you picking up?
Well, so in terms of individual names, Nigel, there are a lot of stocks which are buzzing in trade. So the first stock on my list is TFCI. After a long time, some buying seems to be have emerged in that stock as well. Buzzing in trade, the volumes are on the higher side, and the city is anticipating a corporate development very soon. In fact, the sense I'm picking is that maybe there could be some fundraising in TFCI very soon. So that's the first stock. The second stock is Sharda Energy. In the last 1 month, that stock has been in a very narrow range, been consolidating, a bit of under pressure as well. Largely, I understand there is a bit of selling happening, and one of the domestic fund seems to be trimming the holdings in Sharda Energy. So that's the second stock. The third stock is EPAC Durables. We had the management on the channel today. The commentary was quite strong. But for the last couple of days, the stock has been under pressure, largely because I understand there is a selling pressure going on from a leading private equity. Looks like that selling is likely to happen, get cleaned out very soon. So that's the buzz on EPAC Durables. And the last is Shriram Finance. For the last few days, there has been selling in Shriram Finance. A leading global fund was an active seller. Seems like that selling is largely over. There is a first signs of buying interest now back in Shriram Finance at these levels.
Okay, all right, Nimesh, thanks a lot for that. Well, the markets have managed to at least defend the 23,500 odd mark just for now. We've seen a bit of a recovery from the day's low. And just pull up a few stocks. Elecon Engineering, pull up the intraday chart out there. The stock is up close to around 5%. Majority of that move has come in the last few minutes. So I think we should get the intraday chart out there. Indian Shelter, that's the other one that we were talking about with Sanjay Parekh just a short while back. He was sounding quite optimistic on one of those names. So that one as well comes up for you in the screen. So pockets of strength from the broader markets is what we can see. Mitesh Thakkar is back with us. Mitesh, what are you doing? Continuing to hold on to those long positions and buying the dips. The trend is still intact, upward?
I would say so. I still believe that we have a good chance of going higher than lower. So I have a BTST on Kotak Bank. Disclaimer, it's a recommendation for our clients or the investor interest. But BTST here with the stop just below levels of 21.25 for targets of 21.70. And Ashok Leyland is the other one. That's a BTST as well. Keep a stop below levels of 213.90 and look for 218, 220 kind of for target.
Okay, all right, got it. Thanks very much, Mitesh, for all the cues and the stock ideas today. We'll see you with the market again tomorrow. Have a good evening. Let's quickly move on to an exclusive. CNBC-TV18 is learning that the Zomato-backed cult fit is all set for its D Street debut. There could be an IPO very, very soon. Rachna is here with more details. Rachna, over to you.
Sources have told CNBC-TV18 that Zomato-backed cult fit has picked bankers for its upcoming IPO. Axis Capital, Jefferies, Goldman Sachs, Morgan Stanley and GM Financial have been roped in as the book-running lead managers. The company is eyeing a 2,500 crore raise at a valuation of about $2 billion. Now, to put things in perspective, Zomato had infused about $100 million in 2021 in cult fit, giving it a valuation of about $1.56 billion. Now, cult operates over 500 gyms across India and has been aggressively expanding expanding its footprint. In just FY24, the company clocked a total income of around 1,000 crore. But it's not just fitness centers for Cult Fit anymore. Cult has diversified into multiple businesses like Eat Fit, Mind Fit, and Cult Sport, which constitutes about 30% of its total revenue. Speaking of Eat Fit, that alone contributes about 24.5% of the total revenue. Apart from Zomato, among key investors of Cult include Accel Partners that holds about 17.25% stake, but there are other key names also on its cap table like Tata Digital, Temasek, Kalari Capital and Chirite Ventures. With the IPO in the works, all eyes will be on Cult Fit.
Okay, all right, Rachna, thanks very much for that. Let's move on now to a special mid-cap microscope. Today we're focusing on a stock that has halved from the top, but has perhaps made valuations a lot more palatable. So is it a value opportunity or is it a value trap? Nigel takes a closer look.
Welcome to Mid-Cap Microscope. Well, today the stock on our radar is Whirlpool of India, a stock that's been on a roller coaster ride. It's dropped nearly 50% from its peak, but after this steep correction, the big question is, how much of the bad news is in the price? Well, what was the key reason first for the sharp fall we saw in the stock price? The promoter entity, Whirlpool Corporation, announced its plans to reduce its stake in the Indian entity from around 51% to around 20% by the middle to the end of 2025. Now, that's a significant sell down. And this is not their first move. Last year, they offloaded close to around 24% stake for around $470 million. They cited high valuations. But globally, Whirlpool has been exiting various businesses while holding minority stakes in Whirlpool China and its EMEA joint venture. So in that sort of a backdrop, maybe this move isn't entirely surprising. But time will tell, what does it mean for the company's future here in India? Well, beyond the promoter stake overhang, there's another key risk. The royalty and the brand licensing fee, which is currently at around 1.4%. Any modifications here could impact the earnings, and the market is waiting for clarity on this front. But let's talk about the business itself. Whirlpool India's revenue comes in mainly from the refrigerators and the washing machines business. And they've also been expanding in the kitchen appliances space as they've increased their stake in Elica, which now contributes close to around 7% of the total revenue mix. And under the leadership of Mr. Narasimhan Ishwar, well, the company has made quite a turnaround. Their market share in refrigerators as well as washing machines has improved. They've undertaken various cost-cutting measures which have boosted their gross margins. And the working capital management as well has got strengthened. Remember, Whirlpool India's cash in books is roughly around 25% of its market cap. And that's something that investors, they always like to see. Well, moving to the valuations front, the stock now trades at under 30 times its earnings. That's at a sharp discount in comparison to its long-term averages when it's traded at around 45 times. So is this an opportunity or is it a value trap? Well, from here on, there are a few critical factors you need to watch. Will LG India's upcoming IPO have a bit of a positive rub-off on the entire sector? At what valuation does the promoter sell its remaining stake? And most importantly, will the buyer be strategic in nature? Well, it's been a whirly path for Whirlpool India. Plenty of twists and turns. But valuations are now lower. Is the worst priced in? Let's see how this one plays out.
Very interesting data that you've compiled there, Nigel. Thank you very much. Let's in fact ask Amrish Baliga. He's the market expert joining us in the last leg of Closing Bell today. Amrish, we'll get to the market stocks that you like, but first, come in on Whirlpool.
Good afternoon, Rima. Whirlpool, I think, the announcement which was made by the management that they would possibly exit, clearly that was the one which brought the stock down by, I think, 40-50%. But I think it's a great target for the other players in this field. So in case that happens, they come in as strategic buyers, then possibly at these levels there is value. But then if they, like whatever they said earlier that they could sell in the market, that is a fear. So in case that comes true, we can see lower levels. So at this point of time, I'll just wait and watch. I'll not really buy fresh at this point of time.
Okay. All right. Got that. Amrish, the stock that you have for us today, That is Samvardhana Motherson. Is that the pick?
Right. Exactly. Because see, it's world's leading specialized automotive component manufacturing company, have about 400 facilities, supplies to OEMs across 44 countries, and they have been granted about 2,800 patents. I think it's among the largest as far as India is concerned. Basically, modules and polymer products, wiring harness and vision systems, and India and Europe contributes about 55% of the revenue. Nearly all the top international auto majors are the customers. Making an entry now into consumer electronics segment, I think the first plant should be operational by next quarter. 2 more facilities are starting, Q2 FY26 and Q1 FY27. And they are tier 1 supplier for Airbus commercial aircrafts. And out there also they have a decent order book. Overall, if you look at the order book position, about 30% of that is EV, so clearly future ready. Q3 earnings were a tad bit lower. I mean, like the revenue grew about 8%, but still it was better than what the analysts were expecting. EBITDA margins were decent at about 9.7%. Net debt to EBITDA is 0.9x, which is quite good. If you look at the management vision, longer term, they want to deliver 40% ROC. Revenue mix, they are talking of 75% auto-related and about 25% of new products. Dividend payout policy also is decent at 40% of consolidated profit. So expecting an EPS of about 9 for FY27, and with this, my target price is about 180.
Okay. Stay on, Ambrish. We'll just get into a short break, mandatory, before we wrap up today's trading session. But as we do that, let's listen into Anish Tawakle of ICICI Prudential AMC on the froth in the market, the weakness in the small and the mid-cap space, and the impact of Trump's tariffs.
India lowering tariffs is not a bad thing for the economy, right? So even if we chose to lower tariffs, that would be fine. We've lowered tariffs from the 1990s, and the economy has done well. So nothing bad happens if you lower tariffs. The US, for example, decided to impose steel tariffs. All downstream industries which use steel therefore suffer. So you might as well say that the US has made its own manufacturing uncompetitive by putting tariffs. If the US puts tariffs on pharmaceuticals, for example, more than 1/3 of the medicines they consume are supplied by India. There's no other place that can supply at the rates that India does. So what will happen if they put tariffs? The Indian manufacturers are not making supernormal profits. Demand is inelastic. So prices will have to go up. Right? So I think this tariff issue is just being discussed too much. At the overall economy level, I don't think it matters. Risk-return trade-off is far more favorable in the large caps than in the small caps. In the small caps, you still have stocks that, if you look at price-to-book values, they're excess of 5, 8, and then you look at the moats of these business, the competitive position of these companies, it's not that great. If you look at the balance sheets, there's a lot of, stuff that you typically don't want: very high inventory levels, very high receivable levels. So there's enough minefields in the small and mid-cap space in our view. That's not to say that you can't find anything to invest in, but even in our small cap portfolio, if you look at the published portfolio, we have a fair amount of large caps because we feel that overall they offer a better risk-return trade-off.
So we've made a lot of progress on 2 fronts, on both sections that we call them sections, but they're much more than that, Russia, Ukraine, and also the Middle East, and we'll see what happens. We're in deep discussions with Russia and Ukraine, and I would say it's going well, but it's a situation we should have never had to even think about, should have never happened. And on the Middle East, that's been going on for a lot of years. Centuries and centuries, it just keeps going, and we are making a lot of progress, so that's all I can report. But some very, very big talks are going, and detailed talks are going on right now on both fronts.
Okay, just about 6 minutes left for markets to close, and the Nifty is going to perhaps close below the 23,500 mark. HEG Graphite are moving up for the second day in a row. So HEG is up close to about 3.5%, while Graphite India too has a gain of close to about 2%, and it's moving up on pretty large volumes. We've been in conversation with Ambrish Baliga. Ambrish, what's happening in HEG Graphite? 2 days in a row, big moves, big volumes?
Rima, in fact, I don't track these stocks too closely. In fact, I was tracking it about 4 or 5 years back, but not anymore.
Okay, and what about Ashok Leyland? They're making some preferential allotment, issuing shares to the promoter, 1 crore shares at a price of 200. The stock is currently at 215. They've also denied, any plans of acquiring stake in SML Isuzu, as was being reported. Ashok Leyland?
Ashok Leyland at these levels, in fact, I like the stock. I think the news which has come is decently positive. And in fact, we have seen the last couple of quarters that HCV, LCV sales had in fact come down as far as the sector overall is concerned. But I expect that over the next 2 or 3 quarters, we could see a decent uptick looking at, again, the sort of execution which is happening as far as infra is concerned. That should be positive for both Ashok Leyland as well as Tata Motors. But I think the effect will be more on Ashok Leyland. So at these levels, I would suggest buying. Possibly we should see, at least about 15 to 18% sort of a move up over the next 6 to 8 months.
And Innocent Bank, I remember in the heat of all the issues, you kind of thought maybe the risk reward was turning favorable. The stock went down to levels of about 600 even earlier this week. It's rebounding. Are you buying Innocent Bank?
Innocent Bank, I would say, it is a buy for a high risk taker. Those with a weak heart should not be looking at Innocent at this point of time. I believe that most of the negative news is already there in the price. And what came last, the write-off, which was close to about 2.5% of the net worth. I suppose that is the last set of bad news. Maybe, if one wants to play a bit more safer, one can wait for the report to come of the audit which is happening right now, for forensic audit. But then valuation-wise, keeping all this aside, at these levels, it's looking attractive. So if one can possibly hold on and wait for the next 12 to 15 months, and possibly also take a 10 to 12% sort of a drop from here, if one can take that in the stride. So this is a good time to buy, hold for the next 12 to 15 months.
Defense stocks are seeing a lot of buying in the recovery over the last 1 week. Defense has been right on top and lots of order wins too. What would your preferred pick be in the defense? Would you play the defense theme as a recovery rebound, and which one?
As of now, I would still play the defense sector because I still feel that the valuations are tad bit still high. I think this is more of a bounce back because we have seen a decent fall in the last close to about 8-9 months, and because of which we are seeing some sort of a bounce back. I would possibly wait for a correction of at least another 15 to 20% for most of these stocks to get in. So for the time being, I would like to stay out.
And what about Titan? Goldman Sachs today said that Titan is one of the stocks that they would bet on. They're betting on a lot of large caps, but Titan is one of them. But the street is concerned about the earnings from here on because of high gold prices.
No, it's just not high gold prices. Titan was a good story in the last 2 to 2.5 decades. It had a first mover advantage. But then see, in the last 3 or 4 years, there are so many regional brands which have become national brands now. And clearly, you have the competition increasing quite a lot in this space. So I really don't see that first mover advantage which Titan had can really carry on too much further. And valuation-wise, it is still expensive at this point of time. So I wouldn't really buy Titan at this point of time.
Okay, all right. Ambrish, just hold the thoughts there. We'll quickly recap the day. And it's been a weekday, you'd have to say. The bulls finally taking a bit of a pause. 200 points down on the Nifty as we're wrapping up. The mid-cap index has relatively done sort of slightly better, you could say. The cut there is about 0.7%. Bank Nifty's fallen in sync. Basically, all these indices are down between 0.7% to about 1%. So let's find out where the large cap weakness was. Pretty much across the board. But a lot of PSU stocks and financials along with IT, they've led the declines today. So NTPC down 3.5%, Tech Mahindra 3%, Cipla is down 2.5%. On financials, Axis Bank 2%, Bajaj Finance, the big banking boys, HDFC Bank, ICICI Bank, lots of red on these stocks. Not much, but each of them down between 1 to 2.5% or so. Like I said, IT was weak, so Tech Mahindra wasn't alone. Infosys is also down almost 2%. There's been some weakness on Wipro as well. Other heavyweights, SBI, Lever, Reliance, not quite helping the bulls' cause. All these stocks ending quite lower. Even TCS is down about 0.7%. So largely a fully red screen. The only stocks that have bucked the trend would be a Trent, 2.5% up there. IndusInd Bank is interesting, almost 3.3% of an up move coming in on this one as well. But otherwise, weak day for large caps. What about the mid caps, Rima?
Full reversal. The mid-cap index was in the green for the first half of the trading session, ending with a cut of 0.7%. Small-cap index down over 1%. And the widening gap between the number of stocks declining and advancing will tell you the picture. By the close of it, 500 stocks in the green for about 2,100 stocks in the red. So on the way down, let's get you through that list first. You had Swiggy as well as Zomato. BofA today downgraded the stocks, and that put pressure on them. Easy Trip, IREDA, Ola Electric, IRB, HCC, Geo Financial Services, which makes its way into the Nifty in about 2 days. That stock too was down close to about 2.5%. On the way up, you had HEG, Samvardhan Motherson, a stock that Ambarish was just talking about. NCC, on the back of order wins, managed a green tick to close up today's trading session. But with that, we wind down on Closing Bell. Thank you very much for watching. Don't go anywhere, because on the other side is Markets Forward.
Look, I take full responsibility. I built the group. My job is to make sure everything's coordinated. It's embarrassing, yes. We're going to get to the bottom of it. I just talked to Elon on the way here. We've got the best technical minds looking at how this happened. But I can tell you for 100%, I don't know this guy. I know him by his horrible reputation, and he really is the bottom scum of journalists. And I know him in the sense that he hates the president, but I don't text him. He wasn't on my phone.
The market fails to hold on to opening gains. The Sensex and the Nifty snaps a 7-day winning streak, fall nearly 1%. 40 out of the 50 Nifty stocks end in the red. Broader markets fall in line with the blue chips.
Siemens surges after the NCLT gives the green signal for the demerger of its energy business, paving the way for its listing. NCC gains after it wins orders worth 10,000 crore rupees, while HAL flies high after GE Aerospace delivers engines for the Tejas light combat aircraft.
Invest in large caps with a 3-year view. That's the advice from ICICI Prudential AMC's Anish Dawakle tells CNBC-TV18 that earnings are likely to recover to double-digit growth in FY26. However, warns that small and mid-cap valuations are still elevated.
Hello and welcome to a fresh new edition of Markets Forward, your go-to show where we get you up to speed with regard to what happened today and we gear you up for tomorrow as well. I'm Nigel and with me as always is Surbhi. Well, Surbhi, we pulled back a little bit. For the second day running, we ended at the low point of the day, but we have seen a solid run. So that's why I think no one's really perturbed, at least as of now.
Yeah, absolutely. We tried a bit with all the pink and the lavender, but the market not quite in the pink of health today. But then it's had a good recovery move. So perhaps not too many people will be complaining because what we saw was a pause, a bit of a speed bump in that recovery rally today. So let's quickly talk about what happened. A fall that was an across the board, very homogeneous kind of a fall. The fall included large caps, mid caps, small caps, and the fall included almost every single sector on the Nifty heat map, and we'll pull that up in just a bit. So there you go. That's the mid-cap index, also down about 0.6%. Small-cap index also down about 1% or so. And if you're looking at sectors, then from PSUs to pharma to IT to energy, oil and gas, metals, everything was down today. So maybe you can pull that up. Yeah, we'll just, there you go. So that gives you a whole picture that it was a very wide fall today. It wasn't about any, small few set of stocks or sectors. So pretty much across the board profit taking. One final data point would be the advanced decline ratio. Given that this was a pretty wide fall, we had a negative advanced decline ratio. There were almost 4 stocks that were declining to every one that was advancing. So a slightly weak day. There you go. Those are the lines. But Nigel, I guess given the market has pulled back quite smartly from the lows, maybe the bulls will know that this is a bit of a breather that they needed.
Well, that's right, Surbhi. As I said, I don't think it's anything worrying. And as we have been seeing over the last few days, the foreign flows have returned. Yeah. Maybe on the domestic front, some bit of rejig could be taking place. So that could be one factor at play and, maybe making some adjustments towards the end of the fiscal year. Well, let's tell you what we have lined up on the show for you today. We start off with all the top movers and shakers. We'll go across to Vivek in just a bit. Stocks on our radar include Siemens after the NCLT's approval for the demerger of its energy business. We have shares of HAL surging higher on trade on the back of the GE Aerospace delivery with regard to their engines. We'll tell you about that stock-specific action as well. Last but not the least, we'll delve into the key market events you need to track for tomorrow's session. So all that and more is lined up in the next 20 minutes or so. But as promised, first up, Vivek joins in to tell us all the big movers of the day. Vivek, take it away.
Well, thank you so much for that. Another session where you actually saw a bit of booking coming in and the advanced decline ratio in the broad end of the market was slightly muted. Amongst the list of top gainers, can't look past Siemens, very strong up move seen today. Finally, the NCLT has given the nod for the demerger of the energy business. So that particular development seen quite positive as far as Siemens is concerned. The other stock, one that we don't discuss too often, is ZF commercial vehicle. This particular stock saw a significant up move today. There was reports that indicated that MORTH is proposing to mandate buses as well as trucks to go ahead and take on board a few driver assistance systems. That stock ended by over 5% today. Strong volumes too over there. HEG was the other stock. Even yesterday we highlighted both graphite as well as HEG. Another day where we saw the graphite electrode stocks move higher in the session. And to round off the list of gainers, NCC, very strong order win coming in over there. Over 10,800 crores worth of order wins. Stock moved significantly higher, cooled off a little bit towards the day's end. On the list of losers, quite a few stocks, that saw significant selling pressure. REC, one particular stock, in fact, the company told the exchanges that they had received approval from the board to go ahead and raise close to 1.7 trillion rupees for next year's as a borrowing limit. Street saw it quite negatively on the back of the fact that it implies a lower limit compared to last year. Zomato, another stock, second straight session, you saw significant selling pressure, a downgrade coming in from both securities. And IT, yesterday, which was a clear outperformer, today did see some selling pressure come across most of the IT names, so names like TechM, Infosys, Wipro. All of these stocks too remain under pressure. And lastly, BSE, that is Bombay Stock Exchange, that particular stock, along the list of capital marketplace, this stock too ended lower by almost 4% in the session today.
Okay, all right, Vivek, got that. Thanks very much. Well, that's the detailed account of today's trading action. Let's go across to our market guest. We have Amrish Baliga joining in for some perspective. Amrish, as the market has been recovering, I mean, a lot of the wise men are saying stick to buying large caps, but what are you looking at within the mid-cap space? Any specific pockets or sectors where you're seeing decent valuations along with growth prospects?
See, in fact, we were buying across in the mid-cap space. I mean, I'm not buying too much right now. We were buying about 3 or 4 weeks back. And we, in fact, started buying sometime in January when the market had started falling decently well. But then again, if you ask about specific sectors, then we have been buying into specialty chemicals. We've been buying into auto ancillaries. I mean, one of the stocks I talked about today also belongs to auto ancillaries. We've been buying into some of the smaller private sector banks. So these are a couple of sectors and segments we've been buying into.
Okay, all right. Got that, Amrish. Well, let's discuss a couple of stocks then. Siemens, that stock rallied close to 5% of the NCLT, gave the green signal for the demerger of its energy business. That paves the way for listing of 2 separate businesses. Horbos joins in to fill us in with all of those details. Horbos, please break it down for us.
Positive developments coming in for Siemens, particularly after the battering that the capital market names have taken from their high. Siemens 2 itself is down over 35% from its peak. But NCLT yesterday gave the approval for the demerger of its energy business. It has taken effect from last night. The energy business will now be incorporated into a separate entity and will be listed on the bourses, thereby unlocking some shareholder value as well. Now, the equity entitlement ratio has been fixed as 1:1, which means that 1 share of Siemens of the listed entity that you currently own will now be receiving 1 share of the demerged entity as of the record date, which has been fixed as the 7th of April. Now, this will of course now be listed and the listed entity now will have the digital industry, smart infra and mobility business. Now, if you take a look at the numbers as well for SY24, which the Siemens follows an October to September financial year, the growth for the energy business was just 5%. The overall business grew by 19%. The margins though for the energy business were higher compared to the overall business. If you take a look at the current quarter as well, the energy business grew better than the overall business. The overall business had seen a decline, but it'll be interesting to see now how the listing of the independent entity takes place and then unlock some more shareholder value as well. So positive developments overall for Siemens.
Okay, all right. Got that, Horbos. Thanks a lot for that. Amrish, your view?
See, I mean, whenever there's a demerger like this and shareholders get, some shares or, a mirror shareholding, normally we see, accretion of shareholder value and shareholder wealth. So that is what is expected even in Siemens. So, at these levels, I suppose one can still look to buy, waiting for the demerger. I think, only one of the recent demergers did not really add value, which was ITC and ITC Hotels. There was a bit of destruction of shareholder wealth, but generally we see increments. So from that point of view, I would say buy.
Okay. All right, got that. Let's move on to some more stocks that were in focus today. HAL, Hindustan Aeronautics, was up almost 4%, bucking the otherwise weak trend in the market. And this after GE Aerospace delivered its first F404 IN-20 engine to HAL for the Tejas light combat aircraft. Upasana is here with more details. Upasana, tell us, why is this very important for HAL?
Well, certainly it's a very big important update that the street was eyeing on. GE Aerospace has delivered its first of 99 F404 IN-20 engines to HAL. This is for Tejas LCA Mk1A fighter jet, which was long pending since the past 2 years. Now, company at Aero India had indicated that GE 404 engine delivery will begin either by end of March or April 2025. Now, let us understand what the key concern was. Now, supply chain disruptions were there at GE Aerospace, which was the main reason for the delay in the delivery of F404 engines. Now, GE initially planned to deliver 16 engines annually starting in FY23, but none were supplied until now due to the supply chain disruptions as highlighted earlier. Now, this delay has postponed HAL's delivery of LCA Mk1A fighter jet. Now, delay in the arrival of GE 404 engines has become a major bottleneck in the delivery of the Tejas Mk1 fighter in the past 2 years, is what the street was fearing. Now, Elara says that it expects 2 engines to be delivered in April 2025, which were initially scheduled to be delivered in FY25, and 12 additional in FY26, followed by 20 thereafter from FY27 every year. It expects 10 to 11 Tejas Mk1A fighter jets to be delivered in FY26 as compared to the estimate of nearly about 12 fighter jets. This may translate into a revenue of somewhere around 3,000 to 3,500 crore is what the brokerage is estimating. Now, 83 Tejas Mk1A fighter jets are expected to be delivered within the stipulated time, that is until FY29, and the brokerage believes that this ramp up will start FY27 onwards. Hence, this stock remained in focus, and if you look at the stock move, it's up nearly about 34% this month.
Okay, all right. Thanks a lot for that, Upasna. So some fundamental news coming in there. Shrikant, what do you believe? How's it looking on the charts? You know, in the last 26, 27 days, we have seen that HAL has done 25, 26%, and now we have this incremental news. How's it looking on the charts?
Yeah, good afternoon, Nigel. This particular stock is showing a lot of strength in terms of the way it recovered from the lower levels. No doubt that the stock is down more than 50% from its top. But now when it is recovering, it is showing V-shaped sort of recovery. And if we consider the news flow, then that is also supportive. We saw some specific orders for the company, for the sector, also this particular news. So broadly, I am of the view that the stock is heading higher and it is moving towards the levels of at least 4,500, 4,700 in next maybe few days. It will take some time because currently it is very close to its overbought level, but it is comfortably holding above the 200-day simple moving average as well as exponential moving average, which is positive. So overall, the stock is showing a lot of strength and we should look for adding if there is any correction.
Okay, all right, got that. Let's move on and talk about another stock that was in news today. NCC was in positive territory again, bucking the overall weak trend of the day, and this after it won 2 orders and the total size was quite massive, over 10,800 crore rupees. So let's go across to Vivek once again to get the details. Vivek?
Well, that's right. Very large order win that the company has received. But we'll break down and we'll try and understand how exactly NCC stands to benefit from this particular work order that they've received. First up, the development itself. 2 work orders from BSNL for design, supply, installation, as well as O&M, that is operation as well as maintenance services of the middle mile network for BharatNet. Total value of both the orders, like you mentioned, over 10,800 crore. The first order is in the state of Uttarakhand, valued at 2,640 crore. The second order is in the state of Madhya Pradesh, valued at over 8,400 crores. Now, the order itself is split into 2 separate components. The first is the capex and the second is the opex. Capex portion, which is the EPC that the company will be able to book as a part of the order inflow, is 5,730 crore. The opex segment is valued at a little over 5,000 crore. The network construction is expected to be completed within 3 years, followed by a 10-year maintenance contract, which is the O&M portion. So the total order inflow for NCC in this particular year, taking into account the EPC portion of this particular contract, now stands in at 21,100 crore, which is bang in line with what the company had guided at the start of the year of an order inflow guidance of 20 to 22,000 crore. In fact, just a couple of days ago, we had the management of NCC where they reiterated their guidance, a positive development nevertheless, and this is why you saw the stock doing very well in the session today.
Lovely. Thanks a lot for that, Vivek. We had more number of stocks declining that are advancing in terms of market breadth, but this was one of the stocks that were advancing. Amrish, what's your view on NCC? And then we go across to Shrikant for a quick technical check on that one. Tell us.
Yeah, NCC, we had an extremely good correction in the last 5 to 6 months. And even the current market cap is about 13,000 crores. And the sort of order win which they have got, with just this one order, it's close to the market cap. So I think it's extremely positive news. And looking at where NCC is, I don't see much of a downside from here. So I think it's a good buy for a long-term investor.
All right, that's NCC and how it stacks up today. Shrikant, just very quickly, I mean, on today's overall pullback, yesterday, actually 2 days for the broader market, first day of a pullback for the Nifty now. Overall trades, what would you advise for tomorrow, looking at the market setup?
The Nifty is very clearly finding resistance at higher levels, and it was very close to its previous important level of 23,800. But the base part is that on Tuesday, we saw the market was crossing these levels, and later we saw some profit booking. So it's a corrective pattern that again we are witnessing in the recent up move, and we may see the levels of maybe 23,300 or 350 sort of levels in next maybe 1 or 2 days of time. So it's a corrective pattern. But broadly, I am of the view that the market is like going to consolidate within the range of 23,300 and 24,000 for next few days. And later on, we can see the market moving towards the next levels. But the way the market has crossed this level of 23,800 on a monthly basis, because it has surpassed the highest high of the previous month. So one thing is very clear, that the market has seen its worst, and in case if there is any correction, then we should look for adding positions, or should look for taking contra bets of going long.
All right, okay, got it. Thank you very much, gentlemen, for joining in and giving us perspective on a whole host of stocks and, of course, investment ideas as well. Let's quickly take a break. But as we're taking a break, let's get you a snippet of a very special conversation that we had today. Invest in large caps with a 3-year view. That's the advice coming in from top fund managers at ICICI Prudential AMC. We're leaving you with a snippet of that conversation that we had. Watch this. We'll come back with a lot more in just a bit.
If we look at the equity space, right, our view is that the large cap space is fairly valued, but one still needs to be cautious in the small and mid cap space. We do expect the economy to regain momentum. So in that context, the multiples in the large cap space are reasonable, and if one invests for a sort of a 3-year horizon, returns should be reasonable. We do think the Indian economy can grow in real terms at 7-ish%, and add inflation to that. So, it was somewhere in the 11-12% range for nominal GDP growth is not unrealistic. And given that corporate earnings typically, follow that kind of growth, that would be the level we would expect nominal GDP to, corporate earnings also to grow at. There's no, science to saying what is the right multiple, right? One can make a case for 21, one can make a case for 19, right? But the reality is, if you stay invested for 3 years, even if you entered at 21 and 3 years later the multiple is 19, it's only a 10% spread out over 3 years. So it hurts your returns by 3%. But if you've got good nominal GDP growth, if you've got good earnings growth, you'll still make reasonable returns. Overall, I'm positive on domestic cyclicals, which includes automobiles, cement, financials selectively, and industrial and capital goods. What we are cautious on is FMCG, and we have been for a while, and IT. PSUs across the board, we generally take, at least I take in my funds, a risk management approach. I don't increase the weight beyond a point, and I'm always comfortable with a certain sort of weight managed position in PSUs. And that continues to be the case.
Welcome back. You're tuned in to Markets Forward. Well, let's get you the key corporate voices that joined us during the course of the day. First up, we have EIL. The management told us that it has repositioned its strategy in order to cater to the international market. Its order book is close to around 12,000 crore rupees. The firm added that the EBITDA margins would be in the vicinity of around 13 to around 15%. They'll grow in the vicinity of close to around 20 to around 25% in the next year. And the books on the whole will look healthy. That's not all. The firm also said that this year looked good in terms of execution of its orders that have accrued over the last few years.
All right. In the meantime, Zaggle's management expects FY25 revenue growth to be higher than the 63% growth that it has guided for. It added that operating leverage would start to show its impact over the next 12 months. On inorganic growth, Zaggle said that it would announce a substantial acquisition in the next 3 to 6 months. The firm also said that they would keep adding a little to the promoter holding over time, which is currently at 44%.
Finally, we had the management of EPAC Durable, and the firm was on track to achieve their 35 crore rupees as PLI incentive for FY25. It said that the demand was picking up, but the industry continued to face an AC compressor shortage. They added that they will maintain the growth of close to around 37% or thereabouts, with margins at around 7.5% for FY26.
All right, so that's all the corporate news flow of the day. Before we wrap, let's talk about the key events you should watch out for tomorrow. Manglam is here with that list. Manglam.
Well, to start things, it is a Thursday tomorrow, which implies that it is the March series expiry. What a great series this has been for the Bulls, a recovery of 1,600 points from the lows. So that is something we will most definitely keep an eye out on. And apart from that, moving on from just the index level market and stock futures, let's talk about a lot of other companies as well. As we close out the end of, this year itself, we do have a bunch of companies that will be meeting investors and analysts at multiple conferences, making their presentations as well. So we have Ashok Leyland, JSW Energy, Polycab will be an interesting one to watch out for given the sort of entries that we've seen in the cables and wire space. There is Union Bank, Hyundai, GMR Airports and others as well, which should come up for you on the screen. Apart from that, then we'll also keep an eye out on United Spirits. The board will meet to consider an interim dividend, so maybe a little peg along with the United Spirits share is what shareholders get. And finally, we'll keep an eye out on some macro data. Because it's a Thursday, we also get the initial jobless claims coming in from the US and important macro to track from the Wall Street perspective.
All right, Manglam, thanks a lot for that neat and interesting list. For the time being, though, we'll wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side. Don't go anywhere.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. Bulls take a breather after a 7-day rally as investors await clarity on the upcoming US tariffs. The Sensex and the Nifty fall nearly 1% each. Real estate and energy stocks stumble. The rupee shakes off early weakness, ending marginally stronger on the back of banks buying dollars on behalf of exporters. After sovereign gold bonds, rising gold prices pushed the government to pull the plug on its 10-year-old gold monetization scheme. No new medium or long-term deposits to be accepted after the 26th of March, but existing deposits will continue till redemption. The government says banks can offer short-term deposits at their discretion. Days after launching its weight loss drug in the country, Eli Lilly's CEO David Ricks tells CNBC-TV18 the company is open to manufacturing Mounjaro in India, says it's also in talks about localizing supply chains, adds it is building clinical evidence on the medicine's impact in treating sleep apnea, fatty liver disease, and curbing other hedonistic desires. That's an exclusive. US President Donald Trump continues to keep the world guessing about how the US will impose reciprocal tariffs starting the 2nd of April. Tells American media he wants to limit exceptions to his proposed tariffs, adds he may be more lenient than reciprocal. President Trump defends National Security Advisor Mike Waltz after American journalist Jeffrey Goldberg reveals he was mistakenly added to a group chat on the government's war plans in Yemen. Downplays the incident as the only glitch in 2 months, claims that no classified information was shared on the Signal chat group. Bharti Airtel and its subsidiary Bharti Hexacom prepay nearly 6,000 crore rupees to the Department of Telecom. This fully settles the 8.65% interest liabilities that rose from the 2024 auctions. The company says these prepayments have been made 7 years ahead of the average residual maturities. India can become a net exporter of defense technology, says Honeywell Aerospace President Jim Courier. Tells CNBC-TV18 tremendous opportunity for localization in India has the company looking at quadrupling sourcing of supply and material out of India. Adds this will push its ambition of growing defense into a core focus area globally. That's another exclusive this evening. After much delay, GE Aerospace begins the delivery of the first of 99 engines for the Tejas light combat aircraft Mach 1A to Hindustan Aeronautics. The delays have impacted HAL's deliveries of 83 Tejas jets to the Indian Air Force, prompting several complaints by the Air Chief Marshal. In a major breakthrough to the 3-year-long war between Russia and Ukraine, both countries agreed to stop attacking each other's energy infrastructure. The White House says the two have also separately agreed to pause military action against ships in the Black Sea. The deal will also prevent commercial vessels from being used for military purposes by either side. The Supreme Court takes suo motu cognizance and stays an Allahabad High Court order which had observed that acts like grabbing breasts or breaking the string of pajamas do not constitute an attempt to rape. Terms it as inhuman and insensitive. Expresses shock that the order was passed not in the spur of the moment but after application of mind. Well, let's start with the market actions. Wall Street failing to hold on to the opening gains today. The Nifty and the Sensex snapped that 7-day winning streak, ending nearly 1% lower. Weakness set in on concerns over how the US will implement President Trump's April 2nd tariff announcements. That's the Nifty for you, down 180 points. Sensex lost about 700 points this afternoon, and the mid-cap index was down 400-point cut there on the bank Nifty. 40 out of the 50 Nifty stocks closed lower, with energy and realty stocks losing the most ground. The broader markets also, as we showed you, fell in line with the blue chips. Now, after sovereign gold bonds, the government has pulled the plug on its 10-year-old gold monetization scheme. This means that no new medium or long-term deposits will be accepted after the 26th of March. But existing deposits will continue till redemption. Manisha is standing by to explain why the scheme has now been discontinued. Manisha.
Well, yes, it is curtains down for the gold monetization schemes, and this is coming in just days before the financial year gets done. And this is also coming in immediately after the sovereign gold bond scheme also was discontinued. Interestingly, both of these schemes actually were launched in 2015, so they've had a run of less than just about those 10 years. For the gold monetization scheme, the statement from the Finance Ministry says that this is being done because of the evolving market situations and also because of the performance of the scheme. What we do understand from the statement is, and there would be a detailed statement coming in from the RBI as well, but the medium-term and the long-term deposits have been discontinued until now, and the short-term deposits are left to banks' discretion as and when and how much do they want to do within that. Interestingly, data as per the Finance Ministry also shows that in all of these years, you've just had about 5693 depositors which took part into this scheme. It is said that the Indian households have 30,000 tons of gold, but what we saw in all of these years is just about 13,000 kgs of gold being introduced into this. So when you look at this breakup as well, the long-term investors or deposits were to the tune of around 13,900 kgs, medium-term even lower at 9,700 kgs, and short-term just about 7,500 kgs. So the deposits clearly have been quite dismal. And there are a few, 4 or 5 reasons for this as well. To begin with, it is about emotional and cultural attachment to your jewelry, which people clearly did not want to part with. The second thing is about the cumbersome process, because you have to take this jewelry, it has to be assayed. They are saying centers are less, and before this jewelry can be converted into a gold bond, it has to be melted as well. And if there is any impurity within, that is discounted for. So this is something that the Indian households did not want to have their jewelry go through. The third thing also is about the taxation and declaration concerns. So whatever jewelry you give out, you are clearly declaring it, and then the interest that you get on these bonds is also it leads to taxes. So that is something that the markets did not like about it. And fourth, and the major point is that there has been really low awareness about it. The banks did not promote it well, is the reason you saw such lower numbers coming in.
All right, Manisha, many thanks. So that's the end of the gold monetization scheme. The big newsmaker this evening, days after launching its diabetes and weight loss drug Mounjaro in India, David Ricks, the global CEO of Eli Lilly, has told me that they're open-minded about manufacturing the medicine here, as the country could become an important market. In an exclusive conversation, Ricks said that the company was manufacturing insulin in India, which had proven to be quite successful. He said they needed to understand the market demand and get comfortable in the regulatory environment. I also asked Ricks about Mounjaro being held up as the silver bullet for a host of issues outside of just diabetes and obesity. Rick said that they were building the clinical evidence on the medicine's impact in treating sleep apnea, fatty liver disease, and curbing other hedonistic habits. Ricks also shared details of the company's ambitious $50 billion global expansion plan aimed at boosting production capacity to meet the growing demand for weight management and diabetes medications and more. He also said the company was gearing up for a breakthrough in diabetes and obesity treatment with an oral drug. Take a look.
We actually know a lot about the GLP-1 mechanism and its safety. No drug has no problems, but we know what they are. So I think patients and their doctors can talk about those risks. It's not like there's unknowns there. Consumer awareness, physician awareness, also important. Payment and support from health systems where that's appropriate. But as you mentioned, we need to make enough. And right now we've had shortages in the last year in major markets. Lilly's invested very aggressively, though, in our own supply chain. We're in the middle of a $50 billion expansion plan, and those are showing good returns. We're expanding our global footprint. There's a lot of discussion in the air about localizing or regionalizing supply chains, and as India could become an important market for us, it's a smaller market for us now, but Mounjaro may well change that. Open-minded about possibilities here.
What could tip you in favor of actually doing local manufacturing
We
here?
do have local manufacturing for our insulin line, actually, which is very successful. So we need to talk to those partners. We need to understand what the demand in the market is. And we need to probably get comfortable with the regulatory environment and some other technical specifics, but certainly not ruling that out. Obviously, it's a very large opportunity. There are the prevalence of diabetes is very high in this country, and that's a serious condition where we need good medicine for. Mounjaro is proven to be very effective in controlling diabetes and helping people lose a little weight with diabetes. And then for obesity, which is almost like a precondition to other very serious health problems, we're seeing really strong uptake in many markets where we've launched, and I would expect that here as well. Unfortunately, overweight and obesity is a reality in India.
But it's not seen as a disease.
Yeah, but it actually is, by WHO standards, classified as a disease. And even if you want to argue with that, it's totally clear that being obese leads to more diseases later, over 200 adult conditions, and some studies have shown almost 40% of adult disease is triggered by obesity. So it's important people manage their weight, hopefully with diet and exercise, but if they can't, now there's a medicine, Mounjaro, which can really have a profound effect on
and
their
you
body
can catch that entire conversation with Eli Lilly CEO David Ricks on Global Dialogues at 7:30 p.m. and 9:30 p.m. right here on CNBC-TV18. President Donald Trump has hinted at not offering too many exceptions on reciprocal tariffs that are set to come into effect on the 2nd of April. Speaking to an American TV channel, Trump added that the U.S. has been very fair while imposing tariffs, also said that he might implement copper tariffs within a few weeks, which is months before the initial deadline. This announcement drove up copper prices to all-time highs. Remember, only a day earlier, Trump told reporters at the White House that his administration may give a lot of countries breaks, but changing signals now. And speaking of Trump, the U.S. president has downplayed the inadvertent inclusion of a journalist on a group chat that discussed war plans for Yemen, saying, and I quote, "It was the only glitch in 2 months," end of quote. When asked if he will investigate the matter, Trump said his administration will look into it, but hinted at a non-FBI probe. Trump's national security advisor, Michael Waltz, took full responsibility for the leaked group chat. Take a look.
I said, we'll look into it. But everybody else seems to be using it. It seems to be the #1 used device or app, whatever you want to call it. And we will certainly look. If it was up to me, everybody would be sitting in a room together. The room would have solid lead walls and a lead ceiling and a lead floor. But, you know, life doesn't always let you do that. In the meantime, the attack itself that we were talking about and discussing has been an unbelievable success. I would ask them, it's not really an FBI thing, it's really something having to do with security. Security like, will somebody be able to break in? Are people able to break into conversations? And if that's true, we're going to have to find some other form of device. And I think that's something that we may have to do.
President Trump. Bharti Airtel and subsidiary Bharti Hexacom have prepaid nearly 6,000 crore rupees to the telecom department. The telecom giant has now fully cleared the high-cost debt of 8.65% pertaining to the auction in 2024. The prepayments were made approximately 7 years ahead of the average residual maturities. The company has now prepaid nearly 26,000 crore rupees of high-cost spectrum liabilities for the current fiscal year. Larsen & Toubro has won its largest single contract to date. While the company has not disclosed the exact size of the deal, it has classified the contract from Qatar Energy LNG as an ultra-mega order. This classification indicates that the order value exceeds 15,000 crore rupees. The project includes designing and setting up 2 large offshore compression complexes. General Electric Aerospace has commenced the delivery of engines for the Tejas light combat aircraft to HAL. The engine manufacturers announced the delivery of the first of the 99 engines ordered by HAL after a 2-year delay. The delays have affected HAL's deliveries of 83 Tejas jets to the Indian Air Force. Shares of HAL gaining in trade today following that announcement. Another exclusive this evening, Zomato-backed fitness brand CultFit is learned to be getting ready to raise 2,500 crore rupees through an IPO. This would give it an estimated valuation of $2 billion. Rachna Dhanrajani joins us now with more. Rachna, at what stage is the process and what's the company planning?
Sources have told CNBC-TV18 that Zomato-backed CultFit has picked bankers for its upcoming IPO. Access Capital, Jefferies, Goldman Sachs, Morgan Stanley and GM Financial have been roped in as the book-running lead managers. The company is eyeing a 2,500 crore raise at a valuation of about $2 billion. Now, to put things in perspective, Zomato had infused about $100 million in 2021 in CultFit, giving it a valuation of about $1.56 billion. Now, Cult operates over 500 gyms across India and has been aggressively expanding its footprint. In just FY24, the company clocked a total income of around 1,000 crore. But it's not just fitness centers for CultFit anymore. Cult has diversified into multiple businesses like EatFit, MindFit and Cult Sport, which constitutes about 30% of its total revenue. Speaking of EatFit, that alone contributes about 24.5% of the total revenue. Apart from Zomato, among key investors of Cult include Accel Partners that holds about 17.25% stake. But there are other key names also on its cap table like Tata Digital, Temasek, Kalari Capital and Chirite Ventures. With the IPO in the works, all eyes will be on CultFit.
All right, Rachna, many thanks for joining us. We'll take a break, but up next, Indian Airlines to add over 1,300 more weekly flights in the summer schedule as travel demand surges. That and more when we return.
just trying to do the right thing for the American taxpayer, for the American people. Just a thank you to the Doge team who are literally getting death threats and being accosted. And here.
You know, these are a lot of them are just kids. You know, they're just trying to help out, and they're very talented. They could get jobs for millions of dollars a year. Instead, they come here, earn peanuts, and get death threats. So thanks to the Doge team.
The Supreme Court has taken suo motu cognizance and stayed an Allahabad High Court order in a minor assault case. The High Court observed that acts like grabbing breasts or breaking the string of pajamas do not constitute an attempt to rape. The apex court has condemned the ruling as insensitive and inhuman. Ashmit is standing by with more details. Ashmit, the top court coming down on the Allahabad High Court, and with good reason.
Well, an interesting choice of action as far as the Supreme Court is concerned. It doesn't usually do this, but it's taken suo motu cognizance of the judgment that came from the Allahabad High Court and then subsequently has gone on to stay that Allahabad High Court. So what is so problematic about that Allahabad High Court? Well, we'll try to answer that. The Allahabad High Court in a recent judgment where there were two accused who had sought to sexually assault, had sought to rape a minor. The Allahabad High Court had held that merely grabbing the breasts of a minor or breaking the strings of a pajama does not qualify as a case of rape, does not qualify as a case of attempt to rape. Rather, the Allahabad High Court had relegated to a case of merely sexual assault. This is something that had a national outcry. This action by the Allahabad High Court is what invited the Supreme Court to take suo motu cognizance, and from there on, the judge made some very stern observations. The Supreme Court expressed shock. The Supreme Court said that this was completely lacking in sensitivity. This was completely inhumane. The Supreme Court also expressed shock that this order was not one that was passed on the spur of the moment, but there was sufficient application of mind by the judge, and despite that, they've come out with such an order, not allowing for such actions to be deemed as rape or an attempt to rape. Nonetheless, the Supreme Court has stayed the Allahabad High Court judgment and has issued notice to the centre as well as to the UP government. Back to you.
Ashwat, many thanks. Former ED Chief Sanjay Kumar Mishra has now been appointed as a full-time member of the Economic Advisory Council to the Prime Minister. He will hold the rank of Secretary. He was appointed as the Chief of ED on the 19th of November 2018 for a tenure of 2 years. Before his appointment, Mishra was posted as the Chief Commissioner of Income Tax in Delhi and now making his way onto the Prime Minister's Economic Advisory Council. Russia and Ukraine have agreed to pause attacks in the Black Sea and against energy targets in separate deals with the US. Russia said that naval ceasefire would only come into force after sanctions against its food and fertilizer trade were lifted. Ukraine's President Zelensky has accused Russia of lying about the terms of the agreement. However, the Ukrainian leader maintained that this was the way forward towards peace. Staying with international news, Israeli forces have killed at least 12 people in Gaza. Israel's military has also continued bombing Syria, killing at least 6 people in the region. Non-profit organization Save the Children said that more than 270 children have been killed in the week since Israel resumed attacking Gaza. Indian Airlines have added over 1,300 more weekly flights in the summer schedule 2025 as travel demand surges. Air India is leading with 3,000 additional flights. Indigo has added 1,100. Akasa has added 190 flights, while SpiceJet cut 417 flights in this year's summer schedule. Madhya is standing by with more on what all of this means for the consumer, for you and me.
Well, clearly air travel demand is seeing a sharp surge. As per the latest data, more than 140 lakh passengers flew in February 2025 versus over 126 lakh passengers who flew in February 2024. That's an 11% surge. So naturally, there has to be more supply to meet this demand. But airlines are constrained due to shortage of capacity and hence are struggling to catch up with the rising demand. So if you see the summer schedule, it is just over 5% more weekly flights than last summer. Airlines will fly 25,610 weekly flights this summer schedule versus 25,000 flights in the winter schedule and 24,275 flights in the last year's summer schedule. Airline-wise, Indigo, that has over 350 operational planes, remains the highest airline to fly over 14,000 weekly flights. Air India Group will be flying 7,685 flights per week. SpiceJet will fly 1,240 flights per week. Akasa Air will fly 1,080 flights, and among smaller players, Alliance Air plans to fly 520 flights, Star Air 505, Fly Big 176, Fly 91 123, and India One will fly 114 flights. Now let's see how many flights have these airlines added as compared to the previous seasons, which is the winter schedule and the summer schedule of last year. So Air India is leading with nearly 3,000 additional weekly flights versus last summer. Indigo has added 1,100, Akasa Air has added 186. SpiceJet, however, has curtailed its schedule by cancelling 417 flights as compared to last summer. Similarly, among smaller players, Star Air leads with 186 additional flights as compared to last summer. Fly 91, which started in March last year, grew from 20 flights last summer to 123 flights this summer. Alliance Air doesn't look in good shape. The airline has curtailed its flights by cancelling 376 flights as compared to last summer. Now remember, the flight schedule is also a key indicator of how the airline is performing and optimizing its assets. More flights means more passengers and more revenue. Likewise, lesser flights means less revenue. But overall, if there's supply, there's some hope for passengers if this could keep airfares in check.
All right, Madhya, many thanks for joining us. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. We're back in a moment with more.
Doing it to help our country, and our country was riddled with fat, like no country probably anywhere in the world, and we're getting rid of the fat. And at the same time, we're going to be bringing in millions of very good, high-paying jobs, and we're going to be taking in a lot of money. Our country's going to be very strong. We've been ripped off by every country in the world, friend and foe, and we'll be announcing cars very shortly. And we already announced steel, as you know, and aluminum. We'll be announcing pharmaceuticals at some point in the not too distant, because we have to have pharmaceuticals. We don't make pharmaceuticals anymore in our country. And if we have problems like wars or anything else, we need steel, we need pharmaceuticals, we need aluminum, we need a lot of these things that we sort of don't make anymore, and yet we're equipped to do it all. So we'll be announcing some of these things in the very near future, not the long future, the very near future. And
what is so exciting is April 2nd is just around the corner. And that's American Liberation Day. That's the day when the rest of the world starts to treat America with respect. And your leadership, understanding how the rest of the world treats us and what balance and what fair trade finally is going to be, is going to take care of America. It's going to launch the External Revenue Service to start to build the power and prestige of America back.
So we're going to take in a lot of money from the outside, and that's going to keep our taxes low. And I think getting a lot lower. It's going to be a lot of money, and the external will take care of the internal to a large extent. So I think it's going to be a beautiful transformation.
Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Guess what? This is the last Let's Talk Money episode of the current financial year. Yes, we are all set to say goodbye to FY25, so we thought we'll do it on a high. And if we're talking about highs in our investment portfolio this year, what better than the shiny yellow metal, the sparkling metal called gold? It has dazzled everyone, investors, market watchers, and policymakers alike. 40% gains over the last 12 months. And a lot of you have been watching this on the sidelines, participating as well, and writing in asking whether there is still more juice left in this gold move, whether you should actually change your asset allocation if you were under allocated towards gold. So, well, to answer all these questions and to help us prep up with the right sort of gold thought process for FY26, we have with us Lakshmi Iyer, who is the CEO Investment Strategy at Kotak Alternates. And we have our very own in-house golden girl, Manisha Gupta, who of course is our in-house expert on commodities. Ladies, what a pleasure it is to have both of you with us. And I must say, Manisha has been teasing us. Every day she'll come into the studio, almost every week talk about fresh all-time highs for gold. What a breathtaking move, Manisha. Did you see it coming? Oh, well, you know, it has been since last year that we've been talking about $3,000 an ounce of a price, and we've finally seen it. And if you look at this year itself, Surbi, there have been 16 days where gold has made a new all-time high. So, well, yes, with nearly 17% of gains in this year, 28% of gains in the last year, and as you said, 40% up in last 12 months, it clearly has been shining very bright. 40%. I still can't wrap my head around that number. And you know what, Lakshmi, the thing is, and we did a show after this because I did the numbers at the end of the calendar year, 24. That time gold was up 30%. And the numbers teach you everything clear, right? So when people talk about asset allocation, it sounds like a lot of gyan. When you see equity down 5-6%, gold up 30%, you realize you should have done your asset allocation, right? What have you made of this massive move?
No, so gold, I think it's time that it progresses from student of the year to being the guru. It is actually the guru of the world, not just any particular asset class, whether you look at gold in dollar terms, in pound terms, in rupee terms. I mean, you name the currency, I think gold is right there shining. And I was just joking with my colleague yesterday that gold is behaving like, you know, Amir Khan in that movie. Have you seen Lal Singh Chadda, where he says, "Main daudta gaya." I mean, it is just non-stop.
The Forrest Gump of all asset classes.
So true. In the concrete jungle. And clearly, gold is thriving on Trump and tariff, which is the 3 T's of the piece today. And the uncertainty factor makes everyone, whether it is a retail investor or a wholesale investor or the central banks across the globe, make them, you know, kind of do a beeline towards gold because you just can't create gold out of thin air.
No, absolutely, absolutely. You know, I just want to take a step back because a lot of our viewers probably are not watching the market on a day-to-day basis. So, Manisha, help us wrap our head around this because, you know, Trump came into the White House only in November. But this move has been in the making for the last 12 months, like we've said, right? Yes. So, yes, Trump and tariffs and uncertainty, all that is now. But what has really been happening in the market that's led to this humongous rise? Oh, well, absolutely. You know, there'll be a few things in the last couple of years, and one clearly has been the Russia-Ukraine war. Since that has been on, people have been putting their some part of their money into gold. So that portfolio diversification has been happening. And then in turn, gold has been giving you returns, luring in more people there. It also has been about China's slowdown. And that whole conversation about de-dollarization, well, that was a major reason that you saw prices gain up. And most importantly, it has been about central banks buying 1,000 tons a year for last 3 years is what central banks have been buying gold in their reserves. Also, when you look at the RBI, we are holding 880 tons right now, and much of that buying really has come in the last couple of years itself. RBI did not buy for 5 or 7 years and then started buying in last couple of years. So big buyers is what banks have been, and then ETF buying started to come in, investment buying has started to come in as well. So there are more and more buyers coming in. This is really interesting. Lakshmi, your thoughts on this, the central bank action that Manisha started, you know, with, because they are the biggest buyers in the market, right?
Yeah.
And like I said, this move has been building well before Donald Trump came to the White House.
Sure.
So what have you heard around this? And you speak to people, you're following the market so actively.
Yeah. So I'll tell you, Surbi, what's happening is that if you look at the global reserves, okay, which central bankers are owning in the form of currencies, they've started plateauing out. What does that tell you? It tells you that central bankers now want to diversify outside of currency, intuitively the dollar, because, you know, bulk of their currency holdings is in the form of dollar. And they want, I would not say a substitute, but they want something to complement their currency portfolio. And that is the reason, forget India, China, you're seeing countries like Poland, Czech Republic, all of these countries also are trying to buy gold. So it's not just about, I would say that FOMO factor for the smaller central banks, probably the fear of missing out also is playing on that. And why not? You know, when you're excessively dependent on one asset class, whether you're the central banker or you're a retail investor, it has its own peril. You know, it's like balancing on a beam. I mean, you have to balance it not just right, but try to get it closer to as right as you can.
But it's a bit unprecedented, right? 40% in a year, where touchwood, I mean, yes, there have been wars, there is geopolitics, but it's not like a full-blown, apart from West Asia, which is obviously the big talking point,
Yeah.
we've not seen major disruption in oil infrastructure. It's not like the world is coming to an end moment, and yet gold has gone up. So, Manisha, are there people in the market who feel that maybe it's a bit excessive?
No, not too many, really.
Really?
Because when you look at the global banks and brokerages, Surbhi, they are still telling you that while, of course, you will see some correction because it has been a one-way buying here. And corrections could come in up to 2,700, 2,500 as well. But then you also have 32 and 3,500, 4,000. I mean, I've read a report for $6,000 an ounce as well in the next 3-4 years. But let me remind you that 2015, and that is when the sovereign gold bond was introduced.
Yes.
In 2015, gold was at 2,500 rupees per gram, 2,500 rupees per gram. It's at 8,800 rupees a gram right now. So if you bought it in 2015 and people have been redeeming as well, I mean, that's the kind of gains people have taken off.
Yeah, absolutely. I'm going to come to that because the sovereign gold bonds became best friends for many of us Indians, myself included, because the scheme was really so good. But Lakshmi, from here on, and we'll come to how to look at it from a personal finance angle in just a bit, but purely from a market positioning, do you think this is still a safe time to be making fresh investments to gold?
So, you know, there are two parts to it. Any asset class, whether it's listed equities, whether it's, you know, bond rally or it's a precious metal rally, in this case, gold, everything has a cycle. And if I tell you that the future is always bright and the long-term trend is bullish, that doesn't mean that the asset class can't take a breather in the near term. Sure. And I think we are probably in that phase right now where if we had done this show maybe 3-4 months back or maybe 6 months back, I would say that probably 2025 would be like $3,000 to $3,200 an ounce. And we are seeing that in like, under 90 days. So intuitively, I'm not saying that it cannot sustain, but it has to consolidate. So if you are a fresh investor who's saying that, oh, you know, I don't want to miss out this rally, I would say it's okay. Just kind of take a pause. And gold is never intended to be like 100% of your investment portfolio.
The thing is that you mentioned FOMO. There's also that feeling of feeling silly. Because while you are chasing the best multi-bagger stock and you're trying to find the best mutual fund and you're wondering whether this mid-cap will become a large cap, here is gold, simple old gold, which your grandmother bought. And it's just, the most simple investment has just kind of, you know, eclipsed everything else, all included. But actually, it's not just gold, right, Manisha? Silver has also had a good run. So just, you know, recap that for us as well.
Oh, well, absolutely. And, you know, while gold is at all-time high, silver is far away from that. Silver's all-time high has been $47 or thereabout. And we are trading at 33, 34 right now. But if you look at the last 3 or 4 years, we've been making higher highs. And silver is also strong because the fundamentals are quite positive. This is going to be a 5th straight year of deficit in global markets for silver. This also is going to be a 4th straight year of record industrial demand, because silver is used from your phones to your chips, to your battery, to your AI, to your energy transition. So silver has way more uses than perhaps gold.
Practical, sort of physical market uses as well. So when you sort of talk to all the dealers out there and you know, the market experts, what's the sense? More bullish views on gold or on silver going forward from here on?
So, you know, the way the pattern always has been that gold starts to go up and silver always follows. But then silver suddenly makes that very volatile sky, you know.
It like shoots up.
It does.
Yeah.
And that's exactly something that the markets are waiting for at this point in time. So while you have forecasts of 40 and 42 for this year and perhaps 45 the next year, well, yes, people are very, very bullish on silver as well. And now because we have silver ETFs as well, so that's yet another way of investing.
Yeah. Okay, so we'll talk about investments, but before we let Manisha go, she has to run and, you know, look at other things as well. The sovereign gold bond. It was a beautiful scheme. You know, it allowed you to buy gold without physically taking ownership of gold. It was backed by the government of India. It was paying you 2% additional interest.
2.5%.
2.5% over and above the capital appreciation. But it's over and done now, right? I mean, there are no tranches and nothing new from the government on this at all, right, Manisha?
Yeah, right. The last tranche that we saw was in Feb 2024. We haven't seen anything after that.
Yeah.
So, you know, the whole idea perhaps back in 2014-15 was that the gold prices will go higher, but not at the speed that it has really done. And that's perhaps the government also perhaps saw it as. So, but from where we stand right now and the way the gold is doubled just in last 2 years or so, it clearly has been not a very profitable view for a government there. But even more interestingly on this is that even as a lot of people bought sovereign gold bond, not too many of them have, pre-redeemed it in 5 years. Everybody is holding for those 8 years, getting in that 2.5% as well. And where the gold prices have run up, it has been perhaps the best of the schemes that we've seen. So I wrote an article recently which says, governments envy, but investors pride.
Oh, absolutely. Absolutely. It's been a dream come true. And what can we say? We can only thank the government of India. Your thoughts, do you have any hopes, Lakshmi, of this, in some form, this gold bond scheme comes back?
See, there are no free lunches. How can there be free gold? I mean, if you're getting 2.5% extra, which is free, and your counterparty is Government of India, the beeline should have been much, much more than what we actually saw in the tranche collections. Yeah, I mean, we have to say that all good things have to come to an end. So it looks like, the beeline that now investors are making towards gold ETFs, you are actually seeing, the folios, increase month on month and the net sales being added, into the system. I think that's giving you a good hope, except for, if I remember, April, of this financial year, where the net sales were marginally negative. Gold ETFs have consistently seen positive net sales.
And whenever the price shoot is higher, because I track that AMFI data, which comes every month, typically gold ETFs will draw in lots of money.
But people want to... I have a point to put here, because because the base is very low is the reason we've seen numbers grow up a lot. But Lakshmi can throw light on this, because when you look at the overall AUM within mutual funds, gold ETFs isn't such a big thing. It's like a 1 to 2% perhaps.
So, see, the industry is close to 65-70 lakh crores and the gold ETFs is just about 55,000 crores. But here's the deal, Manisha, we are educating investors to own paper gold, something which they're not going to see, touch, feel. That takes like light years to educate, and from there
I hope not.
No, I'm telling you, because the thing is that I've been part of these investor awareness programs. People want to touch and feel their gold, especially women. And what so happens is that now that last 2 years, for example, if you see folios which are under 50 lakhs are now touching almost 70 lakhs. Now again, bases are very small. 13 ETFs now are 19 ETFs. So I think you're kind of catering to that demand as well, isn't it?
No, but I have full faith in the brilliance in the mind of the Indian investor. The moment the investor figures that this is right and this is working, they're very quickly to lap it up. It's a question of just figuring it out. And I think for two asset classes, which is gold funds, gold ETFs, and REITs, we did a show on REITs as well, it's a matter of time when this really picks up and the awareness kind of grows. But thank you very much. We have to let Manisha go. By the way, Manisha, you personally are a big investor in gold as well?
I am.
Is it jewelry or is it investments?
All sides. That's exactly what we were talking about, that when SGBs came, it wasn't that India's import of gold dipped any, because it was still 700 to 800 tons. So people are buying gold always.
We want to wear, we want to invest, we want to keep in the bank, we want to do everything with gold.
True that.
All right, we'll have to take a very quick break on that note, but the conversation continues on the other side. Now that you don't have the sovereign gold bond scheme, what is the next best way in which you can take exposure to this shining asset class?
Let's talk money.
Today, we're delighted to report that Hyundai is announcing a major $5.8 billion investment in American manufacturing. In particular, Hyundai will be building a brand new steel plant in Louisiana, which will produce more than 2.7 million metric tons of steel a year, creating more than 1,400 jobs.
If you're booking an Ola, Uber or Rapido in Hyderabad, it could be a sweltering ride. Cab drivers have launched a no AC campaign, refusing to turn on air conditioning to highlight their financial struggles. For many drivers at ride-hailing platforms, driving a cab is no longer financially viable. After operational costs and platform commissions, they're often left with earnings that barely cover their daily expenses, forcing them to make tough choices like turning off the AC. And so the Telangana Gig and Platform Workers Union has launched this no AC campaign. What are their concerns? Fuel prices are high and running AC means burning more fuel, making trips less profitable. Second is low earnings. Drivers say Ola and Uber take 30 to 40% of the fare, leaving them with just 10 to 12 rupees per kilometer. But operating costs with the AC turned on rise to 16 to 18 rupees per kilometer. Essentially, the driver is left with very little in hand. And so drivers are demanding higher base fares to cover rising costs, lower platform commissions and government regulations to ensure fair pay. The union is also pushing for a Telangana gig workers' rights bill, and if their concerns aren't addressed, they plan to escalate the protests nationwide. While Hyderabad's campaign is making headlines, this isn't new. It has been happening in Hyderabad and even Bengaluru. Drivers in Bengaluru have unofficially stopped using ACs for more than a year. In 2024, drivers even demanded 5 rupees per kilometer extra for AC rides, but this wasn't officially implemented by ride-hailing apps. Most drivers just simply refuse to switch on the AC.
Let's talk money.
Welcome back. You're with us on Let's Talk Money. It is the last edition of the show this financial year. So we're ending by talking about the asset class that has been the best performing in FY25, and that is what else but gold. So Lakshmi is still here with us, and we need to understand how best to now take exposure. And now the fun and games aside, now it will be serious because we're talking about portfolio planning, Lakshmi. So given the rise and given how you're seeing, and you wear that hat which allows you to see markets across equity, fixed income, everything. How much allocation would you advise? And this is, let's take, if we take a 3-year view, someone wants to build their portfolio today.
Yeah.
How much should they give to gold?
So, Surabhi, this conversation I keep having with a lot of investors, whether it's retail or whether it's an institutional investor. And world over, if you try to scan through, there is no real rule of the thumb as to what should be the ideal allocation of gold in your portfolio. But, scanning through markets over 2.5 decades, I think anywhere in the band of 10 to 15% is optimal allocation, which I still believe, therefore, it will be more tail-ended allocation to your portfolio rather than keeping it front-ended.
Yeah.
And I know that investors do tend to get carried away by recency bias, trying to say, equity has done nothing, fixed income is just pure carry or nimbu pani, or not even nimbu pani, sometimes just pani.
Just plain water.
Yeah, plain water. So what do I do? So let's pump all the money into gold. That's not the right way to look at. So I think 10 to 15% of the tail end is absolutely fine. And why I also say that, Surabhi, because the known gold is what we do as part of our financial, portfolio allocation. But so much of unknown gold. I mean, unknown as in we buy jewelry, we have gold coins and all of those physical gold, which probably we may or may not really be having the actual tab off. So I think with all of that, any which ways, you'll be plus.
So
in any
financially limited to maybe about 15%. Now, for those who already have that exposure, they're fine, they're happy, they're just enjoying the ride. But for someone, like I said, who's either building a new portfolio or was too, equity dependent, equity only, and realized their mistake looking at this rise, what should they do? How do they approach it? You mentioned gold ETFs. Is that the best port of call?
No, absolutely. So, you have gold ETFs for those who have demat accounts, and for those who do not have, they have gold funds, where essentially they are actually, feeding into these gold ETFs. So, you actually have both these optionalities available for you to own physical gold, but in the demat or the paper form. And I would say that, and it's worked fantastic for me. For example, just kind of do it in a staggered manner, because I'm not going to divest out of gold so long as I have a financial portfolio of equities and bonds or fixed income in the portfolio. I'm not going to divest out of gold. So it's just going to continue. It's my term cover on my financial portfolio.
So just do a SIP in one of these gold funds, you're saying?
Yeah, you do SIP, or you just do like a staggered investment, take a $10 and say that, I'm going to stagger it across 4-5 months, like in a lump sum, and just leave it for like 10, 15, 20 years. As long as you are running your financial portfolio, you do not need to divest out of gold.
Now, apart from the demat difference, obviously, if you want to buy an ETF, you need to have a demat and then you can buy those units. Apart from that difference, is there any other difference between gold ETFs and funds in terms of structuring, taxation, cost efficiency, anything else?
So gold funds have a slightly added layer, obviously, because it's a fund of fund investing into the ETF. So that's the additional small layer. But I would say, Surbi, you need to compare this with physical gold buying.
Yeah.
You know, with all the tamjam where you have so much of inconvenience in owning the precious metal. Here you have certified gold. You know, these are all LBMA, London Bullion Metal Association approved gold bars, which are the underlying, which are in the, I would say, behind the curtain.
Yeah.
So they are still being held in the form of gold, you know, for a pool of investors.
Sure.
So I'd say the convenience is what you're really buying into. And it's so liquid. I mean, I just get up, decide, you know, to redeem today. The gold ETF allows you to buy intraday from markets open, you know, till markets close. Whereas gold funds, you get the end of the day NAV. That is the only differentiation. And gold ETF, I can decide to sell. Similarly, the way I decide to buy, I can sell and buy on the exchange. So if you want the comfort of, you know, punching in trades from the comfort of your house, on the exchange, it's gold ETF. You pay that marginal cost extra, but you don't have a demat account, you're still better off owning the gold fund.
And remind us of taxation as well, because when the whole long-term capital gains tax regime was kind of rejigged last year, the fund-of-fund structure also kind of, you know, there was a categorization difference. So today, when I'm finally redeeming my either gold ETF units or I'm selling off my gold fund, what is the capital gains tax I'll have to pay?
So short term is as per your tax
slab
slab,
rate.
and then long term is the 20% taxation.
Okay, so 20% long term, short term would be? And the definition is 2 years.
For long
and
term?
short- Yeah.
That's right, yeah.
Okay, so that kind of explains the tax part of it. Now, very quickly, this is the mutual fund route through which I can play gold in a very, very safe manner. And what I get back, we must remember that you don't get physical gold back. You will get back your investment in monetary terms. There is this whole move around digital gold as well, and there are a lot of fintech players, and many of them offer, you know, buying gold in a digital format, very small token sizes, 100 rupees, 200 rupees, and they promise to give back physical gold when you redeem. I don't know if you've seen some of these apps or these players or not, and whether you find them, I don't know, are they safe enough?
See, I have not personally experienced something like that. Of course, I do track a lot of these things. So here's the thing, you know, from a retail investor standpoint, if it is a regulated entity, which is, you know, regulated by either the central banker, more so in this case, it'll be, since it's capital markets, more like SEBI. If it's a regulated entity, then I would say it's still worth taking a chance. But, you know, if it is something which is more haphazard or loosely held, or, you know, you don't really have a backing of an institution, I would say you're better off doing something which is more time tested, which has been in existence for now decades. And, you know, why kind of reinvent the wheel? I'd also say that if you're wanting to do 1 kilo bars and multiples of a kilo, you can actually get physical delivery in the gold ETF as well.
Oh, so gold ETF will give you
that's right.
Physical delivery, but for larger quantities.
1 kilo is the bar size, so that's the minimum lot, and multiples of a kilo is what you can expect.
1 kilo of gold, when can I afford that? I don't know. Let's see, we'll find out. So, Lakshmi, final thoughts, we're wrapping up, and, you know, since you're the master of so many markets, have to ask you this. The financial year is ending, we're looking forward to FY26. What's your advice? And in terms of the market, if I were to ask you to, you know, be a prophet and talk about what asset class might really surprise us on the upside next year, which one?
Oh, you know, that's the most tricky question.
I know, it's an unfair question, I admit.
But I'd say, you know, the way I'd put it, Surbi, is that you require, you know, and Prayagraj is just behind us, so we did all the, you know, I also did go to the Triveni Sangam for the holy dip. So these markets are going to be, you know, constant dips, and whatever dips has to come up. You know, you can't be forever sunk into the water, so you have to come up. Similar is our portfolio. So you need to have the right combination of Brahma, Vishnu, Mahesh. You know, if you are the creator of your wealth and you want to sustain this wealth, then you have to have the right proportions. And I say, when I say Brahma, Vishnu, Mahesh is more like a disruptor, which is like an equity, you know, which kind of keeps, you know, giving you volatile jing bangs in your portfolio. But you have to stay the course. Lage raho is what I would say. And FY 2026 or this year is going to be full of latkas and jhatkas, and it is going to test your nerves. And that is the time, you know, Vishnu comes in handy. Vishnu is the protector. And that's where I said gold will be that Vishnu. You know, kind of, Vishnu ji is always like this and, you know, a hand like this. And that is the role that gold plays in your financial portfolio. But you have to, you know, stay the course. You know, if your doctor gives you a medicine which says it's a 5-day course, and if you disrupt it and say, okay, 3 days and I'm done, it's going to come back. So keep that in mind, you know, when you are engineering or when you're creating your financial portfolio, because this is not something which is going to last you financial year after financial year. It is for a longer time. And that is the reason have a lot of vitamin P, which is the patience pill. This market is going to test your nerves, test your patience, and don't please get carried away by the recency bias.
Fantastic, fantastic. And it's a great pious, spiritual, philosophical note to kind of end on, right? As you're bidding goodbye to FY25 and welcoming the new year. So may this new upcoming year be the perfect sangam for you as well in terms of your investments and your wealth creation journey. Lakshmi, thanks very much. Always a fantastic conversation. Thank you so much for joining us on the show today.
Awesome. Thank you.
With that, it's a wrap on this edition of Let's Talk Money. We will see you again next week in a brand new financial year with more thoughts, more ideas on wealth creation.
Let's Talk Money.
Insist, and even then some decline. Now, as the mercury rises, so have passenger complaints. This begs the bigger debate, which is who pays for the AC. Passengers expect an AC cab, especially in the scorching summer heat. Drivers say they can't afford it unless fares increase. Ola, Uber, Rapido haven't provided a clear solution. No pricing model for AC usage, no opt-in feature either. So should drivers absorb the cost or should riders pay extra? Let us know what you think in the comments below. There doesn't seem to be an easy resolution to this tug of war. Perhaps us riders should consider investing in one of those handheld fans for now.
Hello and welcome to News Center. I am Ashmit Kumar. Now straight to action from the Lal Street, where the market took a breather after a 7-day winning streak, its longest since September of 2024. The Nifty and the Sensex ended nearly 1% lower. The weakness set in on concerns over just how the US would implement President Donald Trump's April 2nd tariff announcement. 40 out of 50 Nifty stocks ended lower, with energy and realty stocks losing the most ground. CNBC-TV18 Surbi Upadhyay is standing by with more on the day's trading action. Surbi.
Well, the bulls finally decided to take a break today, a breather after a 7-day winning streak for the Nifty. And today the fall was not just about the Nifty or the mid-cap index or one or two sectors. It was an across-the-board fall around the market. So whether you're looking at the large-cap space or mid-caps or small-caps, everything almost fell together, down anywhere between 0.7% to almost 1%. And ditto for the sectoral spread as well. If you're looking at the Nifty sector heat map, almost every single sector was down. Of course, the losses were being led by a lot of PSU stocks that have rallied very hard in this pullback. They were correcting today. Oil and gas and financials were the other weak areas of the market. So let's talk about, some of the key losers. By the way, the Nifty today in this fall, it has slipped back to the 100-day moving average, which comes in close to the 23,500 level. So let's see if it kind of stabilizes here or not. The key losers on the index, NTPC, BPCL, like I said, PSUs were weak today. A lot of IT names also couldn't hold up. Tech Mahindra, Infosys, Wipro, all these stocks were down. Cipla was one of the key pharma losers on the Nifty. Financials, Bajaj Finance, Axis Bank, Kotak Mahindra, State Bank of India. So, banks, non-banks, everything across the board profit taking coming through. Heavyweights didn't really add to the Nifty's tally today. Reliance was weak. There was weakness on Lever, which was down a little over 1% as well. And HDFC Bank and ICICI Bank also on the downside, ensuring that we ended in the red, literally. The gainers, very few today. They included names like Trent, some buying on IndusInd Bank, and HCL Tech was bucking the trend on an otherwise weak IT screen, so to speak. Some interesting stocks and news should point them out. Siemens, for sure. On a day like this, the stock was still excited because the NCLT has given the approval for the demerger of the company's energy business. That was up about 6% throughout the day. HAL has managed to receive some engines from GE for the Tejas aircraft. So again, green on Hindustan Aeronautics. Ashok Leyland has clarified they're not interested in SML Isuzu. Stock was up. Zaggle ended lower after completing an acquisition. But then, like I said, the broader mid-cap market was under pressure. So the losers included names like Chola Finance. Lots of pressure here. 6-7% down on Chola today. Tejas Networks, RailTel, REC and Hutco from the PSU pack. So basically, it's a day where there's a bit of a speed break in what was a lot of momentum in the recovery on the upside. The market is in a wait-and-watch mode as it follows the global headlines as well and awaits more clarity on the direction that Wall Street will take and, of course, what happens on the 2nd of April.
Right, Surbi, thanks so much for that. From equities now to commodities, after sovereign gold bonds, the government has pulled the plug on 10-year-old gold monetization scheme. This means that no new medium or long-term deposits will be accepted after the 26th of March, but existing deposits will continue till redemption. Manisha Gupta is here joining us with more. Manisha, tell us, why is this scheme being discontinued?
Well, yes, it is curtains down for the gold monetization schemes, and this is coming in just days before the financial year gets done. And this is also coming in immediately after the sovereign gold bond scheme also was discontinued. Interestingly, both of these schemes actually were launched in 2015, so they've had a run of less than just about those 10 years. For the gold monetization scheme, the statement from the Finance Ministry says that this is being done because of the evolving market situations and also because of the performance of the scheme. What we do understand from the statement is, and there would be a detailed statement coming in from the RBI as well, but the medium-term and the long-term deposits have been discontinued until now, and the short-term deposits are left to banks' discretion as and when and how much do they want to do within that. Interestingly, data as per the Finance Ministry also shows that in all of these years, you've just had about 5693 depositors which took part into this scheme. It is said that the Indian households have 30,000 tons of gold, but what we saw in all of these years is just about 13,000 kgs of gold being introduced into this. So when you look at this breakup as well, the long-term investors or deposits were to the tune of around 13,900 kgs, medium-term even lower at 9,700 kgs, and short-term just about 7,500 kgs. So the deposits clearly have been quite dismal. And there are a few, 4 or 5 reasons for this as well. To begin with, it is about emotional and cultural attachment to your jewelry, which people clearly did not want to part with. The second thing is about the cumbersome process, because you have to take this jewelry, it has to be assayed. They are saying centers are less, and before this jewelry can be converted into a gold bond, it has to be melted as well. And if there is any impurity within, that is discounted for. So this is something that the Indian households did not want to have their jewelry go through. The third thing also is about the taxation and declaration concerns. So whatever jewelry you give out, you are clearly declaring it, and then the interest that you get on these bonds is also it leads to taxes. So that is something that the markets did not like about it. And fourth, and the major point is that there has been really low awareness about it. The banks did not promote it well, is the reason you saw such lower numbers coming in.
Right, Manisha, thanks so much for that. Now, the big news maker this evening, days after launching its diabetes and weight loss drug Mounjaro in India, Dave Ricks, the CEO of Eli Lilly and Company, told CNBC-TV18 that they are open-minded about manufacturing the medicine in India, as the country could become an important market for them. In an exclusive conversation, Ricks said that the company was manufacturing insulin in India, which had proven to be quite successful. He said that they needed to understand the market demand and get comfortable in the regulatory environment.
We actually know a lot about the GLP-1 mechanism and its safety. No drug has no problems, but we know what they are. So I think patients and their doctors can talk about those risks. It's not like there's unknowns there. Consumer awareness, physician awareness, also important. Payment and support from health systems where that's appropriate. But as you mentioned, we need to make enough. And right now we've had shortages in the last year in major markets. Lilly's invested very aggressively, though, in our own supply chain. We're in the middle of a $50 billion expansion plan, and those are showing good returns. We're expanding our global footprint. There's a lot of discussion in the air about localizing or regionalizing supply chains, and as India could become an important market for us, it's a smaller market for us now, but Mounjaro may well change that. Open-minded about possibilities here.
What could tip you in favor of actually doing local manufacturing?
We do have local manufacturing for our insulin line, actually, which is very successful. So we need to talk to those partners. We need to understand what the demand in the market is. And we need to probably get comfortable with the regulatory environment and some other technical specifics, but certainly not ruling that out.
Well, you can catch that entire conversation with Eli Lilly CEO David Ricks on Global Dialogues at 7:30 and 9:30 p.m. right here on CNBC-TV18. Now, U.S. President Donald Trump has hinted at not offering too many exceptions on reciprocal tariffs that are set to come into effect from the 2nd of April. Speaking to an American TV channel, he added that the U.S. has been very fair while imposing tariffs, and also said that he might be implementing copper tariffs within a few weeks' time, which is months before the initial deadline. This announcement drove up copper prices to all-time highs. Remember, only a day earlier, Trump told reporters at the White House that his administration may give a lot of countries breaks. And well, speaking of Donald Trump, the U.S. president has downplayed the inadvertent inclusion of a journalist on a group chat that discussed war plans for Yemen, saying that it was only a glitch in 2 months' time. When asked if he will investigate the matter, Trump said that his administration will look into it, but hinted at a non-FBI probe. Trump's national security advisor, Michael Waltz, took full responsibility for the leaked group chat.
I said, we'll look into it, but everybody else seems to be using it. It seems to be the #1 used device or app, whatever you want to call it, and we will certainly look. If it was up to me, everybody would be sitting in a room together. The room would have solid lead walls and a lead ceiling and a lead floor. But, you know, life doesn't always let you do that. In the meantime, the attack itself that we were talking about and discussing has been an unbelievable success. I would ask them, it's not really an FBI thing. It's really something having to do with security. Security like, will somebody be able to break in? Are people able to break into conversations? And if that's true, we're going to have to find some other form of device. And I think that's something that we may have to do.
Well, more international news. Russia and Ukraine have agreed to pause attacks in the Black Sea and against energy targets in separate deals with the United States. Russia has said that the naval ceasefire would only come into force after sanctions against its food and fertilizer trade were lifted. Ukraine's President Zelensky has accused Russia of lying about the terms of the agreement. However, the Ukrainian leader maintained that this was the way towards peace.
The United States reached deals on Tuesday with Ukraine and Russia to pause attacks in the Black Sea and against energy facilities. The U.S. agreement with Russia goes further than the deal with Ukraine, as the Trump administration agreed to help seek the lifting of international sanctions on Russia, something Vladimir Putin has long sought. The separate agreements are the first formal commitments by the warring side since the inauguration of Donald Trump.
We are making a lot of progress.
The Kremlin said the Black Sea agreements would not come into effect unless links between some Russian banks and the international financial system were restored. Ukrainian President Volodymyr Zelensky said this was untrue and that there was no requirement of sanctions relief for the deals to come into force. But Trump told reporters his team was considering the conditions Moscow laid out.
They will be looking at them, and we're thinking about all of them right now. There are about 5 or 6 conditions. We're looking at all of them.
Kyiv and Moscow both said they would rely on Washington to enforce the deals, while expressing skepticism that the other side would abide by them. Zelensky said the truce agreements would take effect immediately, and that if Russia violated them, he would ask Trump to impose additional sanctions on Moscow and provide more weapons for Ukraine. The Kremlin said the pause in attacks on energy would last for 30 days from March 18th, when Putin first discussed it with Trump. Ukraine had said last week that it would accept such a pause only after a formal agreement.
Well, with that, it's time now for a short break. But India looks great as a market and an R&D hub. That's the word coming in from German semiconductor major Infineon CEO Johann Hannebach on the other side. Welcome back. You're watching News Center. India looks great as a market and as an R&D hub, but not so much for semiconductor fab, at least not yet. That's the message coming in from German semiconductor major Infineon CEO Johann Haneback. Speaking to CNBC-TV18, Haneback maintained confidence in India as a market exceeding $1 billion in revenue. He also stressed on doubling Infineon's R&D footprint in the country. He was also critical of protectionism, noting that globalized nature of semiconductor value chains will ensure that no single country can become wholly self-sufficient.
The ecosystem in semiconductors is very, very complex and at the same time a crucial element. And while I understand on the one hand that factories draw the headlines, but we really, in building up the Indian semiconductor ecosystem, we need to think about from materials, semiconductor material know-how. We need to think about chip design, where India is already excellently positioned. We need to think about software. We also think about manufacturing. But what also needs to come is the customer pull. We are working with the Indian customer base in order to detect what are their requirements. Where can we create value with our innovation? And only if all of that comes together, I think the Indian semiconductor ecosystem will eventually strive, but it's very impressive to see what has been achieved in such a short period of time.
India is quite strong on the application level. So India is good in terms of developing applications basis the foundational technology. But are you seeing the interest, especially from the private sector, especially from the government, when it comes to building the foundational technology? I think that is a core focus area. Are you seeing that interest? Are you seeing that conversations in your partners here for investing further in foundational technologies, which are underlying technologies for AI?
Yeah, absolutely. As Infineon, we say we power AI, we enable AI, and we use AI. On the later, I mentioned already, we use AI, for example, in software development, but also in chip design. In terms of we power AI, we are the leading provider of power solutions for this data center, which power ultimately the AI processors, which are getting more and more power hungry, as we all know. So that is for us a very important area, which is, by the way, at this moment in time also growing strongly. Now, we also know the challenges of cloud computing, right? It's huge data center consuming a lot of power. In that regard, we are also offering what we call edge AI. So solutions based on a microcontroller with AI accelerator, with flows to help customers establish their smaller AI model to run at the edge, which is obviously much more efficient, secure, lower latency.
My two final questions. You're giving us a global perspective as to how things are positioned coming here to India. Tell us, the semiconductor race, the AI race, how does India stack up as compared to some of the other geographies in which you operate in terms of where we currently stand and what the potential is to grow from here?
Yeah, you have a critical position already today if you talk about software or chip design, and I understand the ambition of the government and India in general to broaden that, and I think that makes sense to first of all strengthen your strength. That is always critical in semiconductors because competition is on the heels and things are moving very fast, but now to build on that in terms of adjacent capabilities makes a lot of sense. It also takes a while to develop such a complex industry. That should not be forgotten, but I think India is on a good path.
And my final question to you, this conversation that we're having comes at a very interesting time where we're beginning to see conversations around sovereign tech. Conversations built around protectionism. We're beginning to see that increasingly. We see daily headlines with respect to potential tariffs. We're seeing daily headlines about building national level technologies so as to have that The word that we use here in India is called Atmanirbharta, which is to have self-sufficiency in a technology. Is that detrimental when you look at an ecosystem like that of semicon or AI, which operates across geographies, across stakeholders, which has very large GVCs? Does that hurt you? Does that make your job harder?
Well, look, the semiconductor industry as such is a poster child of globalization, right? All the companies, all the successful companies focused on one or two or three things they did better than nobody else in the world. And now with the deglobalization, or call it de-risking, or the desire for self-sufficiency, which in my mind nobody will achieve, not even the biggest players will achieve self-sufficiency because of the complexity of the semiconductor industry. But nevertheless, this effect of local or regional solution is in a way detrimental because it increases the cost. That's a matter of fact, and it might therefore even slow down the innovation speed, which we all benefited from.
Now, London School of Economics Vice-Chancellor Larry Kramer has said that the college is eager to increase the number of Indian students that enroll. Speaking to CNBC-TV18's Parishit Luthra, Kramer also said that LSE is also eager to engage with Indian universities.
So the really striking thing that I found since I've been here is first the ambition that the country has, both with respect to economic growth and education. I had a wonderful meeting with the finance minister the other day, and she sketched out the plans for me. To meet them, yes, India has to greatly expand the availability of higher education to students across the country. You know, we've seen in almost every other country in the world, as it develops, that access to higher education produces a workforce that fuels economic growth all the way up and down the spectrum. So, you know, to meet a goal of 8% growth per year for many years in a row, which is ambitious, I should say, by any measure in any country at any time, the country is going to need essentially to continue and speed up the plans that it has started underway. We can do that by partnerships that we're already engaged in and eager to engage in with other Indian universities, and to get as many Indian students as we can into the LSE system. And I think all of my fellow vice chancellors in the United Kingdom share that ambition.
LSE gets students from all around the world. Could you give us a sense of what's the kind of growth that you've seen in Indian students coming across different segments, and what is the kind of growth numbers that you expect in the coming years?
India is, for the LSE, our third largest population, and a very, very important one. We saw significant growth during COVID, interestingly, and then it dropped some after COVID and is now building again. We're eager to increase the number of Indian students that we have. To be honest, they're fantastic students. They're well educated when they come. They share the core values of, you know, democracy and intellectual learning, and they intermix with our other students. So, you know, part of what makes LSE so special is it's a global university with students from typically 150 countries or so in every class. You know, it's hard to know exactly what the growth is going to be. I mean, that very much depends on the students at this side, but at the LSE, we're eager to increase those numbers. And one of the reasons I'm here is to speak to counselors and professors and other people in order to increase not just our visibility, but people's sense that it's worth applying because there's a chance to get in and you'll get a fantastic education.
Right. At this moment, Professor Kramer, India and UK are discussing a free trade agreement. Having greater mobility of students, of professionals, will also be a part of the FTA talks. How do you think a trade agreement between India and UK could foster closer education ties? What do you think that could unleash?
Well, anything that connects the two countries more closely and increases the interactions between them is going to be beneficial in terms of encouraging students to come to the UK and encouraging UK students to come to India, because exchanges both ways, I think, are going to be beneficial for both countries. So I think everything that we can do to increase the interaction. I mean, India is very much going to be central to the future growth of the world at large. So, you know, we recognize that in the UK, we recognize that at LSE. It's one of the reasons that, you know, we're so interested in strengthening our ties. I should say, you know, ties between LSE in particular and India go back to the very beginning of the school. It's really been one of our deepest partnerships. Someone who wrote a history of the LSE once described the relationship between India and the LSE as a story of soulmates. And I think that remains true today, and it's that we want to build on and strengthen for the benefit of people in both countries.
Right. You know, currently there is, of course, a lot of flux in the global order, Professor Kramer. Where do you see India's position in the current volatile global environment?
Well, it's hard to say. I mean, I think anybody who tells you they know the answer to that has got to be just making things up. So I think what you can say with some confidence is India is uniquely positioned in the global order no matter what direction it goes. The size of the population, the energy and entrepreneurial spirit that runs through the country. It's been one of the really striking things on this visit for me is to see just how much energy there is and the ambitions of not just the government, but of the people here. You know, so that will play out, I think, well, no matter where the global order goes. The government certainly will have challenges, as every government will, in figuring out how things are going to settle out in this new order. But it's hard to think of a country better positioned than India to succeed.
And with that, it's a wrap on this edition of News Center. More news and updates will continue right here.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the
Polycab and CNBC-TV18 present Infra Safety, powering India's electrical future.
As India strides towards smart mobility and sustainable infrastructure, electrical safety remains a top priority. The grand finale of Polycab and CNBC-TV18 present Infra Safety, powering India's electrical future, took center stage in New Delhi with a sharp focus on the role of electrical safety in driving the future of mobility. Following impactful editions in Mumbai, Chennai and Hyderabad, the event brought together thought-provoking discussions, groundbreaking innovations and transformative best practices, illuminating the path towards safer and smarter mobility solutions. The evening commenced with an opening address by Rajshekhar Reddy, Vice President Marketing Polycab, who underscored the critical role of electrical safety in building a secure and resilient infrastructure ecosystem.
It's truly a privilege to welcome you all to this wonderful evening. This collaboration between Polycab and CNBC-TV18 has been extremely successful in terms of sparking a conversation among various stakeholders across the country. It has also ensured that we raise the safety quotient in our infrastructure. Polycab, a name synonymous with wires and cables across the country, has been manufacturing safe, innovative and energy-efficient products for over past 5 decades. With this dedication and support from all of you, we have not only become the leader in India, but we are exporting to more than 79 countries across the world. We would be having curated panel discussions, and eminent panelists are present here today who would be providing their valuable insights into the system. This would be followed by a conclusion on of our infra safety conclaves, which were held across various cities throughout the country. And we will be looking at what are the challenges which are part of this electrical safety, what are the issues and how do we solve them. We take this opportunity to recognize the brave heroes who are with us today here, who put their life in danger to save this society. So a big round of applause for them, please. In the end, I would also request every one of you to take this safety pledge as an individual in order to ensure that the path of Surakshit Bharat leads to Viksit Bharat. So I thank you all for being here today and participating in this discourse. Your support is invaluable, and we look forward to your continuous support in ensuring that this initiative reaches the national scale with maximum reach. Thank you and welcome again.
Guest of honor, Shri Ram Mohan Naidu Kinjarapu, Union Minister of Civil Aviation, delivered a keynote address emphasizing the urgent need for robust electrical safety frameworks to support India's rapidly expanding urban and transport networks.
A warm good evening to each and everyone present here on this important summit. At the outset, I extend my sincere appreciation to CNBC, TV18 and Polycab for creating this platform to highlight a critical challenge in India's infrastructure development. Ensuring electrical safety in smart infrastructure and smart mobility is a need of the hour and a need for the future. Coming from the civil aviation sector, I can't stress more on safety because safety is a very important aspect for us. Life in the air seems very, very important and we have to take care of it very thoroughly, and safety is an important point. But I have to even expand it a little further that life anywhere is a life. Let it be in the air, let it be on the ground, let it be inside a building, let it be while working in the building. So the safety aspect in whatever we are doing is of utmost priority. And a lot of times when we feel that it's not the most important aspect, that is where we lead to a lot of problems. But I'm very happy that this summit concentrates on that infrastructure and infrastructure safety. So I appreciate once again CNBC-TV18 and also Polycab for having the discussion which is the need of the hour today. And under the visionary leadership of our Honorable Prime Minister Narendra Modi ji, we are witnessing an era of unprecedented growth and urban transformation. And as we align our priorities for the common goal of Viksit Bharat 2047, which is seeing our India developed after 100 years of independence, I firmly believe that in the rapidly urbanizing India, infrastructure safety is not just a priority, but also our all shared responsibility. And I see urbanization as not only expansion of our cities, but also ensuring that that expansion is both inclusive, safe, and also secure. And I commend CNBC-TV18 for highlighting the vital issue of electrical safety through a dedicated campaign and also having a dialogue around it and bringing the industry stakeholders and the important people and giving us a direction in the way forward. And India is the most populated country in the world today. And it is projected that 50% of our population will be urbanized by the year 2047. And imagine the immense pressure and the demand that this whole urbanization is going to create. And this calls for a strategized development of our urban infrastructure and urban mobility, focusing on the crucial safety aspect. With electrical hazards posing serious threats to us and the adoption of smart cabling solutions, advanced safety systems, and sustainable construction practices, these kind of solutions are going to be a key in addressing this safety aspect. So the future is undoubtedly electric. What we have to keep in mind is while we are doing this huge investment push in infrastructure, we have to ensure that the systems, the buildings, the standards that we are bringing into this infrastructure is properly, thoroughly thought through, and the safety aspect is not missed upon. And definitely this summit throws a very big light in all of this and in the vision that we all have collectively here together. It is all aligned today. And I feel that this discussion is going to give us some strong outcomes, which are to be collectively followed and which are very important for the industry altogether. And I once again extend my heartfelt appreciation to CNBC-TV18 and all my friends who are here today participating in this. This is a great conference discussing on a very important topic which is necessary at this point of time. And I would also like to congratulate the heroes who are sitting in front of me, who have dedicated their lives for the service, and especially in the times of those bravest moments, they have come forward and they've offered their support to the people. So personally, I would like to congratulate them. They are an inspiration to all of us. And I once again thank the CNBC-TV18 for taking up this initiative. I request each and every one of you that our collective goal is to see our country developed by 2047, which is Viksit Bharat. And to achieve that, to achieve a safe and secure Viksit Bharat, this conference leads us in a very good direction. I thank each and everyone who is participating in this, and thank you for giving me an opportunity to participate in this. Thank you very, very much.
Polycab and CNBC-TV18 present Infra Safety, powering India's electrical future.
To the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome to Midcap Microscope. Well, today the stock on our radar is Whirlpool of India, a stock that's been on a roller coaster ride. It's dropped nearly 50% from its peak, but after this steep correction, the big question is, how much of the bad news is in the price? Well, what was the key reason first? For the sharp fall we saw in the stock price, the promoter entity, Whirlpool Corporation, announced its plans to reduce its stake in the Indian entity from around 51% to around 20% by the middle to the end of 2025. Now, that's a significant sell down. And this is not their first move. Last year, they offloaded close to a 24% stake for around $470 million. They cited high valuations. But globally, Whirlpool has been exiting various businesses while holding minority stakes in Whirlpool China and its EMEA joint venture. So in that sort of a backdrop, maybe this move isn't entirely surprising. But time will tell, what does it mean for the company's future here in India? Well, beyond the promoter stake overhang, there's another key risk. The royalty and the brand licensing fee, which is currently at around 1.4%. Any modifications here could impact the earnings, and the market is waiting for clarity on this front. But let's talk about the business itself. Whirlpool India's revenue comes in mainly from the refrigerators and the washing machines business. And they've also been expanding in the kitchen appliances space as they've increased their stake in Elica, which now contributes close to around 7% of the total revenue mix. And under the leadership of Mr. Narasimhan Ishwar, well, the company has made quite a turnaround. Their market share in refrigerators as well as washing machines has improved. They've undertaken various cost-cutting measures which have boosted their gross margins. And the working capital management as well has got strengthened. Remember,
Polycab and CNBC-TV18 present Infra Safety, powering India's electrical future.
The first panel discussion, how electrical safety is igniting the smart mobility revolution in India, brought together industry leaders to examine how electrification is reshaping India's transport ecosystem while ensuring passenger and infrastructure safety.
Let me kick this off. I'd like to begin with Amit Bhatt. Amit, as we move speedily towards reaching our goal of electrification, 30% electrification by 2030, how are we doing when it comes to the ecosystem around electric vehicles?
First response is, why are we looking at electrification as a solution? And so if you look at whether it is the climate target that India has or the public health target or even the industrial competitiveness targets, because the automotive sector is transitioning so fast, we cannot be left behind. So we have to switch to electric. The question is what challenges it faces and how do you overcome them? So if you look at cities, if you look at any sustainable city, we have been always talking about it's an integration of transport and land use. But with the rise of electric vehicles, we are now adding a third dimension of energy. So cities have to integrate land use, they have to integrate transport, and they now have to integrate energy in this. And if you look at the whole system of planning cities, we have a very siloed approach. So someone does infrastructure planning, someone does land use planning, someone does energy planning. Going forward, we have to integrate. And what will be the process of this integration, who will take lead, who will bring these three entities together is going to be very important. I think that is something we have to look forward as we move forward into this transition journey.
Right. Let me get in Bikramjeet as well. Bikramjeet, when it comes to looking at international best practices, what can we imbibe and what do we still need to integrate into our rules, regulations, standards around electric mobility?
When we talk about safety, then the first thing that we have to talk about is risk assessment. If we do not know what risk we are entering into when we are entering into electrical mobility or EV chargers or for that matter, any kind of electrical appliance, we would never be able to eventually find out solutions to what is going to happen. We have to preempt the things, and that is the international best practice. The first is you do a correct risk assessment. The second is that you go in for the correct equipment selection once you've done that risk assessment. The next thing is that you must train your designers and operators to do the job correctly. And finally, it has to be maintenance and inspections.
Uday, let me ask you from an OEM perspective, how much are you really investing in terms of improving the safety of your vehicles, also somehow explaining to your dealers, also customers on how to maintain these vehicles? Because one thing is to ensure safety at the factory, at the production end, and then at the level of the end user. Give us a sense of the kind of steps you're taking.
You know, safety is, I think, the most important part, of this, as we go on this, this journey of green energy and sustainability. I think that, one life lost is too many. It could be your sister, it could be my brother, it could be anybody. And I think, we have to value life a lot more. The government, ARAI, ICAT, all the policies have made vehicles a lot more safer. I think for me at OSM, and I think not just me, but the entire ecosystem, safety of our vehicles is extremely important. All the big boys and girls have come to the party in EV, and they've accepted that this is needed. And I think we all owe a responsibility to this country. I mean, it doesn't matter about building the third largest economy in the world or the third largest equities market in the world. We've got to build the third cleanest country. And I hope with safety and better products, we'll get there.
Randeer, you've got a tremendous experience working with electric vehicles. Today, you have an EV startup of your own. You worked with Niti Aayog. You've worked with the likes of Mercedes. Give us a sense of when it comes to having high-speed chargers in the country, what kind of safety infrastructure do we need? And do our current laws, our schemes, such as the PM EV Drive scheme, do they actually envisage those safety mechanisms that we need to have?
The reason is, so I'll just take a quick sidestep and take you to 2018, when government started forming the guidelines and the BIS standards for the charging infra. In 2018, only one general requirements was released. So 17 or 17 series is the one which deals with the charging infra and its guidelines. But 2020 to 2023, now we have more than 13 standards, all related to the charging infrastructure, AC, DC, connector, the earthing, everything. Everything is covered. And overall, the series is going to be for the 30 standards are going to come out. And rest other standards currently in discussion. So that is the level of focus by which the safety as far as the charging infra is concerned is being looked at the government level, also from the industry side. Most of the standards are being projected by the industry that now we want to come out with this connector, now we want to come out with this type of charging facilities. So I think from the regulatory perspective, proper mechanisms are there. Only few upcoming things has to be dealt with now.
All right, great points. Anurag, if I could ask you from a OEM perspective, from a company that is into smart cabling, what is the opportunity for the industry that you see here? Clearly, if we want our EVs to be popular, we can't even wait. Right now, if you park a car or scooter at home, you'll charge it overnight in about 6 to 8 hours. If you want to do it fast, the fastest it can be is 50 minutes. We'll have to have it even faster. But what kind of cabling requirement, safety requirement will this have for the industry? Have you been able to quantify the opportunity over the next 5 to 6 years?
See, the biggest opportunity lies in EVs is that EVs take more than 3 times cables than IC engines. So that itself is a huge opportunity on the table for the manufacturers like us, because by 2030 we are envisaging a huge chunk of EVs coming on the roads. But having said that, the challenge that we manufacturers are facing is that the requirement of these cables results in huge harnesses in the electrical vehicle segments, with extra high current requirement running through very thin walled cables which are required. So challenge for us is to develop the polymers which can sustain those high temperatures. The wide range of operating temperatures from negative to high temperatures have to be developed. We have to find regulations around it. We have to see mandates around it that only certified people can work, only trained people can work, and we as large organizations have to work on creating awareness of promotional events we should continue to carry upon so that the learnings are imparted all across.
All right, great to hear that. With that, we come to the end of this panel discussion. A big round of applause for our panelists for those excellent views, very sharp views.
The second panel, From Power to Platform, Ensuring Electrical Safety in Railways and Modern Transit Networks, explored the integration of advanced electrical safety measures in large-scale transit systems, ensuring both operational efficiency and passenger security.
Now, the issue of safety in railways and modern transit systems has been spoken about year after year. And we were just speaking off stage, and we were speaking about the number of railway accidents which make headlines, unfortunately, year after year. And railways are often very criticized. But we'd like to ask Mr. Vinod Yadav, who's been the former chairman of the Railway Board, a bit a bit of context to understand what railways have actually been doing for railway safety. Mr. Yadav, how would you describe and sum up what the railways has been doing over the last few years?
The biggest challenge before railway is that over a period of time, we could not develop the infrastructure the way it could have been developed due to so many reasons. Now, 2014 onward, really the investment started taking place, and Railway has come out with National Rail Plan 2030. Railway runs around 20,000 trains per day, around 9,000 freight trains, 11,000 passenger trains, including Calcutta Metro and Mumbai Metro. The electrical wire which runs over the track, it carries 25 kilovolt. Now, the way we are developing our infrastructure and we want to double our freight, now the freight is 1,600 million ton in a year. We want to take it to 3,000 million ton in next 3 to 4 years. Safety standards has to be of the highest standard, and I'm very happy to say that, as far as electrical safety standards are concerned, Railway has been following up the best global practices. And last 4 or 5 years, I've never heard about any major electrical issues, electrical accidents.
Let me also get a view from the Delhi Metro Rail Corporation, and we have the Executive Director Electrical at DMRC, Mr. Srinivas Agarwal. When it comes to electrical safety in the Delhi Metro, give us a sense of how much attention, how much time is being given for reviews to increase the levels of electrical safety year after year, and how much are you investing in actually training the workforce to be ready for the challenges that could be posed in the next few years?
Delhi Metro basically is having roughly 400 kilometers of running tracks in this Delhi Metro, and Delhi Metro carry roughly 6.5 million daily passenger. So under this pressure, and we are getting only the 4 hours for the maintenance of the system, and we are dealing the 220 volt, 132 volt, and 66 kV volt, and 25 kV volt, and 33 kV volt. So all the high voltage system we are dealing, and similarly we are also dealing with the 415 volt for the running the station services, auxiliary services. To make the preventive maintenance, we have in-house developed IDMS system, that is integrated data management system. Under this data management system, we have put all the maintenance schedule, preventive maintenance schedule in that system. This is basically in-house app. Under this app, what will happen, if any equipment is due for the preventive maintenance, that alarm will goes to the concerned supervisor. If the maintenance not done by them, then it will highlight to the next higher officer, until unless it will completed by them.
I'll also get a word from Hitachi here, Mr. Mangaldev from Hitachi. Mr. Mangaldev, could you give us a sense of the kind of solutions that you're bringing to the Indian Railways, to the DMRC, some of the challenges that you foresee over the next few years that Hitachi will try to address?
We have a global philosophy, and especially originating from Japan, where you can see the safety levels are like inborn, in every activity that they do and in every phase of life, in every sphere of their involvement, safety is the highest. So whether it is occupational safety, whether, the safety in the factories, or whether safety when we execute projects, or, when we participate in different activities of operation and maintenance, safety takes the highest position. And we say that safety is cannot be compromised at any cost, and comes next after safety, much down below is, the delivery, the time, to deliver a project. So we make sure that safety takes that kind of priority, and then the delivery, and then cost comes at the end.
Let me also get a version from Polycab. Mr. Agarwal is here. Mr. Agarwal, when it comes to modern transit networks, what role does smart cabling really play? And I'd like to ask you a similar question. Over the next 4 to 5 years, which are some of the areas where you would be making the greatest investments to ensure safety of the railway system and modern transit networks?
I have heard that by 2030 we have ample of railway space. So that itself is a big boost for us to go investment for the railway sectors. Now for safety side, if you see, if you talk about the new products, new range, which can bring out safety and which will bring comfort to all of us, I believe sensorized cables is something that we are looking for. I believe the norm should be established where stalwarts like DMRC and Hitachi should come forward and ensure that only sensorized cables are used.
Just a follow-up question, Mr. Anurag. When you speak about electric cabling and its use in railway and DMRC, how much is imported right now and how much is procured domestically?
See, on the power side, if you say, power side is all domestic. When you talk of control side, there are a lot of cables which are still imported on the control side.
Thank you very much to all our panelists, Mr. Mangal Dev, Mr. Yadav, Mr. Anurag, and Mr. Srinivas. It's been a great learning on what the railways, the DMRC, and the private sector companies like Hitachi and Polycab are doing to ensure safety on a collaborative manner. Thank you once again for being with us.
Polycab and CNBC-TV18 present Infra Safety, powering India's electrical future.
Fashion books is roughly around 25% of its market cap. And that's something that investors, they always like to see. Well, moving to the valuations front, the stock now trades at under 30 times its earnings. That's at a sharp discount in comparison to its long-term averages when it's traded at around 45 times. So is this an opportunity or is it a value trap? Well, from here on, there are a few critical factors you need to watch. Will LG India's upcoming IPO have a bit of a positive rub-off on the entire sector? At what valuation does the promoter sell its remaining stake? And most importantly, will the buyer be strategic in nature? Well, it's been a whirly path for Whirlpool India. Plenty of twists and turns. But valuations are now lower. Is the worst priced in? Let's see how this one plays out.
Significant changes have been made by Morgan Stanley to both its Asia ex-Japan and global EMs focus list. Now, the stocks that have been added to this list have both been on the radar over the last few days, and those are Bajaj Finance and Hindustan Aeronautics. Now, Morgan Stanley has recently raised its target on Bajaj Finance to 10,500 after Rajiv Jain's elevation as vice chairman. For HAL too, Morgan Stanley sees an upside of almost 30% or more with that 5292 price target. Now, Morgan Stanley believes that HAL is poised to see an order pipeline of over $60 billion over the next decade, and that engine upgrades and exports is going to support its growth going forward. Now, Bajaj Finance is also its top large cap NBFC pick as the dust has settled on its leadership transition, and it also sees credit costs declining going forward. Now, moving to Goldman Sachs, they have highlighted 10 stocks that are part of its buy list from India. HDFC Bank features on top of that with a target of close to 2,100 rupees. And it is also best placed to benefit from RBI's liquidity measures and a likely 15% earnings CAGR going forward. The other financial name on this list is AU Small Finance Bank, where it sees a 31% earnings CAGR and valuations are attractive and the cost of funds are also improving. Now, from the consumption space, Titan makes an entry here, and Goldman Sachs is banking on a 20% jewelry EBIT growth in FY26 compared to just a 6.2% CAGR that it had seen over the last 3 years. For Godrej Consumer, Goldman Sachs is expecting a price recovery in the soap segment business to aid the margins, and that new formulations of the company are aiding a turnaround. Now, India's largest port operator, Adani Ports, is also a part of this list, and Goldman Sachs.
Hello and welcome to a special edition of Market Masters. Is the worst over for markets? That remains the big question. Trump tariffs are the clear and present danger for global markets, while India middle-class tax cuts and potential RBI rate cuts are the two tailwinds which we can see right in front of us.
Absolutely. Today we have the top team at ICICI Prudential Mutual Fund joining us to discuss a whole range of issues, and they have assets under management of around 9 lakh crore rupees. ICICI Pru MF is the second largest mutual fund in India. Equity assets at close to 6 lakh crore rupees and debt AUM at around 2.5 lakh crore rupees. The AMC's equity PMS and AIF assets stand at around 33,000 crore rupees. So, Prashant, we're talking about some very large numbers and big money managers here.
And a big view then as well, right?
Yes.
I mean, and a rounded view, because we've got the equity managers, we've got the debt sort of top leader as well. Let's welcome in Anish Tawakle, CIO, co-CIO equity. Anand Shah is CIO PMS and AIF, and Manish Banthia is CIO fixed income at ICICI Prudential Asset Management Company. Gentlemen, thank you very much, all of you, for being here on this special edition of Market Masters. And I think it's an important and interesting time to get that view from you, because so many people who write into us, who reach out, and the feedback from social media and otherwise seems to all point to this one question. Is the max pain over for markets? The maximum pain over? Is it behind? And while we may not be in a sort of, extremely bullish phase, are we to take that maybe, the worst is behind? Anish, let's start with you.
So if we look at the equity space, right, our view is that the large cap space is fairly valued, but one still needs to be cautious in the small and mid cap space. So that's the overall view. What is that based on? See, we expect the economy to regain momentum. Right. Our view is that there is no fundamental problem in the economy. There is no structural imbalance that needs to be addressed. Inflation is fine, current account deficit is fine, inflation expectations are reasonable, bank balance sheets are healthy, corporate balance sheets are healthy. So the only thing that's ailing the economy is weak demand. And weak demand is a relatively easily solvable problem if you get fiscal and monetary support. We do expect monetary support to be forthcoming. And if that were to happen, then we do expect the economy to regain momentum. So in that context, the multiples in the large cap space are reasonable. And if one invests for a sort of a 3-year horizon, returns should be reasonable. At the same time, we would say, look, some of the very exorbitant return expectations need to be moderated, right? So people were, over the last 3 years, had got used to very high returns, and that phase might also not be coming, as you were saying.
That's good to hear that you seem quite confident, Anish, on the underlying trajectory of the economy, and you say there's no problem. Let me quickly get in Anand's view on this as well. Anand, so that's the house call. Now, what is the approach that you're taking? And tell us a bit about what you've been doing through the phase of the correction as well. Have you been churning the portfolio a lot, or have you chosen to use this dip to add to some of your bets in infra and related areas that you've liked in the past?
Sure. Hi, good morning. So yes, as Anish said, look, the challenge with the market was there was unprecedented, if that's the word I would use. There was an exuberance in the market. You had a very solid 4-year runs in the market, but more importantly, for almost record 27 months, which is around from June 22 to September 24, we didn't have a 10% correction in the market. So I think the challenge with the market was not as much, yes, there was a challenge in terms of growth relative to what we have seen in the previous 4 years. The earnings growth rate was also very strong, 35% plus for 4 years. That's also sort of tapered down, but fundamentals in that sense were not really challenged. The challenge was in the marketplace, which is the valuations and all that. So if I see the data, as on end of February, almost 80, while the markets are down 18.5, 18.8 odd percent, 80% of small caps, as I see, were down by more than 30% from their 52-week high. 60% of mid caps were down more than 30% from their 52-week high, and almost 50% of large caps were more than 30% down from their 52-week high. To that extent, that sort of over-exuberance, we believe, has sort of softened, or we've seen a quick reversal in the market. And to that extent, valuations in individual stocks, individual segments of the market have now corrected to make us a little more comfortable going into the markets, investing into the markets at this point of time. And that's what we've been doing. I think from here on, the key would be stock picking, and which was not even the case, say, 12 months back, that if you were in a certain segments of the market, you have seen a lot more pain than otherwise. And that would remain the case even from here on. Even within the sectors, you will find winners and losers. And to that extent, going bottom up, doing stock picking would be much more important from here in the markets than just going in and out of the markets.
I have to ask you this, Anish and Anand, I mean, I think on the equity side, right? Those comments in early February, which got so much attention, it came from Naren, lock, stock and barrel out of mid caps and small caps. And it generated such a heat and debate all across. And Anish, you run the small cap fund, right? I mean, you guys have been cautious way before, and I think Naren was making this point for a while as well, that small caps and mid caps are very expensive. I mean, your small cap fund has been closed for subscription for almost a year now, Anish?
Yeah, almost exactly a year. You're right.
So, is the views still very strong, or are on mid and small caps? You said one needs to be cautious here. The preference is clearly large caps. But as Anand also pointed out, stocks have in the small cap space come off very sharply across the board. So, extremely cautious now. I mean, a little cautious, but maybe a little more attractive. What's the sense on small and mid caps?
See, I think the best way to put it is the risk-return trade-off is far more favorable in the large caps than in the small caps. In the small caps, you still have stocks that, I mean, if you look at price-to-book values, they're excess of 5, 8, and then you look at the moats of these business, the competitive position of these companies, it's not that great. If you look at the balance sheets, there's a lot of, stuff that you typically don't want, very high inventory levels, very high receivable levels. So there's enough minefields in the small and mid-cap space in our view. I mean, that's not to say that you can't find anything to invest in, but even in our small cap portfolio, if you look at the published portfolio, we have, a fair amount of large caps because we feel that overall they offer a better risk-return trade-off. So to the extent that's regulatorily allowed, we have skewed even the small cap portfolio towards large caps and largish mid-caps.
Right. Okay. So, I mean, point taken. Manish, as Anish started by saying that there is no structural problem in the economy. Demand, though, is weak, and that needs to be fixed. And I think your view, Manish, also is that it needs help. I mean, the economy doesn't need saving, but it does need help, both on the fiscal side and monetary side as well. So, your thoughts there, Manish?
Right. So, we had a very good run in the economy in the last 2-3 years. Last 6 months has been a period of time where we've seen softening of demand. And, as Anish rightly pointed out, there are no major concerns. There was a period before 2020 when we were going through a balance sheet problem in India. Corporate balance sheet and the financial balance sheet both were under issue, and which is where the economy had a very slow growth for a particularly long period of time. At this juncture, we think that India is still in a mid-cycle. And what we are seeing is a mid-cycle slowdown or mid-cycle correction. And these mid-cycle corrections can typically be addressed if you have the right policy measure. So effectively, RBI has to cut interest rates. And rightly so, we've seen one rate cut, and we'll see more rate cuts till the point that demand in the economy starts to improve. I think additionally, fiscal policy is also important. While, fiscal was very high in 2021-22, the government rightly reduced fiscal deficits, over the next 2 years. But at this juncture, if we concentrate on fiscal consolidation, the problem is the government revenue any which ways will start coming down because of the slow economic growth. And that will put additional pressure on the fiscal. To maintain the fiscal deficit, the government will have to cut expenditure at a point when where the economy is at the margin slow. So I think government should not focus too much on consolidation at this point of time, allow the fiscal to slip up a little bit, and then allow consolidation when the growth is back. So you will have both fiscal policy and the monetary policy working at the same time. And, the RBI has also kind of, given liquidity back to the market. That should help the banks to allow flow of credit in the economy. So the combination of all of these should allow the economy to gain momentum back again. And that is, the broad view.
Absolutely. We've seen the signs of that easing, both in terms of the regulatory stance as well as rates themselves, Manish, in the last just a couple of weeks, right? I mean, latest moves on the priority sector lending definitions and, of course, the rate cut itself. By the way, what is the House view? How many rate cuts this year?
So we expect, 2 more rate cuts from here. and then it will depend on how the economy behaves. The problem with monetary policy is it works with a lag. So at some point of time, RBI will have to make an estimation in terms of how the forward-looking numbers are, and therefore maneuver policy accordingly. At this juncture, given where everything is, our expectation is that RBI will cut 2 more rates.
More rate cuts this year. Got that. Anish, so now, given what Manish has just said, I mean, let's apply that to the problem that you had identified. You said that the correction was because of market valuations, not because of any underlying economic issues. So on valuations and the earnings recovery, what are you anticipating? We're ending this year with very sluggish single-digit Nifty EPS growth. FY26, what's the recovery? And then do the valuations start looking far more palatable in that sense?
See, basically, but just to clarify one thing, Surbi, I said that there was a demand weakness in the economy. I didn't say that there was no economic issue, but I said the only issue was weak demand, and that then reflected in slower earnings growth.
Yes.
Right? So, and we do expect demand revival. So, look, I mean, we do think the Indian economy can grow in real terms at 7-ish%, and add inflation to that. So, it was somewhere in the 11-12% range for nominal GDP growth is not unrealistic. And given that corporate earnings typically, follow that kind of growth, that would be the level we would expect nominal GDP to, corporate earnings also to grow at. See, the point on multiples is, I always say that, look, there's no, science to saying what is the right multiple, right? One can make a case for 21, one can make a case for 19, right? But the reality is if you stay invested for 3 years, even if you entered at 21 and 3 years later the multiple is 19, it's only a 10% spread out over 3 years. So it hurts your returns by 3%. But if you've got good nominal GDP growth, if you've got good earnings growth, you'll still make reasonable returns, right? So the point is there's no point endlessly debating whether the multiple should be 21 or 19. Reality is it's not outrageously high now, right? That phase is clearly not there. And it could sustain at this level, it could weaken a little bit, but either way it won't change your returns that much over a 3-year period.
Anish, you said earnings growth should be in line with broad GDP growth, but that still means that maybe
it could be a little bit higher. It should be, yeah.
Yeah. So in terms of a rough range number, do you think we're getting back to 15% earnings growth in FY26?
Let's see how quickly the economy regains momentum. As Manish said, right, there are lags between policy being eased and the recovery taking place. So, I mean, I think we should be picking up momentum, but whether for that year it ends up at exactly 15 or a little bit lower needs to be seen.
Anish, so I want to ask you, Trump tariffs next week, it's the big talking point, but do you believe that it's going to be a disruptor, it's going to be a sideshow? Will it matter in a durable way, or it's going to sort of, pass in a day or two?
No, my view is that tariffs, as far as the overall economy are concerned, are really a sideshow. The economy is broad-based enough that it can withstand some tariffs. So I would make 3 points, right? Firstly, India lowering tariffs is not a bad thing for the economy, right? So even if we chose to lower tariffs, that would be fine. We've lowered tariffs from the 1990s and the economy has done well. So nothing bad happens if you lower tariffs. Second, see the tariff debate, I think trade is one of the most misunderstood economic issues. It's always seen as one country gaining and one country losing. That is not the case. There are winners and losers within the country. And so if the US, for example, decided to impose steel tariffs, all downstream industries which use steel therefore suffer. So you might as well say that the US has made its own manufacturing uncompetitive by putting tariffs. If the US puts tariffs on pharmaceuticals, for example, more than 1/3 of the medicines they consume are supplied by India. There's no other place that can supply at the rates that India does. So what will happen if they put tariffs? The Indian manufacturers are not making supernormal profits. Demand is inelastic. So prices will have to go up. Right? So I think this tariff issue is just being discussed too much. At the overall economy level, I don't think it matters. And the third point, even if there is some reduction in US demand, right, for Indian products, if this domestic demand is strong enough, you can have greater policy support to make sure that the strength of domestic demand offsets the weakness of export demand. So from an overall economic perspective, I don't think tariffs will be the key factor affecting how the economy delivers or the returns that are generated.
Okay, well, that's the broader view, local economy, what the government RBI needs to do, the broader market view as well, and of course a bit about tariffs, as Anish said, perhaps will not have a big impact. We'll take a quick commercial break and we'll come back. We'll ask the top team at ICICI Prudential AMC what they like in terms of sectors. Stay tuned.
Are likely to accelerate, valuations are reasonable, and the other one that part of the list is Indigo, which is India's largest airline, where Goldman Sachs here is expecting market share gains to be sustainable. The industry is consolidating and its international business also has a long growth runway going forward. Another stock that has been the news recently is M&M, and Goldman Sachs here is anticipating a ramp up of its recently launched battery EV, a pickup in its farm equipment business, and potential value unlocking in its unlisted arms that is leading it to a 3,800 rupee price target here. Now for Apollo Hospitals here, Goldman Sachs is expecting to see better hospital occupancy in FY26 and its digital business, which is Apollo 24/7, to break even soon, and it has a price target of over 8,000 rupees on that stock as well. Now the last two names on the list are Power Grid and Make My Trip, where for Power Grid, Goldman Sachs is seeing a significant opportunity in the transition linked grid infra and a structural need to overbuild the grid going forward, while for Make My Trip, which is listed in the US, of course, it has strong underlying travel trends, the industry structure, a favorable one that is likely to aid its margins, and it is likely to expect a $300 million free cash flow going forward as well. So markets fell, valuations corrected, and now it does look like brokerages are getting their shopping bags out for the Indian markets for sure.
One is timelines, but what about costs? I mean, how much does it cost to put out a drug in the market today?
A little over $4 billion per drug.
$4 billion per drug?
Just before you make one sale, yeah. So it's hugely expensive and complicated and slow. So on average, the industry takes about 14, 15 years. We're about half of that, but we spend about the same as others. And that is a function of both, I think, two big trends. One is hard to change, which is that science builds on itself. Mm-hmm. And so each new drug has to demonstrate benefit over everything that came before it. So we actually have to make those comparisons. Of course, as a multinational company, global industry, we're not really for tariffs. We think actually both non-tariff and tariff trade barriers should fall everywhere so that everybody can enjoy the benefits of products, and we have global competition that's balanced and fair. If there are tariffs on pharmaceuticals, I understand what's being discussed is more of a general tariff situation. For us, that has limited impact because we have very regionalized supply chains already. We can move things around, and our cost of goods is not so sensitive to the end price. I think the big thing in healthcare people are watching is the generic industry, where the cost of producing the medicine is much higher compared to innovative. Our biggest cost is R&D. Yes. They don't have R&D. So that might affect medicine costs in the US or in other countries, and that would not be good, I think.
Welcome back. You're with us here on a special edition of Market Masters. We're speaking with the top team at ICICI Pru AMC. Okay, let's just drill it down to sectors and what you like as themes. Anish, one of the big bets for you has been real estate and housing, right? Have you seen, and we've asked company after company on the program, on the channel over the last many weeks, has demand taken a bit of a knock, as wealth effect has taken a hit because of markets falling? What is your own sense? Because, you know, that really has connections with so many other areas and it's so important for the economy as such. Has real estate and housing demand taken a bit of a hit, or does that remain in good state?
So it has softened a little bit, that there's no doubt. So what needs to be seen, right, is that if demand has weakened, the prices in the real estate market should be corrected, or there should be price flexibility downwards so that demand recovers. Actually, if we are sitting here 1 year later, right, or 2 years later, and the economy has not delivered, then the most likely cause of that would be that real estate prices remained stuck at a level where there were no volume of activity, or the volume of activity was subpar. Right? I can't see the economy doing well without good housing activity. At the same time, I can't see the economy doing poorly if housing activity is strong. Even this cycle, right, 3 years back, when you see it picked up only when housing activity started recovering, right? So if there is price flexibility downwards, developers, cut prices to ensure that sales continue happening, and they keep constructing, that would be good enough. The only point I'd make is, I'm not placing a bet. That doesn't mean you should invest in the housing sector or in real estate companies. The point is that that is a driver for economic activity across the board. And you can play the cycle in other sectors also, because if housing recovers, other sectors will also do well as a result of the sort of spillover effect. So overall, I'm positive on domestic cyclicals, which includes automobiles, cement, financials selectively, and industrial and capital goods. What we are cautious on is FMCG, and we have been for a while, and IT.
And on financials, Anish, you said select financials. Can you elaborate on that point? Because it's a very wide basket, from capital market players to insurance, where there's so many deals happening, to obviously the big banks. What is your order of preference there?
So within the lending space, right, I'm going only for deposit-rich financials. I'm still worried about unsecured consumer credit. So I'm avoiding names where there is a lot of exposure to unsecured consumer credit, particularly if the exposure has grown very fast recently, right? So I would like strong deposit franchises, and other financials, I mean, we like basically, particularly insurance, we have an overweight on. See, basically what I'm saying is, if the economic activity recovers, right, both savings and investment pool increases, and there is a greater role for financial intermediation. So financials will do well, provided you avoid areas where there are clear credit risks, or if they are too reliant on, exuberance of capital markets, right? So overall, financials should do well. You should avoid areas where there is too much reliance on capital market activity or credit risks.
Manish, we're also rounding up the financial year, and it's been one of those curious years where the Nifty return is about 7.5%. I mean, it almost is looking like fixed income type of returns. Gold has returned 40%. So the question is asset allocation, and looking forward to the next year, FY26, which asset class do you think could steal the thunder? And, also a brief outlook on fixed income itself. And what's the right mix that you would recommend?
Right. So at ICICI Prudential, we always believed in asset allocation, and the reason is that every asset class has a phase where it does very well. And why I say a phase is because there's a lot of behavioral element which get into an asset class. So for example, gold, I mean, we gave a positive call on gold in 22 and 23, and the reason for that was that, one, it has underperformed against a lot of asset classes at that point of time. And secondly, given that the uncertainty globally had increased, we thought that gold was a good hedge against, the financial assets. Now, gold has performed, as you said rightly, it has given, outsized returns against other asset classes. Do we see gold as the same hedge as it was 2 years back? I think the answer is no. You need to see the valuation when you look at each of the asset classes. And we believe in mean reversion. So while gold has done exceedingly well in the last 2 years, its ability to give a hedge on the portfolio has reduced meaningfully. I think fixed income looks pretty attractive at this point of time. And the reason we are saying that is, one, we are at a point where, we're seeing a mid-cycle correction. And, we also in the last 3-4 months had a problem of outflows. Now, those outflows also led to tightness of liquidity in, generally the banking system. That led to increase in spreads in the short end of the curve. When I look at, the 1 to 3 year part of the corporate bond market, I see a lot of value over there where, once, some of the liquidity which RBI has provided comes back into the banking system, as we go into the next financial year, the government spends that money. We'll again see that liquidity is easy, RBI is cutting interest rates, and people will then again go back to, protect their reinvestment. And therefore, I think in the very near term, fixed income returns look pretty attractive.
Okay, well, clear view and, bonds clearly more attractive. Appreciate your time, gentlemen, here on this special edition of Market Masters. Anish, Manish and Anand, thank you for being with us here. We'll, of course, get an update on these views as we go along and, of course, figure out where the market is headed as well. So interesting next many weeks and months coming up with lots of events lined up. Thank you very much once again. We'll take a quick commercial break here. Programming continues on the other side.
So we've made a lot of progress on two fronts, on both sections that we call them sections, but they're much more than that, Russia, Ukraine, and also the Middle East, and we'll see what happens. We're in deep discussions with Russia and Ukraine, and I would say it's going well, but it's a situation we should have never had to even think about, should have never happened. And on the Middle East, that's been going on for a lot of years. Centuries and centuries, it just keeps going. And we are making a lot of progress, so that's all I can report. But some very, very big talks are going and detailed talks are going on right now on both fronts.
Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always, Shruti Mishra. These are the top headlines from the startup world. Fintech company Findi backs 243 crore rupees in funding through an institutional placement and a share purchase plan. Proceeds will be used to enhance technological capabilities, scale merchant payment solutions, and drive the deployment of ATM and payment processing infrastructure across key Indian markets.
Vadam, a wellness brand, has raised $3 million in a strategic funding round from Sidbi Venture Capital to further strengthen its balance sheet and cash reserves. The company is also set to close the current fiscal year with strong growth and positive EBITDA.
Green Fortune, a windows and doors brand, is backed $4.5 million in a funding round led by Fundamental with participation from Titan Capital, Winners Fund, and existing investor Incubate Fund Asia. The capital will be used to fuel India expansion, 6x volumes, and build PartnerGate, the company's proprietary tech platform, into a full-stack solution.
IPO-bound e-commerce firm Meesho has recorded a 34% year-on-year growth in orders during the April to December 2024 period at 1.3 billion. This equaled the number of orders it clocked in the fiscal year ended March 2024. During FY24, the company had reported a 33% jump in operating revenue at 7,615 crore rupees, while narrowing its adjusted loss by 97% to 53 crore rupees and achieving operating cash flow positivity.
Startup Policy Forum has endorsed the proposal for merchant discount rate on UPI for large merchants, calling it a move necessary for smaller players to have room for growth. The push comes 2 days after the Payments Council of India wrote to PM Modi advocating for the introduction of MDR on UPI transactions and RuPay debit cards.
Well, those are the headlines we've been tracking for you this evening. Here's a CNBC-TV18 exclusive. Zomato-backed fitness brand CultFit is learned to be getting ready to raise 2,500 crore rupees through an IPO. Now, this would give it an estimated valuation of $2 billion. CNBC-TV18's Rachna Dhanrajani has the details. Rachna, at what stage is this process? What is the company planning? What are you gathering?
Sources have told CNBC-TV18 that Zomato-backed CultFit has picked bankers for its upcoming IPO. Axis Capital, Jefferies, Goldman Sachs, Morgan Stanley and GM Financial have been roped in as the book-running lead managers. The company is eyeing a 2,500 crore raise at a valuation of about $2 billion. Now, to put things in perspective, Zomato had infused about $100 million in 2021 in CultFit, giving it a valuation of about $1.56 billion. Now, Cult operates over 500 gyms across India and has been aggressively expanding its footprint. In just FY24, the company clocked a total income of around 1,000 crore. But it's not just fitness centers for CultFit anymore. Cult has diversified into multiple businesses like EatFit, MindFit and Cult Sport, which constitutes about 30% of its total revenue. Speaking of EatFit, that alone contributes about 24.5% of the total revenue. Apart from Zomato, among key investors of Cult include Accel Partners that holds about 17.25% stake. But there are other key names also on its cap table like Tata Digital, Temasek, Kalari Capital and Chirite Ventures. With the IPO in the works, all eyes will be on CultFit.
Right, Rachna, many thanks for those details. But on what's brewing today, DCDC Health Services, an operator of dialysis centers in India under the DCDC Kidney Care brand, has secured an investment of 150 crore rupees from Singapore-based ABC Impact. The Asia-focused impact investment firm is backed by Temasek. Founded in 2009, DCDC operates over 200 dialysis centers across India, catering to patients through public-private partnerships and standalone company-owned clinics. Joining me now to discuss this further is Aseem Garg, the founder and CEO of DCDC Health. Aseem, thank you so much for taking time out and being here with us on Startup Street. You know, like I just said, you operate dialysis centers under the DCDC Kidney Care brand. If you could sort of take us through how big of a problem this is in India and the kind of impact that you're creating.
Thank you so much for having me here. So in India, we estimate that there are more than 1 million patients who require dialysis. Every year, about 3 lakh new patients come on dialysis. So ESRD, which is the end-stage renal disease in which kidneys give away. So the patients require dialysis or they require kidney transplant. So for 90% of the patients, they are unable to afford dialysis. So till now, more than 1 million patients who require dialysis. Only about 200,000 patients have access to kind of a dialysis center. And within this, affordability is one issue and accessibility is another issue. At present, more than 60% of the patients are forced to travel more than 50 kilometers to get access to a dialysis center. And a quarter of patients travel more than 100 kilometers to get access to a dialysis center. And this is thrice in a week. And dialysis is something which they require, otherwise they won't be able to live.
Right, absolutely. So it is a big problem, as you pointed out, right? So if you could take us through your key solution, what's on offer at DCDC, and you're trying to provide renal care via clinics as well as take it to the home of the patients, right?
Yes. So basically, as I mentioned earlier, patients need to travel so much to get access to a dialysis clinic. So we are solving for last mile connectivity, and we are opening centers in tier 2, tier 3 towns so that we get so that patients have access to a dialysis clinic near to their houses, and they don't have to travel that much. And at the same time, we want to increase the number of patients who can get access to these dialysis services.
Right, absolutely. And you've raised these funds to primarily support your expansion plan, right? So if you could take us through your current capacity and by how much do you hope to increase this? You're eyeing 150 new clinics, right? So what's the timeline for this?
We intend to open 150 clinics over the next 18 months. We have 200 clinics operational right now, in which we are able to serve more than 20,000 patients. We intend to almost double the capacity in the next 18 months.
So you want to double the capacity in the next 18 months. You know, as you pointed out when you were talking to us initially, you pointed out that affordability is one of the biggest problems when it comes to healthcare in India, right? So how affordable are you and how far is your reach?
We are present almost across India now. Western India is something that we want to take our solution to. We don't have a significant presence in West India right now, but we intend to open centers there. In terms of affordability, see, a dialysis patient ends up spending close to 30,000 a month on dialysis and related diagnostic tests, consultations, and medicines. So it's a big problem. 90% of the population is unable to afford it. But we are grateful for the initiatives taken by the central government and under the able visionary leadership of Pradhan Mantri Modi, who launched the Pradhan Mantri National Dialysis Program in 2016, and then the Ayushman Bharat Yojana, which has enabled patients to be able to afford dialysis. So affordability for dialysis services has definitely increased. And then players like us, what we intend to do is provide affordable solutions, which are almost 30 to 40% lesser when the patients get access to dialysis in a private or a corporate hospital. So our solutions would be for almost 30 to 40% cheaper, but we are providing them at the same quality. Most of our centers, whether standalone or in PPP format, they are NABH accredited, which is a hallmark of quality.
Right. And if you could sort of, take us through your revenues, then what are you currently making and what's the target that you set for this year? And are you profitable?
We are profitable. We are closing this year with 175 crores in revenue. Next year, we intend to take this revenue to 275 crores. And the idea is to provide good quality dialysis services and do it profitably.
Right. And are you looking to take your services to countries outside India? What's the global expansion plan?
So when we started these services in India, we realized that a lot of countries outside India are facing similar problems. And we feel that the solution that we have developed for the Indian population can be taken to solve these similar problems in countries outside India as well. So we are open to expanding and outside India, and we'll be looking to take our solutions to ESRD patients outside this.
All right, so eyeing global expansion plans there. All right, Aseem, thank you so much for outlining the growth blueprint you have for your company. And thank you so much for joining us here on Startup Street.
Thank you so much for having me.
Well, on that note, it's time for us to head into a short break. But coming up, India's snacking industry has a $6 billion healthy snacking segment opportunity. We put the founder of Mad Mix on the hot seat to find out how the firm is grabbing a share of this pie, one snack at a time. Stay tuned.
look, I take full responsibility. I built the group. My job is to make sure everything's coordinated. It's embarrassing, yes. We're going to get to the bottom of it. I just talked to Elon on the way here. We've got the best technical minds looking at how this happened.
Welcome back to Startup Street. India's snacking industry is poised to touch $30 billion by 2026, and health-conscious consumers are driving a $6 billion healthy snacking segment currently. Homegrown brands are stepping up to meet this demand, and one such brand that is making waves is Madmix, a millet-based snack company. Madmix claims it is redefining affordability and nutrition. To tell us how, joining me now is its founder, Gaurav Palrecha. Gaurav, welcome to Startup Street. Millets have become increasingly popular, and Madmix is leveraging that trend. In just 14 months, you've expanded operations not just in India, but globally. I believe you've crossed 50K in monthly unit sales. You're in a competitive sector. So tell us, how do you plan to disrupt the space? What is your playbook?
Thank you so much for having me on this segment. Disruption is the core DNA of Madmix. We've been live in the market for the last 14 months, and we've received a lot of love from the consumers. There have been certain points that have helped us be a little different from all the other large FMCG brands or our competitors, which has been the millet grain products, our GTM, where we are placing our packets, and the affordability. When I talk about... Sorry.
No, go ahead.
Yeah. So when I talk about our millet-based products, India is currently seeing a massive trend of millet snacks. And it's not just a trend that is here to come and go. It's going to be there for a very long time. And at Madmix, we're trying to conquer that one packet at a time. When we talk about our GTM, we at Madmix try to be a little different by not just going to a general trade or a modern trade placement. We do alternate channel, which is school, colleges, hospital, canteens. Yes. And affordability is what we're talking about, is the 20 rupee packet size, which are portion control packets, which at the end...
Well, Gaurav, yes, you bring me to my next question. Apart from blending nostalgic flavors with nutritionist-approved formulations, another key highlight of Madmix is its affordability. Like you just mentioned, at just 20 rupees per pack, you're making healthy snacks accessible. How have you managed to keep the pricing so competitive?
When we talk about a country like India, people, when they think of healthy, they think either it's not going to be tasty or it's not going to be affordable. At Madmix, we had to get everything under the same umbrella. It was a very difficult task, but we managed to achieve it. The way to do it for us is to have smart manufacturing decisions in which we, volume, as we start hitting higher volumes, our cost goes lower. And alternative channel has been one of our biggest win in terms of reducing our cost, because we've not been paying hefty listing fees or extreme heavy ad spend budgets. And that helped us save a lot of money, which again, we put it back into our manufacturing to ensure that we are stocked up at every given point.
So take us to the current business growth numbers, the volumes that you spoke of. What are the volumes that you're currently seeing, your manufacturing capacity?
So we're seeing approximately a 420% raise since the last financial year. Month on month, approximately 33% growth. Yeah, for the next financial year, we have excellent plans, and we hope to be achieving them.
Okay.
1 month at a time.
It's a little later. But Gaurav, you currently offer about 20 SKUs. What are your best sellers? Also, we hear Madmix Pan Pops are a favorite at Tihar Jail. So what is driving Madmix popularity, especially in niche markets like hospitals, schools, and even, correctional facilities?
The government of India had banned packaged foods in all schools, colleges, and hospital canteens in 2019. That's when we thought about launching Madmix at an affordable price. The idea was that an average student was asked to consume makhanas or those puffs which were out of the budget. So that's when an average student is always in love with the Western world snack. That's why we developed our texture, the crunch, similar to that, but of course with the base of millets. Our best-selling SKUs today are our bhujiyas and the raisins. Bhujiyas are similar to your the Rajasthani namkeens that everyone has been consuming for a very long time. For adding a nostalgia touch, we have Maggi-flavored bhujia with Indian masala. So, when you consume it, it just takes you back to your childhood. With regards to the raisins, we always work with pan and mango because these are the two most favorite loved products across the country. And especially why we wanted to enter into the correction facility because inmates love pan, but that was a product that they could not get for a very long time until they were back out into the society. But with pan raisins, having it on a daily basis is like a buddy in your pocket. So that worked well.
Very quickly, if you could answer my next question, you're currently available in over 5,000 outlets and in global markets like Nepal, Hong Kong, New Zealand, and the US as well. So take us through your current business growth numbers and also what's next for the brand's international growth, especially what new markets are you eyeing?
So currently we're trying to conquer the markets that we are there in. We're looking at additional markets such as Australia, New Zealand, Japan, and Fiji, basically where the Indian diaspora is looking for a healthier alternative to the regular snacks that they've been consuming on a daily basis. In terms of what lies ahead for Madmix is we want to play around with a similar nostalgic feel. Whatever an average consumer is used to consuming on a daily basis, we want to bring that with a fun madness bit to it in the Madmix version. And that's what we've been planning to do.
All right. So very quickly, if you could tell us what's in the pipeline in terms of new product innovations and also elaborate on Madmix's ambition to become a 100 crore rupee plus brand in 5 years. What's the plan there?
So in the pipeline, we currently have anardana raisins. So the minute you bite into it, it'll give you a burst of hajmola. We have a millet bale, which is similar to your the traditional bale in the market, but we give it with a touch of baked bhujiyas and baked peanuts inside. And we have a lot more SKUs coming up in near future. And with regards to reaching 100 crore ARR, with our existing channel where we're selling, we just have to conquer that. And I think we'll be able to reach the number soon.
Sure. Wish you the very best for all your expansion plans, Gaurav, and many thanks for giving your time on Startup Street today.
Thank you so much. Thank you.
Moving on, Amazon India is expanding its Amazon Fresh grocery service to over 170 cities in India. The service offers a wide range of products, including fresh produce, dairy, frozen goods, beauty products, and pet supplies. The firm also said that Amazon Fresh achieved a 50% growth on a yearly basis in 2024. Shilpa Ranipeta spoke to Shrikant Sriram, the director of Amazon Fresh India, and began by asking him about the firm's expansion plan. Take a look.
Shrikant, well, thank you so much for speaking to CNBC-TV18. I want to start off by asking you about the announcement. Tell us about the expansion that Amazon Fresh is going to do and sort of what has been the idea behind this.
We are expanding Amazon Fresh to more than 170 cities in the country. And, we've been sequentially expanding. 2 years back, we were at around 30 cities. We went to 60, then to 130, and today we are at 170 plus cities in the country. And also very pleased to let you know that the business is doing well. We've grown 50% year on year just in the second half of last year. And we're getting a lot of love from our customers.
Well, understood. So a lot of expansion, on the line for you. So beyond that, I wanted to sort of understand from you, Shrikant, what's the kind of growth that you've seen for Amazon Fresh? There's been a lot of competition. Everyone's sort of now trying to get their groceries within 10 minutes. So in this sort of a scenario, how has growth been for you?
Yeah. So as I said, in the second half of last year, we've seen more than a 50% year-on-year growth, which is a very healthy growth that we're very pleased about. But more importantly, I think what excites us is the things that really matter to customers and things that customers are telling us is really working for them. As an example, growing our assortment. We used to have about 3,000, 3,500 products available in every fulfillment point of ours about 2 years back. As we speak, it is more than 7,000.
No, I get your point, but I'm trying to understand the performance of the business. Can you give me some metrics, something like the kind of user base that you have, or the kind of orders that you're clocking, or even what your average order value or AOV has been?
Yeah, I think some of the numbers, Shilpa, that you're referring to, they would probably end up varying, on a weekly, on a monthly basis, given that this is, as you yourself mentioned, a very competitive and highly evolving space. I mean, from a customer frequency standpoint and from a customer loyalty standpoint, we're actually very excited about where we are. We have very high repeat purchase percentages, right, which tend to indicate what our customer loyalty is like.
Talk to me a little bit about competition, Shrikant. Quick commerce has really taken off, and that's reflecting in their growth numbers as well. In such a scenario, where is Amazon Fresh?
Yeah, I think you're right in saying that it's an intensely competitive landscape, and I think it's a great time to be a grocery customer with the number of options you have to buy from. As we speak, Amazon has a fresh service which delivers in 2 hours your most critical everyday essentials. We have lakhs of products that you could buy within the same day or sub-same day, as we like to call it, being delivered in more than 50 cities in the country. And then you have millions of products that you get next day in different parts of the country, right? And the latest offering that we have started to pilot, as you were saying, is in the parts of Bangalore. We have a new service called Amazon Now, which is a very small scale pilot, which is 10-minute delivery. And we'll continue to evolve and see how the customer response is, what we learn from them, before we decide what we do next.
Well, with that, it's a wrap from Arundhati and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side.
I could tell you for 100%, I don't know this guy. I know him by his horrible reputation, and he really is the bottom scum of journalists. And I know him in the sense that he hates the president, but I don't text him. He wasn't on my phone.
is fixated with the AI race and where India finds itself in the race at this point in time, what's happening globally. It really depends on what tweet you're looking at and how quickly the world is changing depends on the news feed that you're broadcasting. But I've got a very astute set of panelists here with me, and we have 40 minutes. So without further ado, we're going to get cracking and get right to it. Vinod Dham, First of all, congratulations on your Padma Bhushan. So a big round of applause for Mr. Dham here. But if I could get started by talking to you about this AI race that we seem to be talking about at this point in time. One, where does India find itself in the race? Are we in the race? Are we outside of the race? Are we at the middle of the race? Number two, what should we prioritize at this point in time from an Indian perspective as we talk about the AI landscape?
This is not the India I knew 15, 20 years ago. This is India where they are one step ahead of even the ideas the advisors are bringing from abroad, which is really a remarkable thing to be knowing. So anyway, I think what I would like to talk about is there are 4 things needed to really succeed. First, of course, is skills. Now, skills for AI, if you already have IT or software skills, are not that hard to transform to. The reason is, fundamentally, people who are in software and IT services have a computer science degree. And if you have learned linear algebra, you have learned statistics, you have learned calculus, you can very quickly learn how to build neural networks, learn about deep learning, do the backpropagation, and learn about transformers, which was a single seminary event that really created ChatGPT and this whole OpenAI phenomenon in November of 2022. So I think it's not that hard for our kids to learn this technology. And we have deep talent and very wide talent, and that's the biggest strength India has when it comes to AI today. Now, when it comes to models, of course, there are companies like OpenAI and now a host of other companies who are also creating models, Google being one of them. And then there are open source models like Llama and Mistral and Falcon. So
you didn't mention DeepSeek.
I'm sorry?
You didn't mention DeepSeek.
I will mention DeepSeek, and I'll take a second to... Let me first deal with DeepSeek, because it seems like it's a thing waiting to be talked about. I will let actually Ronnie talk about DeepSeek. He's an expert. But my view of DeepSeek, that I deeply studied, and all the paper they published, and everything that went on, and me personally losing 18% of my value of NVIDIA stock for a stupid reason, is really DeepSeek was built on top of OpenAI's training. So it's not like DeepSeek existed in vacuum and they just came up with $6 million investment and showed us how to do inference. And by the way, it was an inference step where they did some reasoning and they paused, and they, of course, it required a lot of calculations and compute at that time as well. But really, DeepSeek is built upon OpenAI technology. It's built upon US technology. So I don't think they should, anyone should be misled to believe that by themselves, only with $6 million and 4 engineers, they came up with a thing like that.
Okay.
At least that's my view. I'll let Ronnie tell me whether I'm right or wrong.
Yeah, I'll get to Ronnie in just a second, but you want to finish your...
I want to. So I think India should approach models with a hybrid approach. That is, they should use open models. And since it's very expensive to build, by the way, models, LLMs. So we don't need to spend billions of dollars that Ronnie has spent already. We can just leverage that and then build models in our multilingual languages in a hybrid approach. So that's one thing. And we need those models for government, medical, military, defense, and they should be proprietary. We should not use Western models to do very confidential things that we need in this country. Okay. And the last 2 points are, you need lots of compute, and to run the compute, you need lots of energy. And lots of compute being, we need lots of GPUs. And one of my recommendations would be, beyond the government of India really doing some private-public partnerships, do an ISM-type funding. You know, the government of India, MITI, came up with $30 billion funding for semiconductor program. I think AI will need a similar kind of funding for next 3 years, $50, $100 billion type of investment to really run this marathon and stay competitive in this marathon. And energy is an important thing because these chips need a lot of power to run, and we will need to multiply our energy sources.
Well, Well, thank you very much for setting the context for the conversation that we're about to have. So the big advantage really lies on the skills side. The big ask at this point in time is on infrastructure. Ronnie, I'll come to you in a second, but let me get Minister Vaishnav to respond to what we've just heard there from Vinod Dham. Minister Vaishnav, 1 year of the India AI mission, 14,000 GPUs on the table. You got a round of applause on that. But the ask now from Vinod Dham is we need the government to back this up with at least $20 to $30 billion of investment on the infrastructure side, do a semiconductor mission as far as the AI mission is concerned. Can you draw parallels with the experience that you've had on the semicon side? Can we expect you to replicate that on the AI side?
Absolutely, yes. And I thank Vinod for such a nice way of structuring the entire context. One, making GPUs available as a common compute facility. That's done. 14,000 GPUs already inaugurated. Two, the most important part of the entire AI journey is getting the data sets. So we have set up a common compute kind of structure called AI Kosh. That is also done. And today morning we signed an MOU, the India AI Mission and the Indian Parliament. We signed an MOU. So because Parliament has a very large data set in multiple languages over a period of time. So that will be a very good training resource for training our models. That's done. And many more other, like Doordarshan, All India Radio. There are many other sources of data which is available. Third, getting our own GPU chip. That's very, very important. And we have already started working on it, working with the industry, evaluating different options that we have. And we got really good, bright professors, bright startups who are willing to contribute to that journey. So that is also in place now. Hopefully, we should be able to finalize the best option very soon. Fourth, having our own LLM, because whatever the world says, if it's open source today, it may not remain open source tomorrow, which we have seen in the case of OpenAI. I think we should also change the name. Better to have our own LLM. I don't think we should be shying away from that. So I think we are taking the problem in a very methodical, very systematic way. The part on talent is very important, and that's where we have a major advantage. And we have a template in front of us. In case of 5G, we set up 100 labs in universities so that the students can actually learn it on the real 5G environment, real tools. In case of semiconductors, 240 universities and institutes combined, 240 institutes, we gave the latest EDA tools so that the students can actually learn what is a chip, how to design it, and really get their hands, get the real experience. Similar approach we are following on AI also. So I think we'll be in a good shape, I would say.
On the GPU, Mr. Vaishnav, a broad timeline by when you expect to finalize who you choose to partner with, just give some color on what we should expect on that front.
In short, 3 to 5 years, 3 to 4 years, I would say, to get your good, reasonably good capability GPU up and running. The approaches, basically there are two approaches which we are evaluating seriously, two different types of instruction sets. Which one we will finalize, or will we take both the instruction sets and move forward? That is something which the expert.
Ronnie, let me come to you now. Number one, are we likely to see a name change anytime soon? But more importantly, I want you to put on your OpenAI hat, but I also want you to put on your former White House CHIPS Act coordinator hat and tell us what you believe the future holds as far as public-private partnership is concerned, and how do you believe it's likely to play out for an emerging economy like India? How important will that be?
Well, Shireen, first, thanks for having me, and it's an honor to be on a panel with Vinod, who's the father of the Pentium chip, one of the greatest innovators and investors, and the Honorable Minister, who's really leading the way around technology transformation in India. We've been here basically to listen, to understand what's going on in this market, and it's incredibly impressive. So when you think about the meetings we've had over the last couple of days, one, the Honorable Minister mentioned data sets, huge ingredient to building large language models. And India and the government in particular has done a fantastic job in terms of making those data sets, public data sets, more available, which is going to be really important to the future of AI, to people. I mean, I heard a statistic today that India graduates about 1 million or more STEM graduates every year, depending on how you identify STEM. And when you think about the talent base and their ability to adjust to what's hot in the market, that's an amazing advantage. Even when we talk about the transitions that are going to happen around the world because of AI, if you have 1 million people coming out every year with a new set of skills and a population of 30 years old or younger for the next 30 years, it's a huge opportunity for India to stay on the cutting edge. So you have that ingredient too. And now these investments in AI infrastructure, which is such an important piece of it, the data centers, the GPUs, the energy hookup. I mean, even on the stage, we've now launched a new AI infrastructure initiative. So we're making good progress. Here's the things I think are really interesting in India. One is, what are those killer applications going to be? When you think about the impact of AI on the economy, us economists, I'm very sorry, we're all over the place. We predict it'll be 1% of GDP, 30% of GDP. People have tons of different estimates. Why is that? Because we're still figuring out how this is being used in organizations. We're still seeing frictions to adoption in government, in business, into SMEs. But over time, you'll see a convergence on a huge economic impact. The question is, what are those applications and key verticals going to be? In India, it could be in education, it could be in defense or healthcare. It's going to be up to the people in the Raisina Dialogue audience and around the country to figure that out. As someone who led the implementation of the CHIPS Act in the last administration in the United States, I can tell you I see a focus around the world, not just in the United States and India, around investments in critical technologies, supply chains, infrastructure. And I think it's reflective of a world where national security and the subject of this conference, geoeconomics, is becoming predominant. When I did my PhD, we lived in a world that was very globalized, where everything was about sort of knocking down barriers, trading, right, and assuming the best intents of countries around the world. Now we're entering into an era of more contention, nationalism, populism, and you're seeing countries around the world adjust accordingly. It doesn't mean to me, though, that the US and India can't have a very strong relationship and that OpenAI can't be a good part of it. I don't expect any name change for OpenAI, but ChatGPT might be called Chatterjee GPT. But that is what I will promise the Honorable Minister, okay? That's my
Well, we look forward to that. But Mr. Vaishnav, that's a very important point that Ronnie mentioned there. You know, in the world that we live in today, when we're talking about the escalation of tariff wars, we're talking about export controls, and which is why Mr. Dham is suggesting that you need to focus on proprietary technology, proprietary models. I want to understand from you, you know, the partnership between India and the US, how do we build on that? We've had a partnership which is, of course, but in an AI era, in an AI age, what can India and the US do together? What do you foresee on that front?
I think we have very complementary strengths between India and US. If you look at it, today Stanford University ranks India as the biggest talent concentration in terms of AI. Every country needs the talent. Second, the diversity that we have, the kind of rich data we have, that would be one of the greatest resource for any country which wants to be in the race of AI too. Third, the way we have developed our relationship with the US, where the foundation of the relationship is trust. The foundation of the relationship is respect for IP rights. The foundation of relationship is to co-create and co-develop technologies. That thing is something which has happened over a period of last 10 years, and that is a very big strength for both the countries. I think the two of us will do a lot of things together. I think that will be a good win-win for the entire world.
But you don't believe that Make America Great Again could overshadow this partnership that you speak of?
See, I think today's world is quite different from the past when it was win-lose kind of situation. In the world of technology, I think it's more of win-win, and the pragmatism with which we are approaching our foreign policy, our Prime Minister is very clear in his mind. And our external affairs minister has a very practical approach. So with those two major ingredients, where we are looking at what can, how both the countries can really win and create things which are good for the humanity, good for the two countries, and they are following some of the most basic principles which in the world of technology are very important.
let's talk about the capital that's going in. And I think, Ronnie, the question that's being asked today, and it's being asked by corporations, it's being asked by governments, is what is the return on investment? You know, Stargate, $500 billion. What is going to be the timeline before we start to see a return on investments? How do you respond to the in-between phase of where you've got to put the capital in the hope of being able to see returns at the end of it?
So, I mean, the first thing I did when I took the job as the chief economist, I'm the first chief economist at OpenAI, so there wasn't really a predecessor. I spent time talking to the technologists and the people who are building these large language models. And those folks, they live in the future. You have to do that work, you have to live in the future and see the future in some ways. And when you understand the revolution that's happened over the last 2 or 3 years, where the capabilities of our models have grown so fast, things that people thought were impossible in the models are now possible. You start to understand that, you know, the laws of scaling, as they're referred to, are going to require more compute. And that's why, as a company, right, we believe that infrastructure is destiny, and the investments in Stargate, properly calibrated with milestones in the right places at the right time, will make good sense. Now, there's been lots of challenges to these scaling laws over time, and you mentioned before, of course, the DeepSeek example. But even with our new models, our reasoning models, and you're seeing this rise of test time compute and the power of inference, which is also going to use a lot of compute. To me, just as Vinod said, I'm actually not too worried about these challenges to compute, because I think, as an economist, the cost of intelligence going down, the cost of compute going down is a good thing. And in fact, we're going to have so many applications to use it. Think about the applications that were already mentioned. I'll give you one more. In villages in India, when a child is born, we heard about this earlier today, there's often a question about low birth weight. But nobody knows exactly what the cutoff is and how to properly weigh the child. And you all know, if you're from India, some of the superstitions around handling children in that stage or having strangers handle a child. Well, now you can take a picture of that child, right, in a privacy-controlled way, and estimate the weight very precisely, which allows a healthcare worker, without visiting that village, to figure out whether the child is underweight and needs further medical attention. It's those kinds of innovations that can make the impact you're talking about. They don't require massive infrastructure investments yet, but they can be really useful. So this is kind of where I see a lot of opportunity here. If India decides also that this AI infrastructure bet is one they want to make, that's fantastic as well. But in the US, as we saw it, based on where the models are going, we think the return on investment is going to be very positive in the next 5 years.
Yeah, just like to add, I mean, the talk in the media on the ROI is that if you just imagine the next move in AI is agentic models. Yeah. And that's, agent is like a human. Just think of it like that. And if you have 10 agents working together, there are 10 humans working together. If they can create an output which can save, let's say, at the minimum, one head count. One head count is like, in American terms, they talk about $10,000 a year, which is a reasonable number. Right? If you save $10,000 a year for a company, and you charge them $2,000 instead, which is a 5x saving for them, which is Microsoft charging its Copilot $250 a month. Suddenly their revenues and profitability will skyrocket. So this is the kind of thinking. I'm not saying it's going to come to fruition, but at least there is a thinking going on ROI as to how you're going to get there.
That's the assumption. Mr. Vaishnav, let me come to you, sir, to really get a summation, so to speak, of what you've heard from these two gentlemen here, but more importantly also, your vision as far as the next year of the AI mission is concerned. What should we expect as the short-term milestones? What should we expect as the medium-term milestones? What should we expect as the long-term milestones?
For summary, go to OpenAI, ChatGPT.
We need a proprietary vision, sir.
Immediate term, we must get our startups and academia and researchers and students the right tools, the right skill sets, making sure that our IT industry is geared up for taking it up as an opportunity, rather than thinking of it as a big challenge. That is the immediate term goal. Mid-term focuses on getting the LLM in place, making sure that our GPU strategy is progressing well, making sure that our universities have changed their course curriculums so that they are able to generate a continuous stream of well-trained, great talent. That is the mid-term. Long-term, of course, we need to keep our eyes focused on our goal of 2047. We definitely want to take lead in some of the most important technologies.
You know, and again, I want to just go back to that 2047 goal as well and link that to what we heard there from Ronnie in terms of economic impact. There are assumptions that, economists are working with. What's the assumption that you're working with on how much AI and the transformative impact of AI you can harness to be able to get to the 2047 goals?
See, when new technologies come, getting the ROI equation solved for it, I don't think that's the absolutely the right approach. I think when new technology comes, we must invest in it. We may not know what exactly the returns would be, but for a country or for a company or for an organization to be able to compete ahead, that investment in technology must be continuous, for sure. How AI will play out in the next 20, 30 years, I think it will be something that we'll have to kind of modulate our approach. We'll have to see how it plays out. As I said, this is just the chapter 1. And as AI evolves, and there's going to be a lot of mathematical innovation which will go into this. I remember my IIT days where I built the first text-to-sound transformer, that T in GPT, right? So that transformer which I built, from those days things have changed a lot. But some of the fundamental math behind neural networks, some of the fundamental math behind AI, that remains constant. So that math, when it gets applied into the newer AI models, that's going to bring about changes which we, at this point of time, we can't even imagine. What I would say is embrace technology, use it properly, make sure that it is good for society, and make sure that the harms which can come from it are also controlled.
I'm going to end by asking you, because I know the minister has a hard stop at 6:40. Are we in the race? Are we at the starting point? Where are we today?
We are very much in the race. We are in the first inning of the race, not at the starting point. And like Ashwini said, it's a multi-inning race. This will go on for a long time. And we need to just stay there and continue to invest appropriately and make sure we don't fall too far behind.
I'm glad that you've moved from race to cricket, which is probably appropriate of an analogy to close the conversation when we talk about where India finds itself, the role and relevance of AI. Ronnie, I'll give you the final word.
Well, first, just thank you. And I think going back to the IIT Energy, the students and young people in India are really the future in a big way. And I think leveraging the universities to produce cutting-edge innovation, to improve on this is something that's worked in other parts of the world. And I think that's another opportunity here with India, given how many people are going to university and the kind of research happening at institutions all around the country. So I'm just excited to watch and support however I can.
All right, gentlemen, thank you very, very much for joining us here.
Hello and welcome to On the Record with me, Shireen Bhan. Vedanta is gearing up for a demerger that will create 4 independent entities with a focus on aluminum, oil and gas, power, iron and steel and base metals. Vedanta's shareholders as well as creditors have already approved the plan, and the demerger process could be completed by the first quarter of the next fiscal. Chairman Anil Agarwal, in a letter to investors, said that each of the new companies has the potential to grow into a $100 billion company. He also compared Vedanta to a banyan tree while advocating for the demerger. He said, and I quote, "I've always found that trees that grow under the shade of a giant banyan tree often find it difficult to grow, but once you take them out and allow them to grow under the sun, they show remarkable growth and progress." End of quote. Chairman Anil Agarwal joins me now on the record. Mr. Agarwal, always a pleasure. Many thanks for joining us here on the program. So let me start by using your analogy of the banyan tree. As you go about this demerger process, Mr. Agarwal, do you believe that each of these businesses has strong enough roots to exist outside of the shade of the big banyan tree?
Absolutely, because if you see all our business, whether you talk oil and gas, tremendous potential in India, and we have a best anchorage. If you look at the aluminum, we completing 30 lakhs ton production, adding 30 lakhs ton more huge potential. Zinc, if you look at zinc, which will be part of our main company, we are producing 1.2 million ton, going to produce 3 million ton. Copper is such an important metal. We are going to produce almost 500,000 ton copper. The growth on this, any country which developing to developed country goes, it all goes fundamental. We have seen is all about below the ground. Below the ground, we have a tremendous geology. I always say that. And today, the way the government is working on below the ground, because we need it, this is a transition material. To create the world better, you need this metal. Without this, world can't work, especially India. India is a developing country. So we are very excited about this growth and making these 4 companies separate, making a very professional management. They will take this company forward at a different level.
Well, speaking about taking these companies forward, sir, let me break up each of these businesses, and let's start by talking about the aluminum business, because that is a lion's share as far as your EBITDA is concerned. You talked about adding 30 lakh tons. By when do we expect this capacity expansion to take place? What's the time period? If you can share that with us. And also, in terms of growing the EBITDA, Q3 EBITDA was at 4,540 crores out of the total Q3 EBITDA of 11,280 crores. That was the contribution of the aluminum division. What can this be potentially post the kind of expansion you spoke to us about?
Yeah, I think each of our business will have the same level of EBITDA. We work on around 35% margin. All our product is about 35% margin. As far as the aluminum is concerned, all these products, what you talk about, demerge, there is a growth of double digit, 15 to 16% growth on all our product. It's very difficult to set up these industries, require a heavy investment, require huge technology, and it's not easy. So we are creating another 30 lakhs ton of aluminum production. We have acquired one of the largest bauxite mine, very high grade in Odisha. We are almost finalized the location to start. We are putting this with the renewable energy. This will be the first kind of aluminum production with green metal, complete green metal. Very exciting. The biggest part is with all this aluminum being used by SMEs, medium and small scale industry.
Welcome to Midcap Microscope. Well, today the stock on our radar is Whirlpool of India, a stock that's been on a roller coaster ride. It's dropped nearly 50% from its peak, but after this steep correction, the big question is, how much of the bad news is in the price? Well, what was the key reason first for the sharp fall we saw in the stock price? The promoter entity, Whirlpool Corporation, announced its plans to reduce its stake in the Indian entity from around 51% to around 20% by the middle to the end of 2025. Now, that's a significant sell down. And this is not their first move. Last year, they offloaded close to around 24% stake for around $470 million. They cited high valuations. But globally, Whirlpool has been exiting various businesses while holding minority stakes in Whirlpool China and its EMEA joint venture. So in that sort of a backdrop, maybe this move isn't entirely surprising. But time will tell, what does it mean for the company's future here in India? Well, beyond the promoter stake overhang, there's another key risk. The royalty and the brand licensing fee, which is currently at around 1.4%. Any modifications here could impact the earnings, and the market is waiting for clarity on this front. But let's talk about the business itself. Whirlpool India's revenue comes in mainly from the refrigerators and the washing machines business. And they've also been expanding in the kitchen appliances space as they've increased their stake in Elica, which now contributes close to around 7% of the total revenue mix. And under the leadership of Mr. Narasimhan Ishwar, well, the company has made quite a turnaround. Their market share in refrigerators as well as washing machines has improved. They've undertaken various cost-cutting measures which have boosted their gross margins. And the working capital management as well has got strengthened. Remember, Whirlpool India's cash in books is roughly around 25% of its market cap. And that's something that investors, they always like to see. Well, moving to the valuations front, the stock now trades at under 30 times its earnings. That's at a sharp discount in comparison to its long-term averages when it's traded at around 45 times. So is this an opportunity or is it a value trap? Well, from here on, there are a few critical factors you need to watch. Will LG India's upcoming IPO have a bit of a positive rub-off on the entire sector? At what valuation does the promoter sell its remaining stake? And most importantly,
Hello and welcome to the Global Dialogue. I'm Shireen Bhan. Two trends captured public imagination through 2024. Artificial intelligence and the big breakthrough as far as weight management is concerned. Mounjaro, that's the drug from Lilly, has just officially been launched here in India. To talk to us about the potential, about the road ahead, and what we could expect in terms of more breakthroughs is the global CEO, Dave Ricks. Many thanks for joining us here on CNBC-TV18. It's a pleasure having you on the program. Let's start by talking to you about Mounjaro. You've got the first mover advantage. You've launched here in India. What do you believe the headroom for potential growth is?
Yeah, well, such an exciting day for our company in India, for Mounjaro, and especially for patients who are looking for a way to control their diabetes better or their obesity. And India now joining a list of countries launching this product, making an impact in so many ways in society. So, what could be the impact? Obviously, it's a very large opportunity. There are, the prevalence of diabetes is very high in this country, and that's a serious condition where we need good medicine for. Mounjaro is proven to be very effective in controlling diabetes and helping people lose a little weight with diabetes. And then for obesity, which is almost like a precondition to other very serious health problems, we're seeing really strong uptake in many markets where we've launched, and I would expect that here as well. Unfortunately, overweight and obesity is a reality in India.
But it's not seen as a disease.
Yeah, but it actually is, by WHO standards, classified as a disease. And even if you want to argue with that, it's totally clear that being obese leads to more diseases later, over 200 adult conditions. And some studies have shown almost 40% of adult disease is triggered by obesity. So it's important people manage their weight, hopefully with diet and exercise, but if they can't, now there's a medicine, Mounjaro, which can really have a profound effect on their body weight.
Before I talk about the future of Mounjaro and what you intend to do with it here in India, I just want to go back to the backstory, because this is not new. We've had GLP-1 and, it's 2006. In fact, you had it on your annual report in 2007 on the cover. Why do you believe we've seen this kind of a breakthrough, and what does it mean now in terms of future adoption?
Yeah, as you mentioned, this class has been out a long time, and there are people with questions about, is it new, is it safe? We actually know a lot about the GLP-1 mechanism and its safety. No drug has no problems, but we know what they are. So I think patients and their doctors can talk about those risks. It's not like there's unknowns there after 20 years of experience. But what we've been doing is improving that original idea. And sometimes in medicine we think of a breakthrough, maybe like the COVID vaccine that came all of a sudden and helped. But most medicines are more of a step-by-step improvement. We launched exenatide in 2006. It was a twice-a-day injection, so that was inconvenient. So we made a weekly injection called Trulicity, which is available in India today. And we noticed that by making it weekly, there were actually fewer side effects at higher doses. Why? Because the drug is sort of tolerizing once it's in your body. Then we added another incretin, so GLP is one, something called GIP, for a dual-acting medicine That's what tirzepatide is, or the ingredient in Mounjaro. So each step improving to the next, and we're seeing more weight loss, more profound health benefits, better diabetes control with each improvement.
But, you know, and I think this is a number that you gave us in a previous interview that I saw, where you said between Novo and you, it's still about 20 million people globally using some form of weight management drugs at this point in time.
And diabetes.
And diabetes. So what do you believe is going to lead to higher adoption? And do you have the capacity at this point in time to cater to more demand?
Well, capacity is key. Consumer awareness, physician awareness, also important. Payment and support from health systems where that's appropriate. But as you mentioned, we need to make enough. And right now we've had shortages in the last year in major markets. Lilly's invested very aggressively, though, in our own supply chain. We're in the middle of a $50 billion expansion plan. And those are showing good returns. We're already opening up new factory lines and improving our capacity. This is actually enabling us to launch this week in India because we're confident we can supply the market over the coming years. We wouldn't introduce it if we weren't confident in that.
Well, you know, let's talk about India and the plans as far as Mounjaro are concerned. Do you believe that we could see Lilly manufacture Mounjaro in India anytime soon?
It's, of course, possible. We're expanding our global footprint. There's a lot of discussion in the air about localizing or regionalizing supply chains. And as India could become an important market for us, it's a smaller market for us now, but Mounjaro may well change that. Open-minded about possibilities here.
What could tip you in favor of actually doing local manufacturing here?
We do have local manufacturing for our insulin line, actually, which is very successful. So we need to talk to those partners. We need to understand what the demand in the market is. And we need to, you know, probably get comfortable with the regulatory environment and some other technical specifics, but certainly not ruling that out and open-minded.
And are you open-minded about partnerships in India as well when it comes to Mounjaro?
We are. I think obesity is an enormous public health crisis, so is diabetes, and no one company can do that alone. So actually part of my visit here is meeting with some of the scaled tech players about consumer communication, physician communication, even pharmacy fulfillment, as well as with some of the bricks and mortar hospital chains. And we want to talk to the government about their public health agenda as well. We noticed even the Prime Minister has been on TV talking about obesity and fitness. That's great. And I think that shows as India is developing and unfortunately getting developed country issues like obesity and chronic disease, the government's engaged in that. So we want to work with them and align our messaging.
But what do you believe is likely to be the inflection point post the drug going off patent, which is 2026, and what will that change in terms of pricing? Because it's still fairly steep. I mean, not comparable to the prices in the US, but in India it works out to what, about between 17,000 and 18,000 rupees a month per person if they choose to go this route.
It is not cheap right now, and that's self-pay today. As more products come into the market, usually competitive forces take hold. Our patent doesn't expire for another decade, but you're mentioning semaglutide, which we're expecting, and we'll adjust our commercial plans to the realities that may present themselves. Our goal is to reach all Indians who need the medication. How to get there with capacity constraint globally and really educating the healthcare workforce on how to use these drugs safely, that will take some time. But we'll start now with the launch we have today at the price points we have. We expect good adoption and good experience, and from there we can build.
You know, it's kind of being held up as this silver bullet, this magic wand that's going to be able to address a whole host of issues outside of just diabetes and weight loss. The impact on alcohol consumption, the impact on smoking. You do have studies that give you some indications that it is working on both those, don't you?
Well, we have developed. Last year was an important year because prior to last year, I think the question was, does tirzepatide or Mounjaro not just lower your weight, but affect these conditions triggered by obesity? And we had 4 important data readouts. One in a form of congestive heart failure, sleep apnea, which is the people who wake up and snore aggressively, but it's a serious health condition, diabetes prevention study in that area, and then an earlier study in fatty liver disease. So we're building the clinical evidence. These are not indicated in India. It's important to mention that. But there's scientific studies that have been published and we'll pursue the regulatory pathway for. You're talking about something else, which is what's beyond that. And there are indicators with this class of medications and drugs like it that it's not just affecting appetite, it's affecting other desire centers.
Hedonistic
Hedonistic, exactly. And so the way we know about this is participants in clinical trials from us and our competitors have noted that they have less desire for alcohol, cigarettes, other things. And so certain individual doctors have studied that. It looks promising. Some of those are published. Lilly is undertaking the scaled legitimate studies we need to do as a global pharma player to prove that. And when we prove that, we'll talk about it some more. But it's an interesting effect and I think draws a lot of interest to this category.
Well, it certainly does. But, speaking of interest, in terms of adoption, there still is a fair degree of stigmatization. I mean, people might be using it, but they don't want to talk about it.
Yes.
And are you seeing